Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the Network of Impact.
Welcome back. In an emergency, you don't know how much you're going to spend. And that's particularly true when it comes to health-related emergencies. And usually, those are the worst kind because you have so little control. In fact, Policy Bazaar has a report out that talks about how much each of these emergencies cost. So it'll give you a sense of how much you should ideally set aside. And if you don't have the ability to set this aside, you should obviously think of getting and bolstering your health insurance. Siddharth Singhal, Head of Health Insurance at Policy Bazaar, joining me right now. Siddharth, thanks so much for taking the time. Obviously, it's not a uniform scale across the country with regard to how much you would spend for a particular procedure. And when I'm talking about emergencies, all of these related to things like heart attacks or things like, treatment for cancer and stuff like that. So what does this report tell you? What are the findings of this report?
Okay. First of all, thank you so much, Alex, for having me on your show. Okay, so I think the practically reports kind of tells us a couple of things which we probably anecdotally know as well. As you age, your average claim sizes go up, which is kind of very, very obvious because as a person ages, as a policy holder ages, the likelihood of hospitalization goes up. So it's almost like, when you are, let's say, in a age category of 25 to 30 years versus if you're a 60 plus year citizen, then the average claim size is almost 2.5 times. So which means also that the cost of hospitalization or the amount that you need to spend on a hospitalization is almost 2.5 times more when you are a 60 plus versus when you are a younger segment. And that's very, very, obvious as well, because as you are a senior citizen or in a higher age category, there are kind of a chronic ailments, there could be knee replacement, there could be cataract, there could be, other diseases which are related to the age. So I think that is one of the major finding. The second major finding is, there's as you just mentioned about that there is obviously no uniformity across the, entire country. The tier 1 cities, which is largely, let's say the large metros like Delhi, Mumbai, etc., the cost of hospitalization is much higher versus when you look at the tier 3. And, very, very, again, the report puts out certain numbers that if it costs, let's say, roughly about on an average, about, 1 lakh or something in a tier 3 city, the same cost of hospitalization can go up to, 1.78 or 1.77 lakh. What it means is that, if you are a person living in a metro city and if you're in a higher age category, then the cost of hospitalizations are much, much higher for you because largely, one, there is a higher propensity to get hospitalized. Secondly, in our metros and in fact, a lot of tier 1 cities, the healthcare is largely dominated by the private hospitals, where the cost of hospitalization can be quite high.
Yeah.
And over and above that, the third point which the report also points out that in case of a chronic illnesses, for example, the heart conditions or the cancers, etc., the costs are even much higher. So for on an average, one cancer claim on an average, and this is includes lower cost claims as well and the higher cost claims as well. On an average, a cancer claim can be anywhere between 5.5 lakh. But a regular treatment can cost you anywhere between 30-35 lakh, which is a whole bunch of money. So I think, the report points out in 2-3 different directions that health insurance is no more, I would say, a luxury. It's a necessity because the costs are increasing year on year. And specifically, there are certain age groups, there are certain cohorts which are more prone to that higher cost.
Yeah. So I want to double click on a couple of these things, right? When you're saying that cancer and heart disease together accounted for over 860 crore rupees in claims, this is for one financial year, right? And that is emerging as the biggest driver for healthcare expenditure, despite lower claim volumes, compared with routine illnesses. Just the question arises when you're talking specifically about cancer. and you're talking about a chronic issue like a heart disease, this is something that you need to start covering well in advance. And if you already have signs or biomarkers that could point towards the possibility of something occurring down the line, then it becomes harder for you to get that coverage, right?
Yeah, so I think, rather than an absolute number, because that absolute number is a policy bazaar claims, obviously the larger market or the larger claims paid out would be much, much larger number that ways. But what I want you to kind of look at is the number that is 20% of all claims are related to the cancer and the heart diseases. And you are absolutely right. What we always recommend to the customers and everybody, across the board is when you are fit and fine, it's absolutely necessary that you buy a health insurance, because as you kind of, contract critical illnesses, there are options, but the options get limited. That could get limited in terms of a mandatory co-payment, or it could be in terms of, certain sublimits. So I think, it's always advisable that once a person kind of is, young, fit and fine, across all age groups, of course, everybody should buy health insurance, but it's even more worth noting for young, healthy individuals to buy health insurance because they have all the options in the market available. They can choose any policy that they like. But the fact of the matter is, health insurance is something. It's not like that. One can just pay the premium and get a health insurance of their choice. So I think it's always advisable that you get a health insurance when you're fit and fine.
But there are nuances to this as well, Siddharth, because if you're talking about specifically coverage that takes care of cancer treatment, just as you mentioned, the actual treatment in a hospital might account for a certain percentage. Your hospitalization will cost a certain amount, but then the regular treatment beyond that costs much, much more. So what do I need to do if I want to go out into the market, Siddharth, and buy a policy that covers me for the diseases that have been most prevalent? And you've listed out heart and you've listed out cancer, but I'm sure there are a few more that you can name that are the most commonly used claims for health insurance. So as a potential buyer of a health insurance product, I can protect myself for these.
I think it's a very, very simple point. I would say if somebody follows, you can cover yourself and your family across. So I think the first and the foremost is you just need to buy a comprehensive health insurance policy, which covers for your hospitalization costs across the type of diseases. So you don't need to buy a specific, illness cover. Like you don't need just only a cancer policy or only a heart policy or any specifically, let's say, a kidney policy. You just need to buy a comprehensive health insurance policy, and with a sum insured of, now there are options which are, let's say, unlimited coverage. That is, there is no upper capping. So a person can definitely buy an unlimited cover plan, which would kind of protect them from across such type of illnesses, whether it's cancer, whether it's heart disease, whether it's any kind of an ailment, it's a seasonal ailment or any other ailment, right? So I think one is to buy that. The second is important when you're buying a health insurance policy, that you have to buy certain riders which are very, very useful. One of the most useful rider which we recommend to every customer, every client, is to buy a consumables rider. Typically in a hospital, when there's a hospitalization, there are, gloves, syringes, masks, etc. These constitute to about 8 to 10% of the hospital bill. So, for example, if there is a hospital bill of 10 lakh rupees, out of that, on an average, 1 lakh rupees would be attributed to consumables. So, I think earlier the health insurance policies did not offer that, but now, for the past 3-4 years, almost all health insurance policies offer consumables as a part of the policy. You can opt as an additional rider, but it's an extremely useful rider, I would say. So, I think that's the second thing that one needs to do. The third is very important, is from where you buy. I think that is extremely important when it comes to claims. And I'm sure, just don't go on the price, go on the track record of the insurance company and also, the person that you buy from, because that technical knowledge at the time of claims is extremely important. So, for example, I'll just, probably take 30 seconds here, that let's say at claims is where some bit of a dissonance happens, and that is where your distributor or the place from where you bought the policy from plays a extremely important role. So, for example, at Policy Bazaar we do claim samadhan, wherever there's a bit of a dissonance between the claimant and the insurance company. So I think these things extremely important points when you buy that.
All right, I think that's been a fulfilling, holistic conversation. Thanks so much, Siddharth, for taking the time. Pleasure speaking with you.
Thank you so much.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think and stay tuned. This is NDTV Profit.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तुम भी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell?
Hello and welcome to The Big Question. I'm Vikram Oza. Now, going to that hospital is stressful enough, but for millions of Indians, the bigger shock often arrives after the treatment, which is in the form of that bill. So a parliamentary panel has now proposed one of the most sweeping overhauls of private healthcare, and this has not happened in years. It wants legal caps on private hospital room charges. They want it to be linked to the rates of nearby 3-star hotels. That's what is being suggested, and hospitals may have to publish their tariffs before any admission takes place. Surgery package rates could be standardized, and a fast-track ombudsman may be created to tackle the excessive billing and insurance disputes that arise. Meanwhile, healthcare services could move to a zero-rated GST regime, something that allows the hospitals to claim input tax credits on equipment and infrastructure, and perhaps that would help buffer some of those the kind of costs that the hospitals incur. The backdrop is stark. According to the National Sample Survey, the NSS, average hospitalization costs stand at about 6,631 rupees. Now compare that to what the private hospitals start, 50,500 rupees. That's the kind of disparity that exists. It's a gap that has put affordable healthcare at the center of this policy debate. The panel has also gone beyond the hospital pricing, and they're proposing reforms in insurance, in drug pricing, in medical tourism, in claim settlements as well, and healthcare expansion into rural India, which has been the big ask for many, many years. But tonight we have that big question. Will these kind of price parity that we are trying to create and the kind of gaps that we are trying to create in private hospitals, is it going to lessen the burden on the patients? Because the patient at the end of the day needs to concentrate on coming out of the illness, on coming out of surgeries, not worry about financial health. Let's ask that question to our panel. And joining us today, we've got a great panel. Dr. Girdhar Gyani is Director General at the Association of Healthcare Providers India. Mr. Jailal is the former National President of the Indian Medical Association. Dr. D.K. Gupta, the Chairman of Felix Hospitals, and Suresh Mathur, the former Executive Director of the Insurance Regulatory and Development Authority of India, the IRDAI. Gentlemen, thanks for taking the big question tonight. Dr. Gyani, this headline recommendation, if private hospital room rents are capped and then they are linked to nearby three-star hotel tariffs, you think that would genuinely lower patient costs, or you think the healthcare system is getting compared with an incorrect benchmark?
Good evening. Actually, in our opinion, I am speaking on behalf of the Association of the Private Hospitals, and they say that it will be totally counterproductive. They feel they regulate the methodology of fixing the room rent rather than the absolute price. Let me also add here that insurance company already have some kind of classification under which they accept the claims. Similarly, CGHS, PMJY, they also have the cap on the room rent under the different category. So
yes.
I think let continue. And as far as the otherwise, the kind of hospital variation today we have got primary health, secondary health, tertiary health, quaternary care, and then geographical. A top hospital in Mumbai and top hospital, let us say in Bulandshahr, will have absolutely different room. And room today is not only room, it has got the nursing facility, infection control, infrastructure, other facilities. I think there is a lot of variation available. And let us not limit the choice of the patient, which are coming forward and are prepared to pay differently for the comfort which they are asking. So again, I am saying that already there is a capping under the insurance, under the government scheme. So let that continue. And finally, let there be transparency prescribed by the government under regulation, how the rates are to be fixed.
So how the rates are to be fixed, that kind of transparency, if we are to ask for it, Mr. Jailal, when patients often say that they know the diagnosis, but they do not know the likely bill that they're going to get at the end of the treatment, in that kind of scenario, should private hospitals be legally required to disclose their tariffs before admission? Is that the kind of transparency that we need to go for?
Absolutely. We are also for transparency, but also we must be able to realize that it is not something like what we are taking in a shop or a hotel where we can say your appendixectomy cost is going to be like this or that much, because every patient, the needs are different. There are people come with a lot of comorbidities. People come with an associated illness. People come with the associated diseases, so which we cannot be able to put forward in a uniform tariff rate. But it is mandatory, which most of the hospitals, what we are following, we have a tariff which we will be explaining to the patient before they are getting admission. And most of the hospital, most of the NABH accredited hospitals, we get an approval from the patient. This is what is going to happen. And if there is something happen, untoward events, and this is the way we are going to treat. So we are fully supporting the transparency in the tariffing, but we will not be able to, because of the lot of restrictions, put a single tariff like what the pricing we have in hotels. And this is Italy or something is coming to cost this much. That is not possible, but every patient must be, and that is what we instruct our hospitals and doctors, must be what in advance, what is the expectancy, what are the tariff they are going to spend must be explained to them. So you're saying... But I also fully agree on that, Dr. Girdhar Gyani, and fixing the room tariff to the 3-star hotel. Again, it is a problem which the hospital, the owners are not understanding. See, in the rooms, many times the hotels, somebody go and join for a single occupancy. Many times when the patient come to the hospital, it's not a single occupancy. Somebody has to be there with him and somebody has to be accompany them. Another extra care, extra facility we need to provide. So let us fix the tariff, but do not compare it with an hotel or compare with that something else. And that is only the problem we have. So
you are also saying that this might be counterproductive. And as far as the pricing goes, not to compare it with 3-star hotels, that may not work. But Dr. Gupta, where do you stand? Is the government right to focus on pricing, or is the real problem that quality healthcare itself has become so expensive to deliver?
I think healthcare is the essential rights of every human being in India or across the globe. And it's primary responsibility and primary accountability to provide healthcare access and affordable healthcare to every citizen is government job, central government and state government job. We spend only 2.5% of our budget on the healthcare. However, the developed countries spend more than 10 to 15% of their GDP on healthcare only. Even WHO says it should be minimum 5%. BRICS countries, excluding India, spend 5%. So I think government should come forward to spend more on the healthcare needs. That's more important. Second thing, if you compare the expenses of any procedure, surgery, on it, any medical treatment in government hospital with comparable to the private hospital, always government hospital is expensive in terms of absolute expenses. That is afford. Actually, that is subsidized by the government, and the patient actually give out of pocket expense very less. But otherwise, the operating cost and even the capex cost is very high in the government hospitals if you compare with the private hospitals. If we talk about the room rent of a hospital and comparing it with the 3-star or 5-star hotel, it is absolutely not fair at all, because in a hospital setup we provide not only hospital room, we provide clinical staff, resident doctors, even the paramedical services like radiology, lab, blood bank, even CT, MRI, cath lab. They are highly capex investment equipments, and infection control, GDA, housekeeping, attendance care. Lots of things has to be done.
But Dr. Gupta,
who is admitted in the hospital. Yeah.
But Dr. Gupta,
and
wouldn't you say
our primary aim is providing quality healthcare services and safety of patients.
So quality healthcare is a given. Dr. Gupta, quality healthcare is a given. Aren't you standing for standardization when it comes to what these quality healthcare services should be charged?
Definitely, I am saying it, but you should compare our investment as compared to the public sector investment in public hospitals. We are very affordable as compared to the public hospitals. If you see their budget and their expenses budget and their revenue budget, we are very affordable. If we talk about the investment in a hospital, per bed, 1.5 crore investment is required to start a hospital in plant machinery, excluding land. And if you run a hospital, this is a high OPEX business. You require lots of money to run a hospital. And there is 3 to 5 years of incubation period, moratorium period, when it comes in break-even hospital after that. And after that also, even government is not giving anything on subsidized to us. We are paying for land at an auction price. We are not having any subsidy on the electricity bill. We don't have any subsidy on the GST or income tax, or importing the machines, or having Made in India machines. I think manpower cost, if you see, 25% of the manpower cost goes to the doctors. Of the total revenue of a hospital, 25% goes to the other manpower, excluding medical manpower, excluding doctors. 50% goes to directly manpower, including medical and non-medical manpower. Even 25% goes to the MCI, medical consumable implants. 25% जो बचता है, that goes to other services like maintenance, AMC, CMC, other like cafeteria, safety, security, accreditations, empanelments, lots of recovery.
Right.
And we received our bills after 1 year from government institutions, PSUs and government schemes, and after lots of deductions also. There is lots of disparity in the rates also. Like
Yes.
Ayushman rates are not at all, they are affordable to hospitals.
Yes.
If we talk about the affordable healthcare to the patient, we should talk about the affordability to our hospitals also.
All right, so fair enough. You're saying that affordability for hospitals is also a big ask, and today you cannot create that kind of parity with a 3-star hotel. You cannot put caps. But Mr. Mathur, from an insurance and regulatory perspective, do price caps improve affordability, or you think they create unintended distortions in the healthcare market? Where do you stand?
No, I'm all for the caps. But the cap should not be related to, say, a 3-star hotel, as the other panelists have said. We have to work out how we arrive at the room rent. And the hospital should be rated. I think the health regulator should be created to look into all this. So if the hospitals are rated and their room rents are also capped as per the rating, then I think it will be easier for the insurance company. Actually, they factor in their premium the cost of room rent. So, but if it is inordinately very high or very low, very high, then it is difficult for the insurance companies to pay the claim, and it unnecessarily increases their claim ratio.
But Mr. Mathur, why are they high? Some hospitals, why are the kind of pricing that you see in some hospitals much higher than others?
I think they have to work it out. I have seen during COVID times, some medicines, some like the COVID kit is sold for 500, some are selling it for 1 lakh. That I have seen these things. So I think we need to cap it, but as per the rating of each hospital, and then insurance company also can come out with the plans which will factor in the cost as per the rating of the hospitals.
Right.
NABH has been doing it, but I think it is not mandatory. So unless the health regulator comes and they impose these things on hospitals, then only things will work out. If we have to go for insurance for all by 2047, which is the government and the regulators' agenda, then affordable insurance only will come when we cap these things.
So not
and
only,
we, regulate these things through a health regulator.
So not only hospitalization has to be affordable, insurance also needs to be as affordable. But you flagged off something very important, which is excessive billing. Mr. Jailal, the panel has flagged this. Excessive billing, the unnecessary diagnostics, also the rising cost of routine procedures. How widespread are these concerns today that need to be addressed with the kind of price caps that we are talking about?
Sir, we are living in an era where now, because of transparency, whether we like it or not, now it has become a mandatory. Even now, anybody who has an internet, we have the Google, they are always able to flag and able to compare with that what is happening in one hospital and other hospital. And if some hospitals, if you are indulging in undue billing, I'm not saying that they are not doing, but that is a very limited number, and they will not able to stand long. Because today that every individual, the Gen Z generation, they are much computer savvy and they are able to get the information on their pocket. So now this has been realized by majority of the hospital, and all those hospitals are only putting on their appropriate care. But unfortunately, we are talking in a generalized term. We are not doing a scientific costing. What we request the insurance sector or the government come out. There is a costing agencies there. There is a pricing agencies there. Let them do a study and how much amount of work which people are doing, how much amount of expenditure is there in the building, and then let them bring out a scientific costing and let it be put forward. And all of us are willing to formulate that. But somebody sitting in an AC room and putting there, this is a third class rating. You have to put for a room rent, and you cannot go above 5,000, 6,000. That is absolutely nonsense. If you see a building norms itself. Building a hotel room is entirely different from building a hospital room. The FSA, the amount of staircase we make, amount of fire safety method we need to make are extremely different. So on that, one component is extremely not comparable component. You cannot put a rate with comparing with a third class or a third star room. So let the government come out, let the insurance come out, do a scientific costing, say that this is what we are working out, manpower costing. Then if they are coming out with a rate, and definitely it will be there. But what is happening in some of the hospitals, some of the black sheeps, I think they are not going to stand long and in the era of transparency in which we are living.
But they are existing right now, which is why this need for this kind of price caps that is being discussed by, in this report at least, that has been suggested. But Dr. Gyani, you think this committee wanting a fast-track ombudsman for excessive billing, for insurance disputes, is that something that policyholders and hospitals desperately need today? Where do you stand on that?
Actually, we have been suggesting not only for the private insurance, but also for the government-related schemes like CGHS and Ayushman Bharat. In all cases, the 30 days is the right way that where the reimbursement should be made. Beyond that, if you introduce a clause of even 1% interest, things will drastically improve. Let me remind the viewers here, when the Ayushman Bharat was launched in 2018, there was a clause that beyond 30 days, the government will pay 1% penal interest. Unfortunately, all the states conveniently removed that clause. If that clause was there, it would have put the accountability on the reimbursement officers. If that comes into force, many hospitals will be willing to be on the panel of the Ayushman Bharat, because today the payment is coming 3 months, 6 months, 1 year, and it is stopping the cash flow. And I can tell you here, government may not be aware about it, that on paper, maybe we can say 40% population is covered. But actually on ground, this scheme actually is not working because hospitals are not really taking the patient under the Ayushman Bharat. So this 30 days is very, very important. Let them put 1% clause for the interest.
So 1% kind of clause for interest, is that going to change things? Dr. Gupta, do you think an independent ombudsman could fix this kind of problem, especially when you're talking about Ayushman Bharat? Would hospitals welcome this kind of independent ombudsman to start with, if it means quicker resolutions to the problems in the medical field and greater public trust as well in the entire industry that we have, the medical industry?
I think first we should rationalize the rate of room rent for that should be linked to the location of the hospital, tier 1, tier 2 or tier 3 cities. Size of hospital less than 100 bed, 100 to 200 bed, more than 200 bed. Its hospital is providing secondary care, tertiary care or quaternary care. Accreditations of the hospital like NABH, NABL or like other accreditation, empanelments. Based on this, all hospitals should be star rated, and based on this star rating, I think that room rent can be kept. There is no problem at all.
No, but you're not talking about the ombudsman. How important is that, Dr. Gupta?
I think you are absolutely correct. But if we want to provide quality healthcare services, the Ayushman scheme is built only on the variable expenditure of a hospital. Like if we have around 60-70%, there is a fixed cost, 30% goes to the variable account. So they thought, who made this Ayushman scheme, that there are around 30-40% beds are empty in each and every hospital that can be utilized based on their only variable cost. That's why they started this scheme and rolled it out. But the rates in the Ayushman scheme are so low that any hospital who is providing tertiary care, quaternary care services, having accreditations and empanelment, they cannot provide a quality care and safe quality care in these rates also. And the debtors period, I mean the receivables are very high. As Dr. Gyani has told, that we receive our payment after 6 months, 7 months, after lots of deductions also. We require a lot high working capital, high OPEX costs. We pay around 12% to the banks to run our hospital. We provide our payment to our vendors, like the medicine consumable vendors, within 90 days because of MSME Act also. We provide our salaries to staff before every 7th of every month, also doctors. And we receive our money after 8 months, 9 months, 10 months, or even after 1 year also.
But tell me,
a lot of uncertainty also.
But tell me, Dr. Gupta. Yes. But Dr. Gupta, tell me, you think faster claim settlements could eventually translate into lower cost for patients, because that's the ultimate aim?
Definitely. It will reduce the working capital cost to the hospital, and that benefit can be directly to pass on to the patients. Even if you reduce GST, or you reduce GST from 5% to 0 on medical equipment and medical other consumables, it can also directly can be passed down to the patients also, and it can reduce healthcare costs. If you reduce the debtor period, it will directly be passed on to the patients. I think there are so many things that can be done to reduce the cost of the healthcare to our citizens. That is possible, but I think there should be rational things we should think over.
So, Mr. Mathur, what is the bigger challenge right now? Is it about selling affordable insurance or ensuring sufficient healthcare infrastructure to serve those newly insured patients?
No, we have to provide affordable health insurance particularly, and that is possible only if these prices are capped. And I think the ombudsman which you have mentioned is a very good idea, and it will be very effective. Actually, that is a gap between insurance and the hospitals. If these ombudsmen come,
yes,
then some legal procedure will be there, and they will be able to handle these excessive billing or excessive charges by hospitals. They will be able to identify and put a deterrent on the hospitals which are doing there, as the other panelists have suggested that some of the hospitals are doing it. So I think affordable insurance is a must, and that is possible only if we are able to contain the hospital charges.
Hospital charges need to be controlled, you're saying, to be able to get the affordable insurance going. But Dr. Gyani, the panel is also saying, as far as healthcare services go, to be moved from GST exempt to zero-rated GST. And that, they assume, is going to allow the hospitals to claim input tax credits, the ITC. Would that be a game-changing reform? Is that something that is required too?
Yeah, this is a potentially major reform, let me say, if government can bring it, because this we have been demanding for quite some time. Because as you are saying that we are unable to claim the input, tax credits, and if this can be done, because we are putting a lot of heavy investment on the today's machinery, and that's why this zero-rated GST will be a very big reform, and we all welcome if government can bring this.
So it's an important ask, and perhaps this panel is suggesting we should go ahead. But Dr. Gyani, the panel also wants revenues from medical tourism to cross-subsidize treatment for poorer Indian patients. You think that's a practical way, or do you think it's easier said than done?
Actually, let me tell you, I have studied this aspect, that let us say we get from one bed, I'm talking of the quaternary care hospital, we may get 1.5 lakhs, let us say, from the medical tourists per day, I'm talking. And while the other, our domestic patient, we may be generating around 70 or 75,000 and similarly below. And let me tell you that from private insurance, we may get around 30% people or maybe 25% people come from the cash. Remaining the government scheme like CGHS and then the Ayushman Bharat, we are getting, in case of Ayushman Bharat, 1/3 of the operating cost. So automatically there will be a good cross subsidy if we get more and more patients from the foreign countries, for which most of the hospitals are putting their own effort. If there is a unified effort from the government that India as a destination for the medical tourism, I think our number will increase drastically, like the way Thailand has done, the way Singapore has done, even Malaysia is trying to do that. I think so this cross-subsidy model will work a little more effectively.
Right.
I absolutely support it that let us increase, the number of medical tourists coming from at least the countries which we are targeting, African countries, GCC countries, Central countries like that.
Right. And also, before we close this discussion, Mr. Jailal, the report is also talking about a dedicated healthcare capex fund, soft loans, tax incentives as well. And this is to push hospitals into rural India. You think affordability is impossible without improving the kind of access we have first? Mr. Jailal.
Yeah, I for that, I mean, this capex fund is always good for the public to get some kind of the leverage which they are going to get in kind of a difficult time. There are a lot of, in overall, there is a lot of good things has been put forward in this recommendation that definitely we welcome that, especially as you have already talked about the GST, and that is one of the most important revenue change which we are welcoming. And another thing, very importantly, they talked about the counter sales of the antibiotics. And this is one of the big menace which is happening in our country, where any antibiotics we can get from the shop. And the drug resistance which is mounting and which is becoming one of the challenging in our own eyes, in front of our eyes. A lot of people are going to die without proper drugs and antibiotics. So that is a very good effort which they are putting on the antibiotic policies which are coming out of that. So in general, we are overall, Indian Medical Association, we support the lot of recommendation. And if the capping and other things also coming on a proper costing, proper scientific evidence, again, that will be also, we will be welcoming for that. But let us not compare with something a fixed thing, but with an open mind, we approach this, and that will be definitely a good thing. And as you rightly said, the some kind of leverage which we are giving to the public for getting the fund in their difficult time, that is going to be a big game changer in this healthcare delivery system. But Indian Medical Association is a little against this going on, putting ombudsman, tax audit, another expenditure team. Now, previously, if you see, there are only doctor, patient, nurse, staff. Now there is too many people are coming.
Correct.
The insurance sector alone taking 30% of the healthcare budget as an administrative cost. If you are going on adding administrative costs, the amount which is going to benefit for the people are going to be less.
Right.
So let us be more open, more transparent, so that the benefit reach out to the common man and the community in the society.
Dr. Gyani has a quick point to make. Go ahead, sir, before we wrap up.
You see, the panel is also suggesting the missing middle class,
Correct.
4,000 to 6,000. I think that is a wonderful suggestion. If that you can bring, the millions of the people will come, I'm talking from the informal sector, under the insurance net. I think that can be the dramatic change.
Correct.
In improving. Yeah.
So healthcare is a service, but for patients, they often feel It's a financial emergency. The challenge is, of course, finding the balance between affordability for patients and sustainability for the healthcare providers. The price caps may sound attractive right now, at least on paper, but unless they are paired with stronger insurance coverage, better public healthcare, the quality of healthcare like we discussed, and smarter regulation, maybe the problem merely shifts from one part of the system to another. You need all of this to happen. My thanks to Dr. Gyani, Mr. Jailal, Dr. Gupta, Mr. Mathur. Thank you for joining us with your insights tonight. Yes, affordable healthcare isn't just about cheaper healthcare. Now, of course, you need to make sure that nobody fears that bill that comes at the end of the treatment. They concentrate that much more on recovering rather than the financial emergency sometimes that is launched when we go to a hospital. I'm Vikram Oza with a big question. Thank you for joining us.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us. Crude prices advance after rising for 4 consecutive sessions as investors assess mixed signals surrounding a potential deal between the US and Iran. Both countries are demanding for war reparations, even as Tehran said Hormuz won't open till the demands are met. After a lackluster previous session, US futures trade flat as investors await key inflation reports. Street would also analyze the Federal Reserve's decision on rate cut based on CPI data. Meanwhile, a dull expiry weighed down by global headwinds and crude volatility, along with slide in support, is set to keep Nifty in a range as it starts trade today. The index closed near 24,470 with mixed performances coming in by broader markets and other sectors. Godrej Consumer appoints Asif Malbari as CEO and Managing Director for a 5-year term from August 12th after Sudhir Sitapati resigns just months after being reappointed to the roles, the firm appointed Vishal Kedia as interim CEO. Good morning. You're watching Markets Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note, and all of the updates coming in, whether it be across the globe or some of the stocks that you should be keeping on your radar as well. But first things first, let's take a look at the handover coming in from Tehran and Washington. And in fact, US forces have fired 2 Hellfire missiles at a Panama-flagged cargo ship after it ignored warnings and attempted to really sail towards an Iranian port. At the same time, Tehran is saying that the Strait of Hormuz will remain closed until its demands, which include an end to the US blockade, and those are met. So release of frozen assets and a regional ceasefire are met. Those are some of the demands that they've outlined as well. There is, however, a diplomatic opening that you're looking at, though. So some bit of silver lining when it comes to diplomacy. Qatar is saying that Oman-Iran talks are making major progress at the moment. You do, of course, also have Pakistan that has also stepped up its mediation efforts, also saying that a deal could be closed, even as Washington and Tehran really harden some of their positions and double down on their statements. But that's the entire update coming in. When you talk about Tehran and Washington, let's also hear out some key commentary that really puts all of this into perspective. In fact, you do have US President Trump, who, while speaking to reporters, has said that the US has full control over the Strait of Hormuz and that he does not really trust Iran. Let's go across and listen in to that bit of commentary.
Iran is going fine, going just absolutely fine. We totally control the Strait of Hormuz. We have control over it. Nobody else, only us. Our Navy is unbelievable. And things are going great for our country. Go ahead.
Well, then there you go. So things are going great for the US. And right now, there's a little bit of a breach of trust that the US president seems to have highlighted, which is also reflecting very, very clearly, of course, in some of the statements coming in from both sides. But let's also take a quick look at what the resultant impact is, be it on oil prices or on the markets. Quickly taking a look at US markets first. It was largely a lackluster session yet again. And that's really across the board, as you can see on your screen. So 0.6% downtick coming in for NASDAQ. Even when you talk about S&P 500 and Dow Jones, about 0.5% lower. And of course, when you talk about US futures also, you're looking at a picture similar as yesterday's as well. So close to the flat line, barring Dow Jones, that's just about underperforming as well. Slight bit of a negative bias, if you can even call it that. Other than that, when you talk about Asian markets, it's actually a tale of two triggers coming in when you talk about Asian markets. So on one side, there's Nikkei and Hang Seng that are in the red, especially with that Hang Seng's cut of 0.8%. When you talk about Shanghai and Kospi, though, on the flip side, that's where you're seeing some pocket of strength really coming in, especially Kospi with that 2.8% uptick also. So that's the entire picture. As far as markets are concerned, lastly, when you talk about oil prices as well, it's actually the Hormuz standoff that we've mentioned for you thus far this morning. That's really seemed to be helping oil prices as well, because some of those supply concerns very firmly in place, which is why Brent above $89 a barrel and WTI also crossed that $83 a barrel mark as well, 0.7% uptick coming in. So really building on some of those gains from earlier. That's oil prices for you this morning. But let's also get you the FNOQs in terms of what they're indicating. And Puneet, it is quite, again, yet again, an interesting handover coming in with oil prices also building on some of those gains. Definitely a key pressure point for markets.
Well, most certainly macros continue to have an impact on the markets, and hence we've been talking about that tight range that we're stuck in. It seems to be one of those mornings yet again. A 20-point uptick in the implied open. We were yesterday below, we were talking about 24,600 as a key level on the spot rates yesterday. Were just below that. But when you look at how we ended up also, that's important as well. So let's look at the next part as well. 24,471 is where we ended. So compared to yesterday, we are actually having a conversation now about 24,500 yet again, which has been not a sore point, but we have been in this very volatile range of 24,400 to 600, largely weakish kind of a setup that continues to be there on the Indian markets yet again. You've seen the Bank Nifty also at 57,400. Not here, not there. Yesterday we was talking about 57,700. So only 58,800 as a key level on the upside, which is still some time away, will be the other level that we continue to monitor the next leg of move for the index. But for the cash markets, we highlighted that August has been a month where there's been some kind of buying spree by foreign investor, at least not with rigor yesterday, still in the green at this point of time. But also on the longs and the F&O side of things, they've largely been maintaining that, that 12 to 13% range, now just a tad below that. But the put call ratio, which was important yesterday in the session because of the Nifty expiry, continues to be at that 1.08 to 1.03 mark, largely neutral. So not too much specific moves that you're seeing. But there was a change in this particular chart. Now, you saw 24,600 yesterday as a very important level for the calls because of the high open interest seen on that level. That changed positions with 25,000. But what you also saw is the out of money put call option at 24,000 starting to see high open interest. Now, we get into a new weekly series. But if this continues, and this will be something to watch based on the monthly contracts as well, if that is the level that's getting activated again on the put side, 24,000, and hence you could start seeing pressure yet again on this range that we are at. Could go back to 24,200, will be something to watch. But fag end of earnings, and hence you're seeing some reaction on stocks too. LIC actually continues to be on our list yet again. Second day of build-up that we are seeing on this counter. While PI Industries, weaker set of numbers, saw some kind of short build-up. Bharat Forge actually was again down 2% yesterday. Brokerages was largely mixed, but on the F&O side of things, shorts being built up on this counter. And finally, when you look at the open interest losers, Bosch was definitely one where you saw covering out shorts on the back of good results. Longs being unwinded on a Hyundai will be something to watch if that's a trend or no. While Dr. Reddy's also saw some kind of short covering, stock was up 4% yesterday. So we have some names that are in the F&O space that have reported results, so that those will be key. But yet again, a benchmark day that seems to be flat for now.
Absolutely, and let's see how that really pans out for us as well. Thank you so much, Puneet, for joining us with that. Let's also quickly talk about some of these earnings reactions that are going to be key to watch out for. So something like a Siemens, PI Industries, Zydus Life, all of those counters will remain in focus. Let's actually start by talking about Siemens as well, because brokerages remaining quite cautious when it comes to this counter. They're talking about how despite healthy order inflows, that's something that they're looking at. HSBC maintaining a hold rating, Citi staying neutral, and JP Morgan also remaining underweight, with some of that margin pressure really worrying them. Let's also go across to Parth, who's standing by with some more details. And Parth, it's caution across the board when you talk about brokerages.
So overall, the numbers that were reported by Siemens were slightly on the good side, and but that was also supported by really strong order inflow numbers that were reported by them. If we start with the brokerage notes, then JP Morgan has maintained an underweight rating with a target price of 3,334 rupees per share. They believe that the sequential improvement in the EBIT margins of the digital industry segment was a positive for Siemens. While the continuous compression that we are seeing in the overall EBITDA margins of Siemens was key negative, and that is something that we need to watch out for if this compression in EBITDA margins keeps going on in the future quarters as well. Now coming on to the Citi's note, they have maintained a neutral rating with a target price of 3,875 rupees per share. They believe that the margins were weaker than expected due to two reasons mainly. The first one being commodity inflation, and the second one was forex volatility because of the INR depreciation that we are seeing in the past few months. But there is a scope for margin improvement in the coming quarters because of the likely price hike impact that will start reflecting in the coming quarters. Also, their pecking order for the diversified MNC companies in India is as follows, with Cummins India being on top with a buy rating, then Siemens in the middle with a neutral rating, and ABB India at last with a sell rating. And lastly, HSBC, which has maintained a hold rating as well with a target price of 3,540 rupees per share. They believe that there was a strong performance reported by Siemens on the ordering side and execution as well, while margins still remain elusive for them. So overall, if you talk about the consensus, they still remain that margins were on the weaker side, while strong order momentum gives enough confidence to investors for the strong earnings visibility ahead.
In fact, there are no points for guessing what's going to be the key trigger as well going forward. Key monitorable brokerages think that it's going to be margins as well that do remain elusive. Thank you so much for joining us. With that entire update coming in as far as something like a Siemens is concerned, let's also talk about PI Industries. That's reported quite a weak set of numbers in the first quarter. You're looking at revenue and net profit dropping year on year. The agrochemical slowdown is something that you're looking at. Global disruptions also weighed on the export business. In fact, Varsha is joining in with a detailed handover in terms of what the numbers really look like. Varsha, good morning, and it doesn't look like it's going to be a good morning when it comes to PI Industries though.
Yes, absolutely. So weak set of numbers is what we are seeing when it comes to PI Industries. This is on the back of, slowdown when it comes to their agrochemical segment and of course the geopolitical situation that we are in. Now, talking about the numbers, if you see revenue was down almost 10.4%, EBITDA was down almost 30% and margins, so margins were at 21% or 22% versus 27% last year. So huge pressure that we are seeing in the EBITDA margin, and of course net profit was down almost 40%. Now, talking about what hurt Q1 performance, one is of course export business. If you see, agrochemical export was down almost 12% year on year, and the volumes were also down. The export volumes, if you see, was down almost 8%. Now, there was weak demand across, global agrochemical industries. Even companies saw generic pressure which continued globally. So, overall, this hurt Q1 performance. Now, talking about the domestic market, what challenges were there when it comes to, India? So, if you see, pricing remained under pressure. There was delayed monsoon also, which impacted overall revenue or growth for the company, which postponed part of sales for the company. Uneven monsoon, if you see, impacted Kharif season for PI Industries. Now, talking about margins, if you see, there was a huge degrowth or huge pressure which was seen in margin. Now, input costs increased. Of course, this is due to geopolitical issues that we are into, and higher raw material cost impacted overall gross margin, which also impacted EBITDA margin, and higher tax rate impacted overall profitability for the company. Talking about PI Health Sciences, if you see Q1 FY27 revenue was there was a decline. This was mainly due to customer order facing. So overall, if I were to talk about how are Q1 numbers, of course a weak set of numbers. Now the important point is what's the commentary when it comes to the overall FY27, because management has not given any commentary, and we do have con call at 12 today, which will, so the main highlight of the con call will of course be what commentary for FY27 is been given by management.
Absolutely, and Varsha, it's a busy morning for you. Let's talk about Zydus Life as well. Largely looking like a mixed brokerage call also coming in. Some of them maintaining sell but hiking the target price though. Varsha? Right, so that's Zydus Life that you're looking at in terms of some of those brokerages also coming in. And as I was mentioning as well, you do have something like an Investec really maintaining a sell rating, hiking the target price. That's something that you're looking at in terms of Investec as well. And some of those commentary coming in terms of acquisitions where they're talking about investing ahead of synergies. So some of those brokerage calls coming in on something like a Zydus Life, but that said and done, let's also quickly talk about something like a Manappuram Finance as well. And when you talk about the quarter, largely a little bit of a strong quarter that you're looking at, it's actually the gold loans that have really driven this kind of strength coming in. In fact, Shivam is joining in with more updates in terms of the key highlights and the financials, Shivam.
Yes, definitely a good set of numbers for Manappuram Finance this quarter. In fact, the quarter was mainly driven by the gold loans that has seen a significant growth in terms of gold loan AUM2 that has now forms around 90% of the standalone asset under management. In terms of gold loan yields, that too has seen improvement of around 59 basis points, and this is due to the pricing actions that that the company has taken in previous quarters that has led to these improved yields. In terms of its subsidiary Ashirvad, that has also seen a turnaround in profitability in this quarter, and the profit after tax of the subsidiary stands at around 21 crores versus 13 crores in previous quarter, and also in quarter 1 FY26 there has been a loss of around 13 crores. So the recovery trend in the subsidiary companies has also been on the track. In terms of MFI asset quality, that has improved in terms of the net NPA that has improved to around 1.4%. However, the vehicle finance book that has which has been seeing some sort of stress in previous periods too, that has remained to shrunk, and also the focus in this book is on collections and improving asset quality. In terms of financials too, we have seen the AUM going up around 57%, which is the consolidated AUM that stands around 69,635 crores. Also, the net interest income of the company has gone up by around 28.2% in this quarter. Moving on to the management's outlook, the gold loan will remain the primary growth engine for the company, as the company is focusing more on customer acquisition and also the branch expansion going forward. Also, the company's strategy is to maintain around 75 to 80% of consolidated AUM in gold loans over the medium term. In terms of microfinance growth, that will remain calibrated, and the focus on this segment will be on asset quality and profitability in the medium term. Also, the vehicle finance disbursement that has remained paused for FY27, as the company's focus is on collections and portfolio cleanup, while the affordable housing and mortgage-backed MSME lending that remained preferred non-lending gold lending products. In terms of guidance, the gold loan growth is around 25 to 30% for FY27, while the gold loan yield is expected to be around 18%. In terms of ROA target, the company is targeting 3.5% to 4%. Also, in branch expansion, the company is targeting around 500 new gold loan branches by the year end. In terms of key monitorables, so we have the execution of branches, also the continued recovery in Ashirvad's, which is its subsidiary, that's profitability and asset quality remains one of the key monitorables. In terms of brokerages, the Morgan Stanley has stated that has maintained an equal weight rating with and also has hiked the target price to 360 from 270, and has stated that the strong gold loan delivery has supported the results this quarter, and the guidance are also along with the NIM expansion. In terms of a return on equity, that is aspired to be around 18% from the company's side, and the brokerage has raised the EPS estimates to around 14 to 15%. So overall, a good set of numbers for Manappuram Finance in Q1.
Absolutely, and thank you so much, Shivam, for joining us with that entire set in terms of the, handover coming in from that as well. But Varsha, as we were talking about earlier as well, you do have Investec and Citi, quite the interesting commentary, maintaining a sell rating, hiking the target price, really liking the India business performance.
Yes, so overall, if you see, the brokerages kind of, are mixed when it comes to Zydus Life, though Investec and Citi has, have raised their target price, but importantly, they have retained sell to on Zydus Life. Now, the reason is that, while India, if you see, in India, the growth remains strong, and the quarter was aided by, when it comes to resilience, when it comes to US products, there are concerns around the scale of investments being made, and hence Investec view is that this Zydus is investing heavily across US and acquisitions, what they're doing, but it will take time to materialize, and hence Investec has maintained that sell rating. Now, Citi is more encouraged when it comes to the India business, I would say. They say that the domestic business is growing continuously and is expected to outperform. The brokerage also highlights that management has maintained FY27 guidance of a double digit when it comes to revenue growth, and 24% when it comes to EBITDA margins. Now, onto the Macquarie. Macquarie, however, remains constructive, and hence, has maintained outperforms with target price of rupees 1,285. The brokerage says that the operational performance was ahead of expectations, number one, and the guidance has been maintained, and the consumer business could deliver double-digit growth this year. This is what Macquarie is saying, and hence they are constructive when it comes to Zydus Lifestyle, and hence they have maintained outperform with target price. So overall, what we are seeing is a mixed set of reviews when it comes to Zydus Life, and Q2 and overall FY27 will actually determine how the growth has been overall.
All right, thanks Varsha for joining us with that entire brokerage take also coming in. Time to talk about some of the stocks that are in focus, but not on the back of earnings. In fact, Sharad is joining in with just that entire list as well, Sharad.
Well, yes, firstly we have to look at Nalco as well as Hindalco, and largely Norsk Hydro has announced a 50% curtailment coming to the alumina capacity, and this augurs well for these companies. JSW Dulux board has approved 1:10 stock split, so we will be watching for that as well. Grasim has commenced the production of its important resin plant in Gujarat. Glenmark The US arm has settled its litigation with Humana as well, and the GMR Power and Natco Pharma should be on your radar because of the fundraise announcements on August 14. Zydus Life, an important arm settlement has come in. Also looking at the overall order wins coming in from HE Infra and BML Diamond Power as well, and 3M India. Interestingly, there has been a resumption in the operations for the Ahmedabad plant. But what's not working is definitely going to be 3 deals which are there in focus. This includes Thyrocare, 1,000 crore block deal coming in. Dr. Agarwal, Temasek and TPG 8 entities will be offloading stake in the block today. And Tenneco, where the promoters will be selling 10% of their stake in block today. So these are the stocks which should be there in your radar.
Perfect. Thanks, Sharad. That's quite a list to look at. Thank you so much for joining us with that. Let's also talk about something like a Godrej Consumer Products that you should be adding to that list that's announced a surprise leadership transition with CEO Sudhir Sitapati stepping down with immediate effect after nearly 5 years at the helm as well. So you do have the company that has appointed Asif Malbari, currently Global CFO and President of Godrej Africa, as Managing Director and CEO from August 12th, while Vishal Kedia will be serving as the interim CFO as well. So that's the key change coming in. Let's also go across and listen in to what the new management then had to say over these changes.
GCPL has always stood for trust, innovation and boldness. I am very grateful that Nisa and the board have entrusted me to carry that forward. A fantastic team and I are committed to meeting their high expectations, elevating performance in our core while accelerating new category growth. We have iconic brands and significant category development opportunities ahead of us, and I'm very excited to get started in my new role.
All right, then, so keep that one on your radar as well. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Hi, thanks so much for joining in. Good morning. This is NDTV Profit. You're watching India Market Open. My name is Alex Matthew. That's Hiral Dadia, and we're coming to you live from the NDTV Profit Suzlon studio. Got it all out of the way. Now,
Yes.
let's
Good
talk,
morning.
Good morning. Let's talk about the big story. Is it oil? Is it gold? Is it capital markets? Or is it the fact that Jeff Bezos is investing in a football team?
Liverpool FC, and both the fans are here.
No, we shouldn't get sidetracked.
Why do you think I'm wearing red?
No, they're celebrating. All right, but we should talk about the fact that for the Indian equity markets, Hiral, the last 3 sessions in particular have been very, very range bound, haven't they?
They have been absolutely range bound, Alex, and I think what's coming out of the cash session as well is that on the derivative side, to some extent, the volumes are dropping. So that's one. The prop book, their volumes are dropping as well. So
is this exactly what the regulator wanted to do? That's the question over here, number one. Two, I mean, oil, it's anyone's guess, I think, that it's getting into that range. The moment it reaches a certain level, goes below 80, and you start hearing of all the negative news when you talk about the geopolitical tensions, and it's back there again.
It goes back to 90. In fact, let's talk about that right now. In fact, let's talk about the geopolitical tensions that have escalated. The latest, of course, is that Houthis have reported separate attacks on shipping on Tuesday. The attacks occurred in two locations, one in the Gulf of Oman and then also at the entrance to the Red Sea. Mohsen Razai, who is Iran's top security official, reportedly said that the strait would remain shut till Iran's conditions to end the war were met. And those have been repeated quite often, the fact that they want their assets back, they want to trade in oil, and they want reparations as well. The US military, for its part, said that 2 Hellfire missiles were used to disable steering gear of a Panama-flagged cargo ship, and that ship allegedly ignored warnings and violated a naval blockade on Iranian ports. And so that had a bearing on oil prices. We'll talk about that in just a bit. But the rhetoric on both sides, Iran and US, continues. Here's what President Donald Trump had to say when speaking to reporters.
Iran is going fine, going just absolutely fine. We totally control the Strait of Hormuz. We have control over it. Nobody else, only us. Our Navy is unbelievable. And things are going great for our country. I don't trust Iran. Why? Are you saying I trust Iran? I'm the last person that trusts Iran. They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away. But right now, we're in a very good position. We have a country that has been the bully of the Middle East for 50 years. Really 51 if you think about it, right? We've been saying 47 for 4 years. And they're no longer the bully of the Middle East.
Okay, all right. So more of the same essentially from Donald Trump. The fact is, the data is pointing to upward pressure on oil. Shipping data showed traffic through Hormuz fell to 6 vessels on Monday, and that's according to a Reuters report. The 10-day average of shipping was also pretty low at about 11 vessels. The actual shipping that goes through that channel is more than 3 times that number, as a result of which that's expected to have a bearing on oil prices. Already it has. The fact is that Brent crude is now hovering around that $90 per barrel mark as of this morning. Equities on Wall Street have also declined as those geopolitical tensions have flared. 3 S&P 500 sectors rose and the rest fell. Gold paused its rally just under that 4,400 per troy ounce mark. Those are the marks for the markets overnight. You had the Dow as well as the S&P 500 losing about 0.33% each and 0.6% lower. Let's also talk about the fact that CPI data is eyed not just here in India but also in the US, and that could have a bearing on monetary policy, as you know, and the expectations for rate increases and when they will take place. Equities in the Asia-Pacific region had mostly opened lower last I checked. The Nikkei 225 is trading just about flat. The Hang Seng is down about 1%. The Kospi was the exception. It actually traded higher. So let's see if we can pull that up. It is in fact 3.5% higher at this moment. Let's go across now to Jonathan Bharat, who's Chief Investment Officer, ETO Markets, joining us right now. Jonathan, very good morning to you, and thanks so much for taking the time as always. You track crude very closely, and there are expectations that now will be higher for longer. The question is how much higher from this point? Because if 11 ships or 11 vessels or less are going through the strait over the course of the last 10 days, and that has dropped over the course of the last couple of days, then there is bound to be bearing on supply.
That's 100% correct. And I think whilst we're in this stalemate, because that's what it is, we can't really believe what Trump's saying, and Iran continues to push what they're doing militarily. So in my mind, that's reducing that traffic. As you said, and correctly pointed out, there's only 5 when we should be doing about 15 through to 20. and that's going to have a crimp on supply. Now, remember, we know how much oil we need out of the Straits of Hormuz, and that is certainly causing a squeeze. I think there is more of a risk premium starting to be built into the price of crude as a result of this just rolling on and on and on. And I think that's why you're seeing prices continue to gravitate. We know a solution will occur, but we don't know when.
Okay. Jonathan, good morning. Hiral on the side. You're talking about crude as well. The other important aspect that Alex was pointing out this morning is with what's happening with gold. Now, if you have to look at gold and silver from recent lows, somewhere gold is outperforming silver as well. What should that strategy look like if someone has to start investing at lower levels in terms of gold and silver post that mild correction that did come in, and now that the surge is coming in and there is a differential there?
Yeah. Look, I think generally when you look at it, and the CPI numbers tonight are very super important to that trade, because people are starting to say, well, look, you know, the hawkish, the dovish talk that we're starting to see from the Fed, you know, puts in favour the gold and the silver trades. You know, with interest rates not going up and coming back lower, I think that people will start to say, hey, look, that's a trade we want to continue. So I do get that feeling that gold and silver, and I love silver from here. I like silver at these levels because I do think it's got a lot further to go for a lot of other reasons rather than what we're seeing in the US. So I think when I can see both those precious metals continuing to climb. Love to see silver next up to that US 100. And of course, when you look at gold, you know, I think it's got the legs on it to really start to trade higher, maybe back up to that, 4,500, 4,500, maybe even higher, up to that 5,000 level, which is where I'd like to see it.
So that's with regards to gold. How about copper, aluminium? Because copper, again, at record high levels. You have Grasberg smelter as well, which is halted bites. You have aluminium, which has gone ahead and surged as well. How do you advise to play that basket?
Look, I think I always like copper. I like copper from these levels. You know, although we are on record highs, once again, there are two metals which I really like, copper and silver. And that comes out of demand out of China, it comes out of the green vote, the green alternative economy which we're looking at. And copper is interesting in the sense that it is in a supply deficit, but it's also interesting because you're having some mine issues already, and that's feeding in. We get a lot of demand out of China, just like we do with silver. Remember, silver imports of ore that contain silver into China are up around about 62% year on year. So when you look at it, those two metals in mine are a focus for the next, couple of months, even for the next couple of years. So on the base metals, still love copper, and of course on the precious metals, silver.
Equities as things stand right now, Jonathan, and specifically for emerging markets, data seems to be coming out that the allocation for global investors towards emerging markets has been on the up and up. But the thing is, it seems to be gravitating towards debt rather than equity. What's your view on the flows?
Look, I generally think flowing to debt's probably the way to go. I think a lot of people are concerned in terms of where equity valuations are. If you've been in a sort of tightening environment, loosening, that should give edge to equities already. And we're at record highs, when we particularly look at the US markets. I think, the emerging markets still remain that where the growth is. And I see retiring sort of out of the US, but people go to the US equity markets for that safety. But I think the emerging economies in the commodity sector are the ones that I think people will be focusing on their allocation in their portfolios.
That's with regards to where, the global markets go, and the view coming in on equity as well. But it's interesting, copper from the base metals and silver from precious metals. That's the key takeaway here as well. But thank you so much, Jonathan, for joining in. Always a pleasure to speak to you. Moving on, Alex, if you see in terms of benchmark indices, I mean, you summed it up all when we started off as to what's happening, but clearly you've declined around 0.5%. There is buying interest which actually emerged in Bank Nifty at lower levels, and Nifty has been confined to a narrow trading range as well over the past 4 sessions. If you talk about the index constituents, Dr. Reddy's Eternal, these were the top gainers, whereas Tata Consumer Products, and we now know the reason why that stock probably took a beating in yesterday's session, and Max Healthcare were the key laggards. On the sectoral front, you had Nifty Pharma and IT which outperformed, Real estate and Nifty Metal witnessed sharp declines as well. Broader markets also pretty much range bound, wherein the mid-cap 100 and the small-cap 100 both traded within a narrow range for the fourth consecutive session. The breadth absolutely weak, because if you talk about the advanced decline ratio, it favored the declines, and within Nifty 500, almost 296 stocks closed in the red, highlighting a cautious undertone beneath the headline indices. So clearly, I mean, there is not everything which is positive, but at lower levels, wherever valuations are cheap, probably that's where buying interest is emerging. The story is what happens today now, right? And if you have to look at the setup, again, I mean, a flat to muted opening is what is indicated so far. Your global triggers offer mixed signals as well. If you talk about MCX crude oil, that has crossed nearly 8,000 rupees per barrel, and this is for the first time, surging almost 2.8%. Now, there is a potential sector rotation strategy that could happen. On the back of the spike in raw input costs from crude oil, there could be sharp polarization as well. So, headwinds for sectors like tires, paints, FMCG and cement, and these are sectors that probably one should avoid. Consumer-facing sectors are facing severe near-term margin erosion from the pet coke and crude price shocks. Secondly, if you talk about the safe haven bets, that's the defensives, that's where the long bias is. So talk about Nifty IT. Structurally, it's actually closed above its 200 daily moving average. And you have Nifty Pharma. That was the top sectoral gainer as well. So potentially capital is actively rotating to these defensives, and this is to shelter against that broad index volatility that we are seeing. And that was actually evident in yesterday's session, where IT, not extremely strong, but there was buying. Likewise, Pharma, not extremely strong, but there was buying. So probably capital is moving to the defensives right now.
And what is also interesting is that even for the IT index, you saw money being taken off at the top. So it's not like it's got a whole lot to run 100%. At this point, right? So it has run, and which is why you see likely more people taking money off that tactical bet. It ended significantly off the high point of the day. It's up as much as 14%, as you can see from that chart. But talking about the factors, and we mostly summed it up, but let's talk about some of the levels that you should watch out for. The Nifty is seemingly shifted from range-bound bullish to a cautious sideways move, and the volume picture is also supporting that. The most important change is that the index has actually slipped below some short-term moving averages. Obviously, oil prices at $90 to the barrel and geopolitical risks rising are adding pressure on the downside. The immediate resistance for the benchmark is seen at 24,600 to 650. The support is seen between 24,400 to 435. It's actually a pretty narrow range that is being seen for the benchmark Nifty 50. Crucial positional support is seen at 24,350 and 200. A break below 350 may accelerate selling towards that 200 mark. For the Nifty Bank, the resistance is pegged at 57,575 to 680. The major hurdles are at the 58,000 strike. I'm sure my colleague Puneet will highlight that for you in just a bit. The support is seen between 57,125 and 230, and a stronger support flow is seen very close to that 57,000 mark. But let's head across now to Puneet to find out what the F&O cues are pointing to. It was a pretty quiet expiry, all things considered, right? So what are you picking at the start today?
Well, good morning, Alex. And you might rightly mention, right, very, very quiet yesterday. We didn't see too many kind of wild moves, especially on the index too. And while yesterday we spoke about 24,600 and how we were starting off just a tad below that, today the conversation is around 24,500 and how we are essentially stuck in this range at this point of time. We've gone through the set of earnings, and hence there is essentially clearly a lack of trigger, lack of momentum visible on the index. Similar one on Bank Nifty as well. We spoke about 57,700 yesterday, just about 300 points away from that range, but the only support and the only resistance that we have to cross essentially is 58,800 to form a meaningful trend that currently isn't visible at this point of time. But as we've gone through the last 10 to 11 days of August, we've seen some buying come back by foreign investors, at least in this month, not with too much rigor, but at least the green visible on that number. The F&O positions also are similar. We saw a build-up actually at the start of August, and then starting to see that number also come down a little bit at 11.8%, essentially indicating that shorts still continue to dominate at almost 88% for the foreign investors. For the put-call ratio too, here is also a very quiet number that we've seen over the last couple of days, because not too much build up, but there has been a change that we've seen from yesterday. That has been that positions are reduced at 24,600, some additions at 24,500, but the massive build-up on the open interest out of the money call options at 25,000 continues to be a trend that we see now and again. So this is again that we are starting to see this. What's also interesting is that 24,000 had the massive candle in the red on the left of your screen, which was a put candle being built in yesterday. So that wasn't visible yesterday. Today it is. Now if that is only weekly or in the monthly contract, will be something that we get to know tomorrow morning as well. And finally, for stock-specific action, you've seen only action, a lot of action in the broader markets led by earnings as well as news flow. So LIC continued to be on the top of our list, seeing some build-up on longs yet again. While PI Industries were a weaker number, short being built up yesterday, stock will be in focus today as well. And Bharat Forge was another one that was down another 2%. We spoke about it a couple of days ago. Stock was down 7% on earnings. Continues to see massive build-up of shorts. For the change on the open interest losing side, you're seeing some good moves on Bosch, which is good earnings covering of shorts, but also on Dr. Reddy's. After sustained pressure, you're starting to see some buying yet again if at the lows. So if that continues, will be something to watch. And Paytm, the rally has fizzled out yet again on the conversation on MDR. So today as well, we have some decent good earnings, which has been in the broader markets, but I think that will be where the action continues for now.
Okay, the action is going to be stock specific. Thank you, Puneet, so much for that. Now, on my list, majority's earnings, RHI Magnesita, interesting set of numbers, strong quarter with a sharp profitability growth is what we've seen, and hence a thumbs up. The management actually has remained constructive on long-term growth, and they're expecting to perform market volume growth by 1 to 2%. Margins, they've said, are expected to stay resilient. Revenues have seen a growth of 6%, EBITDA 35%. That number is coming at 137 odd crores. EBITDA margins at 13.6% versus a 10.6%, and so a sharp improvement there. And this is in spite of all the concerns on supply side on the geopolitical, on the back of geopolitical constraints. Your net profit, 83% growth at 64 odd crores versus a 35. The second one on my list is TD Power Systems. Again, a thumbs up on this one because it's an exceptionally strong financial performance. In fact, they've upwardly revised their FY27 performance guidance to 35 to 40% in terms of growth. Their unexecuted order book stands at close to 2,200 odd crores, and the order inflows for the first quarter of FY27, actually that skyrocketed by 87% at 734 odd crores. So a staggering 93% of the order inflows that they have originated have come in from international export markets. Revenues are up 72%, EBITDA is up 75%, margins 19% versus a 18.7%, and the net profit has grown 72%. And the last one on my list is PI Industries. A thumbs down on this one. Now, they've witnessed soft global agrochemical exports, and the demand, in terms of demand, and the ongoing operational stress is where they are seeing in the pharma division. Now, the escalating input costs as well as lower operating leverage, that is what has impacted margins. In fact, margins are down significantly from the long-term guided range of 25 to 27%. So that's one of the key negatives as well. Revenues is down 10%. Your EBITDA is down 30%. Margins have come in at 21.6% versus a 27.3%, and your profits have dipped 39%. So don't be surprised in terms of PI Industries on a negative reaction, Alex.
Yeah, very interesting. And in fact, there are quite a few stocks in the broader markets that are looking very interesting on the back of earnings as we wind down the season. In fact, that's where I've picked a couple of my stocks. MUN Industries looks pretty good. This is a manufacturer of high carbon steel pipes for various reasons, and they've seen a better product and geography mix that has aided the margins. The consolidated order book stands at 3,600 crore rupees across India and Saudi Arabia at the end of the quarter. Majority of that order book is executable over the next 6 to 12 months, which looks good for them. The bid pipeline currently stands at around 24,000 crore rupees, and that's what's giving them confidence to maintain that revenue guidance for the full year at 5,000 crore rupees for FY27, with EBITDA margins hovering between 13 and 15%. So the quarter gone by was actually pretty robust. You had revenue growth of 42%. You had EBITDA growth of as much as 89%, and the margin stood at 13.6%, well within their guided range, and that compared with 10.2% in the comparable quarter, as a result of which the net profit went up to 61.4 crore rupees compared with 27.6 crore rupees in the comparable quarter. Polyplex actually also looked particularly good. If you only focus on the top line and the bottom line number, you will say that it's an absolutely stellar quarter. But they did see a significant inventory gain, and that aided the bottom line. That inventory gain that was booked stood at 142 crore rupees compared with 44.5 crore rupees in the comparable quarter last year. The revenue likely benefited from the higher selling price, and it has remained profitable now for a third quarter in a row. So it's not necessarily the best thing to do when you're comparing it year on year, because in the year ago quarter they had actually posted a loss. The revenue uptick of 30% is certainly positive. EBITDA stands at 297 crore rupees compared with an EBITDA loss in the comparable quarter, and the net profit stands at 91 crore rupees, which is a multi-quarter high. Bear in mind that some of this could indeed reverse in the second quarter if those inventory gains dissipate, but the stock is already up as much as 4.2%, positive from the perspective of what they're selling and the fact that they're able to pass on those prices. We'll speak to the management if we can and get you more clarity on that. Finally, it's an update on Godrej Consumer. We'll delve a little deeper into it in just a bit, but let me give you a little bit of what the brokerages are saying. MS on Godrej Consumer maintained an equal weight with a target price of 1,204, but the story is that the CEO has stepped down, and earlier than anticipated. That unexpected change is a downside to the stock multiple in the view of Morgan Stanley. They view that announcement as material negative for the stock, and the stock had re-rated strongly during Sudhir Sitapati's tenure. And the market will await clarity on the new CEO appointment as well. They do not see an immediate downside to the consensus numbers just yet, but the reaction in the stock price might be something else entirely. What are we talking about? What is this story about, and why is Sudhir Sitapati stepping down? What has the company done in his term? All of that is going to be told to you by my colleague Sharad Dubey, who's joining us right now. Sharad, a very interesting story at a time when there is upward pressure on the inputs, and in any case, there is expected to be a change in sentiment for the sector. This is one more for Godrej Consumer.
Well, exactly, you're right. And in the FMCG space, we are seeing a lot of these resignations are happening, a big churn at the top level, something it's almost similar to the private banking names. But it's pretty much interesting. Let's understand how this leadership transition is moving ahead. Now, this outgoing CEO Sudhir Sitapati has resigned after 5 years, and Asif Malbari, he will be coming in the help as his place. Remember, he's already the CFO of the company. Vishal Kedia has also been appointed interim CEO during this transition. Also, importantly, he had stated that the total shareholder returns during his period was around 8 to 10%, but to be honest, in stock market, there isn't much of that returns coming during his tenure. Also, looking at his profile, the GCPL stock had traded in between that 1,020 to almost, you could say, 1,050 at the time of his exit. And if you look at the time he joined, it was just between that 900 to 1,000 rupees. Also, apart from the stock, the operating cash flows in his tenure, that did have a good increase from 1,500 crores to 2,500 crores by FY26. Also, let's move on. The organic volume growth also went up over the last 4 years from 2% to currently in FY26, the number coming in at almost 6%. Now, under him, new growth categories of expansion had also taken place, and there are certain segments such as the Goodnight Agarbatti, Godrej Air. These are the portfolio where he has increased, almost doubled from 8% to 15%. Also, very interesting book, I'm sure a lot of you must have read, is the CEO Factory, which he had actually authored. Asif Malbari, let's have his profile look as well as what he had actually spoken about. And largely, the brokerages have given a thumbs up as what Alex had pointed out. And Asif Malbari, I'd just like to give one important feedback about him. He is the global CFO since 2023. So that's a very important point to actually talk about.
All right. Let's in fact also listen to what was discussed on the management con call. I believe Nisaba Godrej had something to say about this.
GCPL has always stood for trust, innovation and boldness. I am very grateful that NISA and the board have entrusted me to carry that forward. A fantastic team and I are committed to meeting their high expectations, elevating performance in our core while accelerating new category growth. We have iconic brands and significant category development opportunities ahead of us, and I'm very excited to get started in my new role.
Sudhir wanted this with immediate effect. This was his request. I think my preference is always to take a longer period that we do, but it was his request. And since we had a ready successor plan with ASIF within GCPL, we agreed. The leaders who are running the country's clusters, categories remain the same. Like Asif said, he's worked shoulder to shoulder with them. So, we see a smooth transition.
Okay, so the transition is going to be interesting, but what's positive on one side is the transition is happening right now, at least to someone internal within the system who knows how the system functions as well, right?
That is ideal, yeah.
So that's one of the positive sides that you can look at, but again, how the stock reacts is anyone's guess. Let's see what happens. But we'll quickly slip into a short break. On the other side, we'll discuss your trade strategies for the day as well, and as always, we'll have Kush and Parag Thakkar in the studio. Please stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew.
Welcome back to India Market Open on NDTV Profit. Now let's quickly just first pull up implied open and see what is the rate that we're getting right now. 18 points, I mean nothing. Like Monday, like Tuesday, like Wednesday is what we're going to say. I think
you're not going to call anybody and say, hey, you know what, today is going to be a fantastic day in the market.
So yeah, that's what it is. So let's actually start off with one of the big stories in Indian markets as well, where we're talking about Godrej Consumer Products, and we're seeing a transition in terms of leadership. And let's welcome in Parag Thakkar and Khushbu as well. Parag bhai, good morning.
Thank you. Good morning.
Before I take the technical levels, Parag bhai, your view on Sitapati exit, because this was something which was not expected. His tenure just got renewal for the next 5 years as well.
AGM was just very recent.
Absolutely. And I think this has happened after the AGM. So there has been something which is brewed between the AGM and now. The question is, how do you think investors will look at Sitapati exit? And let's understand that the person who's come in is also an internal person. So probably that could be slightly positive.
Yeah. So what I feel is that this should not have happened, first of all. Since sudden exits, even in other FMCG company also it happened some time ago. These sudden exits are actually, it causes a very big, I would say, disappointment to investors. And that too immediately after AGM. But as you rightly said, somebody who has been in the helm from last, I would say, internal person like Asif, he is taking over the. So I would say that there will be a knee-jerk reaction for sure. Stock is trading at attractive valuations, 36 times FY28. If it falls more than 5-6%, then one can buy with a long-term view.
Is there a possibility of 5-6% drop though for a GCPL?
I would say that, because it has come completely, like I would say, a knee-jerk.
For a stock that is underperformed.
Yeah, it has. Yeah. I feel, so what I feel is that, Mr. Sudhir Sitapati came from HUL, right? And so when he came, if you remember, just prior to that, stock rallied actually 40%.
So the multiples assigned were higher.
So there was some premium attached to him.
Sure.
But I would say that yes, they have at least on the call they have managed it well. That internal person is coming, and so I would say that I don't feel that it should drop more than 5%.
And so at what level in your opinion is it attractive?
So below 1,000, I would
pull up the chart.
But any investor who is coming in will have to keep some patience, because we'll have to see execution improving. As such, as you rightly pointed out, oil prices are at 90, so palm oil will be volatile. So there'll be some margin pressure here. Household insecticide is not doing that well. So whoever buys today will have to keep patience. That is my point.
People who have bought 5 years back have also had to have patience. So nothing really changes with GCPL. But on the charts, is it an avoid?
Oh, absolutely. I mean, most of the pack has been right, and any bump up
apart from Nestle
and Marico.
Apart from Nestle and
Marico. Saugata Gupta has done a wonderful job. Superb.
So both fundamentals and technical.
They marry for Marico, at least, even for Nestle. Apart from that, any other stock you see in this space has had those fits and starts, but hasn't really been able to catch on. But over to the indices.
Yeah, we should talk about that. More of the same.
Hey, काय चाललंय? What is going on?
Speaking in Marathi today, what is the trigger?
मला पण मराठी येते.
हो.
इतकीच येते. But इतकीच. Whatever. However, इतना ही आता है.
जर मराठी तुम्हाला बोलायचं असेल तर बरोबर बोल.
So help me.
असं मराठी फाडू नको.
Oh my God! Okay, I wanted to trigger this because I know the only guy who could speak Marathi so fluently on the table is Alex.
But let's get to the levels.
Yes, we should. I mean, more of the same, right? Been here, seen that. Crude 75-80 aata hai, and then again. your reaction. And then at about 1995,
don't get me into trouble as this NDTV Marathi will get me to do more links. Okay, so
that would be wonderful. Yeah, so we see crude, hitting that 1995 mark and then cooling off from there. You see the US bond yields going from 4.68 to 4.73 and then cooling off from there. Nifty gives you those fits and starts again, but then again consolidation. Also, by the way, if you see, the FII buying also has a trend. It gives you those positive figures to give you just enough hope, but not enough to say that, okay, this is going to be a trend because the volumes are low and whatever hope comes about is dashed by the, FII index net short figure, which now, by the way, has gone from 87 yesterday to 88. So my view right now is that this is perhaps a make or break kind of a level for Nifty, for Bank Nifty, for the markets in general. Because if we're able to hold above, 24,400, and rebound, this could well go into a low volume consolidation zone. If not, then you're looking at 24,250, perhaps 24,000 as well. So I would be a little cautious. Like I said yesterday, I'm looking more closely at supports. Investors, traders, you're better off respecting the supports and stop losses rather than looking at the resistances and the targets for now. So could be consolidation, but let's see how this plays out over the next couple of days.
Okay. So what stocks would you look at in this market which is consolidating?
Yeah, so, a mix of actually going with all longs, but, large cap, mid cap and all of that, it's a bit of a mix. Also, some of the stocks that we've discussed in the recent past make a comeback. So, for example, Escorts Kubota, right? We discussed this for targets of about, 3100, 3130, that was hit. Then again, the stock went into a low volume consolidation. Now, from there on, it's again, giving you a fresh uptrade. So, 3190, 3285, these are your targets. 3030, that's where you keep your stop loss. JSW Infra, surprising name, but with the kind of rebound that it's seen from the 50-day moving average, makes an interesting trading bet. So 352, 363, these are your targets. 330 is where you keep that stop loss. And the last name, by the way, Sangvi Movers. Now, we discussed this stock exactly about a week ago for a second target of 516. That's been hit yesterday, day before, but the volume action, the price action on this one's fairly encouraging. You could see some profit booking, but the broader trend remains intact. So for targets of 530 and 555, with a stop loss updated at 499.
Okay. All right. Let's move on to an update with regard to global alumina supply. There is a disruption in that supply, and in fact, it could put Indian producers on the back foot. You have Norsk's Hydro that is cutting alumina output by as much as 50% at its refinery in Brazil. And in fact, let's get in Parth to give you a sense of what exactly is happening. Parth, what are the updates here?
Yeah, it's quite an impactful development that is brewing in, and it's that Norsk Hydro has cut alumina output by almost 50% due to the disruptions that they are facing in gas supply at the moment. Alunorte is currently buying spot gas, and they have said that the output will recover once that disruption normalizes. Now let's discuss the global impact of this disruption. Well, Alunorte produced 6.3 million tons of alumina in calendar year 2025, which was 4% of global supply. So a 50% cut will mean 2% of the global supply of alumina completely vanishes. And because the global alumina market was at a surplus of 1.6 million tons, because this 50% cut will lower the supply by 3 million tons, so that surplus will actually flip into a deficit in the coming year. So that's why alumina, which trades at a price of $347 per ton, is now expected to go beyond $500 per ton. And if we come to the impact on Indian companies, then NALCO will be the biggest beneficiary because they are a net seller of alumina on a net basis. Hindalco will also benefit, but the benefit will be slightly lesser when compared to NALCO. Also, Vedanta Aluminium, they will be lesser exposed because their captive share of alumina stands at 77% as of FY27 starting. And but of course, the benefit size will depend on how long this gas disruption lasts at Alunorte, Brazil. For Norsk.
Thank you, Parth, for that. So, the cut in terms of alumina by Norsk is the key over here, and that somewhere comes in as a benefit to Nalco. You're talking about Hindalco, Vedanta Aluminium as well. Who better than Parag Bhai to discuss this? Parag Bhai, yes, benefits will come in, but do you think the benefits will be as large for a Hindalco versus a Nalco, or do you think it will be the reverse?
No, see, straight away it benefits Nalco because it is alumina, and Nalco is alumina producer. So, and as such, as he showed that Nalco is alumina is undervalued compared to generally it is 14 to 16% of the aluminium price on LME. Right now it is 10% of it. So as such it is undervalued. So this is a bigger benefit for Nalco for sure. But Hindalco will also benefit because Hindalco has a captive alumina, bauxite, everything, and plus their coal mines are also starting from next year, and your May Bennett plant in Novelis is also starting. Plus, as we discussed in H2, Novelis margins are about to improve because Oswego plant has started and trades at just 10p. So I would say that Nalco and Hindalco both stands to benefit from this. It of course depends on how much it lasts, this disruption, how much it lasts, but definitely there will be a positive uptick in these two stocks.
Okay. Will the stocks react positively? What are charts indicating? Hindalco, Nalco, Vedanta Aluminium.
So Vedanta Aluminium fairly limited data,
correct,
so I'll skip that.
Yes,
but so it's slightly delicately placed, and I'll tell you why. The near-term trend is positive, but look at something like Nalco. In the last 9-10 odd sessions, it's already up 17%, right? And it's had just as many sessions, maybe a little more, of positive closes. So I think somewhere from a very near-term perspective, some profit booking is par for the course. So if you do get any kind of a bump up, I think you should book profits now. The near-term uptrend that resumed about 2-3 weeks ago, that remains intact. So I would be a buyer on dips for Nalco and Hindalco as well, which by the way has had bouts of profit booking here and there. So a good entry point for Hindalco would be 1010, and for Nalco it would be about 370 to 375. So you could either hold, or if you want to enter afresh, then I would suggest do that on dips.
Got it. Okay. Let's talk about MCX. It's in focus on account of SEBI's new consultation paper that proposes to admit foreign portfolio investors into non-agri commodity index derivatives. Sharad joining in to talk about what this update is. The stock, by the way, already gained quite considerably in trade yesterday. And what brokerages are saying. Sharad, what are you picking up?
Well, Alex, brokerages have turned quite bullish on the counter because of this, especially JP Morgan. They have upgraded MCX to overweight from neutral. Even the target price has seen a significant hike from 2,560 to 3,500 rupees. Now, interestingly, the FPI entry that's expected to drive up the volumes, and it will be a big, deep structural widening coming in when it comes to the overall foreign investor base. Now, remember the bullion segment, that is where the street is factoring in that there would be more action and volumes coming in. And the incremental FPI flow, if it comes into the volumes, that futures ADTV, which is your average daily turnover, that's expected to spike up by 9.1% or 14% over the next 2 years. Also looking at the options numbers, that's expected to go up by 10% next year if the FPIs start coming in, and the EPS is likely to improve by almost 12.3% for FY28. Now, Jefferies has also stated that SEBI proposing FPI access to this segment might actually account for roughly 5 to 6% share in the cash commodity segment, and in the non-cash it could add at least 3% to the PAT. The commodity index options could add roughly 10% PAT. So yes, it is incremental, and largely for Morgan Stanley also they have stated that the FPIs have contributed just 2% in the first quarter of FY27. That number can just double up at the end of FY27, and FPI's share of higher numbers can be there, especially on the cash settled notional turnover segment when it comes to MCX. So in total, we are expecting increase in the EPS, increase in the volumes, and yes, more participation and deepening of the markets.
Okay, thank you, Sharad, for that. In fact, 4.5% up move is what we've already seen in terms of MCX in yesterday's session. And if you have to look at the last 1 year as well, 75% kind of gains that have come in on this one. You have BSE as well, which has been an outperformer if you have to talk about exchanges, and now NSE IPO, which is awaited. Talking about MCX, Parag Bhai, how do you look at the news that has just come in terms of FPI participation in a couple of commodities and on the agri side? And do you think there is further momentum also taking where the valuations stack up?
Yeah, so valuation wise, I'm slightly not comfortable, but yeah, of course, there is a structural positive. The volumes improve, the FPIs participate. So I think the stock momentum can continue. But for me, I cannot buy this stock right now at 47p trailing and after such a massive run.
Kush?
Very constructive. Have been, will be for a while until something major changes in terms of price action for BSE and MCX both, right? Yeah, this is a good chart, by the way. See, it's had a long, sharp run up, and then you've seen some consolidation, some profit booking. That's a healthy sign. I prefer to buy these stocks when they're consolidating, and mild profit booking. So for me, this is a positive. By the way, the structure on MCX and BSE, even if you can show them side by side, it's actually very similar. BSE is about to break out of that falling trend line resistance. With the last 2 days move, MCX already has. However, immediate resistance is at around 3000 mark because of the technical resistance, because also of the call option writing that has happened around that level. So maybe it could pause here. But if you were to buy, I think this is a good zone for you to buy, because then the stock could then again make a run towards 3300, 3500 levels, from a medium term perspective. So constructive on both BSE and MCX. Yeah, beautiful.
Very similar charts,
exactly,
if you see, right?
Oh, yeah, okay. So that was it. I thought you were going to add to that. Okay. It does look like a beautiful chart. Both MCX and BSE performing in conjunction. Let's head across now to Puneet to find out what the other counters are, because there are so many of them that have reported numbers and that have got other news flow attached to them as well. Puneet?
Well, thank you for that. I'll start with the key ones which are buzzing on the back of news flow. So the stocks to watch, the first one's L&T. Now, the company has signed a business transfer agreement with Vyoma AI, and they will be essentially, transferring its data center and cloud service business for a sum of almost 1400 crores. Now, when you look at the consideration for the aforementioned transaction, will be discharged by Vyoma through issuance as well as of fully paid equity shares to L&T as well. The net worth of this particular business currently is at 1142 odd crores. The revenue is very small at this point of time, or 26 crores, but the net worth is something to watch for this business. The other one's GMR Power and Urban Infra. Now, the company has actually put out a filing that they will be considering raising roughly 3,000 crores. Now, this will be done via QIP or bonds or otherwise, and comes at an interesting time yet again, because they've just inaugurated a new airport as well in Andhra Pradesh, and hence the next leg of capex financing, if any, will be done through this QIP. So the meeting will be held on 14th of August. So important if and when that can happen. And finally on SKF India, now we had that big demerger between the auto as well as the industrial business last year. Now the company has appointed Sujit Pai as the MD of the SKF India from September 1st, and he will be replacing Mukund Vasudevan, who has been at the helm for a while now. Who will be stepping down from this particular role. The company also declared a dividend of almost 20 rupees, but this is a big management change. Mukund has been, at the forefront of talking about the company as well as had a good run as MD. So these are the three counters buzzing on the back of news flow that you should watch out for in trade today.
Got it. Okay, so quite a few stocks there, and a few stand out. Of course, Larsen & Toubro from the large cap pack. It's not done particularly well in the recent past, but the only question is, can it break out of that funk? Pull up the last 2-3 months or thereabouts, and it's just about, last month has done precious little. Last 3 months as well, it's wobbled just a tad bit. So what's the view on the charts?
It's not a bad setup. It's not a bad setup, because despite the kind of sharp downticks that you've seen in the stock, it actually manages to see a very interesting rebound from averages perspective on a very healthy ground. Not a momentum play, but again, if you want to buy it for 12-18 months or out, this is a good zone. This is a good area where you can start accumulating L&T. Of course, a lot of it depends on the geopolitics as well, but from a technical standpoint, this 3800 to about 4100 zone, it's a very good accumulation zone from a long-term perspective.
And on the fundamentals, Parag?
Yeah, same view. I also share the same view. If you have a 12 to 18 months time, you can accumulate this. Because as long as this geopolitical crisis is there, the stock will be range bound. This is the range you have to accumulate. As soon as this Middle East crisis cools down, you will see a big rally in L&T.
Speaking of earnings, we saw Siemens report yesterday as well, Parag Bhai, and it came during market hours. It was a bit of a fluctuation. If you pull up the intraday chart yesterday, if you have that, you will see what I'm talking about. There's a bit of a spike at the end of trade, right? There was that exceptional item, or rather, the discontinued business profit that they booked But apart from that, there was a disappointment on the EBITDA margin.
So order inflow was good. It was up 16.5%. Margins contracted. That too, gross margin have not contracted, but EBITDA margin has contracted because of other expenses. So where currency fluctuations and all those things will be there. So I think market was happy with the fact that the order inflow was good. But I think the stock trades at very expensive valuation. I don't know why people want to buy 16.5% growth in order book at 55 times FY28 earnings.
Okay, so that's with regards to Siemens. In fact, we have a couple of brokerages as well that we will go through in terms of Siemens a little later. Let's see how the stock reacts in trade. But it's that time where we go to Somit Sarkar with all the chatter from the dealing room as well. Somit, good morning. What's the latest that you're picking up? Because lots brewing in terms of what the markets are doing, specifically from a stock-specific perspective.
Yes, here a lot of stock-specific action. Firstly, it's on Polycab. The stock was down yesterday around 2.5%. Now, the buzz on the street is that the potential block deal from the promoter side could happen very soon, and that is the reason why the stock was showing weakness in trade yesterday. Apart from that, there are three other counters: Suven Life, Beta Drugs, and Nuvama Wealth. What dealing rooms are indicating is that a large, prominent HNI has been accumulating shares in these three counters, and that is the reason why these counters were up in trade yesterday. So keep an eye out for these names. And multiple news that we indicated earlier have come out to be true. Tenneco Clean on June 15th, where we did say that there could be a big block deal that could come in. And today a block deal is expected post the block window. And on August 10th, we mentioned that Metropolis and Thyrocare, there would be block deals coming in from the promoter side. Now, yesterday's bulk deal data clearly shows that the promoter family in Metropolis has sold some shares, and today in the block window, Thyrocare's promoter will be selling his shares. And lastly, Manappuram Finance was part of a segment on August 11th, that is yesterday, where we did mention that the Q1 numbers are expected to be quite strong ahead of what the street has been anticipating, and it's a 15% beat compared to the analyst estimates. That is what the Manappuram Q1 numbers are.
Okay, interesting names there. Thank you, Somit, so much for getting all of these out. In fact, I would want to take a couple of the questions with Kush on this one. Kush, if you have to look at few of the names, we're talking about Suven Life, Beta Drugs, Nuvama. Good HNI accumulation that was happening as well. But are you seeing any further upside from here where any retail investors can look at?
So, in all honesty, Beta Drugs is something that, I don't track very closely, but the kind of move that it's made, wow. I mean, that is something that I will now for sure keep on my radar, after Sumit's update on this. But I do like Nuvama. This stock's had a good run, seen a consolidation with a negative bias, seen profit booking. I would accumulate at these levels. These are very good levels from a risk-reward ratio perspective as well. 1600, 1550 kind of stop losses. On the way up, you've got about 250 to 400 points, on the upside to be had. So Nuvama very positive. Suven Life Sciences also has seen, a good recovery, good revival. The recent swing high around 370, very much on the cards. So very constructive on all three names. More so on Nuvama and Suven because I track these. Beta is something that I'll definitely put on my list now.
Okay, so interesting names coming in there as well. Apart from that, in fact, the other thing that we should be talking about is also, we've spoken about FMCG companies already, but other earnings, you have Landmark Cars as well, a good set of numbers that were posted. In fact, the revenues are up 22%, profits at 14 crores versus 6.9 crores is what you're watching out for.
But didn't the margins contract?
I'm just looking at that only, yes. A mild margin contraction that has come in. It's a 20 basis, 5.5 versus a 5.7. So no major moves there, but EV contribution is something which has been pretty strong at 30%. Quickly, Parag, by anything on a Landmark Cars, because suddenly that expansion is looking very strong for Landmark.
See, the company has done a lot of hard work, and I would say that they have put up stores. They have front-ended all the expenditures. Now, this quarter, of course, there might be some, I would say, input cost pressure because of the West Asia war conflict. But I think the major part of the hard work is done. Now, it is at an inflection point where we should start seeing reaping the benefits of whatever they have done. And now they have, so many. Earlier, they were totally dependent on Mercedes. Now they have so many brands. Mahindra, MG, and BMW, BYD, and so on and so forth. So I think this company is a stock to watch out for. It can be a long-term potential, it can give very good returns in long run. But of course, today it might be see some negative impact due to margin compression.
Okay, all right. Watch out for landmark cars in trade today. It's gained quite considerably over the last 1 month, and that might also be a reason why you see money being taken off the table. Let's talk about the FMCG pack, in fact, and those that are particularly sensitive to palm oil prices. That commodity is seeing its prices rise as Black Sea disruptions are threatening edible oil flows. Let's head across now to Sharad to find out what the implications of this could be. Because Sharad, in the run-up to today, already a lot of these companies have taken price increases to take care of input cost pressure. What's lined up ahead?
Well, Alex, it seems like there might be some more problems, and especially because now there is a tensions happening with Russia and Ukraine also, especially the Black Sea area, and that is where a big concern has started coming in. Because of this, the global grain shipments have been impacted, and sunflower oil, which is very much important, it's a large part of the Ukraine's economy, that's getting impacted. That's a form of oil which the FMCG companies use, and palm oil demand is likely to increase. And of course, looking at the prices, it's very much important to track what's happening, especially in Malaysia and the global prices, and they are already going up. The international palm oil prices, they have breached the March 2026 levels. Also, the pricing 7% up from the May lows. Also, the Malaysian palm oil, they have hit its 2-week high levels as well. Now, if these prices start going up, then it's going to hit the margins of the FMCG companies as well. Why? Because 50% of the raw material are used for snacks in this space when it comes to palm oil, and this can make up to almost 15 to 20% of the overall raw materials for the FMCG. But there are some listed players also. What's the raw material exposure looking like? We have, of course, HUL, Nestle, Dabur, GCPL, okay, and also Britannia coming in. So these are the companies which are having exposure here, and because of that, their margins might be further impacted. Already, remember, the FMCG companies have taken price hikes. So will they take again or not? That's a very big question. But there are some key concerns also. Higher packaging costs, and now FSSAI has become very, intensified when it comes to the regulatory checks on these. Rural demand may be due to the uneven monsoon, and higher valuations are always there punishing the FMCG stocks. Looking at the growth story, there is some silver lining. Not everything is bad. Resilient cigarette performance has been there in the volumes. Premiumization demand trend is actually playing out. Certain categories, further price hike is still possible. And upcoming festive season, we can see some kind of, value booking coming in, especially in terms of sales. More reach digitally coming in by quick commerce as well. So yes, FMCG industry is having problems, be it management churn, and now even the raw material price hikes.
Thank you, Sharad, for that. That's very interesting. And, time and again, when palm oil prices do inch up, this is a conversation that comes in. Parag bhai, at this stage, we've already spoken about I'm not saying concerns, but price hikes that have been taken. Margins, somewhere like, for example, on Nestle, performances were spectacular as compared to what was expected in terms of the first quarter, right? If you have to look at Q2, Q3, and from an earnings perspective, how big a monitorable will this be, especially for two names, GCPL, Britannia, where they are the ones which have maximum exposure to palm oil as well, almost 30 to 35%. The others is still in that range of 15 to 20%. And valuations are not that exorbitant as well right now. So if someone has to look at a bet in terms of FMCG, what would you advise? So,
based on my choices, what I have done in my portfolio are HUL, ITC at this price, and ITC price is very important because at this price it is 5% dividend yield. And HUL, ITC and Marico, for example. So these are the stocks which I have selected. And Marico, of course, there's a clear, they are not too much dependent on palm oil. Only their food business gets affected by palm oil. Otherwise, it is copra, right, mainly. And copra prices are going down. So, and so Marico has that tailwind of margin expansion also. And plus, they are doing very well in terms of overall business, double digit.
How much more upside do you see in Marico?
So basically, one can say that if they continue what they did in Q1, eventually it can go up to 1,000, 1,050.
Oh, 1,000.
But you can say that still right now also it is fairly priced. It's not very undervalued stock for sure.
On the chart.
But the performance is very good.
I know that we've spoken about a couple of these stocks, but specifically on Marico, 1,050 on the fundamentals, but I don't know when it will be hit.
Yeah, so that might take time because the stock's already seeing a bit of a run up. And in fact, from a trading perspective, if I were to accumulate, despite the stock being in a good stead and in a good trend, I would be more comfortable buying around 835, 840 zones, because that's where the supports lie. You've seen a cool off happen. The stock trades under the 20-day moving average. So for me, 835, 840 zone remains, a good entry point. Perhaps there, I'm not sure if this actually will sustain, at open. But yeah, around those levels, more comfortable, risk-reward ratio becomes that much more favorable. By the way, I have just a quick word. I've been constructive on Britannia, in the recent past. The 200-day moving average at around 5,700 might act up, plus, the impact of this news as well. So you might want to book profit. We'll consider again on declines.
Okay, the first ticks are in, and what Kush was referring to is the uptick, I think, on the Sensex, where you're seeing 0.75% uptick, but the Nifty 50 more sedate, and what you would expect it to do at the start as well, just about 20 points in the green. That's what the indicative open had suggested as well. A couple of stocks that stand out at the start, and again, you could see some of these settling in on the earnings reactions. I think Bata India stands out. Phenolics Cables to the end of trade yesterday reported numbers, and it seems like it might have another strong start to the trading day. Let's pull up some of these names that Hiral had pointed out for you as well. RHI Magnesita, the numbers looked decent. TD Power as well. The numbers were pretty strong, and the stock could well be the stock of the day, stock of the morning, at least 12% up. Mun Industries to me looked pretty good, the numbers looking very strong, and it's not doing too much at the start. Let's see if it picks up later. Polyplex, there was a significant inventory gain that they booked, over 100 crore. But the stock is still up 3% or thereabouts. GCPL, let's finally look at GCPL to see if there's a negative reaction in the first few ticks. Yes, indeed. And let's see if that settles. In fact, it's well over that 5%. But of course, it might actually settle lower than this, or with a lower impact than this. Chandan Taparia, Head of Technical and Derivatives Research at Motilal Oswal, joining in right now. Chandan, very good morning to you. And we've been seeing pretty lackluster trade at the index level. Quite a lot of action in the broader markets on specific stocks though. Do you expect more of the same all through the week?
Good morning, Alex. Thanks for having me. So the Nifty has been forming lower highs from last 6 trading session. However, it is in a range, but hurdles are shifting lower. Just a couple of days back, index headed towards 24,774, but it failed to cheer that momentum. The good part is that already in last 3-4 weeks, the index rallied by more than 1,100 points from 23,600 to all the way to 24,774. I believe any retracement zone or test of the key level will start the next leg of move in the market. So as of now, I'm looking a key support near 24,250. So any decline of 50 to 100 points can be bought with support of 24,350 for an upside target towards 24,650 to 24,750 marks. So overall looking for buy on decline, and believe that after the recent run up, any retracement can provide the support to the broader market. If I talk about Bank Nifty index, here again having the mixed cues, slightly witnessing some profit booking from last 5-6 trading session, but multiple supports are visible near 57,000. So I believe any decline of 200 or 150 points can be bought with support of 57,000 for a bounce towards 58,000. So in both the indices, which got stuck in a range and corrected from higher levels slightly, can go with buy on decline with the view that overall the undertone is range bound or buy on decline or bullish to range bound as of now.
Okay. What about individual stocks, Chandan? What are you liking today?
Yeah, so positive view on pharma and auto sector as a whole. And here I'll suggest to buy on Davis Lab. The stock has given a pole and flag breakout on daily chart after the consolidation of last 5-6 trading session. Overall, it has been making a high top, high bottom on the weekly chart, and we have seen a fresh breakout with build-up of long position. In fact, the rollovers were better, and sector tailwind also positive on the counter to extend the rally. So one can buy Davis Lab with support of 84.20, and here we are looking for an upside target towards 88.50 to 8900 marks.
Okay, so that's with regards to Divi's Laboratories. We've been talking about Siemens. Let's look at what brokerages say. HSBC has maintained their hold. They have a target price of 3,540, way below what the current market price is. Now, strong ordering, execution and margins remain elusive, and higher cost and depreciation pressure is what is pressurizing the profitability. Citi has maintained a neutral. They have a target price of 3,875, again below the current market price as well. And again, base order momentum remains healthy and strong. Price hikes may support future margin expansion, and the margin recovery is expected to be gradual. In fact, Cummins is preferred over Siemens and ABB. JP Morgan underweight 3,334 is the target that they have, again below the current market price, and that is what is interesting, right? I mean, whatever the numbers are, all the brokerages are talking about when the recovery will come in, but no one is able to really go ahead and upgrade the target price to give you something which could be profitable as well. On the charts,
multiples are so expensive.
Exactly.
How can you upgrade?
So, kya kare?
55 times FY28, and so.
Okay, so Siemens, ABB, Cummins. Let's look at all the three of them.
No, I think Cummins is a bigger beneficiary of data center and all. So Cummins benefits from that, but all said and done, Cummins is also expensive, and Cummins also reported 350 pips margin contraction. So I would say Siemens Energy.
Energy is the exactly.
Siemens
just coming
Energy
there.
and Hitachi Energy, both of them reported the better numbers, although they are also expensive.
They are expensive, but the opportunity that they are sitting on from the data center perspective
data
is
center
quite
transmission.
huge.
Correct.
So okay, so that's the play that you're looking at: Siemens Energy, Hitachi Energy, not a Siemens right now, not a ABB, not a Cummins, taking the valuations into consideration. Moving on, you have Lloyds Metal that is also in focus, as Nomura has downgraded the rating on this one. Now, what are the key parameters behind the move? Is there any upside expected from here on? Sharad joins us with more on it, and this is the big brokerage call of the day. Sharad, over to you.
Hiral, valuation concerns are there for this counter, and of course we have seen a good run-up already happened in this counter. Nomura has downgraded Lloyds Metal to neutral from buy, and even a target price has been cut from 2,050 rupees to 1,950 rupees per share. Of course, the main reason is the valuation catching up happening. The execution, however, is on track, and that large term or the long-term growth story is priced in already. Now, the earnings visibility that has improved, and valuations may turn less compelling going ahead. The Q1 FY27 results, if you look at it, two important points. First is the higher realizations coming in, and an improved mix has actually beat the EBITDA numbers. Non-ferrous has added meaningful medium-term optionality as well. But as of now, concerns are on the valuation, and that's why there is a downgrade.
Got it. Okay. All right, so that's a view on Lloyds Metal. Any view, Chandan, on the charts for Lloyds Metal? And let me also throw in Siemens in, just for good measure.
Yeah, so Lloyds Metal, we have seen a decent run-up in last couple of weeks. However, in this week, it corrected by around 5.5%, 6% in last two trading days. But major trend is positive. In fact, YTD basis, even after the decline of last 2 days, this counter is up by around 50%. In fact, we have seen attraction in the group as well, whether you are talking about engineering or metal or other name. So I believe any stability or support near 1900 to 1930 can be bought, and I believe the stock has again potential to head towards 2050 to 21 kind of level on the higher side. So major trend is positive, and volume decline could continue to be in the count.
Okay, so that's with regards to a few of the names that we're talking about, Lloyds Metal as well. In terms of other names, PI Industries is what I want to pull up. Let's see what that one is doing in trade as we speak. Just to mention, there you go, 1%, not a major downtick coming in there. So I think we'll avoid that for the time being. But the government is now government's EV push could actually soon expand beyond 2 and 3 wheelers, and this is with the centre considering a separate scheme for electric trucks and buses. Government sources say that the government is likely to come out with a separate scheme for e-trucks and e-buses, and the current policy targets only government buses, and they want to extend the benefits to private buses and trucks, and they are in talks with all stakeholders. They are in talks with banks to offer loans to industries as well. Let's also tell you how this will benefit the listed players. Let's talk about the EV bus beneficiaries. Now, the current scheme only targets government buses, and government buses 5% of the overall bus sales. So 95% of the buses sold are to private entities. The direct benefits will only come to private entities, will be the bigger boost is what they are looking out for. In terms of key players, Ashok Leyland because of Switch Mobility, VECV, you have Tata Motors, CV, M&M, JBM Auto, Electra Green as well. These are the companies that you should focus on. And the capacity increase is what we will have to focus on, because most players have invested to increase capacity. The problem is the utilization levels of all these companies, because the orders are not that large. And even if the orders are coming in, the delivery schedule is absolutely staggered. So because of which these companies are not really able to, actually function at maximum capacity. Ashok Leyland has invested to increase capacity to 19,000 to 20,000 buses per annum. JBM Auto is targeting a 15 to 20% utilization. And Electra Green says they can increase shifts at the plants to meet the kind of demand that we're talking about. Any of these EV beneficiaries, Parag Bhai, that you have a call on?
So Tata Motors CV I continue to like, which is around priced at around 450, 460. Of course, Ashok Leyland is also decent, and one is this EV. This is entirely a new opportunity, right? And government should definitely push it because of the high prices of oil. And of course, Electra kind of standalone EV players can also benefit. Like in two-wheelers, I was bullish on Ether, right? And here, Electra is one such player who is solely focused on EV buses, and they can benefit.
So, you've looked at the company. So you probably know. I've not been able to understand. They have massive capacity. Utilization is very low. How does that work out with regard to the operation?
So with this kind of push from government towards EV, and which is very natural, the capacities will get used. I don't own the stock. I'm just saying that JBM Auto and Electra both are in EV business in a big way. So I would say they would tend to benefit, in my view.
Understood. We were speaking about Hindalco at the start. We didn't take a chart check on Hindalco, did we? So let's try and do that. Hindalco as well as Nalco. Let's do both.
Yeah, we discussed Nalco and Hindalco very briefly, where I said that the run-up from a near-term perspective is very strong. I'd be more comfortable buying on declines. So I think at these levels, if you do have profits, I think you're better off booking partially, because of the near-term momentum does not make sense for you to exit completely. But on both these stocks, book partially, you will get, you should get lower levels to re-enter on both of these names. The volume accumulation, the price action has been rather strong.
Bata has had a pretty decent set of numbers. The stock is up as much as 4.3% after the pre-open session. On the fundamentals, were you able to look at the numbers, Parag Bhai, and what did you think?
No, I have not looked at the numbers because there were so many results. But the stock has underperformed so massively that even a small, I would say, uptick in the performance can bring cheer to the stock. The stock has underperformed massively.
I'm just trying to pull up the numbers as we speak, if we can. I will get back to that in just a bit. Can we take a check on the technicals?
Yeah, some shares already come in, in the last about 1 month or so, where the stock is up 20%. But if you ask me, I think I'd wait up on any fresh purchases, because this can't be. This is actually a rebound from massively oversold levels, right? So this is just a relief rally for now. Whether it continues into a bigger trade, maybe above 750, we see not now.
Okay, actually the numbers don't look spectacular. I was mistaken. 4% uptick in the top line, EBITDA uptick of just about 2.6%, margin contraction, and PAT numbers up as much as 23%. So that's something.
Frankly speaking, I saw a note which was talking very bullish, but the inside the numbers were very, I would say, disappointing. So
I think with all footwear companies, that's been the case as well. I mean, you talk about a Metro, a similar kind of scenario is what we've seen. Bata as well. Manappuram Finance, can we pull up that one on the screens, because they've also reported a good set of numbers. Chandan, quick view in terms of Manappuram Finance on the charts.
Yeah, so looking at Manappuram Finance, the major trend is positive, and the recent consolidation of last 2 days indicates further rally in the counter. And the good part is that recovering the precious metal and gold is also supporting some recovery in the counter. So likely to remain positive. However, on the last day it witnessed a corrective move, but that is the major support. So one can use the support near 360 for an upside target towards 385 to 388 marks.
30 seconds, Kush, top call.
Escorts Kubota, targets 3190, 3285, stop loss 3030.
Got it. Okay. All right. Just about 20 seconds to go. And don't be surprised if it's going to be a quiet opening. We've seen this play out over the last couple of sessions. And not just a quiet opening, but also a quiet session overall with a range very, very tight for the benchmark Nifty 50. Let's take a look at how we're opening this morning. It's midweek, of course. We've navigated past the expiry session for the benchmark Nifty 50 and as flat can be. Practically no change for the benchmark Nifty 50, 24,450 or thereabouts. It's trading well below that 24,500 mark. Bank Nifty also not doing too much, just about 0.1% lower at this point. At least at the start, the advanced decline ratio does not look too bad. But of course, you saw that change over the course of the session yesterday as well, where eventually at the end of the day, you had declines that pipped the advances. Pull up the broader markets because that should showcase a little more resilience, but it's still flat for the mid-cap index. Small cap index is up about 0.2%. This is the template that the equity markets have followed over the course of the last couple of days, since the end of last week, in fact. So pull up the heat map for the Nifty 50. Let's see what's moving the needle. And I wouldn't be surprised if there are some. Okay, so Max Health, Bajaj Finserv, losing ground. Indigo, understandably on account of crude oil prices having climbed to very close to that $90 per barrel mark, is a sensitive, but not too much in the way of other big losers. ICICI Bank down about 0.5%, Bharti Airtel another 0.5% today. In fact, we should ask about whether or not this is simply cooling off from that pop that the stock took over the last couple of weeks. Hindalco, understandably, and we spoke about why those alumina supply issues coming through, and which is positive for the aluminium companies here in India. It's looking good, 2.5% higher. Nestle up about 0.8%. Grasim, ONGC on account of crude oil prices, and then followed by a smattering of not just one tech name, IT name is up and about 0.5% higher. Everything else is pretty much lackluster. Hiral, I'm pretty sure that you're going to have better luck.
Probably, I think it is a day where you're going to have stock-specific action as well, and that's the reason why we could have better luck. But let's just quickly pull up the broader markets as well, whilst we look at this, and then we look at the sectors. Mid-cap 150, again, 0.1% lower. If you have to look at the small-cap index as well, let's see what that one is doing in trade, because there you go. A similar trend like yesterday, where you did see the small cap indices which were kind of outperforming the mid cap and the benchmarks as well, but just a 0.1% higher there. Let's look at the sectoral heat map. I'm very interested to see what the FMCG sector is doing in trade today on the back of GCPL. I mean, there you go, 0.6% lower in terms of consumption. In fact, that was the losing sector yesterday as well. Real estate, private banks, IT also, because only it's a tech Mahindra which is in the positive, but apart from that, all the other IT majors are somewhere under pressure. Metals is the highlight today, 1.2%, and this is on the back of the Norsk news that we've picked up, 1.2% higher on that, and I'm sure we'll look at the components then. PSU somewhere are doing better, so there is divergence between the PSU and the private banking space in today's session. Energy pretty much lackluster, but apart from that, there's no other major movement happening in there. What comes to the radar is metals, which is the top gainer, and FMCG, which is down nearly 0.6%. Let's also look at individual stocks right now. Or before that, if we can just look at the breadth, just to understand where we've started off, in terms of the tick today. If we can have the advanced decline ratio on the screens in terms of the chart. I mean, okay, we have 1,300 advances versus 1,300 declines. So absolutely even Stevens in terms of where NSE goes. But look at Nifty 50. You're still towards the declines. You have 37 declines versus 13 advance kind of a number. So you are skewing towards the downward side in terms of where the pressure goes. Let's look at all the individual stocks now. A strong set of numbers that have been reported by Manappuram Finance. So that is the one that we're looking at as well. Up almost 0.4%. RHI Magnesita. Very interesting. Good numbers, but the stock is down nearly 5%. TD Power, 8% up move, and that was in one of the 3 stocks that we've been talking about. In fact, the management has upped the guidance. You have Landmark Cars as well. A good set of numbers. Margins a marginal miss, but that's what the street is watching out for. A 5% downtick coming in there. Nefrocare, again, a 2% downtick in spite of a good set of numbers. And Mun Industries, 11% up move coming in on the back of numbers. On the back of weakness, IFCI was the one which reported a weak set of numbers, along with Precision Camshaft and Ashiana Housing, all the 3 under pressure. Som Distilleries, Dayam Capital and Delta Corp, these 3 are also trading under pressure to the tune of almost 1 to 5%. GCPL, that's going to be the stock of the day on the back of Sudhir Setapathy's exit. That leadership rejig has got GCPL corrected by almost 8%. In fact, the intraday low, I would say, is a 10% correction. Some recovery that's come in, and now it's down 8.2% as well. On the back of the blocks and the promoter stake sales, Dr. Agarwal by Temasek TPG entities will be selling 5.5% downtick coming in there. Tenneco, where the promoter is going to sell 10% stake via a block, 3% downtick coming in there as well. Look at a Nalco Hindalco. Norsk Hydro is announcing a 50% curtailment. 7.5% up move in terms of Nalco. Hindalco 3.5% is what you're watching out for, and this is the sector of the day as well, as we would say. JSW Dulux, they've reported numbers and they've announced a stock split. That stock is down 1.5%. And on the back of order wins, you have HG Infra, Diamond Power and BEML. 3 order wins, but no major moves except for a HG Infra. And very lastly, let's just pull up our MCX on the screens and see what that one is doing in trade, because yesterday the stock ended with gains of nearly 4%. And this is on the back of where FPIs are probably going to be allowed to go and invest in on the agri-commodity side. 1.2% up move. No major moves there, but still pretty decent there. But overall, Alex, if you look at the breadth, pretty much even Stevens in terms of NSE. On the large cap side, you're still skewed towards the negatives, and a lot of stock-specific action is what you're seeing. What are you picking up?
Absolutely. You've actually captured quite a bit of the action, but one stock actually stands out from trade yesterday. The numbers came at the end of trade. Finolex Cables is a stock that is gaining quite considerably. And Chandan, I want to come to you on this one because the stock is up about 8.7%, if I remember correctly. In trade yesterday as well, there was a sharp spike towards the end of the session. Would you ride this higher? Would you initiate right now, or would you stay away? Would you take money off the table?
So the counter has seen a positive price pattern really do well, and today also moving up. But I think after the decent runoff of more than 30% in last 3 days, it's better to take the money out of table. However, major trend is positive. Those who are looking for positional, they can continue to hold for an upside target towards 1400 to 1450. But yes, those who have taken for trading point of view, my suggestion is better to book or keep the trailing support of 1278.
Okay, pull up Mun Industries, because this is something that stood out to me at the start of trade. The stock is up as much as 11%. Not the largest counter, less than 5,000 crore market capitalization. So bear that in mind as well. Some part of the reaction could be on account of that. But a few things stood out. Better product and geography mix has aided the margin performance. The margins have improved quite considerably. They've guided for a range of 13 to 15% in FY27. And the order book that they currently sit on is about 3,600 crore rupees across India and Saudi Arabia. And they expect that most of that is going to be executable over the next 6 to 12 months. And beyond that, going forward, they've got an order pipeline of as much as 24,000 crore. So they feel comfortable heading into the next financial year as well. Parag bhai, you managed to look at the numbers. How does it look? It's a pipe company, high carbon steel pipe company.
Correct. So basically, see, all those companies which are ancillaries to oil exploration or gas transportation, oil, they will overall should do well. That's what we discussed last time also, right? Jindal Drilling or Maharashtra Seamless and various other companies who are ancillaries to this kind. Man Industry is one of them, right? So because this, even we have seen, right, that US crude oil stock the reserve is also down. So there will be a huge effort globally to explore more oil. And and especially in Saudi Arabia and where Welspun and Man Industry are present. So I think they'll have a full order books.
Is it still a buy at these levels though?
I will not like to give my view on that because I don't own the stock.
Okay.
But I would say that after such a big rally, one should keep some patience and just buy on dips.
Okay. Man Industries buy on dips. Let's pull up a Godrej Consumer Products, 8.5% downtake. Chandan, there is a correction which is a knee-jerk reaction on the back of news. However, on the charts, are you seeing any opportunity where there could be a pickup in momentum?
So you're talking about Godrej property?
Godrej Consumer Products.
Yeah, consumer product. So counter has seen a correction of almost 10-15% in recent past, and structure is weak. So we have seen that selective FMCG counter have bottomed out when we talk about Nestle, Marico and all. But here we have seen a major breakdown. The 50% retracement of the entire previous rally was at 980, and today is broken the seam. So I believe till it holds below 980, it can see a further corrective move towards 900 or 880. So my suggestion is better to avoid. Be with the other name which are having the relative strength. We are witnessing a negative price pattern which can take the counter to lower low.
Okay, so that's consumer products as well. Dr. Reddy's is what I want to look at. You can just see the flashes at the bottom of your screens where Bachupalli plant could see OAI classification, and Bachupalli Biologics facility, Form 483 revealed critical observations related to B abatacept process. Now what the USFDA has observed is inadequate aseptic processing practices and sterility assurance controls. The drug substance manufacturing process lacks controls to prevent microbial contamination and failure to investigate microbial excursions as well. The other observations include inadequate visual inspection program and inadequate personnel training as well. Now what Jeffries is saying is that these observations could lead to an escalation, that is OAI classification, and there could be delays and a likely reinspection that could be coming in as well. In fact, apart from that, what they've indicated is that the goal date for this approval, the product approval, was mid-2026. If there is a prolonged delay in terms of where resolution of the Bachupalli plant goes, it could pose a downside risk to your FY28 estimates. So that's the reason why this is important. And for this product, Dr. Reddy's does not have any alternate manufacturing site as well other than Bachupalli. And what Nuvama has said is that abatacept had US sales of almost $2.7 billion in FY25. And for Dr. Reddy's, peak US potential could be around $500 to $600 million. And the NPV of this opportunity is almost 186 rupees per share, which is 15% of the current market price of Dr. Reddy's. So this is what is important over here. That stock probably will see some negative reaction there, 1% downtake. Any view on Dr. Reddy's, Parag Bhai?
So I always mentioned, see, Revlimid was such a large thing for them that to replicate that kind of revenues and EBITDA, it will take some time. It's a great company, but and this news further adds to that problem, right? That if FY28 numbers also come in risk due to this product getting delayed. So I would not be a buyer in Dr. Reddy's for sure.
By the way, among results that were not so great, I saw Linde India, without getting into too many of the details of the stock and what it performed in Q1, the stock is down about 2.5% or so. Among the other stocks that are losing ground, you have Dr. Agarwal's Health, that is down about 5.6%, Techno Electric now down about 5% or so, Jubilant Pharmova, Orient Refractories, both losing over 4%, and PI Industries down 3%. So just a quick view on some of these stocks, Chandan. Would you enter at any of these prices or would you avoid?
Yeah, so if I look at the selective counter like Jubilant Pharmova and all, I think selective counters which witness some profit booking might not recover fast because of the slight weakness in the broader market. And we have noticed in the recent past, the counter which are holding the relative strengths are likely to heading upwards. Otherwise, like in one sector, many stocks are not performing well, few are doing well. So I'll avoid these names. In fact, if I talk about the Jubilant Pharmova, as of now, it has hurdled at 950. It can go down towards 888, 875 kind of level. So better I'll avoid, let them settle and try to focus on the relative strength of the market in the selective sector.
Banks have recovered just a tad bit, and pull up the Nifty Bank while we're speaking about it, right? So 0.5% gain for the Nifty Bank at this point and at the high point of the day. In fact, pull up the PSU banking index as well, just to see whether that is what is contributing to the up move. In fact, it is at the high point of the day, 1.5%. What's building out technically, and then we'll check with Parag Bhai whether there are any fundamentals at play with regard to some of these lenders.
So there has been a bit of attraction. I just want to see this continue in some of these names, right? We've seen a bout of profit booking, especially in SBI after the result. So I think this is, this is a good move. If the private banks participate, fantastic. Because remember, we've been speaking about 57,500 as that convergence support zone. Good to see Bank Nifty, regain that level. So I think there'll be some consolidation on the way up. 58,500. These are the levels to watch for. And just a quick word on a very different subject. Bellrise, the stock that we discussed as the weekly pick, almost about to hit the first target of 258. So if you do have a position, you could book partially, but still continue holding on the rest for 268.
Okay, circling back to banks though, what's playing out?
So just to tell you, in last 3 days, I have met 4 lenders. Okay, and one common message is coming while sitting in AC cabin. You can say that crude oil is up, US 10-year is high, rupee is falling, so you short banks. Okay, but if you see on the ground, look at the way results and
Correct.
SBI was my thumping the table buy, so I was very much careful about it, and so I was meeting so many lenders. The message is very clear. On the ground, asset quality is holding up absolutely brilliantly. In fact, the CEOs of banks are surprised with the asset quality holding on in spite of this West Asia war conflict. So I would still thumb the table on SBI, and I will still say that things on ground and valuation both are very comfortable. It was just that positioning before the result that led to that correction.
Okay, so a counter argument over here is, yes, your asset quality is absolutely stable in spite of the West Asia crisis, right? However, what everyone is talking about right now is also the fact that there is little bit of pressure that still could come in terms of where net interest margins are concerned. It's not the bottom yet, right? 1. And 2, when you're talking about asset quality, there is a potential that banks or financial institutions with higher exposure to the MSME portfolio or higher exposure to a retail portfolio, there is where the risk could potentially come in if this crisis continues.
If this crisis continues for long. See, I'll tell you, and I keep saying this, that even during COVID, okay, we recovered, right? And there the businesses were shut. These MSE businesses were shut. Here it is just an input cost pressure. Okay, so I think it will, first of all, it should not take so much of long time. And second, even if it continues like this, I think Indian businesses are, mostly, I would say, 90% of them are not, just going to go into NPAs.
Okay.
So I would say that asset quality will hold on, and lenders are also very prudent nowadays.
Sure. Yeah, so keep an eye on the pack. It's doing particularly well. Parag Bhai, Kush, as well as Chandan, as always, thank you so much for taking the time. Pleasure speaking with you, and have a great day.
Thanks.
All right, let's talk about Kalpataru projects. We've got the management waiting by very patiently for us while we had that fantastic conversation, but the stock is at the high point of the day, 3.2% higher, and we will go across to the management in just a bit. But let's first go to Parth to set up the conversation for us. Parth?
So strong set of numbers from Kalpataru projects. They achieved the highest ever Q1 levels of both revenue and EBITDA as well. They have a very strong order momentum going on with year-to-date order inflow standing at 15,000 crores. Also, their order book has reached the all-time high level of 66,607 crores as well. If you look more towards the inflow data, then they have got new orders worth 876 crores till date in Q2 FY27. Their year-to-date FY27 order inflows are at 7,668 crores, and further L1 orders which are favorably placed are standing at 7,300 crores as well. If we look at the segments, then T&D segment has the highest share of the order book at 44%. International orders are 39% of the order book and 31% of the year-to-date order inflows as well. So really strong numbers and very strong order momentum for Kalpataru projects in Q1 and continuing into Q2 as well.
All right. Parth, thanks so much for setting that up first. We were joined by Amit Uplenchwar, who is Director at Kalpataru Projects International. Thank you so much, Amit, for taking the time, and thanks for waiting by. You've been waiting for a few minutes, and we appreciate your time. Talk to us about what worked in the first quarter, because it seems like a few factors have worked in your favor. The margins have actually improved to close to that 9% level, and that's had a bearing on the bottom line as well.
So, for us, it's been a last couple of years that is culminating into a lot of levers that is driving our profitability as both at EBITDA and PBT levels. So I think, the engineering excellence is adding a couple of bips. We've opened a large center of excellence. We've been able to take orders in markets where the competition is more rational. So, for example, our Sweden subsidiary, our LMG, is doing really well in terms of margin profile. We've had a, 18% growth there at PBT levels. Our oil and gas segment is doing really well. We've entered into the highly lucrative material handling system over the last 2 years, which has also helped us increase our margin profile. These projects are also large in value from a unit perspective, and hence, so we are getting revenue as well as profitability boost from the segments that we've entered over the last 2 to 3 years.
Amit, just speaking about that, so you're saying that your geographical mix improving has had a bearing on margins. That's work that you've done over the last couple of years. At this juncture, international orders accounting for nearly 40% of the order book. Does that more or less remain the contribution going forward, or do you see that going up even further? One. And two, if you can give me a sense of what the margin profile is for this international order book.
So, so answering your first question first, generally we've been in the range of 50-50 is where our ideal scenario is between India and overseas. However, it's obviously the project mix and sectoral mix does keep changing, but we are happy maintaining a 50-50 sort of exposure global as well as within India. For our oil and gas business, our margins tend to be, in double digit at a PBT level. And at the other segments as well, overseas transmission projects in some of the geographies get us that kind of numbers. So as an overall level, we are able to balance our PBT, at 6.6%, which I think at a industry level in EPC business today is one of the highest. And I think this diversified balance sheet is really helping us get these numbers because, one sector or the other is always booming.
Okay. And on oil and gas specifically, Amit, the point is, and I was looking at another company in the pipe space that plays in the international market in certain pockets in that West Asia region as well. And seemingly, there's a lot of interest in exploration and in increasing production of oil. I'm wondering whether you have any visibility on the order pipeline for your business there, and whether you could see a significant ramp up in FY27 and beyond.
So, technically speaking, there are two major mega shifts happening in the oil and gas space. So whilst you're absolutely right, there is an increased emphasis on producing more oil, and hence new wells are being, made and trying to extract oil there and gas. There is also a massive shift happening in the way the supply chain of oil is moving. So, for example, on the downstream side, people are trying to put new pipelines where the exposure to certain routes for shipment are not relied upon heavily. So both of these present an opportunity for us in the oil and gas space because, as you know, we are present both in the upstream, midstream, and downstream space over the years. So we've, sort of pivoted from not just being a pipeline company and now have moved into process plants as well. So over the next 2 to 3, 4 years, I see tremendous opportunity for us. Not just because of the West Asia crisis, but also because of the oil prices being elevated, which justifies capex for the oil companies at this time.
Sorry, just okay. Please go ahead. I'll come back. Okay, no. I just wanted to ask Amit. This is fascinating, right? So, at a time when your T&D is still 44% of the book, you're seeing interest in your oil and gas business, and so therefore, on a blended basis, what is the kind of intake that you're anticipating in FY27? Already in the second quarter, you've had inflows of as much as 876 or close to 900 crore rupees in the way of new orders.
So, for the whole year, we had guided close to 30,000 crores of order booking this year. And including L1s, we're at around 15,000. But in Q3, Q4, we expect one or two orders coming from our oil and gas business from overseas. And that's why we had factored in and planned for a 30,000 crore of order book. Hopefully, Q3, Q4, we'll see, anywhere between, 3 to 4,000 crores of oil and gas order come in. And that's what we are hoping for.
So, Amit, good morning. This is Hiral on this side.
Good morning.
My question is, you're talking about the oil and gas order book. Let's talk about the overall order book as well. I think it's at an all-time high, 66,600 odd crores, if I'm not mistaken. How much of this in totality will be executable over the next 12 to 18 months? And what's the revenue visibility is this providing you for FY27 and FY28?
So, our typical order cycle is between 2.5, 3 to 4 years. And given the fact that we are at 66,000 and we've been growing if you see our last 5 years growth story, we've grown at around 20-25% CAGR. And we are expecting to have 10 to 15% thereabouts growth for the next 2 to 3 years. So I think we have a good order visibility of 2.5 years, at least given at 66,000 crores. So we put ourselves in a very, very good situation. Our balance sheet, has been at an all-time best. Our interest cost as a percentage of revenue has dropped to 1.3, which pretty much makes us a debt-free organization in the EPC space. And because of that, there are multiple levers that are kicking in. Our ESG score has jumped to 64, which puts us as number one EPC company in India and 95 percentile in the top 300 organizations globally. So these all headwinds, given that we've got a 2.5 to 3 years look ahead in terms of order book, puts us in a strong position today.
Okay. The other thing, Amit, I want to talk to you about is the other two segments. T&D, one of the strongest growth drivers as well. So how much of the opportunity that you're sitting on still remains untapped if you talk about what is available in terms of domestic markets? And two, the water business revenue has declined this quarter. So what has caused the slowdown and when do you expect that to normalize?
So to first T&D, we see, on an India basis, at least 1.5 to 2 lakh crores of opportunity every year for the next 4 to 5 years in the domestic market. And given the fact that, we are amongst the few companies which are in the HVDC segment, etc., in T&D and very large, substation spaces, it gives us a good visibility going forward. So far as water is concerned, over the last 2 or 3 years, everybody is aware there have been problems in terms of collections from JJM projects. We are no different to that. And consciously, we've sort of avoided state projects for water and have been over the last 2 years trying to pivot to international markets. We've got our first order in UAE a few months back, and we are now bidding for large projects in the desal space as well as the high-tech water space, which whether it's membranes and transportation networks, etc., in the Middle East. And so over the next 1 to 2 years, the idea is to move our water segment, and hence you'd see in the next 12 months that our revenue starts upticking as well, and things start normalizing as we take our water overseas.
Okay. So within these segments, if you have to look at FY27 and 28, which businesses will contribute the largest incremental revenue then?
So FY27 will still be the year of T&D, oil and gas, and our, as we call it, B&F segment, which also covers material handling. I think these three segments are going to drive FY27 and early part of FY28. And hopefully towards the Q3, Q4 of FY28, the water segment joins the rally as well and starts contributing significantly to the rise of both revenue as well as PBT.
Last question, quick one. Commodity prices, how insulated is your order book from the commodity inflation and the input cost swings that we are seeing right now?
So most of our commodities other than steel are already hedged. We've created some headroom within our balance sheet for the fluctuation in steel prices, but for the moment, I don't see that as a risk to our order book in the current time.
Got it. All right, Amit. Thank you so much for speaking to us. Always a pleasure. In fact, as we speak to the management, the stock is at the day's highest levels as we speak. Nearly a 5% up move coming in there. And it seems, if you see the kind of momentum that the stock has and the valuations, fairly undervalued versus what the potential looks like from here on as well. But moving on, private hospitals, second consecutive day when they are in focus because the pressure that they could face on the back of the increased scrutiny over healthcare costs, with the parliamentary panel recommending tighter controls on pricing. What are these changes? What do they really mean for the hospitals? First up, I have my colleague Varsha, who's joining by to tell us what is the announcement and what that setup looks like. And then we'll have Ankit Thakkar, who is the MD and CEO at Jupiter Lifeline Hospitals, and Abhay Soy, Chairman and Managing Director at Max Healthcare, joining in. Welcome to the show, gentlemen. Stay with us. We'll just get Varsha, who tracks the space pretty closely, to set the context. Varsha, over to you.
Well, thank you so much for that. The biggest takeaway from parliamentary panel report is that they want to make healthcare more affordable and transparent for patients. Now, what they're saying, they're recommending caps on private hospital charges. They say that hospital room rent should be linked to nearby 3-star hotel tariffs, fixed package rates proposed for surgeries and medical procedures. And they also say that they recommend that the medical device prices should also be capped. A panel flags excessive billing, unnecessary tests and high procedure charges. Now, they recommend upfront cost disclosure, legally binding estimates for complex treatments, and lastly, review of FDI norms in hospital chains is what they are recommending.
Thanks so much, Varsha, for setting that context. Gentlemen, Abhay, Ankit, thanks so much for taking the time today, and we appreciate the time that you're giving us. Abhay, I want to come to you first. So, hospital is a very interesting business because you cater to the length and breadth, first of all, and the demographic is not something that is easily describable. You have to cater to everybody that steps into your hospitals. But the argument, I think, from your side would be that you charge customers what they're paying for. If you're giving them fantastic services and they can pay for it, why not? Is that the argument you're making?
No, not at all. Not at all. I don't think that's the argument anyone's making or should make. I think it's very simple, right? I think there's absolutely no argument with the fact that healthcare should be more affordable, right? Similarly, I don't think anybody believes that there are adequate number of beds in India. I think there is huge amount of underpenetration and huge amount of capital which is required to set up beds and set up hospitals in India. In order to do so, that means to provide affordable or any healthcare for that matter, any hospital that you put up today needs to be viable, right? So basically there's a risk-free return that any investor who's thinking of setting up a hospital will look at making, otherwise he's not going to put up that hospital. Now, first and foremost, the question is, are hospitals making an egregious amount of profits? Okay, whether they're charging 5-star room rates, 3-star room rates, 1-star room rates is secondary. I think firstly, whatever they may be charging, packages, not by. So there's no argument that, it has to be transparent, it has to be straightforward. But, so I mean, again, look, I think the most profitable hospitals are the ones which are listed effectively, right? I mean, if you look at the average amount of net profit of hospitals, it's I think about 10 or 10.5% is the net profit margin of average, net profit margin of all listed players in India. And I think if you look at an outlier, it will be 14 to 15%. Now, this is in a capital intensive business. Anybody who's setting up a hospital today, and these are again historical hospitals. So if anybody is looking at entering this business or setting up this hospital, is going to look at what the cost of land today is, what the cost of construction today is, and what the inflation is. And tomorrow, 2 years later, if somebody sets up a hospital, he's going to look at what the cost of land is, what the cost of construction is, what the sort of cost of equipment at that point of time is. So whatever that inflation is, eventually has to be absorbed, right? And if the inflation is high, unfortunately, it will have to be absorbed by the patient. Otherwise, people will not be putting up hospitals. So it's as simple as this. This is what my case is. Now, secondly, now when we are arguing that there are short amount of beds, you require more beds, in that sort of environment, to say, look, FDI should be curtailed. Well, good luck. If you curtail FDI, that means you're going to have less and less money coming into it. Now, thirdly, I think, the basis of this is in a government hospital, the cost of treatment is, in a private hospital, the cost of this treatment is 10 to 15 times that of a public hospital.
Correct.
Now, the numbers which were there was in a government hospital, the cost of treatment is 2,299 rupees. And the cost of the treatment in a private hospital is 37,000 rupees. I think what we fail to look at is that the government hospitals are subsidized. Otherwise, it's not humanly possible for anyone to provide treatment at 2,299 rupees a day. I think, that won't even cover your cost of medicines, let alone your cost of nurses or whatever else it is. Just a variable cost.
Abhay, point
Thirdly
taken.
and finally,
yeah, okay.
I just want to make one more point.
Sure.
When you look at room rates or room rents, one of the most important indicators of financial health of a hospital is average length of stay. The shorter it is, the better it is. The longer it is, because at a hospital, the hospital loses money every day that the patient stays in the hospital. You make money on procedures, you make money in daycare surgeries. Well, if you want to reduce, if somebody's charging 5-star rate, you want to reduce it down to 3-star, well and good, but it will impact the 10% net profit margin.
Abhay, all points taken, In fact, I would want to get Ankit over here. Ankit, with what the Parliament has come out and said, what is the kind of impact that you're going to see if all of this has to come into picture?
Well, I think the parliamentary panel has very positive recommendations in it. And I believe, one or two lines out of that are getting picked up and causing a little bit of excitement in the narrative. Essentially, what is the panel really saying? The panel is saying that today, 70% of India's population is covered and does not have to pay for healthcare out of pocket. They are either covered by government schemes, or they are covered by CGHS, or they are covered by private insurance. What they are trying to solve for is, as they define it, the missing middle. That is 30% of India's healthcare population, India's population, which cannot get managed healthcare and has to pay out of pocket, and trying to address the affordability question for this set of people. And for this, various recommendations have been laid out. Amongst them are also certain cost rationalization recommendations, very strong for the sector, such as recommending that healthcare becomes zero rated as far as GST is concerned, so as to take away the hidden embedded cost which healthcare faces. It also includes reducing custom duties for expensive imported healthcare equipment. And it also talks about rationalized health costs. So all of these we are completely for, and I think these are all positive for the sector, and we welcome them.
Yeah, that's a very different argument that you have as well, Ankit. In fact, Abhay, let me come to you then. All of this is a policy. If even any part of the, it's a proposal. If it becomes a policy, where will and how will the hospitals offset that impact? Will it be through higher occupancy? Will you look at then tapping medical tourism, premium services? How will you offset that impact? Because if your room rates are capped, there will be an impact on your margins and profitability as well.
Absolutely. So if you want to operate like government hospitals, then then why have air conditions over there, and why? By the end of the day, please understand, there is a general surgery, there is a laparoscopic surgery, there is a robotic surgery, and tomorrow they're going to have other novel treatments, right? Today you have an option, you have a choice of going for any one of these treatments. They're all at different costs. Now, if the argument is that the choice should not be available, okay, well, that's a different argument altogether. I think, this is the This is a recommendation of the parliamentary committee based on how to increase affordability as well as reach of healthcare. I think you need to look at the other side of the equation as well. That healthcare in whatever form, has to be viable to people providing that healthcare. Today, it's not really a dividend-paying sector. I think if the capital-intensive sector, which is operating at an average 10% net profit margin, I'm going by the listed companies here. If you're going to have an impact, I think first and foremost, you're going to have an impact on asset creation, people investing in this sector. I think in services that you're providing, and so on and so forth.
So, that's a good point. I want to be clear. The point that I was making at the start, I was actually referring to a hospital that I know of. It's essentially a missionary hospital that serves people for free on the one end and has the services that somebody can pay for and charges them appropriately because they know that they can pay for it. So that's what I was trying to make the distinction for. And Ankit, what do you think about that? To say that ultimately, if you're offering somebody an individual room, you can call it what you like. You offer them the best of the best in terms of doctor and medical services. You offer them a procedure that is not available to most other people. You have to charge them appropriately. So that distinction has to be made. I'm wondering if these are conversations that you're having as well with the government or its functionaries.
No, but this is, I think, fully accepted. The way the point that you mentioned, one of the hospitals provides services to one patient for free and charges a fee to the other. And this is a similar kind of story that the report talks about with the government hospital pricing. As Abhay pointed out, they are, subsidized and don't really reflect the true input cost that goes into the story. So, and besides, I think the more important point which we need to keep in mind is what was the objective of the parliamentary panel report. The main objective is to address the affordability gap for the missing middle. I don't think the subject of discussion is what the top of the pyramid is paying for and can or cannot afford, because they are already taken care of. I don't think the subject is what the base of the pyramid can do for their healthcare, because the government has taken care of them. The question is just of addressing the missing middle and how we solve for affordability for 30% of the population. And the recommendations or discussions are around that middle and how to increase insurance penetration for these set of people as well.
Ankit, well made point there. Abhay, the question that I have for you right now is, probably, do you think that the way this has been looked at is where, if, for example, someone takes a executive room at a hospital with whatever will be the room rates, usually what happens is your doctor fees, your OT, fees, all of them increase basis the kind of room that you select. So there is no uniformity in terms of the other charges, because of which then the question of affordability also comes in, because there will be doctors who are also charging, say, for the same thing, 5 lakhs basis what the surgery is, whereas if you've gone to an executive, that 5 might just become 15. Is the government trying to actually put a curb to all of these ancillary costs also which are coming in apart from the room rates?
Okay, I just want to lean in on the previous question which was asked of Ankit as well, right, on this, because I think the statement started by saying there's a missionary hospital, which does this, right? Okay, first and foremost, let's decide, do we want private sector or do we only want government and charitable hospitals, which was historically the case? Okay, because if you want private sector, you're going to seek private sector investment, then you have to provide a reasonable risk-free return. I mean, there can be no debate with that. Now, coming to your point about telescopic pricing, I accept that there is telescopic pricing. But what is happening with that telescopic pricing? Why are we not believing that the high end is actually subsidizing the low end? The PMJY, all the central government schemes and so on and so forth, ex-servicemen, which is providing to our ex-service, which is ECHS and so on and so forth, are less than half of cash rates. So your cash rates are actually presently subsidizing it. And therefore, all of this, once you put it in the boiler, it gives you a 10% net profit. Now, if you at the top end, you want to stop the telescopic pricing, it's going to have an impact on your net profit. If you're going to cap the pricing of rooms, it's going to have an impact on your this, or it's going to have an impact on your services. No, which is the one we are choosing? You see, at one end, we cannot believe in free markets and then question the characteristics of a free market. Today, nobody has a monopoly. I mean, the argument is if somebody had a monopoly and was charging as they wish and as high as they wanted to, it would be one thing. But nobody has a monopoly. Today, every player is competing against the other, is providing 20 to 30% service to government hospital, to ECHS, CGHS, PMJY, or whatever else it is. Okay. Why are you doing that? Because you have idle beds. There is not so much of the affordable population out there. And at the same time, you're trying to invite more and more capital into this sector. You have to keep making it viable.
All right. Abhay Soy, Ankit Thakkar, thanks so much for taking the time and speaking to us this morning. Absolute pleasure. And Abhay, we'll speak to you really soon. I think your earnings are around the corner. So we look forward to speaking to you about the numbers as well. Right. Let's take a look at the markets and see where they're at right now. The benchmark Nifty 50, I'm pretty sure is not doing too much at this point. There you go. So it's down about 0.4% at the low point of the day. That pop that you saw in the benchmark for the banking sector, the bank Nifty, of course, had taken a bit of a rise, but it's just about 0.33% higher. The real pop is in the PSU banking pack, but I would hazard a guess to say that it's cooled off just a tad bit from the high point of the day. So pull that up as we speak as well, the PSU banking pack. You had State Bank of India, in fact, it was gaining ground. If we can pull up the PSU banking pack and see where it's at right now, 1.67% or thereabouts is where it's at. Pull up some of the components and let's see where they're going. State Bank of India, in fact, is where the action is at this point. Let's head across now and figure out what the new listings are doing. There are a couple, and we'll be back on the other side of this very quick break to find out what the action is. In fact, we've got RD Industries. Oh, okay. So we've got RD Industries that's listing at a pretty substantial premium to its listing price, as much as 37% higher at this moment. And the visuals that you see on the screen are in fact from the listing of RD Industries. We've got Ridhima Bhatnagar on ground there, and hopefully we're going to be able to listen to what she has to say. But Ridhima, quite a bit of action. The stock is listing at a significant premium. What are you picking up?
So absolutely, the grey markets had also suggested about 28%, and it's listed more than that, around 36% premium listing of RD Industries. It's the IPO size was about 425 crore, and it got a lot of subscription, about 134 times overall subscription from the people, and the most amount of interest came from the NIS, about 255 times, followed by the QIBs about 198 times, and retail participation was also robust, about 45 times. Now the management has told that the company will be using the proceeds for the working capital requirement and also the debt repayments. The working capital requirement will be there, and the debt repayment will be about 20 crore from the IPO proceeds, and 182 crore is total debt on the company so far.
All right. Thanks so much, Ridhima, for that. We have to slip in a very quick break. We'll be back on the other side to talk about what you should bear in mind strategy-wise. It's Talking Point, and we're going to be speaking with Dinshaw Rani of Helios Capital. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that
Welcome back. You're watching India Market Open. It's time now to introduce our guest on Talking Point. And we've got Dinshaw Irani, Chief Executive Officer of Helios Capital, joining in. Dinshaw, always a pleasure speaking with you. Thanks so much for taking the time. I'm wondering what the mood is. Because just when you thought that things would get better, you have Iran and the US go back into it. You have ships that are being attacked, not just in the Hormuz, but also in the Red Sea. The Houthis are getting in on the action. What's happening?
First of all, very good morning to you, Alex, and a very good morning to your viewers as well. And thank you for having me on your show. So here's the thing about Iran. My only expertise in that field is my surname is Irani. But otherwise, I have no clue about how things are going to pan out there. But one thing is very clear, Alex, that the day that strait is opened up, Hormuz Strait, the prices of oil will come down quite sharply. I mean that, and why I'm saying so is because there's definitely going to be a surplus. I mean, 14 million barrels are the ones which are stuck there. There's enough supply coming from the US. And if Iran is allowed, there's definitely going to be a surplus. So our call is that only that if things normalize, it won't be that bad a situation. And looking at the way things are, the fact that US has been deferring the attacks on Iran for a while now, it looks as if they also want to compromise, and probably it'll work out very shortly as such. But I don't have any expertise in this. Once again, let me give you that caveat.
Fair point. So let's talk about oil and gas, though, because the one outcome of this conflict is that globally you have producers that are ramping up production. And from our perspective here as well, I think the explorers are being exhorted to go out and do a little bit more, maybe even explore with your deep oil rigs, right? Or deep sea rigs. For the ancillary companies, if you can call them the picks and shovels here as well, there are listed companies in the space. Is there an opportunity here, Dinshaw?
So I think that will pan out on a longer term basis, but there are definitely the ancillaries which will be immediate beneficiaries, like the pipeline companies and stuff like that. I think those are the ones which are much more exciting than the rig players as such, because rigs, frankly, I mean, you have only that many rigs. Rigs don't come about so easily anyways. It takes 4 or 5 years for a new build to come into the market. So that's why I don't think we're that keen on that space. But I think this is where the real excitement is. And obviously, you'll have these other chemical companies be utilizing the utility companies which are there as such. But apart from that, I don't think there are many plays out here as such. So that's why we are sticking to probably the pipeline plays per se.
So pipeline players, Dinshaw, good morning. Hiral on this side. You know, I mean, you've been constructive when it comes to the earnings profile of what the prospects of Smiths would have been as well. Now, taking the way numbers have come in so far, do you believe this is just the start, and, you know, this uptick that we've seen in terms of the earnings in the first quarter, I would say better than what the street was estimating to some extent, would continue? Or are you seeing that there could be an impact of the West Asia crisis, which has not shown in the first quarter, get translated into the second or the third quarter?
Actually, Hiral, on the contrary, the fact was that this quarter, the June quarter, was supposed to be the worst one, because oil was at peak during this, after the conflict started in end of Feb. And obviously, low-cost inventory were available till March. But this quarter was supposed to be the real impact quarter. And it's done very well. I mean, in fact, I think that is why you're seeing FI interest coming back into the country. By the way, if you remember on the last call, I had said that, call with you guys, I had said that we're not hurting them enough by outperforming. And we've done exactly that. I mean, from June onwards, some amount of outperformance started because of the collapse of Korea and Taiwan. But July was a fairly good month for India. I mean, we outperformed all the benchmarks in the region, in the emerging markets as such. And I think that is what has at least led to the abatement of selling by FPIs in the country. They are buying, no doubt, but it's a very minuscule portion. Unfortunately, again, this quarter, the large caps haven't done enough to attract the passives to come into the country. I mean, there have been some additions to their underweight position, but beyond that, they've not gone whole hog on India as such. I think the fun will really start then. And having said that, quarterly numbers again, the June quarter numbers were really a surprise, a positive surprise, if you will. Because again, the mid caps and large caps, by the way, in the mid caps, there's a lot of oil and gas companies which are pulling down the profit. So if you remove those, the growth rate has been pretty decent in the mid cap and very good in the small cap space. As you rightly pointed out, I think SMID is the way to go. Headline numbers may not move as much, but within that, the small and mid will do fairly good going forward.
So, with that scenario, Dinshaw, if you have to talk about the valuations, do you think they're still elevated despite that correction which did come in, which became an opportunity for people to buy? And which pockets of the mid-cap universe, if you had to say, look compelling today, and probably the areas which look overheated according to you?
So, okay, in the valuation front, I mean, if you're looking at pure Ps, obviously the mid-caps are the most expensive because that's a pool of 150 stocks and heavily bought stocks as such. But then normally a P, standalone P doesn't make any sense, right? So you have to now look at growth. And probably mid-cap is the growth is similar to the small cap growth. I mean, in our estimates, we're looking at some 23-24% growth in the mid cap and the small cap space as such. And if you now look at the PEG, they become not the cheapest, but cheaper than the large caps, the mid caps per se, right? Small caps are the cheapest. I think the PEG is less than 1, in fact, out there. In the mid cap, it's 1.1. In the large cap, it's 1.5 or so. So that's how this works out. Within the mid cap space, 150 odd stocks that are there. Obviously, our love lies with our new age companies. I mean, they're doing phenomenally well. They'll continue doing phenomenally well. In fact, one of our top holdings in our flexi cap is a new age company. It's a fintech company, and it's done phenomenally well going forward. This is where our love lies. And secondly, I mean, if you've been tracking our portfolios, we've been consciously shifting our portfolio towards within the BFSI space, towards the NBFCs, towards the market-facing plays and stuff like that. And obviously, in the small cap, you'll see a lot of auto ancillaries which are playing out for us as such. So.
Dinshaw, just a quick last question with regard to the fresh paper that is coming through. And quite a bit of paper is now once again coming through. It's interesting to note that there's listing gains on the table for quite a few of them. So how does your fund house look at some of the paper that you've seen come to the market?
So actually, Alex, surprisingly, you'll seldom find our name in any of the anchor or in the IPO proceeds as such. We are being very selective. Frankly, I mean, when this kind of surge of paper comes in, you'll see a lot of froth also coming along as such. So we've been very selective in our picks within this. I would rather err on the side of caution than be aggressive in the space today. But I don't think this supply is going to take away the float from the market, because normally the supply comes if it sees float in the market. You didn't see any supply coming through in March and April because the float disappeared. And this is what happens normally. I mean, so I won't be too concerned, but I'll be very careful in picking names in the IPOs. I don't think every single IPO is going to earn you a lot of money anyways. And by the way, we never pay for a pop anyways. Whenever we are convinced on an IPO, we apply for the anchor, and during the time of listing also we buy because we're that convinced on the IPO set. So.
Yeah, which is why I asked you, Dinshaw, and I'm glad that you have that view, and it's always a good idea for more supply to come through into the market. I'm glad that's coming through as well. Dinshaw, thanks so much for taking the time as always, and look forward to speaking to you really soon.
Pleasure was mine. Thank you.
All right, speaking of new listings and new paper coming to the market, RD Industries has had quite the listing and gains of 30% plus for the company. Everybody who managed to get the IPO is actually cheering as well. We've got the management joining in. Let's see what they have to say.
The fresh issue includes a 220 crore corpus allocated for the working capital requirements and the 20 crore for debt repayments. What was the requirement for having such a big denomination for working capital, and when do you see that giving returns to you? And when it comes to debt, what sort of a debt is there on the company right now, and your future expansion plans, how will they be funded, through internal accruals or taking on more debt?
Thanks for calling us. For 220 crore rupees, we are taking 220 crore rupees for the future incremental working capital for the growth of the company. At present, our total debt is 182 crore. Out of that, 20 crore rupees will be paid through the IPO proceeds. And for the future growth, we have already acquired the land near the plant, and it will be funded through the internal accrual and some part of the GCP.
All right. So the company has shown, robust performance when it comes to PAT and also revenue. What led to this growth? Was it due to high lead prices, or it was more demand in the market? And do you see this sustainable into the next financial year as well?
Yeah, this growth is due to the 3-4 factors. Once we have the integrated plan and we have expanded our capacities. Secondly, we shifted our raw material from domestic to import, and this is the sustainable. We hope for the best. We will maintain the same pace as we have maintained in the history.
Also, your largest customer has about 40% of the revenue, and your top 10 customers also amount to about 90%. How do you see this as a risk, and what will you do to diversify, say certain customers reduce their demand going forward?
Thanks a lot for the wishes on the listing, and I'll basically highlight how we are having 50 plus customers now, and year on year our dependency on one anchor client is reducing, but overall it's an industry standard to kind of have few key clients who give major chunk of the revenue. So we feel going forward also, as we add more customers, the top 10 or top 5 would bring, the major business for us basically. That's kind of a strategy that we follow.
Okay. Also, about 87% of your raw materials are imported. How do you see global commodities sort of affecting that, and how will you manage this risk going forward, and also currency risks? How do you calibrate that?
So, we are importing from over 55 plus countries. We've been diversifying our vendor base, even though it's largely imported, but still we try to, import from various countries like Singapore, Malaysia, US, Europe, and it's well diversified. So we don't see it as a risk. We see it as an opportunity that, not just the Indian scrap, we're able to, also recycle scrap from all over the world. Going forward, we're also focusing on sourcing more scrap from India, as certain policies like the BWMR or the EPR policies kick in strongly in India. So we feel that will be another opportunity for us where more sourcing can happen from the Indian market.
Do you have any current plans on, getting more supply from the Indian market?
We're focused. We're trying for that, where we'll be able to source more from the Indian market.
All right. So how will the mix look like, say, next 2 years?
I think broadly it should remain this, though we will still trying to put our efforts, but there are multiple challenges in the domestic market of certain unorganized sector is still prevalent in the domestic sector. So we feel we should be in the 75-80% range for the imports and balance in the domestic.
All right. Your RHP highlights the opportunity in the used battery space, and now also the lithium-ion batteries. How do you see this opportunity going forward?
So I think it's a big opportunity. Already a lot of the waste is lead acid waste is also going somewhere or the other to either to landfill or not being recycled in the unorganized sector. So we feel that as more and more material flows into the organized sector, because of the policies, because of the mandates of the battery companies to buy back the scrap from their dealer distributors, we feel that this will become a major industry in the coming time with the whole mandates basically. Similarly for the lithium ion, as the government mandates recycling, as more and more EVs are there in the ground, there'll be more feedstock available. So we feel positively about the industry.
Lastly, what sort of a guidance could you give the investors for FY27? What can they look for in the company as it gets listed?
So we feel that broadly we've been able to give a very good performance year on year past 3 years. So we feel that broadly we would be in those ranges for the next coming years, as we focus on building a good sustainable business.
So latest land acquisition is what the IPO proceeds will fund, and that stock spectacular listing is what I would say. And in fact, metals as a space is, it's a good day for the metal sector as a whole as well. But moving on, the government has tightened steel procurement norms for public purchases by replacing the earlier 50% domestic value addition requirement. My colleague Rishabh joins us with more details. Rishabh, good morning. What are you picking up so far in terms of where the steel procurement policy goes, number one? And what is the kind of impact we could see in terms of companies as well?
Absolutely. So this is a tweak to the steel policy that the Ministry of Steel has. This is to do with more and more procurement happening locally of this of whatever steel goes into a gamut of industries. This is across auto parts, health, apart from infrastructure, construction. So many industries use steel as a raw material, and most of it currently what the government is hinting at is that a lot of substandard stuff is coming out from foreign countries, and with minimal processing it is being passed off as locally or domestically procured steel. That is something that the government now wants to change. They have now come out with a new requirement that the steel must meet melt and pour requirements instead of a 50% domestic value addition requirement that was put out earlier. This goes on to impact about 43 steel product categories. Most of it will be a part of manufacturing and construction industries. And now what we'll see is that more and more steel production that the government wants will happen locally. The tweak is now again the fact that the shift from a domestic value addition percentage to now a much more stricter melt and pour requirement. Remember, this tweak came out sometime last year for various other steel categories as well, and now the government is extending this to about 43 more products, 43 more steel categories as well. So something must have worked there in terms of more and more steel being procured locally. So that's what we're seeing in the tweak that we're seeing in the steel policy.
Rishabh, thanks so much for getting us those details. Watch out for the pack and indeed the rest of the metal pack as well. Well, with that brings us to the end of this edition of India Market Open from the NDTV Profit Suzlon studio. From Hiral and myself and the team that put the show together, thank you so much for watching. Keep your questions ready. Up next is Ask Profit, and this is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best on-ground coverage of the year. Operation Sindoor coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $64,000 level marks on technical consolidation. SEC to consider regulation crypto proposal. Russia approves Bitcoin, Ethereum and USDT for regulated retail trading. And National Bank of Canada discloses significant stakes in crypto ETFs. Firstly, Bitcoin is below the $64,000 mark on the technical consolidation. Now there is of course low volumes and Bitcoin is giving sideways price action. Remember, the next important trigger would be tonight's US July CPI data. Overall, the stance remains cautious for crypto investors. The Securities Exchange Commission has scheduled an August 14 open meeting to consider proposing regulation crypto. It's a tailored offering framework for certain crypto investment contracts, potentially giving token issuers, startup and larger fundraising exemptions instead of full securities registration. Russia's new digital currency law and a central bank directive lets retail investors buy Bitcoin, Ethereum and USDT on licensed exchanges. Now, of course, there is a capping at almost 300,000 rubles per intermediary. Now, this signals regulatory approval for crypto and increased retail participation. Lastly, in a 13F regulatory filing with the US Securities and Exchange Commission (SEC), Montreal-based National Bank of Canada has disclosed that it has millions of dollars invested in crypto ETFs. Remember, National Bank is the 6th largest commercial bank in Canada. And before we wrap, here's a quick check to the changes over the crypto prices in the last 24 hours. Largely, we see Bitcoin is seeing a little bit of sell-off, but that is moving to other coins or altcoins as well. Ethereum, XRP, Solana, Tron, all increasing between 0.1 to 1.1%, but a very narrow range of trade and lesser volumes is expected. Well, now is the time to look at the crypto strategy for the day. Here's what's there to keep in mind. The market outlook, it's conflicted but fearful right now. Tonight is US July CPI data. We'll see whether risk off or the risk on sentiment comes in, but the technicals are still weak. The volumes are on the lower side. The Bitcoin support range is between that $62,000 to $63,000 mark, and you can expect some churn coming into altcoins from Bitcoin. So this is the overall strategy which you should be tracking. Now, as we wrap, remember you can reach out to Coin Switch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by Coin Switch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the morning edition, of course. My name is Puneet Zaveri. With me is Thomas Sarkar. And over the next hour, we'll try and get to all your stock-related queries. We have an interesting conversation lined up as well, and we'll get to that in just a bit. But as we look at the markets, that continues to be one key factor that we've spoken about for this week, that has been very, very range-bound. Although you are starting to see pressure for the second consecutive day on the Nifty 50 today. So now down almost 70 points, and you are below that 24,400 mark. There have been essentially lack of triggers, if so, on the benchmarks. And if you can pull up the Nifty 50 heat map, that is visible on those names as well. You're not seeing any particular larger sector or a breadth that's continuing to dominate the news flows or the stock prices today as well. So Hindalco, Grasim and SBI, those are the top three names that are buzzing in trade, while you've seen the larger breadth of Nifty 50 continuing to be in red. Apollo Hospital, Max Health, possibly on what we've been discussing since yesterday on the hospital side, and if those regulations come through from the parliamentary committee recommendations, that will be something to watch, but having an impact on the stock today. M&M is down 1% right now as well, but overall, if you look at the sectoral heat map, also put up the advanced decline ratio post that, it's visible here as well. You're seeing PSU Bank Index make a comeback. We saw about SBI being one of the top Nifty gainers, and that explains it. But the Nifty IT is down 0.94%. The rest also between the 0 to 1% mark, seeing a lot of moves. Broader market, very, very mixed reactions that we continue to have from the start of the week, especially in the last week as well. You've seen advance and decline ratio being very neck and neck. Just in the last hour, essentially, you've seen the declines take the baton and move forward, but the mid cap, small cap also reflect that. But we're in the fag end of earnings season, so you're seeing a lot more individual movers that continue to have a bearing on the markets today. So small cap almost absolutely flat right now, 0.01%, but similar for the mid caps and the BSE 500 as well. Before we start taking your stock related queries, you're seeing Finolex Cables the second day in a row up and running on the back of good results. Nalco is also up almost 8%, and we put that story in the morning why that could be. Kalpataru projects, we spoke to the management, good commentary coming through. Godrej Consumers takes the bearing there. CEO exit and a shocking one at that, as having an impact on that stock too. It's opened down almost 8 to 9% and then has been there as well. But let me welcome in our guest now for today. Tapan Doshi is the research analyst at CA-Tapan.in and Lakshmikant Shukla, technical research analyst at Wealth Research in Yes Security, is now joining in. Both of you, thanks so much for joining in, gentlemen. And let me start taking the first stock related query. This one is coming in from Ram, who's from Chennai. He has almost 80 shares of HDFC AMC Tapan, bought at 1,000 rupees. So he's in good gains. Wants to know if he can still continue to hold. He has a very long-term view, Tapan. What would be your recommendation?
Yeah, of course, no. I think this company is good, and if you see the SIP flow is quite strong. Again, their equity AUM growth is quite good this time also, and you know that operating leverage now, that is what they are working on it, and hopefully the margin will be better. Only we have to see from the SEBI point of view. If something comes, then it's a different thing. Otherwise, it is the only thing, the volatility of the market may impact. But I think it's an asset light, high ROE, and the overall distribution is quite strong. So yes, please hold for the long term. This will give you a decent return over the time.
Query is coming in from Bhaskara Madhusudan from Hyderabad. He wants to know whether is it a right time to buy the shares of Sterlite Tech. Lakshmikant, any view on Sterlite Tech? Not clear at all. Your voice is not clear. Can you please check on your side? I'll ask this query to Tapan for that. Sterlite Tech, Tapan, any view?
Of course, if you see the recent orders are quite good. Fundamentally, of course, good stock to hold over the time. But the valuation, honestly, it's on a much more on a higher side. If you see OFS demand is recovering again for data center opportunity is quite big. Again, AI connectivity demand will be strong. Even for telecom capex also their timing is quite good. So I'm quite positive on Sterlite, but to enter at a fresh level, fresh entry, I think you'll wait for 10-15% down at least minimum. And if you are holding this up, please hold this stock.
Up massive 4x in the last year itself. But the next one coming in on TBZ, Raj is actually holding this share and he wants to know if it's a good time to enter as well right now. The Q1 results came yesterday, Tapan. His question being if it's still a good time to enter. We've seen, of course, the larger players do well. Stocks down 9% right now. How do you look at this, Tapan, or should he ignore, focus on the larger players?
See, I'm positive on this sector, but I'm not positive on this particular stock. And their counterparts are doing quite well now. Of course, the wedding demand is strong and store expansion for TBZ will be good. But the problem is, they are quite regional concentrated. And again, the working capital is putting a pressure on their profitability. So if someone wants to go, I think I'll go for Kalyan or Titan. That will be a better option.
Right. The next query is from Ashwini from Chennai. Wants to know the short-term target of EPL. Lakshmikant, any view on EPL?
So EPL Limited has seen a spike in today's sessions. Today it has surpassed its previous swing high of 246. So I think immediate support is seen around the levels of 240 to 242 kind of range. Holding this support, we will see further upside move toward the levels of 265 to 270 kind of range. So a short-term target will be 270 and one can keep the stop loss of 240 on the downside.
Got it. Tapan as well, Lakshmikant, stay on. Important to put in focus GSW Dulux on the back of its quarterly results. Now, let me welcome in our guest as well to get that conversation going. Rajiv Rajgopal, the Joint Managing Director and CEO at JSW Dulux, now joining in. Mr. Rajgopal, very good morning to you, sir. Thanks so much for joining in. It's Puneet this side. My first question largely being, on the results as well, because while on a consolidated basis, you are seeing a dip essentially in revenue. I just want to understand if we remove that part of the business which is excluded, your growth would have been much better. That's also reflected in your strong volume growth of almost 20-25% in this quarter. So has this been largely broad-based across decoratives as well as the industrial side of things, or are you seeing some larger growth in a particular segment? What would be that at this point of time, sir?
Puneet, good morning to you and all the viewers at NDTV Profit. So it's wonderful to be back. You're absolutely right. So I'll just run you through the numbers so that I think I just want to be clear in terms of what the results are. First and foremost, our revenue growth is 965. Revenue is 965 crore. The like-to-like for last year is 812. So it's a 18.8% revenue growth. Yeah, the gross margin is 360.8 versus 353.6, about a 2%. EBITDA against 100 last year, 100.4, we did 115.1 this year, which is 14.7% growth. And the PAT is 135.5 this year versus 67.2, which is 101.6%. So suffice to say that when you take out the carved out business, you can clearly see that we've had a stupendous growth led by volume, right? There are two reasons. To your question, is it across all the segments? Yes, it is broad-based. It's across all segments. All the businesses have grown very high double-digit growths, both in volume and value. In decorative business, since you specifically mentioned, our premium has grown astoundingly well, over 20%, both in volume and value, and that has been the driver of the growth, right? But we've also equally grown in our automotive and specialty coatings business, our industrial coating business, and our marine and protective business. So it's been a fantastic growth all through. The challenge has been, I think what's happened is the people have picked up the reported numbers of last year, which includes all the business which finally got carved out.
Okay. Now coming on to the raw material side, sir, given the fact that crude oil prices were higher, despite that you have able to manage the RM cost very well here, but will the impact of higher crude oil prices will reflect in the coming quarters, given the fact that earlier you might have the inventory, now the inventory must be going out, so the high price crude inventory might come in?
So two, one, we had a high priced inventory. In fact, what happened was our opening stock being very little. Last quarter, we actually got impacted in our decorative business because of our, cover. As all of you know, we typically keep only less than 90 days across both our business put together of inventory. And that had come down in decorative, got really impacted. But that's getting sort of neutralized as we move forward. Difficult to predict how crude will move. I do see that it's going to be another a bit of a tough quarter as far as crude's concerned in the current quarter. But again, going forward, I see all this getting corrected. So I don't really see, unless there is something which is really going to take crude above 100, I really don't see a material difference coming in, from a long-term perspective.
Should we expect the margin levels to remain at the current level, or is there room for further expansion?
So first, our margin has been sort of scaled to now 13 to 15% on EBITDA. And the reason for that is two. We are going to invest now across we are going to broad base our portfolio. Dulux in decorative has almost a 45% contribution in premium. And if you really want to grow and grow faster than the market, the only way to do that is to play more aggressively in some of the other segments. And as a result, there would be a certain margin dilution. Secondly, we've had a huge amount of team members because, again, if you remember, Axo was not really focusing on the growth, was really focusing on EBITDA percentages, and what we are committed to is to A, grow faster than market, B, make sure that absolute EBITDA over the last year grows. So these are the two. Now in the process there could be a marginal dilution, but yes, the endeavor is to be within the band of 13 to 15% EBITDA margin as we start moving forward.
Just a follow-up, Mr. Rajgopal, before I ask my question. So you had taken a 10% price increase between January to March. If you can quantify the price increase that you've taken in quarter1?
So if you look at our average price increase in quarter1 is 5.8%.
Okay.
Is the sort of, because two, in the industrial, as all of you and I think the other players mentioned, it doesn't come very easily. It takes time. So that's something that even in this quarter we are continuing to see. Decorative, we took the price and the exit price was close to about 10.9%. However, right, remember that we had taken some price corrections because Dulux was at serious premiums when we were, the Akzo India entity was acquired. And one of the things we decided as a strategy to do was to be within at a reasonable premium, a premium of about 2% rather than being at about 8-9% over the market leader. And hence, those corrections were taken in September last year and in January early this year. And that's what's really paying dividends, and that's what's really driving some of the growths, as you can see.
Got it. And you haven't taken any kind of price increase in July or till August as of now. Would that be a correct assessment?
That's correct. That's correct. Our focus now is driving distribution, making sure that we get the brand and making sure that we really bring, Dulux back into the hearts and minds of our people as we move
Just
forward.
one question from my side, because, you mentioned that the focus on growth is back. You are currently at that 4.5 to 5% kind of market share. Is it reasonable to assume that you will be closer to that 6.5% by the end of the year? I know there's a lot of geopolitical landscape. There is industry pressure and competition increase. But would that be a fair assessment? I think 6% is something on the cards for you.
That's what we are targeting. I mean, we want to get as quickly as possible. If the plan was not, by March, it would take a little longer. But the endeavor is to get quickly to 6%. You're absolutely right.
And just as we wrap, you mentioned about the price decreases essentially that you did in September. Then the increase to take forward the RM price increase. Are you seeing more growth essentially in your premium side of the portfolio? Because we've also seen that for players, while the overall volume growth is increasing within segments, the putties and everything is also starting to have a larger impact on the overall volume growth. So for you, how is that when you mentioned 25% growth? Is that led by the premium side of the business, and now you are expanding your portfolio in the middle as well as the lower end of the schemes within the broader product portfolio for you?
Yes, it is the premium which has driven the growth, Puneet, in decorative and across our industrial segments. So yes, it is premium which is driving the growth as far as we are concerned.
Well, Mr. Rajgopal, we'll leave it at that. Thanks so much for joining in, giving us your time to NDTV Profit. We wish you the best. Look forward to our next conversation, sir.
Thank you.
Well, let's get back to your stock-related queries now. The next one coming through is on Pine Labs. Our viewer Vedant wants to know if it's a good bet for the next 1 to 2 years. Tapan, thanks for patiently waiting by. Would you recommend Pine Labs right now for the next couple of years?
See, if I see the valuation and all that, no, it's little bit on a higher side. No, again, if you see the profitability is evolving, but I think overall EBITDA expansion will take time. Again, even the positiveness is that merchant base is growing and credit business is also growing. But I think multiple revenue stream they are going to go. We have to see how they are going to do it. So my take is currently no. Wait for a little bit correction, then only get in.
Next query is from Shankar from Bangalore. He wants to enter Tata Capital. He's planning to buy around 250 shares. Any price target to enter this counter? Lakshmikant, your view?
So Tata counter has seen a profit booking from last few sessions. So I think near-term support is seen around the levels of 355 to 358 kind of range. So I think once it take a dip toward these levels, from there one can initiate long position, can expect the upside move toward the levels of 385 to 390 on a short-term basis.
Start the rapid fire round in this edition of the show. Tapan as well as Lakshmikant, keep your answers as short as possible. First question is on Nalco. Nitin Singh from Dehradun holding shares at 381. Tapan wants to know if he should still continue to hold and ride the wave.
Yeah, please hold.
Next query is on Lenskart. It's for you, Lakshmikant. Kavya from Hyderabad is currently holding 500 shares, bought at a price of 530. Should she hold or sell?
So hold with the stop loss of 50, can expect upside move toward the levels of 620.
Got it. Jaydeep from Mumbai wants to know about Chennai Petroleum stocks run up massively, Tapan, especially in this week. Is it still a good time to enter?
No, not now.
The next query is on LG India. It's for you, Tapan. The viewer Manideep from Andhra Pradesh is holding 60 shares and wants to know whether is it a good to hold this counter for long term.
No, sell on rise.
Next one coming to you, Lakshmikant, on Varun Beverages. Our viewer Kanan holds shares at 447. Wants to know a short-term view of this counter.
So a short-term view is negative. I think it could take a dip toward the levels of 425.
The next query is for you, Lakshmikant. It's on Emphasis. Jay from Bangalore has entered this counter at a level of around 2400. Can he hold this counter for the next 3 months?
I think the way it has given breakout, I think he should hold this counter.
The next one's on Irida. Our viewer is holding their share at 165 Tapan, so he's currently sitting on a loss. Asking if it's, and he's holding almost 1,000 shares, so it's a big amount that he's invested. Should he book out is his question, and if so, what can he buy right now?
Honestly, I'm not positive. So currently hold, but as it goes above 125, 130, slowly and gradually start moving out.
The next query is on Som Distilleries. It's for you, Lakshmikant. Sudhakar from Sambhajinagar is holding 100 shares at a price of 74. Should he hold or exit?
I think he should hold and continue to hold. Can expect the target of 80.
On Aarti Industries is the next question. Our viewer Raja is holding shares at 450. Wants to know, Lakshmikant, what could be a target for this counter?
So I'm expecting the target of 530 as it has formed a strong base around its short-term moving averages.
Next query is for you, Lakshmikant. It's on KPIT Tech. Prashant wants to know whether it's a good time to buy KPIT Tech based on charts.
So KPIT Tech has seen a profit booking from last few sessions. So I'm expecting downside move. Probably it could retest its previous swing low of 580.
Got it. The next question coming in, it's on MCX. Sandeep holds shares at 2930. Tapan wants to know if he should still continue to hold. We actually had a couple of brokerage notes come through in the morning as well. Any view?
Yeah, I'm positive. Even at dips also you should buy.
The next query is for you, Tapan. It's on Shipping Corporation of India. Satyan wants to know whether should he buy more of Shipping Corporation India for long term.
Yeah, buy, but on dips, maybe 10% dip.
Got it. The next one coming through, and this one's from Akhil, who's from Pune. Wants to know about Kansai Nerolac. He's bought shares at 163 and can hold for the next 3 to 4 years. Tapan.
Sell.
Got it. Well, that was the last question of the rapid fire. But Tapan as well as Lakshmikant stay on. A lot more stock-related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open. They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately. Buy.
Breaking news coming in, N. Chandra has resigned as Tata Sons chairperson and won't seek a reappointment. This is news that has been brewing for some time, and you've finally gotten clarification. Of course, at this moment, it is still source-based information. We're yet to get official comment from any functionary of the Tata Group as a whole. There is no official statement by Tata Sons either. A few factors that you need to bear in mind. N. Chandra, of course, took charge as the chairperson, executive chairperson of Tata Sons in February of 2017. And this is after that tumultuous period when Cyrus Mistry was removed as the chairman of Tata Sons. He took charge just after Ratan Tata returned as interim chairman. He was appointed as the executive chairman, and it was, of course, a unanimous recommendation at the time of that selection committee in January of 2017, and then formally took charge in February of 2017. In that first 5 years, the focus was primarily on consolidation of the group's entities. So you had several legacy issues that the group had to contend with, including what was happening with Tata Motors and quite a few changes were undertaken over that 5-year period, particularly having to do with the strategy of the passenger vehicle business. Now, what happened after that was in February of 2022, he sought a reappointment for a second 5-year term, and he was granted that. In the second 5-year period, though, there were some landmark decisions that had been taken. It was significant capital investment that was made by the group in Air India. There was also the venture that was announced in semiconductors, electronics, as well as batteries and renewables, and the digital platforms as well. I'm joined now by NDTV Profit's Managing Editor Tamanna Inamdar, who's picked this information up. She's joining on the phone line and she has more clarity on this. Tamanna, this seems to have been brewing for some time, and this is happening just ahead of that critical board meeting.
It's a very, very significant development, Alex. Maybe one that is unprecedented in the storied Tata Group. What we are learning is that N. Chandra will be stepping down before his term ends and not seeking a reappointment. Now, this comes at a time when in earlier meetings, he was reportedly asked about the performance of the group. And it's also coming from an internal tension with one of the largest shareholders, which is Tata Trust. So it is a very significant development. And one that we have not really seen in a group like the Tata Group. Now, what has been the genesis of all the events that have led onto this? There have been clashes over a number of issues, whether it's board representation, strategy, how Shapoorji Pallonji's exit, that's a minority shareholder, how that exit took place. It, of course, led to the ouster of a Tata Sons director as well. Now, how that resignation will be accepted, what happens later will remain to be seen. But remember, there is an August 18th annual general meeting when there was a vote on his reappointment. What we are learning is that there was a lot of parleys before about shoring up support, and perhaps Mr. Chandrasekhar has now got a sense that that vote will not go through and has chosen to step down. A final decision, of course, on the acceptance of this will be seen. We are also expecting a formal confirmation of this shortly. We're learning that there will be a statement, perhaps, from the company on what this means and what has happened. But it is truly a very, very significant development, one that we have not seen in the Tata Group before this.
Absolutely. The other factor, of course, that has to be borne in mind, and you brought up that very critical point of the AGM that is scheduled for the 18th of August. In terms of his term, it's set to continue, of course, till February of 2027 when it comes to an end. Bear in mind that N. Chandra is currently 63 years of age. And so if that 5-year extension was to take place, it would require a relaxation of the norms that would normally have kept him in office till the age of 65. And so that is not something that will have to be considered at all, considering that he is resigning as Tata Sons chairman and won't be seeking a reappointment. A few of the key decisions, of course, that have come up for debate in the recent past has been the capital allocation specifically and the treatment of Air India and the venture into aviation at a time when the industry as a whole has had question marks about profitability of airlines. And of course, Tata Group has been in this space before. The reclaiming of Air India has been something that was discussed quite significantly. The other aspect, of course, has to do with certain governance tensions which have been alluded to as well. I'm joined by HP Ranina now, just to get a perspective on what is a very, very important milestone in the group's storied history. Mr. Ranina, what do you make of the fact that Mr. N. Chandra has not sought reappointment and is tendering his resignation ahead of that AGM?
I think it's not only a significant development, it's a very unfortunate development, because the Tata Group, the fact that he has resigned prematurely indicates that things are not very well, and therefore he has chosen to step down before the date of his retirement in February 2027. So it's a very unfortunate development which should have been avoided at all costs. So unfortunately, this has happened. Now, my view is that possibly he has stepped down because he feels that things are going against the group or things are not happening as they should. And therefore, it's better that he steps down before things get even worse for the Tata Group and they get the blame on him. Also, I think he may feel that he has better opportunities elsewhere. And therefore, it is easier for him to move now rather than wait for another 6 months. So my view is that this is a very, very unfortunate development and something which is not in the interest of the shareholders, investors of Tata Group at all.
While you said this is unfortunate, we have seen this change of guard at the top in the Tata Group earlier with Cyrus Mistry as well. So it has taken place before in one sense or the other. What are the deep issues you think that could have led to this? This is Tamanna here, and we'd just like to know your view on this, sir.
Well, this is, I cannot say what must have transpired in the Tata Group. That is something which only they would know. But obviously the signs are not good because Chandra could have easily stayed on till February. It's only 6 or 7 months from today. And the fact that he stepped down much earlier indicates that that is something which is wrong and which he doesn't want to face at a later. So this is the thing. While there may be a change of guard, but change of guard can always take place in a very positive and a gradual way. He could have just said that he doesn't want to be reappointed. There was no need for him to resign right now. So that is what is a question on which I'm very, very, and I think it's very unfortunate that this has happened.
Yeah, the other aspect, of course, is a continuance of strategy for the group as a whole. And for the group to have so many entities that are of critical nature, that are listed and that are tracked by so many individuals, that are invested in by so many individuals and institutions. What does this mean for the direction that the group has been taken in since February of 2017, and what does it mean for the next 5 years?
Well, as far as the strategies are concerned, obviously they will have to be retuned, revamped. All depends on who is the new person, the head of affairs. So that is something which we don't know. I mean, whether they'll continue with the old, whether they'll do some time, remains to be seen. But obviously the intention is to change things, and if he has resigned, maybe he felt that the existing directors did not have faith in him or did not feel that he should continue. So he has preempted the measure and just put in his own resignation. So strategies may continue, strategies may be changed because there have been some type of concerns that what he has been doing is not bringing enough profitability. It is all to be seen how the board of directors, I think that now the whole burden falls on the board of directors. How will they now react? What strategies they will do? Who will be put in charge as an interim CEO? All that has to be seen. The entire board is now responsible. And they have to take their own share of blame to say that somebody went into the aviation business. Well, that was done before. I don't think this is something which Chandra may have taken a decision. It was a whole collective decision of the board. So let us not forget that there is a whole collective decision of the board is also involved, not just the CEO. CEO only implements the decision which the board takes.
Yes.
It's the board which is entirely responsible.
Yes. It's a good point. I'm joined, Mr. Ranina, by my colleague Shrimi Chaudhary, who has source-based information on this story. And everybody's wondering at this stage what the final push was for Chandra to make the decision to resign ahead of time. Shrimi, are you picking up any information that can suggest why that has taken place?
So LHC, this has been going on for some time, a lot of uncertainty, and we've been seeing in a lot of reports as well. I mean, we'd not like to speculate at this point, but a couple of things which is very clear. One, that Tata Sons chairman tenure runs until February 2027, but his continuation as chairman hinges on his reappointment as a director at the company, which needs to be, or which was scheduled to be taken up in the August 18 AGM, and that's clear in the AGM document. Now, two people familiar with the development inside the Tata Group is saying that the issue has become a very key point of discussion ahead of the AGM, also because the trustees supposed to meet tomorrow, August 13. All the trustees are supposed to meet and decide on the voting position. Now, this is before the resignation actually came. But this is crucial from a point of view that they were the reappointment as a director of N. Chandra was the part of AGM which was coming on August 18, and before that August 13, the date is again very crucial because there they had to take the voting position, which is not clear from all the trustees. Now, one important legal position which we need to keep in mind is about the Maharashtra Charity Commissioner, Mumbai Charity Commissioner, because they have restrained the SRTT, Ratan Tata trustee, to not participate in AGM because of some separate issue which has been going on. So they in fact sought Charity Commissioner approval to participate in AGM, and that's very crucial because they wanted to meet and decide on the voting position on all the agenda which is part of AGM. So this all development is of course intertwined, and one thing was very clear in the entire thing, that trustees were divided on the N. Chandra reappointment. It's very, very clear, and that's what we are picking up so far.
Shimi, thanks so much for that. While we're speaking about this very critical development for the Tata Group as a whole, take a look at some of the stock prices. Tata Consultancy Services, of which N. Chandra for the longest time was an integral part, and in fact credited for having brought it to the point where it reached when he made that shift to Tata Sons, is down the most at this juncture. But practically all of the entities of the Tata Group that are listed are losing ground in trade today, whether it's Titan or Tata Power, Tata Steel. Tata Capital is just about flat in trade right now. But if you're tuning in right now for the first time, what we know, and this is source-based information, and that is that N. Chandra has tendered his resignation as the chairman of Tata Sons. Remember, he was expected to hold on, or has the continuance of his term till February of 2027. This is his second 5-year term. So he has, at this point, served a little over 9 years as the chairperson of Tata Sons. And there is a critical AGM that is scheduled for the 18th of, in fact, later this month, I believe, August, 18th of August, when there's set to be voting, or there was set to be voting to take place on this issue. Devin Choksi is joining us right now just to bear in or to weigh in on this critical development from the perspective of the listed entities as well. Devin bhai, thanks so much for taking the time. N. Chandra was supposed to have his term as chairperson of Tata Sons till February of next year. He's tendered his resignation ahead of time. This seems to be because the chances of him being reappointed were dissipating. What do you think about this development, and what does it mean for a group as a whole?
Yeah, little sad to find that the end is happening in this manner. I think, yes, I do agree that I think everybody steps down from the position at some point of time. But the fact remains that I think this is a situation in which probably I think he had to resign, particularly when you see the tenure of N. Chandra from 2017 onwards till 2026 now, almost 10 years. I think Tata Group's market cap increased by more than 3 times actually. And the kind of accountability which has come in respective businesses within the group, they have been quite phenomenal. Yes, I do agree that some of the new generation of businesses, new acquisitions rather, not new generation immediately, but new acquisitions probably I think haven't worked well, particularly Air India has been a big concern as we understand. And this kind of situation probably I think results into a sort of a unfortunate departure for the person I think who otherwise performed very well. So that's a little sad feeling from the capital market point of view, investor point of view. But on the other side, I think then you also have the opportunity as far as I think the group is concerned, because the group is quite strong with about 25 lakh crore market cap. I guess I think if the right kind of person taking the leadership, could possibly take up this activity to the next level in next 10 years. So let's hope and see how exactly it turns out to be. But as of now, a little sad thing that one can experience at this point of time.
From the perspective of an investor potentially in the group, how should you view this development, right? Because for most of the entities, they were not really under question. You pointed out the Air India issue, and barring that and maybe a few other niggles here and there, for the listed entities, there haven't been too many issues strategically, have there?
In fact, I think the listed entities have actually, I think, given a good amount of performance. You look at how the turnaround has taken place in respective companies, like, for example, even Trent, Tata Motors, even for that matter, Tata Consumers. I find that I think majority of the companies have seen the good amount of turnaround in the business, and probably they've become much more profitable. Even Indian Hotel, for that matter, kind of business model that they have been able to successfully navigate through, asset-light model on which they are working today. I believe that I think good amount of clarity has been brought in by the professional manager, and that's where probably I believe that I think the contribution cannot be undermined. Yes, TCS has been, I think, little bit of a mismark as far as I think the IT business is concerned. But I guess I think they took the corrective course, and probably they become from asset light to asset investments, I think, in deep data center. But otherwise, I think by and large, these businesses which he undertook as a chairman, probably I think have all performed well with a good turnaround into them.
Yeah. Devendra, do stay with us because I'd like to get your perspective on a couple more things. From a legal perspective, I'm joined by Tushar Cooper, who's senior advocate. He's on the phone line. Mr. Cooper, just your perspective on why this might have come to pass. This is, of course, ahead of that critical vote on the 18th of August when his reappointment was going to be discussed and voted on. But why resign ahead of time when his term was set to end next year in February?
Possibly, he must have anticipated that his tenure will not be renewed, and if his tenure is not renewed as a director, then obviously he can't continue as the chairman of Tata Sons. So the question is, he must be anticipating that at the AGM, which is scheduled on the 18th, his term as a director would have come to an end, which would have meant that his term as a chairman in any event would have ceased. So possibly that's the reason why he has tendered his resignation now.
Mr. Cooper, as somebody that watches the group very closely and has probably studied it over the course of the last several years, starting from 2016-17 when there was this entire turmoil with the group and then the steadying of the ship, and then more recently some of the conversations that have come to light or some of the murmurs that have come to light with regard to disagreements. Why has this come to pass now, in your opinion, as an observer of the group?
Well, obviously there are policy differences between the trust personnel and the trustees with the manner in which the Tata Sons is being run, or at least with a section of the trustees. Now, this has been simmering for quite some time, and presumably with Chandra's resignation, there will be less friction and perhaps the group can move forward in a more positive way. This situation, as you rightly pointed out, is not conducive to the healthy growth either of Tata Sons or to the activities which the trust was undertaking. So, I mean, and I assumed, although I don't know the terms of the trust, etc., that the decisions of the trustees generally are taken unanimously. In the view of the lack of unanimity on the continuance of Chandra, it was perhaps felt that they would have to take steps to get Chandra to step down as a director at the meeting of the 18th of August. As to what were the differences, etc., I'm not privy to that. That is someone who from the inside will have to talk about. But obviously there were differences, and those differences are there in the public domain.
Well pointed out. Devendra, so from that perspective, as Mr. Cooper has just pointed out, these differences that have been spoken about, have been reported on, if the group as a whole is to move past that with the appointment of a new chairman, on balance, and nobody is going to take away all of the positive decisions that Mr. Chandra has taken over the course of the last 10 years. But on balance, is this positive?
Well, Air India, Tata Digital and Tata Electronics, I think these three put together have actually been the factors, I think, which have contributed to around 28,000 crore worth of loss as of last financial year. And that's where probably, I think, the challenge or the situation is going to be challenging for anybody who takes over. These are not the assets which are likely to give immediate solution in my viewpoint, because airline is a business where probably a lot of other factors are also dependent. So from that perspective, things are going to be a little bit more challenging as I see it, I think, for whoever is taking over. But yes, I think the investment business has to continue, and probably I think these assets will have to see the turnaround at some point of time. So let's wait and see, I think, who takes over as far as I think this particular position is concerned. The professional management, I think, came in through Mr. Chandra. Definitely, I think, has contributed well in my viewpoint, I think, for all other businesses. In fact, each one of them, Tata Steel, Tata Motors included, I think they've seen a classic turnaround, I think, from the legacy business. I think this is something which we'll have to see how the new generation...
Mr. Choksi, I'm just going to interrupt you there. And apologies for that. I have the statement from N. Chandrasekharan, Chairman Tata Sons. This is breaking right now on NDTV Profit. He says, and I quote, "I have completed 40 years of professional life at the Tata Group. I am grateful for the immensely satisfying opportunity to contribute to this venerable institution. Leading Tata Sons over the past decade has been a great honor and a profound responsibility." He goes on to say, "My current tenure as the chairman of Tata Sons comes to an end on Feb 20, 2027. Sir Dorabji Tata Trust and Sir Ratan Tata Trust had unanimously resolved and recommended the extension of my next term for a period of 5 years, which was recorded and recommended by the Tata Sons Nomination and Remuneration Committee and the board. Subsequently, the resolution was tabled in the Tata Sons board on Feb 24, 2026. However, the proposal was not carried through because one of the board members did not support it. And in the absence of unanimous support, I chose to defer the decision. It has been 6 months since the board meeting and no resolution has been reached till this date. Tata Sons is a very large institution and there are many strategic projects that are under critical stages of execution. It is not only necessary to have a leader in place to lead the group beyond Feb 2027, but also clarity on leadership is important for employees, investors, partners, and other stakeholders. Under these circumstances, earlier today, I have communicated to the Tata Sons board that I have decided not to offer myself for the reappointment when my term ends on Feb 20th, 2027. I have asked the board to decide on the succession soon to ensure a proper transition. I'm grateful for the support of all stakeholders. With warm regards, Chandra. So this is important. This is important, and I'm just sending this across to the team. We'll get those graphics up for you in just a second. What this is telling us, Alex and viewers, is that this is a decision that N. Chandra has taken because he is right now displaying a moral high ground. He's saying that there was no decision unanimously on my extension. That's what happened in the past, and without complete support, I would not like to continue. I don't want to be left hanging. It's been 6 months and there is no decision. That's where the crux of it is if you're asking the question, why now? I believe we still have Tushar Cooper, senior advocate, on the phone line. Mr. Cooper, if you can hear me, just your first response to some of those lines that we have put out and what I read out, where Mr. Chandra very clearly says that there was no decision made on his extension for a good 6 months. He's referring back to the February meeting. And that is the reason why today he has chosen to step down and not offer, he's not stepping down, he's not offering himself up for reappointment.
I think that the signs were pretty clear to his opposition to continuation as the chairman of Tata Sons, when the concerns voiced by Noel Tata were aired earlier. And I think Noel has been quite sort of open about the reasons for his opposition. Now, I take on board your the point which was raised by the other gentleman, that yes, under Chandra, the group has moved forward, the group has improved its performance, etc. But of course, Chandra has been at the helm, and of course, credit for that must necessarily also go to Chandra. but it could also be market circumstances, the other personnel in the company who have driven its growth, etc. For whatever reasons, Mr. Tata had his reservations. And obviously, there was a split and a schism between Mr. Tata on the one hand and Chandra on the other. The Tata Trust are the ultimate major shareholders, majority shareholders, and would therefore be entitled to sort of dictate as to how the company should be run. In fact, that was the issue which also caused friction between Cyrus Mistry originally with Ratan Tata and the Tata Trust. So it's not something which is completely unique to this situation to have this divergence of views. And ultimately, Chandra had to bow to the will of what the trust ultimately wanted.
You know, in terms of what this gesture implies, that if there is no unanimity in choosing the next leader or the extension of the current leader, then there is no point continuing. Does that also speak to how the Tata Group has been run? And now, in your view, what would be the next steps that the board will take?
Yeah, I'm not 100% clear, but I think, because I recall reading somewhere that the decisions of the Tata Sons requires the consent or cannot have a negative veto by a majority of the nominee trustees from the Tata Trust on the board of Tata Sons. Now, if that be so, it would depend on what view the Tata Sons, the Tata Trust nominee directors would take on the board of Tata Sons. Now, I'm not quite clear of the composition of the Tata Sons board, and I'm not sure. Noel Tata definitely is there on the board of Tata Sons, and absent his sort of like agreeing to various decisions, obviously the Tata Sons could not make such decisions absent or in the face of his veto. Now, I'm again not clear as to what the provisions under the trustees are, whether both the trusts require to act unanimously, whether it is a majority comprising of the representatives of both trusts. These are matters which I'm not privy to, and I can't really therefore opine on what would be the legality of the trusts, whether they need to take a majority decision, whether they have to take a unanimous decision. These are matters which I can't really opine on.
No, please stay on with us, Mr. Cooper. I'd request you to just stay on with us through this coverage and give us your views. Suhail Nathani also with us. He's managing partner, economic laws practice. Mr. Nathani, thank you for joining in as we're trying to decode this very large story. You've heard the statement that N. Chandra has put out, and he talks very clearly about all of this precipitating in February this year, and that it has been 6 months since no decision has been taken on his extension. It is in that context that he has chosen not to offer himself up for reappointment. What do you make of that statement?
So, one, he's not resigned. He is not extending his term. He has 2 terms, one running through Feb 2027. The second point here is that you don't need unanimity to appoint anybody as a chairman. You need majority under the law. But the fact of the matter is Mr. Chandra has taken this position, and to me, that reflects the culture of the group. First, the trusts are shareholders, so they can vote their shares the way they want. Typically, shares will be voted based on the majority of the view. However, Mr. Chandra, keeping in mind the culture of the group, has said, I want a unanimous decision. I think it's a very good position to take, both for the companies and the trusts, that there should be unanimity. I don't see any problem in this situation. I think it's a great transition, because this is a transition that will happen in due course, and it should. As he said, he spent 40 years at the company, 10 years as chairman, seen the company through some very turbulent times, leaves a very positive legacy, which will, of course, only time will tell about the new bets. But I think it's a good transition and in everybody's interest.
Our research team has quickly pulled up all of the things that have happened under N. Chandra's tenure, and it's nearly 20 years. But his biggest achievement, I suppose, would be the shift into new age businesses, the whole adoption of Air India and what happened there, semiconductors, electronics manufacturing, scaling the EV ecosystem, building digital businesses, AI technology focus. And I suppose TCS is the jewel in the crown, if you really look at Mr. N. Chandrasekharan's legacy in this group. And we should pull up the TCS stock price right now as well. That really is at the crux of it. Mr. Nathani, in terms of finding the next leader, how crucial does that also become? Because the point that N. Chandra is making in his letter is that the plans that this group has requires stability and clarity. Someone needs to take it forward. This is not something that happens in a few months. It's over years, sometimes over decades. What would that process typically in a corporate this size look like of finding a successor? Or would that hunt possibly have already begun?
I think that hunt is constantly there. Any good leader looks at succession. However, this is a conglomerate, a behemoth with wide range of businesses, and it will be challenging finding a good successor. But listen, it's been done before. It happened. It transitioned from the family. It transitioned out of the family. It transitioned once again out of the family. So I'm sure the Tata Group is well up to it, and there are many people who will step up and do as fine a job as anyone else. And Mr. Chandra has reinvented the group. I break his tenure into two parts. The first part is the what I would call the fixing stage of the problems that were in the Tata Group, and two is the reinvention of the Tata Group. He's done a great job in the first, and the jury's out on the second, and time will tell on how his new bets work out. But I think, he's done a phenomenal job, and we need to appreciate that the transition is also smooth, and he's been very transparent with his reasons. And I think all these need to be cheered because it is unusual in the context of Indian corporates. He's gone out making a very clear statement, and he needs to be respected for that.
Okay, Mr. Cooper, just that point on how to make this a seamless transition, because when you look at the entire group, it's more than just one company. It's a force multiplier for the Indian GDP as well. Would that transition or succession hunt have already been on? Do you see an inbuilt succession line very clearly within the Tata Group? Would this have come as a shock, perhaps, to the board?
This differences between Chandra and the trust has been simmering for quite some time. As to what would have been the resolution of this of these differences, I don't even think Chandra really would have figured out earlier. I don't think that the trust would have been able to determine earlier. So I don't think that there is some succession plan which has already been determined by the trust or by the board of Tata Sons also. I assume that the trustees have some idea as to who they would like to sort of push in place of Chandra. But that time will tell as to whether and how soon they would make that decision, whether there would be a search committee set up as in the past, or whether the trust would achieve reasonable unanimity in a shorter period of time to nominate a successor.
Okay. What is the possibility, though, Mr. Cooper, of somebody from within the group being identified? Because this has happened multiple times in the past as well. And it was one of the big talking points when Mr. Chandra took over in 2017.
I think it is more likely that someone from within the group would assume charge, and presumably that would be someone in whom Mr. Tata reposes faith and confidence.
Mr. Nathani, do you want to weigh in on that? Obviously, at this point, identifying who could potentially come through would be conjecture. But any thoughts on that?
Having sat on several boards, I can't believe that a company like Tata's, with or without Mr. Chandra's news of today, would not be grooming successors. Culturally, it would seem that Tata would be better suited with an internal candidate, but that cannot be a limitation for a company of this stature. It's a global behemoth, and I'm sure there will be enough of steps and processes and committees who will find the ideal successor. Look, he's had 2 terms, he served them well, and yes, it is important that you have the trust of the shareholders. I'm not saying that he didn't have it, but perhaps he wanted unanimity, which he himself said was not there, and he has taken a call. And whether you will be able to find a successor by unanimity or not, I'm not so sure, but I'm sure this is an ongoing process, and he's given ample time to the companies to find a successor. So I think it will all work out well. I have a lot of faith in institutions,
and so do hosts of investors. But Mr. Nathani, at this point, questions obviously raised about certain decisions that Mr. Chandra has made in the past. But the tendency is to focus on the one man who leads the board. Is there a culpability that has to be taken on board for certain decisions that have been made that have not necessarily gone right by the board as a whole?
Look, the jury's still out on this. There are a lot of future big bets. The wealth of the Tata Group has increased substantially during his tenure. Arguably, the jury's out on Air India. Airlines is a very tough business, not only in India, but globally. And eventually, we will see how these work out. Perhaps we'll be better judges through the lens of history rather than today. So I'm not willing to get down the culpability route. I don't think it's warranted at this stage because they're all works in progress. These are not short bets. These are very, very long-term bets.
I just want to take a second to go over the entire statement once again that has come from N. Chandra and the important bits of it, because he goes back to the events of February 24, 2026, where he says, my current tenure, which will come to an end on February 20th, 2027, was unanimous and had seen an extension for 5 years, which was recorded and recommended. Subsequently, the resolution was tabled in the Tata Sons board on Feb 24, 2026. Now, remember, in the ordinary scheme of things, this Feb 24th meeting to ratify that nomination would have been business as usual, more regulatory and routine more than anything else. But he does go on and mention, however, the proposal was not carried through because one of the board members did not support it, and in the absence of unanimous support, I chose to defer the decision. It has been 6 months since the board meeting and no resolution has been reached till date. Tata Sons is a very large institution and there are many strategic projects that are under critical stages of execution. It is not only necessary to have a leader in place to lead the group beyond Feb 2027, but also clarity on leadership is important for employees, investors, partners and other stakeholders. Under these circumstances, I have decided not to offer myself for reappointment. It's a lack of clarity of future which seems to have led to this decision and precipitated this situation, Mr. Nathani. So I pose that question again. Surely the board would have seen this coming one way or the other, especially since there was another important meeting in just a few days from now.
So let me just take you back to the law. There is no requirement of unanimity for any appointment. Okay.
Yes.
It may be good to have, but it's not a legal requirement. The NRC recommended him. It went to the full board. There were some reservations as he has himself expressed. So he delayed the vote and it has not been resolved. So he has done what any person would do in the best interest of the company, which is, look, let's get some clarity. There's a lot of important things going on, lots of stakeholders, new projects, business partners. So let's get clarity and move on. So, I think this is a succession that we all need to learn from, not only Tata's, but certainly, in several large business houses in the country where you have a professional, he's taken position. He's looking for unanimity, even though it is not required. And it's also very revealing about the culture of the Tata organization, that people want to be supported with unanimous decisions rather than, say, oh, so what, I'll push through because I am recommended by a majority of the people. I think it's a great corporate lesson in culture, not in the law. And, let's see how this plays out fully.
Nathani, just on the point of the listed entities, because ultimately a lot of retail investors are invested in this place, in the space as well. From the perspective of a shareholder in the listed entities, how much of a bearing will this have? Because let's face it, each of these companies were taking decisions that were individually good for them per se. And maybe the overarching framework or direction was provided by the group, but a Titan was making certain acquisitions or deciding to venture into certain businesses based on what was good for Titan. Likewise for Tata Motors, likewise for TCS.
That's the law. Every board of directors, every management will act in the best interest of the company. You neglect to mention Indian Hotels. Indian Hotels has been such a great success. And although it is good to have a group chairman, eventually every board will act in the best interests of their own company. And each of the Tata companies has delivered on several fronts. And I think, that's a tribute to the group, that there is a group chairman and then there is a lot of autonomy at operating levels. And that's what has built shareholder value. And that's why shareholders have value. Look, you're putting up the share prices of the Tata companies, and I don't see any tumble in the share price or panic or anything else, because this is a situation of succession planning, and many more Indian companies need to learn from this, and this is resilient succession planning. There are several people who are transitioning and have said so in advance, and I think that's the way to go, and that's the future.
That is indeed the future. The one stock, and since you mentioned, Mr. Nathani, the stock reactions, the one stock that seems to have taken a bit of a tumble, and I wonder if it's primarily on account of the association that Mr. Chandra had with that specific company in the past, is TCS. But even there, one would argue that he's been separated from the decision making for quite a while, hasn't he?
Absolutely. And he's had a very clean succession planning over there. And we need to give both him and the group great credit for that. The IT sector is facing its headwinds of a different nature, and there will be new leadership to take this up.
Yeah.
So I think the TCS movement may be more sentiment rather than Mr. Chandra. But look, time will tell. And as somebody very wise once told me, the graveyard is full of indispensables. Nobody is indispensable. And I'm not saying that anybody's claiming to be, but always somebody will step up and rise to the occasion.
To that end, and it's a good point, it does not matter whether you're sitting in the corner office or otherwise, or indeed at the table that I am at. Nobody is indispensable. But having said that, Mr. Nathani, the question is about timelines and how quickly this will come to pass, the change. Because one of the points that Mr. Chandra makes in his statement is that he is making his decision now so that the group has enough time to put somebody in place when his term ends, and so that certain decisions are made. And he points to the fact that several businesses have critical decision making to do with execution that are pending on account of a lack of clarity and lack of leadership. So how quickly do you expect the group to move?
So I don't think he said anything about lack of leadership. He said it's desirable to have clarity. And I think, a company like Tata's has moved in the past and will continue to move. And please also recognize that there is a lot of bench strength. So even if you want to have somebody from within the system, I'm sure there are some exceptional people who will rise to the occasion. And I have a lot of faith in institutions, not only Tata's, and I believe that, these transitions will happen. I don't think this is a acrimonious resignation. I think this is a well thought of and well noticed resignation. He says, I'm not seeking re-election. That's fine.
From the statement exactly, Tata Sons is a very large institution and there are many strategic projects that are under critical stages of execution. It is not only necessary to have a leader in place to lead the group beyond Feb 2027, but also clarity on leadership is important for employees, investors, partners and other stakeholders. That is what I was referring to. Mr. Nathani, do stay with us. We're joined also by Gurmeet Chadda, Managing Partner and CIO of Complete Circle. Gurmeet, you've been a student of this group or an observer of this group, investor in this group for a long, long time. You've obviously been looking at everything that has led us to this point. Is this on balance positive, negative, neutral for the group?
No, it is clearly a loss for Tatas. I think Mr. Chandra is a very accomplished business leader, and especially at a time when AI is disrupting things, his leadership would have come in very handy, in navigating such volatile waters. And I think I'll be not being politically correct, I'm a little disappointed. And I think, if you see his letter in the last paragraph says that for 6 months, there has been no communication, on this, and I think it's a large group, and it deserves a better transition. I agree to the point that they have the bench strength and some very talented people who will come through the ranks internally. They may, I think, and that will get resolved eventually, but I think it is a loss for Tatas. But they will come up, and from a market point of view, the prices are lower. Incremental impact may not be much because there has been a lot of underperformance of Tata Group companies in last couple of years relative to the market, relative to other peers in different sectors, maybe with an exception of one or two. So I think it's negative and it's loss for the group, but they will come up. And eventually, I think I want this resolution of Tata Sons to happen, not just for SP Group, but the fact that it's been now hanging for a while and Tata Sons has been classified as an upper layer NBFC. Some resolution should come. It can't keep hanging like this. And if a large group like SP goes through liquidity issues, they are already rolling over debt at very, very high rates. It can tomorrow become a systemic issue. So I think it's also important to resolve these issues, not only from a Tata Group point of view, but from a larger system point of view.
Tamanna, some insights that you might have?
So I've just been speaking, and this is a very sensitive story, Alex. So not necessarily that everyone wants to comment on it, but one input and one insight that I got, that in the Tata Group, the retirement age for executives
65
is 65, and Chandrasekaran would have turned 65 in July of 2028.
Yes.
The extension of the term is of a batch of 5 years.
Yes.
So an extension in 2027 for another 5 years, would that have anyway worked?
Yeah.
I think what has been the turning point is that the lack of clarity on what would happen next.
Oh, it's an important point, actually. And it was pointed out as well. 63 is his age currently. In fact, Amit Tandon, founder and managing director of IIAS, also joining in. Mr. Tandon, thanks so much for taking the time. And your insight is actually something that is very welcome at this stage, because you represent ultimately the shareholders or you advise shareholders in various entities of the Tata Group. How are you taking this entire scenario as it's played out, culminating in where we stand right now?
Well, good morning. I would say that his resignation is, or his decision not to continue for another term is not entirely unexpected. While it might feel sudden, the signals have been visible for a while in terms of the friction which actually unfortunately played out in the media. And his relationship with Tata Trust, which holds majority control, had become increasingly strained over issues of performance of newer businesses, capital allocation decisions, strategic direction which the group might take. But look, at this time, it's also important to look back at, when he took over in 2017, and if we kind of go back to that period, there were issues with regard to what is happening with Tata Motors and does it have a future. The telecom business, there were issues with regard to the relationship with the Japanese and what are the commitments made and what will happen. And therefore, there were issues with regard to Tata Power. So some of those have been resolved over a period of time, and, there was stability. The other thing we need to remember is, given the fact that he had been the CEO of TCS, his focus on financial metrics and financial numbers kind of passed through on the various group companies. So he was very focused in terms of what they're doing, what are the numbers for the quarter, what is the return on capital employed, what are the capital allocation decisions which they're taking, what are the dividend payouts, etc., etc. So that has had an impact. Now, have some of the bets with regard to electronic, the business on the electronic side, that's played out. The bet on the digital, unfortunately, hasn't gone anywhere. Air India, whether, the expectation was that, again, there was no magic wand. While we all might have expected that as soon as Tata's took over, things would sort themselves out. We have to remember that these are complicated businesses, and they will take time to streamline. Whether it kind of plays out or whether it turns out to be that, look, this was a bite too big, will have to be seen.
And specifically for the...
My own belief is that, look, the businesses, are strong. So each of the businesses have professional management, they have strong boards. Therefore, it should impact the operational businesses
ask you, Mr.
short to medium term.
That's exactly what I wanted to ask you, Mr. Tandon, which is that in several cases, or in the 3 or 4 issues that have been highlighted in the run-up to today, quite a few of them relate to unlisted entities of the group. That's one. 2, while Gurmeet, who we were speaking to not too long back, was talking about the relative underperformance of few of the group entities, that is not necessarily something that you can level at the feet of the Tata Sons board, is it?
No, I think the market has actually reacted a little bit strongly just now, but that's an immediate reaction. At the end of the day, as I mentioned, the boards are strong, the businesses are strong. And look, each of the CEOs is thinking about the business over the short, medium, and long term. So therefore, it's okay. The other thing we need to recognize is that, Mr. Chandrasekhar is around for another 6 months. So there is sufficient time for them to find a successor, for there to be a smooth transition if it is needed. And look, he's a professional. It's not that he wouldn't have thought about the businesses, what needs to be done, etc., etc. Maybe some of them would take a little bit longer than we anticipate. Maybe some of the bets may not play out, but there's every reason to expect that, look, when you've made bets and you've got the group, with the management depth as the Tatas done, they will kind of get a grip on the businesses as they go forward. So I would not unduly worry about it at this stage. I would just wait and watch and see how things pan out over the next few quarters.
Amit, request you to stay on with us. Sriram Subramaniam, MD and founder of InGovern Research, also joining us as we're just, breaking down this very, very large corporate story. Sriram, thank you for giving us your time. Just your primary reaction to the wording of the statement that has come in from N. Chandra. Because this was a work in progress. The decision that he is talking about was a work in progress, the extension, and then, of course, there is the question of retirement age, etc. But it has, in a sense, been preempted, and a decision has been made that I will continue. So technically, he is not resigning. He is stepping down, and he has decided not to offer himself up for reappointment. That debate has now been ended by N. Chandra himself. How do you see these developments?
Good morning. I think that is the positive, if anything, from the entire today's news. The fact that Chandrasekhar will continue till the end of his term, February 2027. The board hopefully will arrive at a successor quite quickly, and there will be smooth transition from Mr. Chandrasekharan to the new successor over that maybe. So I think that is a positive. I don't think there will be any impact on the operating companies. Investors of operating companies unduly have, I would think, depressed the share prices today, reacted as a knee-jerk reaction. Each of the operating companies have their own boards, their own strong management teams. So I don't think there is a need for investors of listed companies to worry about the transition at Tata Sons itself.
Gurmeet, back on the line. Gurmeet, the question that I wanted to ask you is for existing shareholders of listed Tata companies. What decision-making should be done based on today's announcement? That's one. And you were talking about the underperformance of certain group entities. How much of that is based on the leadership of the overall group?
No, I think it's not much to do with the overall group. Whether it is, for example, TCS, I think the entire IT services sector has been under pressure. I think one place where I think there is some opportunity actually, and not being negative, is Tata Motors passenger vehicle. I think the share has lost a lot of, eroded a lot of shareholder wealth. And I think things are now gradually looking, at least on the domestic side, coming back. I think the Range Rover portfolio probably will take a little more time as global markets continue to be volatile. I think that's one stock which merits to have a look from a risk reward point of view. The other one which has been pretty steady, Tata Consumer, not really impacted much by it's doing quite well, and also has nicely consolidated in the last 2 years. Numbers were pretty good in Q1 too. And I would look at what eventually happens to Tata Sons. I think that's the key monitorable for me, and it will have an impact on other companies, especially like Tata Chemicals, where there could be some value unlocking. And also overall, for the market with SP Group getting some kind of a relief, which I said is now really rolling over debt at very high rates, as far as my understanding goes in the market. So it's good if that issue gets resolved, on priority, and it will have a bit of a positive ripple effect, across other group companies.
You're, of course, referring to the fact that Tata Sons remains in that upper layer NBFC category and would require listing. Of course, their request to the Reserve Bank of India is still under consideration, and so therefore final decision is waited. But gentlemen, on that note, thank you so much for joining in and for sharing your views. This remains our top story, so we're going to be tracking it over the course of the remainder of today's market day. Do stay tuned with us, and we'll talk about the implications of this large announcement, momentous announcement by N. Chandra, and what it means for the Tata Group and you potentially as an investor in the group. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT। कायर हम नहीं जो पीठ पीछे वार करें, शेर को भी जगा कर शिकार करते हैं।
ऑक्सीजन के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Lackluster day on the Dalal Street. Nifty trades near day's low below the 24,300 mark. Broader markets mirror as well as fare better marginally, while the public sector banks lead with gains. Tech and realty under pressure today. The big news for today: N. Chandrasekhar has resigned as Tata Sons chairman and will not seek reappointment. His term was due to end in February of 2027. Chandra took charge in 2017 after leading TCS as MD and CEO previously. Godrej Consumer under pressure after appointing Asif Malwari as CEO and Managing Director for a 5-year term from August 12th after Sudhir Sitapati resigned just months after being reappointed to the role, and the firm appointed Vishal Kedia as the interim CFO. Bata India and Finolex Cables are in focus after strong Q1 numbers. Bata's profit rose 23% with a dividend of 25 rupees announced, while Finolex posted a 53% jump in profits, revenue crossing over 2,000 odd crores and EBITDA surging 79%. Senco Gold shares slumped over 8% after Q1 results. The revenue has surged 67%, but the profit fell by 3% in this particular quarter, while the EBITDA margins contracted to 7% from 10% earlier. Good afternoon. My name is Puneet Zaveri. You're watching Markets at 12. This is a show where you get all key perspectives as well as the important stories that we're tracking today as well. But the bigger story today, N. Chandra has, of course, resigned and stepped down as Tata Sons chairman. Alex is joining us to give us more perspective about this. Alex, over to you.
Well, it's a significant development for the Tata Group as a whole, and this is something that some might have argued has been brewing for some time. And N. Chandra, as Puneet just pointed out to you, has stepped down as chairman of Tata Sons. He put out a statement not too long back to various stakeholders, shareholders included, where he said a few things. And I'm going to read that out for you. I'm paraphrasing a little bit, but you'll get a sense of what he has said. He says that he's completed 40 years of professional life at the Tata Group. You know about this, of course. If you've invested in TCS, then you'll know the time that he spent there. He says that he's immensely grateful for the satisfying opportunity that he's had in various leadership positions. He says that the Sir Dorabji Trust and Sir Ratan Tata Trust had unanimously resolved and recommended the extension that would have taken him beyond his current 5-year term, which ends in February of 2027. Now, here's the thing. That extension resolution was tabled in the Tata Sons board on the 24th of February 2026, but there was no unanimous support. In the absence of that unanimous support, he chose to defer that decision. The resolution on extension has not been reached as things stand as of date. Now remember, it's important that this is coming in the context of an AGM that happens on the 18th of this month. What else is he saying? He says that Tata Sons is a very large institution with strategic projects under critical stages of execution, and in that context, it is necessary to have a leader in place to lead the group beyond February of 2027. The clarity on leadership is important for employees, investors, partners, and other stakeholders. And so, from that perspective, he has decided not to seek a reappointment when his term ends on the 20th of 2027. So, all of this puts into context the decision that N. Chandra has made. From his perspective, he is doing it for the betterment of the group, giving them enough time to find a successor, someone to lead the group at a time when a lot of key projects are at very critical stages of execution. Now, important for you to pay attention to some of the details here, because N. Chandra is 63 years old as things stand right now, and usually for the Tata Group, you have 65 as the threshold till which a chairperson serves in office. And so if N. Chandra was to serve another term, it would have to be on the basis of a special resolution or a special extension that was to be given to him, in which case he would have served till either 68 or 69. Now, the other thing that you need to pay attention to is the stock reaction. In quite a few of these stocks you're seeing now trading at the low point of the day. TCS is actually the stock that has borne the biggest brunt of selling. A few issues that you need to bear in mind that are hanging fire at this moment, and that has to do, one, with Tata Sons and the fact that it remains as an upper layer NBFC, and based on the rules of the Reserve Bank of India, will therefore have to be listed. Of course, at this juncture, we know that there is still a request pending with the Reserve Bank of India that will remove the requirement for such a listing. Until such time as that decision is taken, there is no timeline within which they will have to be listed. Some context as well for you to understand. N. Chandra took over as chairperson of Tata Sons way back in 2017. Some of you may not remember this, but for those who were tracking the group at the time, you will know that there was quite a bit of turmoil that was taking place at that time with the exit of Cyrus Mistry, who was till then serving as chairman of the group. And it was an acrimonious separation by Cyrus Mistry at the time because of not the best relationship with Ratan Tata. And so the coming in of N. Chandra steadied the ship. Several decisions were taken over the course of the next 9 years, some of them including the entry once again into aviation, the entry into semiconductors, the entry into electronic manufacturing, the scaling of the EV ecosystem, as well as building of the digital businesses and the acceleration of the AI technology focus. All of those have brought us to this point as things stand right now. We've spoken to several representatives of the capital markets as well as certain advisors to large institutions,
And they're all saying that while it is not the best thing for the group to see such a storied individual as N. Chandra leaving their fold or not continuing as chairman, it is not something that will have a void for a long period of time. In all probability, even as we speak, there is a conversation ongoing as to who will fill the shoes of N. Chandra and who will take the group forward into the next 5 years. So that's the long and short of this story. And of course, Puneet, we'll be tracking this through the day. There will be a special show that you should pay attention to and watch for at 1 p.m. where we talk about not just the implications of what Chandra has done, what he has done over the course of his term as the chairman of the group, but also what listed entities in the Tata Group should look forward to now that this has happened.
Well, most certainly, and thanks so much for that, Alex, and taking us through the last hour or so of this very big breaking news. Of course, his contributions to TCS are well known. A lot more that has done over the years and over the last 9 years as well. We've spoken to multiple guests on this, but a quick check, and we showed stock down almost 5.3%. Also pull up Tata Motors PV, because those were the two counters that were bearing the brunt today of that particular news flow coming through. Tata Motors PV also down almost 2.9%. But let's continue and getting you some more perspective post quarterly results that are going through. We are in the fag end of things, but let's welcome in Amit Jain, who is the CMD of Arcade Developers, now joining in post hitting decent set of numbers in this particular quarter. Mr. Jain, very good afternoon to you, sir. Thanks so much for joining in. It's Puneet this side. Your gross development value continues to inch up. It's something that we've seen over the last year or so also build up for you. The question largely being, you gave an update in the last quarter that a few of your projects that were expected to come in, a key one in Vilepala by December. Any update that you can provide through for the more near-term projects? How have the sales through performance and the pre-sales for those going in? Is this as per your target?
Yeah, we've launched a project in Santa Cruz, Arcade Sapphire, last quarter. And we are in the process of launching 2 more projects this financial year. One project is in Malad. That's a redevelopment project with a projected sales top line of around 800 crore. And another project is in Thane with a projected top line of 2,000 crore, which we are proposing to launch in the last quarter of this financial year.
Mr. Jain, I also want to ask you, how has this quarter been? Because you mentioned about the new projects that have come through, but this was a very volatile quarter as well. With geopolitical crisis, you saw that some impact in quarter 4 at the very fag end in the month of March. But did you see any impact in this particular quarter, any kind of buyer fatigue or behavior? Because we've also seen that the pre-sales numbers actually held up for most companies. But is there something that you've seen on the ground in this particular quarter?
Yeah, there is an adverse impact on the sales and the construction velocity also because of the geopolitical crisis. There was shortage of manpower, there is shortage of raw material as well. Industries were not getting energy supplies, gas supplies, because of which the production was down and the supply of raw material was down. Laborers were going back to their native because they were not finding LPG, and all of it did hamper the construction a bit and eventually the sales also. But in spite of that, we've a pre-sales which is 9% more than the quarter-on-quarter last year.
And is that the reason, Mr. Jain, that you've seen revenues actually come down in this quarter as well? Because has there been a timing gap?
That is one of the reasons because of which the construction did take a hit, and effectively the sales also did take a hit.
Also, if you can provide some perspective on your collections as well, because we've seen that in this particular quarter there has been a slight dip on that front too. Anything that you can provide us, if that's specific to any particular project, or is that similar to the reason that you pointed out in this particular quarter?
Because of the construction progress delay, the collections were hit marginally, not substantially. We have kind of like consistent collection, marginally they are down.
And just one key question coming through on what we've seen on your financial performance as well. Now compared to FY23, of course, which was a big year for you, you're up almost 4x in terms of revenues at 800 crores for FY26. Last couple of years, you've been in this range of 6 to 800 crores. Now, with the multiple key projects coming through, should we see a more larger impact on terms of revenue growth in FY28?
Yeah.
What can be the expectations from this year?
So 27 and 28, we are looking at a top line like a revenue of 1200 to 2000 crore range. So there will be a significant jump in the revenues in the coming 2 years because of new launches and bigger project size. The scale of the projects that are coming up is going to be far bigger than what it is currently.
When you mentioned that from 1200 to 2000 odd crores, I'm guessing that for this year, this would be the minimum revenue threshold, right? Around 1200 odd crores that you would be targeting. So is that growth more back-ended?
We can call it pre-sales in that range. The revenue will be realized as and when the project progresses, but pre-sales in the range of 1200 to 2000 crore in the coming 2 years.
Got it. So you're mentioning that your pre-sales will be roughly between 1200 to 2000 odd crores. But that revenue, so my question, sir, was more on the revenue aspect as well, because we have seen that progression of pre-sales over the last couple of years, but has stagnated in the 6 to 800 crores in revenues in the last 3 years. So for this year, can we expect 1200 crores revenue?
We can expect a 4-digit, I would say, a transition from 3-digit to 4-digit.
4-digit, okay, just crossing the 1000 crore mark. Got it.
Yeah.
Well,
so revenue will always follow the pre-sales. Construction will follow the pre-sales.
Got it. Well, Mr. Jain, thanks so much for joining in, giving us your perspective about Arcade as well as what's to look forward to. So definitely, a quarter which was marred by geopolitical crisis. We've seen that in the real estate space as well, but management optimistic on what they are seeing in terms of pre-sales over the next 12 to 24 months. But let's continue with what we've seen. Let's pull up specialty restaurants and see what that stock is doing as well. Because we saw a decent set of numbers come through for the company, and to talk more about it, Avik Chatterjee, the CEO, is now joining in. Mr. Chatterjee, very good afternoon to you, sir. It's Puneet this side. Thanks so much for joining in. My first question largely being that your growth verticals is what we are something that you've spoken about in the past, the new restaurants that are coming through as well. How have they performed in this particular quarter, and what is the expectation that you have from the newer business for this year?
Sure. Thanks, Puneet. So we've had a great quarter. We're very pleased to announce the results for the first quarter of the year, and we're looking forward to better results, of course, and the similar trends following up. We've made a new strategy to focus on key brands for growth drivers. So we're going to be focusing on Oriental, Italian, and QSR as 3 functional growth engines for the company. As you know, Oriental has our flagship mother brand, Mainland China. We have Asia Kitchen by Mainland China, which is purely a mall format. After that, we have a digital-first brand called Hakka, and we've introduced a new premium segment Oriental brand called Gong. So this being our category 1 for driving growth. After this, we have our Italian segment and category where we have our brand called Siciliana. We've already done 4 of them this year. We're going to be adding 3 more restaurants of the same brand to grow the category as well. Alongside that, we have our QSR segment where the company has major focus for the years to come. And this is going to be powered by 2 brands, which is Sweet Bengal, a brand that we have established very well into the Maharashtra region. We'll be taking that forward to more different regions as well. After this, we have our new entry to a burger gourmet space, which is Walter's Burger. We've added 3 stores. We're going to be adding another 10 stores by the end of this financial year. So these have been the key factors to drive growth for us.
Got it. And thanks so much for laying out the strategy across across brands as well. But Mr. Chatterjee, just a question. You have achieved same store sales growth of almost 11% in this particular quarter. Has that largely been led by the top-down strategy of Oriental as well as the couple of bigger brands, or are you seeing that pass through with the advancements that you've done in the last 1 to 2 years of some of the brands name that you spoke about? So is this still Oriental led is the question?
Absolutely. So Oriental is actually 50% of the pie, and it continues to grow. So Oriental being the backbone for the company, the new growth engines are obviously hand in hand helping us grow faster and capturing new markets.
Also, I want to ask you about how are you looking at the revenues for this year, because you've reported a good beat in the first quarter, almost 127 odd crores. When I look at your last 2 to 3 year financial performance, has been at that 350 to 400 crore mark for the year. Could this be a year where you have that substantial growth visible? Is there a possibility of crossing that 500 crore revenue mark for FY27?
We're very, very positive to be crossing that mark. And we're actually on track. In fact, our Q3 historically for a restaurant business is the best quarter, and that is yet to come. So we're very pleased with the Q1 results, and in the times to come, we'll be seeing phenomenal growth, and the company's future looks very bright.
I do want to ask you about how you are looking at the delivery side of things as well. I think current contribution, and correct me if I'm wrong, is close to 29 to 30%. So almost a third of the business now coming from there. Is this dominated by those newer brands that you mentioned, or here as well we are seeing Oriental continuing to have that domination in terms of share? So just specifically from a delivery revenue, how much is your mother brand coming through, or is it the smaller, newer age brands that are having a higher share there?
So the mother brand is the highest in terms of our delivery revenue. And what is very interesting in this space is that while our dine-in continues to grow, the delivery pie and the consumer's sentiment for delivery has been growing generically. For example, a consumer back in the day would be going out for dine-in restaurant and experiences. Today, they're dining out more with two different versions and two different variables, which is dine-in and delivery. So we are actually reaching out to the consumer more times through dine-in and delivery.
Got it. Well, Mr. Chatterjee, we leave it at that. Thanks so much for joining in, giving us perspective about what the quarter was by. Of course, we'll be hopeful for the 500 crore revenue mark this year, but look forward to our next conversation, sir.
Thank you so very much.
Thank you. Well, that was, of course, the management of specialty restaurants. Still to watch out for on execution of those new brands as they continue to foray into the new age brands as well. Delivery is a big one to watch out for. But viewers, out of time on this edition of the show. Thanks so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio. I'm here Aditya, and with me is Sharad Dubey, who's standing at the market pit. Sharad, a very interesting day of trade. You know, at one point in time when we were thinking that probably the markets will be slightly muted like they've been on Monday and Tuesday, you have a big breaking that has already come in with regards to where N. Chandra goes, where he has stepped down and he is not seeking reappointment, and this is after his term ends, which ends in February 2027. Now the question over here is, what is that succession plan actually going to look like? the extension proposal has been tabled before the board as well. And N. Chandra has said in his statement that the proposal wasn't carried through as one member didn't support the reappointment. So interesting comments that are coming in from N. Chandra, or from the letter that he has written to his shareholders as well. But the key is that he will be stepping down and he is not seeking reappointment as well. And if you see in terms of stocks, TCS down 5.5%, Tata Motors PV is down 3.5%. Interestingly, CV is up 1.2% in trade. Tata Steel, Titan, Tata Power, all of the companies are seeing that little bit of downward pressure. The question is going to be what happens in terms of business, because everyone is of the opinion that to some extent business will be as usual, but in terms of strategy, in terms of key leadership positions, who will fill in is what we want to look at. Interesting data points that we are collecting so far, but what are markets telling you?
All correlated, and you are right. Tata Group stocks are actually weighing down on Nifty also. Pretty interesting, right? We are Nifty, that 24,300 levels that has been breached, and we are at the day's low level if you have a look at it. Nifty Bank, let's see what's happening here. Nifty, we are almost down 200 points, but Nifty Bank, it's not that bad, but yes, there is a correction from the day's high. It's largely flattish when it comes to Nifty Bank trading. But what are the key factors to be watching out for? Of course, Nifty is having a weaker technical setup, and the support range is that 23,800 has been again triggered back, especially 24,100 is on the long run numbers. Nifty Bank, also the support range comes between that 57,000 to 57,500 if we talk about it. Another key important reason is of course the Tata Group of stocks, which would be in focus. Hiral had mentioned earlier what's the key news flow looking like, but the big drags which is starting to come in Nifty, this includes Tata Consumer Product as well. Of course, a little bit of buying coming when it comes to the overall. You could just see these are the key reasons, these are the important Tata Group stocks all falling. You can have a look here. Also, apart from this, we'll be also looking for the realty segment. That's where a little bit of buying is coming. And if you look at it, the Q1 numbers are still on today. Apollo Hospitals comes in, and largely if you talk about it, there is Grasim as well, and US CPI data is also something which you'll be tracking. So these are the important stocks which should be there in your radar.
Thank you so much, Sharad, for that. But we cannot move away from the big story of the day, which is the biggest breaking news, where N. Chandra has gone ahead and stepped down and he is not seeking reappointment. My colleague Nimit Dixit is joining us live from Bombay House. Nimit, good afternoon. Heavy rains over there. I think they've actually stopped right now as we speak. But what are you picking up? Any movements happening there?
No movements here so far, but the talk is the same right now that Mr. Chandrasekhar has decided to step down from the role. He will complete his current term, which goes on till February 20th of 2027. A little bit about what led to the decision. Mr. Chandrasekhar said that the Sir Ratan Tata Trust did approve unanimously his 5-year extension. The Tata Sons remuneration and committee also approved this, but then when it was tabled, it was not taken up for a while. What Mr. Chandrasekhar points to is the fact that one board member did not support it, and what he says is without the unanimous support of the board, he would not like to continue this position in the absence of that unanimous support. Now, why he is stepping down at this point? He says that Tata Sons is a very large institution with many strategic projects. He says that these require execution, and this dispute over transition of leadership and all this confusion will cause a lot of delays in strategic decisions that need to be taken, and those need to be taken soon. So for this, he recommends that the Tata Sons board decide on succession soon, and the earlier the succession decision is taken, that will lead to a smoother transition for the board itself. So that's what we have for you right now. It's raining quite heavily outside Bombay House, and we'll keep you posted on the ongoings here.
Okay, thank you so much for that, Nimit. So that's the live update coming in so far from Nimit. We will keep coming back to him as well to get us anything with regards to he catching up on that front. But very interestingly, if you have to talk about the Tata Group stocks under N. Chandra, now the market cap of the listed Tata Group companies have jumped over 3.53 times as well. And the current market cap actually stands at almost 22.5 lakh crore. That's the size of the group that we're talking about as we speak. In fact, if you talk about the best performing stocks within the group under his tenure, you have Trent, Nelco, Tata Investment, Titan, Tata Consumers as well. And Titan, TCS, Tata Steel and Trent have had the highest market capitalization so far. In fact, the Tata stocks under N. Chandra, let's look at the performance. If we can just have, those graphics playing up on your screens as well. You have Trent, which has gone up almost 1700% under N. Chandra. Nelco has moved up almost 1140%. Tata Investment, 1060, Titan 1020, and Tata Consumer up almost 670%. That's what we are talking about. And talking about Tata Sons' performance as well, just look at the revenue. From a 25,000 number in FY20, it's actually jumped to 42,000 crores. And that's the number that we're talking about. In terms of profitability, look at the jump. 3,000 is where it stood at FY20. In FY25, 26,000 crores is what you've seen, and then moved to 32,000. And from a negative cash of 28,000 crores on the books, they've actually gone to a positive number of 22,000 crores when you talk about their cash positions. And the return on equity, 6%, that was what they were delivering in FY20, gone up to 19.4% in FY26. And this is what we're talking about in terms of a Tata Sons scores. Apart from this, if you have to look at N. Chandra's key positions held as well. In 1987, he joined TCS. If we can just have that one on the screens of, what were his key positions. Then before 2009, he was the CEO and ED. He's continued with TCS till 2017. From there, October 2016 onwards, he was director at Tata Sons, and Feb 2017 onwards, he's been the chairman of Tata Sons and Tata Group as well. And very quickly, we'll go through his key achievements as well. But a quick question. Deven Mehta, IDBI Capital Markets joins in. Deven, welcome to the show. We're a little short on time, but anything that you like from the Tata Group of companies? Because from a fundamental perspective, you have N. Chandra, who's stepping down, who was not seeking reappointment from February 2027 onwards. But on the charts, there is pressure building up in today's session on a majority of the counters. Is there any opportunity to buy?
Definitely, the stocks are really good as far as Tata Group is concerned. I think Titan is one of the counter which is on my radar. The stock has recently moved well, but I think any dip in this particular counter is a good buying opportunity. So Titan is the first pick which I'm liking at these levels. And again, if it dips towards 4,800, then that will be a good buying opportunity. So Titan looks good on charts as well, and the strong support is at 4,600 levels. So again, if it corrects towards 4,800, I think a Titan is good buy for as far as Tata Group is concerned.
Okay, the topic coming in as Titan from Deven from the Tata Group. Thank you so much for joining in. But we'll quickly slip into a short break. On the other side, trending stocks will continue as well with a lot of management conversations. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping.
Welcome back to Trending Stocks, and now of course we are focusing on the earnings season, especially Nephro Plus comes in our mind. We are joined in by Prashant Goenka. He's the Group CFO of the company. Hi Prashant, it's always a pleasure to have you. The first question is, of course the company came out with a good set of quarterly numbers, but going ahead, what is the margin guidance looking like, and overall any numbers you would like to share going ahead?
Our current margin profile, EBITDA margin, is around 21.9%. We saw 120 basis point improvement. As I mentioned, we are a high growth company. 80% of our growth comes by adding new clinics in our existing geography and also adding a new country every 12 to 18 months. As we add this acquisitions or add this new clinics in existing geography, or as we add new markets, the margins will continue to fluctuate a bit up or a bit down, depending on the growth that comes in. So we are not in a position to give a guidance on the EBITDA margin, but we believe the EBITDA margin will remain in the healthy range as we continue to grow the business.
Right, Prashant, and what about the overall volume and realizations angle, going ahead? If you could just give us some numbers or feel about it.
Yeah, this quarter you will see that we have seen a price increase or revenue per treatment increase of 9.2% year-on-year basis. That is predominantly driven by the international mix. We operate in India at a $22 price point. We operate in Philippines at $110 price point, and we operate in Uzbekistan at around $60 price point. As the international mix changes, our international revenue is currently at 45% compared to 40% a few quarters back. So as the international revenue mix is shifting and we are getting more revenue from markets with higher price point, the revenue per treatment will continue to inch up at a reasonable level. But most of the price increase will come from the international mix.
Right. That's the view coming as well on the price hike as well. Thanks a lot, Prashant, for giving your time to us at NDTV Profit. Always a pleasure to have you with us. Over to you, Hiral.
So much for that. It's an interesting stock that stock does continue to trade slightly under pressure. But moving on, Insecticides India, a weak first quarter is what they reported, and this was impacted by delayed monsoon rains and sluggish sowing activity. To discuss the quarter gone by, Rajesh Agarwal, Managing Director at Insecticides, joins in. Mr. Agarwal, welcome to the show and always a pleasure to speak to you. Taking cues of how you've exited the first quarter, what is the sense that you're picking up in terms of Q2 as well? Because rainfall has been a concern. Everyone is talking about the El Nino impact. Where does it stand according to you from a business perspective? And what is the impact that you are already putting it into your calculations?
Yes, the sowing season is delayed. So the rains were very, very deficient. So impacting the entire country in the Q1. July was very, very similar, but we have seen a good recovery in the month of August. The reservoir situation is improving. The crop situation is very, very healthy. And there is a good demand across the country for different products. So I believe that we are going to pick up in Q2 and Q2 should be positive. In terms of gross margins, we have made a slight improvement in Q1 by more than 200 basis points. And we slipped in terms of the PAT margins because the overall turnover decreased by about 12%. So that impacted the net PAT margins. I believe that we should make a good recovery in Q2 itself.
Okay, so you're saying a recovery could be expected in terms of Q2. What does that mean in terms of financial year FY27 as a whole? Anything that changes in terms of the expectations?
We were very, very aggressive when we had given this year's planning. We wanted to have a double-digit growth. At this juncture, declaring the complete growth for the full year will be difficult. But I can say that this quarter will be positive and the other quarters also will try to make them positive. How much growth? A difficult target, but definitely we'll improve on profitability because we have improved our product mix here and we are going to push these products into the market because we are working a lot with the farmer and the retailers and we are promoting our products and very, very confident that with the good response.
Mr. Agarwal, so what's the kind of deviation that should be expected realistically, taking the external circumstances into consideration for FY27?
The growth will be single-digit growth actually in terms of the top line. Bottom, yes, there is a chance of a double-digit growth.
Okay, so single-digit growth in terms of top line, double-digit growth in terms of bottom line as well. Apart from that, you've mentioned that the agricultural activity to some extent has picked up. Q2 is looking better than the first quarter as well. So if you have to talk about order inflows, if you have to talk about the distributor offtake, how is that looking like?
Yeah, it got a hit, particularly the herbicides and the granule segment got a hit in the first quarter. Now the things are picking up. There is good demand for insecticide, fungicides. that we can see, and wherever the new crops are coming up, the herbicide demand is also there. So overall things are picking up and there is good demand, and the plants are under pressure to supply the desired B2C requirements.
Okay. Apart from that, if you could help us understand, you're operating across about 130 plus formulations, 20 plus technical products. So which crop segments and molecules are seeing the strongest demand at this point in time? And are those products absolutely margin accretive?
Yes, if we look at today's scenario, then this is the peak season, because monsoons, Kharif monsoons are one season where we have all the crops. At this moment, if I talk about the traction, then there is traction in paddy, cotton, though cotton has come down, maize has come down, but still there is traction, soybeans, pulses, sugarcane, all type of crops. And then the chilies are going to come up in Andhra, which we are very, very hopeful. In the entire south, not only Andhra, Telangana, Karnataka, and some other parts of MP and Maharashtra, we are going to see them. Horticulture, we are very, very confident. So all these crops are going to do good. And as Insecticide India, we are not bound by one crop or two crop or one product or two products. We give the complete solution. So holistic solution of herbicide, insecticide, fungicide for all crops. And whenever the situation changes, we divert our attention towards the what we have and what is the market requirement. So very confident that many products are the part of our Focus Maratna and Maratna range, which are in demand today. So we'll be able to maintain our margins, we'll be able to maintain our sales targets also in Q2. This is the confidence coming up with the recent rates.
Okay, so Mr. Agarwal, my last question is, for difficult first quarter, second quarter expected to be better than the first quarter. You're saying that FY27, you will be able to see a single-digit revenue growth, double-digit profitability growth. That's a potential. Do you think FY27 as a year will be much, much, much better than what you've reported in the first quarter then?
Yeah, definitely it should be. That is my expectation. Because today, if we look at the plant health, the crop condition is very good. So farmer is happy, the situation is good, and there is demand because of the rains which has happened in the month of August across the country. So I believe that it should be much better than what has happened in the Q1.
All right, so looking forward. Thank you so much, Mr. Agarwal, for joining in. Always a pleasure to speak to you. The stock slightly under pressure, but again, the outlook with regards to the remainder of FY27 seems slightly more positive than what the first quarter has looked like. But completely out of time on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. We'll quickly slip into a short break and we'll have a special broadcast on N. Chandra stepping down. In fact, what's in store from here on as N. Chandra steps down? What is the key, leadership position that everyone is going to watch out for as well? And that's what we're bringing to you from NDTV Profit Suzlon studio on the other side. Please stay tuned for a special broadcast on N. Chandra stepping down.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑक्सीजन के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे? ओले 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 ओले
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Welcome to this special program. You're watching NDTV Profit, where what we're attempting to do is break down the events in the letter of today, what it means for the Tata Group, what it means for stocks of the Tata companies, and what it means for corporate India. Neeraj, what a sequence of events.
Yes, indeed. And from a gentleman who, Tamanna, nobody can argue otherwise, turned the principal group, corporate group of the country, Tata Group, from a heritage structure into a future-ready powerhouse, if you will, right? Revenues double, profits treble. I mean, those are numbers, but just what he brought to the Tata stable, being the first non-family, non-Parsi person to be at the helm. I mean, there'll be stories about it written for years come together.
Yeah. So, a 40-year career, clearly, and the contribution cannot be denied. But the fact also is, I would say, Neeraj, in the last couple of years, a lot of the data that you're talking about was looked at, right? Air India. What has happened with Air India? The losses, did it turn around the way that it was supposed to be? TCS, was it at the forefront of AI like it should have been or could have been? Not that I'm putting it all on one person's door, but those were some of the conversations that were beginning to happen. I think what's also important to understand right now is the sequence of events that has led to today's statement. In case you're just tuning in, here's what's happened first up. A statement was issued by N. Chandrasekharan, the sitting chairman of Tata Sons, earlier today, where he spoke about his decision that he would not offer himself up for reappointment in February 2027. And that actually becomes crucial. In that statement, if you look at it, and again, Neeraj, not to take away at all from the legacy that you talked about, he is referring to the events of February this year, when after, say, 3 layers of agreement on his extension, there was a hiccup at one meeting.
Yeah, I mean, and it had to be, Tamanna, one can argue it had to be something like this which would bring about a decision like this. Otherwise, in some sense, glittering career, because while all of this has happened, right, which is the question marks around TCS growth and a few others in Air India, there is also newer pathways that these guys have gone into. So it had to be an event like this, right? Semiconductor, gigafactories, etc. It had to be an event of this nature for the resignation to come, or the stepping down to happen.
Yeah, I'm just going to take a second to take you through what the key portion is of that entire letter, and you're going to be constantly seeing it on your screens. But before we get our lineup of people who really understand the Tata Group to speak on it, here is the key portion where he says, my current tenure as the chairman of Tata Sons comes to an end on February 20th, 2027. Sir Dorabji Tata Trust, Sir Ratan Tata Trust had unanimously resolved and recommended the extension of my next term for a period of 5 years, which was recorded and recommended by the Tata Sons Nomination and Remuneration Committee. Subsequently, the resolution was tabled in the Tata Sons board on Feb 24, 2026. However, the proposal was not carried through because one of the board members did not support it, and in the absence of unanimous support, I chose to defer the decision. It has been 6 months since that board meeting. No resolution has been reached till date. Tata Sons is very large and there are many strategic projects under critical stages. It's not only necessary to have a leader in place to lead the group beyond Feb 2027, but also clarity on leadership is important for employees, investors, partners, and other stakeholders. So that really was the crux of it. Instead of waiting for a decision on August 18th when their next AGM is, Chandra said, you know, let's end the debate here. Yeah, I mean, it's an interesting decision, a bold one at that. For both sides now, it'll be interesting to see what happens here on, Tamanna. One, Tata Group under whoever the new leader is, and of course, one of the storied leaders of India Inc., what happens in N. Chandra's tenure, or rather, a path going ahead. I think both become very important stories. No taking away from, you know, the power force that N. Chandra has been and continues to be. Nimit Dixit joins us live from Bombay House. We're covering the story from all angles. And Nimit, what are you picking up at Bombay House this morning?
So it's been a quiet morning so far, Tamanna, here at Bombay House. There's regular board meetings going on. There's a Tata AIG board meeting that just concluded a while ago. The board members have just left, but no sign of the Tata Trust board yet moving in or out. we can confirm that no one's moved in or out yet. But just to speak a little bit about, I think you've already explained it, but the reasons behind why he's stepping down is because of the lack of a unanimous support for extension of his term. The board meeting, of course, the board resolution has been pending for over 6 months, and he says very clearly that one board member did not support it, and he recognizes the fact that there is a need for transition and a smooth and quick transition, and that's why he's sort of decided to not extend his term beyond the February 20th date, 2027.
Nimit, I'm going to come back to you. I just want to quickly go to Mukund Rajan. Now, Mukund Rajan is author of The Brand Custodian, My Years with the Tatas. It's a 2019 book that he wrote, but he is the brand custodian of the Tata Group, and I think very few people would know what the story of the group and the ethos of group is like. Mukund, I believe that you've stopped your car to speak with us. You're on your way to the mountains. Thank you for that. Really appreciate it.
Most welcome.
Yeah, let me just start by just getting your sense of the sequence of events and the way it has played out.
Well, I have to say I was a little surprised at the speed with which some of these events have taken place in the past few weeks. I think the date that was fixed for the AGM of Tata Sons seems to have been the precipitating factor. And I have to say I was sort of caught completely off guard. I just landed at an airport this morning, and I saw the news about Chandrasekharan putting in his resignation. So it's come as quite a surprise. I'm not sure that the group also has been entirely prepared for it. And that's, I think, a little unfortunate. And therefore, there is a lot of, I think, expectations the Tata Sons board now and the major shareholder, the Tata Trust, will quickly respond to expectations in the markets and from stakeholders about what they're planning to do on this resignation.
Mukund, thanks from mine as well for joining in. What do you reckon is the way ahead now? Because there is a vacuum here, and maybe the vacuum was always there for a while, which prompted Chandra to give the statement that he has. But what's the next port of call according to you?
So first, I think the Tata Sons board has to, I would imagine, formally accept the resignation. There is theoretically the possibility that they may prevail on Chandra to withdraw his resignation, or they may sort of ask him to continue for some time. He himself has offered to stay in his post till the date that he would normally have stepped down in February of next year at the end of his contracted period. So that clarity has to emerge. What is the board doing on this matter? It's not just up to Chandra alone. The board also has to be responsive. And then, of course, the role of the major shareholders, in this case, the Tata Trust, who are 2/3 owners of Tata Sons, they have to also express publicly their point of view on what has happened. I would have hoped that this whole exit would have been done in a fashion that was perhaps with more grace on all sides and not left to sort of speculation of the kind we are now probably going to indulge in for a little while on what happens next. I think markets hate uncertainty, and therefore it's very important for the board to also announce how they plan to undertake the succession plan for Chandrasekharan. So I think we're all going to wait with bated breath for some of those developments and formal statements from the board of Tata Sons and the Tata Trusts.
Just trying to get a sense, because you really understand the inner workings of the group. And like you said, this would have perhaps come as a surprise to many in the board as well. Would a succession plan have already been in place, considering that Chandra would have turned 65 in 2028?
It ought to have been. Any sensible board, particularly vested with the responsibility to manage such a large enterprise, should have been thinking about this for the past at least, I think, a year or more. And I would imagine there are already some possibilities that are in the minds of some of the board members, including, I would imagine, the Tata Trust. There's been certainly some commentary around structures that were being debated between the Tata Sons chairman and the Tata Trust. So I'm sure there would have been names assigned to people who could play a role in taking the fortunes of the group forward. So I don't think they will be wanting for identifying a successor fairly soonish, and there may already be candidates that are high on the list of prospects. And certainly, I don't think Tatas will have a challenge in attracting the finest talent. So I don't think that's going to be an issue either. But they need to announce the way they're going to go about this. Are they going to create a committee? Is that committee going to have a timeline? Or are they already clear and have a potential candidate in waiting, perhaps somebody from within the group already, perhaps one of the managing directors? They need to, I think, explain that quite swiftly. And as I said, the markets hate uncertainty, and basis on which Chandra has announced his departure, I think it'll be awkward for there to be a long period of time or a hiatus before the group has announced his successor. So I think it's in everyone's interest that there be firm clarity on how quickly this is going to happen.
Mukund, thank you so much for taking the time out and being with us. Really appreciate your time this afternoon. All right, let's welcome in our guests, other guests on the show as well, simply because, remember, this is a combined market cap of the Tata Group, nearly 24 to 25 lakh crores. And I think a vacuum of this nature, if at all, unnerves the street, then it better be put to rest very, very soon. Let's get in our other experts on the show. We've already spoken to Mukund Rajan. Now, we welcome in Abhizer Divanji. He joins in on the show, as well as Mohit Saraf. Gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time. Abhizer, I'd like to start with you on that premise itself. Markets don't like uncertainty, especially at the helm of one of the premier business groups in the country, large market cap as well. During his tenure, profits have doubled, or rather revenues have doubled, profits have trebled. You reckon it'll be smooth sailing after a couple of days of uncertainty if indeed the board moved swiftly, either to assuage the street by saying that Chandra might stay on till the end of his tenure, or to name a successor so that there is clarity?
So for sure, I think we heard Mukul also. I think the Tata Trusts and the board of Tata Sons would certainly be looking out very actively and may already have a short list of candidates that they may be considering, given that their decision on Chandra's extension was deferred since the last board meeting and has been 6 months since. So I'm sure there has been a lot of deliberation. If not, very frankly, we have a headroom till FY27 February, and I'm sure the pipeline will be easily built up in terms of whoever needs to come in. So I don't think succession will be too much of an issue. It'll have to be planned well. There'll be enough talent within the Tatas and outside who would be more than keen to take up an opportunity like this. Now, frankly, kudos to Chandra for the platform he's built. He's built an excellent platform. There have been some failures, but there have been a lot more visionary thinking in terms of where the investments need to go through. And the market cap has held up, as you rightly said, the combined market cap of 25 odd lakh crores has grown significantly. So I think the platform is set for getting a good person. Now, for the Tata Group, you know, when the helm changes, so when Ratan Tata came into power from JRD, we remember those days, there was obviously a lot of uncertainty in the markets. The same uncertainty remains today, where there's a turmoil. Whenever there has been a change at the helm of the Tatas, there's been turmoil. I remember at that time, though Ratan Tata was the chairman of Tata Sons, there were individual CEOs who were fiefdoms into themselves. And now we have got to deal with the Tata Sons issue. So ideally, I think the group has had a lot of empowerment to its CEOs. Those CEOs in those empowerments have performed extremely well. And whenever those empowerments change, the level of uncertainty will be there. But I'm sure that the system will make sure that there is an answer to it.
Okay, so you know what we're trying to do is we're trying to make sense of what's happened, and we have a fantastic lineup of speakers. Abhizer, of course, Mukund Rajan, Mohit Saraf, all of them weighing in. Mohit, if I can come to you on the manner in which this has played out. This could have happened on August 18th. It could have happened closer to February 2027. A point is being made here with this letter, which has been made public, that I'm choosing to step down, or I'm choosing not to offer myself up for reappointment, so that the decision is now taken by me. Is that the message? What is the message we're getting here?
I think, Tamanna, the way you should look at it is
Chandra has already made his intention clear that he did not wanted a reappointment. At least that part is there, that he's not wanting it. That's number one. Number two, the process of election of the chairman of Tata Sons is that every nominee, 1/3 of the directors get nominated on Tata Sons by the trust, and each nominee director has to agree. And what we understand that in his letter, that one of the nominee director did not agree to his reappointment. And we've also read in the press that there were two conditions for his reappointment, that the Tata Sons continue to be unlisted and there should be a liquidity event for Shapoorji Group. So I don't know what has played out, but I think what is clear is, one thing was very clear, that Chandra was not looking for reappointment and his term would have ended in February next year. Clearly, I would say that there must be a notice period. Typically, for the senior level people, there would be a 6 to 9 months notice period. And right now, we are closer to that period. So he probably have resigned. That doesn't mean that he disappears tomorrow itself. It's not like probably giving notice as per the terms of his employment letter, which could be 6 to 9 months. So I would say we should not read too much into it. Yes, markets do not appreciate uncertainty, but most companies of Tata Group are governed by the boards of those companies, and they have pretty much a large public shareholding as such. It does bring a lot of level of Chandra's quality direction, which he was giving to the entire group of companies. So obviously, to that extent, there is a little bit of a challenge, but it could be just a temporary issue. Maybe that issue has come out in light of the AGM, which was scheduled 2 days later from here. I don't know the internal issue, but again, right now we just got this appointment letter out, and we have to give some time to Tata Sons and Tata Trust to explain their position.
Right. So I take your point, Mohit, but is this really something which is not such a big deal as you put it? The sense I'm getting from what you said, and correct me if I'm wrong, is you're saying this is not such a big issue, nothing to see here, let's move along. Of course, in the storied history of the Tata Group, maybe not, but as of here now today, looking at Chandra's massive contributions to the group and in the manner which this has played out, surely it leads to some debate and discussion.
Oh, surely. I think it leads to debate and discussion. But I would say the same debate and discussion would have come when he said, which everybody believed, that Chandra will continue for a long time, when he said that he does not want to continue beyond February. So I would say right now, once the person has made his stand clear that he does not want to continue beyond February, and then he feels resigning as per the terms of his employment letter, that could just be a standard thing. I think what could be a little concerning would be that the public disclosure of that letter. Clearly, I think none of us are belittling the contribution, Chandra's contribution to the entire group, I think. But clearly, there is a negative vote of one of the trustee director on Tata Sons, and then he cannot be appointed. There could be some play there, which we obviously don't understand. And we can understand that there could be some play. And he had also in his letter said that he was unanimously selected by the two trusts. But having said that, there was also a negative vote. So there could be internal issues as well. But again, I would not read too much, because he had already said that I'm not wanting to continue beyond February. He had already said that.
Yeah.
And 9 months for that. And maybe this could be a process to make sure that the successor is seriously looked at.
Okay, well, August 18 becomes an important AGM outcome as well, if you will. I mean, at least everybody will be looking at it ahead with quite a bit of interest, maybe more than usual. Bizar, just stay on. We'll come to you because Rahul Bhasin also joins in on this conversation. He's founder and managing partner at Bearing Private Equity. Rahul, great having you. Thanks for joining in. As somebody who's looked at corporate India, fortunes of companies and leaders making those, how do you see this particular episode impacting or not impacting the near term for the Tata Group. In the long term, we know they'll attract talent, things might return back to usual, all of that. But in the near term, while there is a bit of a vacuum, lack of clarity, is it too short a time frame to bother about, or you think otherwise?
Look, I'm 100% sure that, the way the Tata Group culture is, and Mr. Chandrasekhar has been a Tata veteran for 40 years. He will not do anything to disrupt anything, and if whatever is required, I'm sure he will facilitate any transition that is required. So I don't think that there is any, impending crisis in that sort of sense. And I think the key issues, which has probably led to this tension, I think those still need to be dealt with. And, whatever the transition sort of system which is articulated or is delineated for the board and the group, I think the issues are, plain for everyone to see. I think there's a minority shareholder in the Tata Sons ecosystem who I think has financial challenges of their own, and I think they're looking for some kind of liquidity. Whereas I think the Tata Group's stance has always been that they don't want to let Tata Sons go public, and I think there's a bit of conflict which requires leadership and resolution there. I also think that as a group, the Tata Group has been sort of trying to transition into the new ecosystem in the new world, and they've taken several bets. Now, when you take several large bets, some work, some don't. Clearly, their Tata Electronics bet seems to be playing out well. But if you look at the airline bet, where they've, I think, expended almost 55,000 crores since 2022, I think that requires dealing with and sort of addressing as an issue. And I think the other thing is that Tata Neo, where again I think the group has lost almost 20,000 crores in the last 4 or 5 years. And I think that if you look at the number of bets, the size of the balance sheet, and the fact that their cash cow of the group, which is TCS, has its own set of challenges, I think probably it's because of the total size of the bets relative to the size of the group. I think this kind of friction has cropped up, and I think that when you're starting a new business and you're bleeding money, I think it's imperative for whoever the leader is to carry the different board members and stakeholders along. And I think that probably because of the transition of, the stakeholders from the Ratan Tata sort of regime and to now the Noel Tata regime, I think there's probably things which have fallen between the cracks here.
I think that's as clearly and well put as one could have. Rahul, completely agree with you there. Just want to get a quick view from Abizar on some of the points that Rahul Bhasin has just made. And again, we've said this from the start, there's no point speculating about what could have gone wrong, etc. Part of it also is how it's happened and then what next. How imperative is it now to ensure that a plan is in place and this is communicated very quickly to all stakeholders?
Oh, extremely. As you said earlier in the show too, nobody likes uncertainty, and I'm sure even the institutional investors who are big investors in Tata today would not like that uncertainty. What is, I guess, the plans are in place at the operating company levels.
Yeah.
As Rahul also mentioned, the key issues are how do they deal with this larger issue of this minority shareholder getting a liquidity issue? That's going to be extremely important to deal with, apart from the operating company issues that are there. Operating company issues, I think, are well governed by good CEOs. I'm sure each of them has a good plan. So that is not what is maybe required. But at the group level, the coordination, to list or not to list, to provide an exit to the minority shareholders, to make sure that the Tata Trust's turmoil ends, so that there is clarity as to how this company is going to be run and how the stewardship of Tata Sons will run. I think those are the big issues which I think Chandra was able to manage well given his legacy. Now, whoever comes in will have to manage it well. The other issue, of course, is Noel Tata. As I said earlier, whenever there's been a shift in the Tata's leadership at the family level, there's always caused turmoil. So those turmoils we have to make sure that they're all controlled. I'm sure there are very other people who may be more ambitious at the group, at the operating company levels, who may have aspirations at the group level. There could be good candidates outside. So I think the whole transition will have to be communicated very quickly so that the market knows who's in charge.
Rahul Bhasin, just coming to that point about the market knowing who's in charge, if you look at it from the perspective of the storied history of the Tata Group, at that point, N. Chandra becoming the Tata Sons chairman was also an outlier, right? The first non-Parsi, non-family member, so to speak. So has that also set sort of a precedent of what could come next?
You know, like I said, because of the very extreme sets of challenges which are there in the group, and I think that these are very normal when you take big bets and you start new businesses. I mean, there's a portfolio outcome, right? Some will work, some won't. But which ones to double down on and which ones not to, I would suspect would be very tough for any newcomer to do. It has to be an insider, as my own surmise. And I think that maybe whether it's Mr. Noel Tata himself or clearly somebody else who's a insider and familiar with a lot of the pluses and minuses and the risks and opportunities of each of these big bets and big challenges, I think it'll have to be someone like that or a group of people of that nature who steady the ship in this period of time. I think that, and like I said earlier, I think that, Chandra being a long-term veteran, he may well himself be a part of the transition team. I wouldn't be surprised if that was the case.
Yeah. Okay, I think we're out of time, but very quick roundup and maybe just very quick answers. Mohit sir, starting with you. Do you reckon some of the bets that have been taken in the recent past might see a change under the new helm because some of these haven't paid off? Very quickly, 30 seconds, please.
Anybody can agree yes or no. It's something I have a comment on.
Well, actually, that's a fair point too. Anybody can say a yes or no, and we don't know how it shapes up. So yeah, that's a nice quip to my answer. But I would still want to know because I think Abizar was making this point, and in fact Rahul was making this point to which Abizar responded that some of the recent bets haven't quite paid off. Maybe the focus areas change. Maybe not all stakeholders were taken on board alongside when some of these businesses are bleeding. So that was the genesis of my question. Abizar, you want to respond to that?
Also, there are some obvious quick fixes, as I said, the airline industry and making sure that TCS innovates, I think will have to be taken on the forefront. And other businesses, I think they're well invested in my opinion. Semiconductors, electronics are well invested. That'll be good.
I'm going to make the question a little more complex for Rahul Bhasin. Neeraj asked, will they be re-looked at? I'm going to ask you, should they be re-looked at?
To my mind, I think there is a budgeting issue because if you have to invest in all of these businesses and deal with the minority shareholder sort of issue, I think that you'll require more capital. So either one or at least one of these has to be sacrificed or more capital has to be raised. And I think that's the call that whoever takes charge will have to make. I mean, either, and the Tata Group has enough credibility if they want to raise more resources, they can. So that's really the choice. I mean, do you say that no, one of these bets was wrong and say, let's get out of this and call it? Or do you say that no, all of these are in transition, they're in the investment phase, they will all work out? Then I think the issue is that, where in the group do I raise capital and how much? And I think, so it's a very solvable problem, but someone needs to deal with it.
Okay, that is the billion-dollar question. Who, when and how? Thank you so much, gentlemen, for joining us on the show as we try and decode what has happened, what it means, and what happens next. Simply because, Neeraj, look at the impact of the Tata Group. And sometimes we look at things only from the lens of shareholders and people who have equity participation. But even in terms of contribution to the economy, it's massive. What happens there is important.
Most certainly, Tamanna. And just, that one point, I tried to figure out if there was any previous record public of him having stated that he doesn't want to continue. There isn't. So
yes, which Mohit Saraf kept talking about. Yeah, but no, there isn't. This has happened today.
Yeah, so it is a surprise, and which is what explains why TCS is down 5 and some of the others are down. Hopefully, August 18 gives us some answers, or maybe before that. Let's wait and watch.
Right, that's all the time we have, but all the news and action continues on the other side. Stay with NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे टाइगर कैसे।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, Hold. Hold.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. Before that, let's look at the market. Now, if you look at the Nifty, it's a second consecutive day of decline, much worse than what we had seen. Yesterday, we are down nearly 178 points in trade today. But the Nifty Bank Index is trying to hold on to the green. And this is largely because of the PSU Bank, because the Nifty PSU Bank Index, that's up nearly 1.6 odd %, while the private banking names are down in trade. Now, when it comes to the benchmark again, the fall is largely because of the IT names like TCS, Infosys, HDFC Bank again on the private banking side, and Reliance Industries. Most of the TCS and Titan, couple of the Tata Group companies that have been leading the index down in trade today, contributing around 38 points down in trade. But first, let's go across to the company. Let's go across to Ishank Joshi, the MD and CEO of Mob Avenue. So, firstly, to start off with, international revenue mix was around 21% odd, I believe. What is the target here for FY27, and what would be the key growth markets for the company?
Thanks, Sumit, for having us. Our international revenue, as stated earlier, is rising. We're looking forward, while, from the last year basis, it has reached to 20% above, and we're looking forward that this will go between 20-25%. But, today it is rising because we have been setting up our offices in Singapore, in US, in UK, and we continue to put our efforts in international markets.
So what could be the revenue mix by the end of this financial year?
We presently don't give any future guidance, but on a fair basis, we can consider between 20-25% as international mix.
Okay, then directionally, can you give me some idea, because for the last couple of quarters, I'm seeing that your EBITDA margins have been flattish at around 21 odd %. Will it sustain around this level, or there are some further room for expansion here?
So, Sumit, I think, as a company, we have stated that we have a rule of 50, which involves that we will look at 30% growth on the annualized basis and 20% EBITDA margin to maintain. While, in the last quarter, I stated that, we will be between 20-21%. We've already crossed 21%. And it, as compared to the last quarter, it is 21.2% today also. We feel that, this is a healthy margin. And because we have been investing in technology, which is very critical today in the AI ecosystem, and we would like to maintain that margins.
Okay. And how quickly will Mob Avenue neural engine be deployed across the entire platform stack? If you could give us some details on that front.
I think, we have just launched our updated neural engine. Over the last 3 years, we've been working on our technology, which is first to, put our machine learning stack and now putting up our full neural engine. We started with a couple of our products today, and, over the next 1 year, we're looking forward that we will implement across all our product lines.
Okay, what revenue contribution do you expect from the newly launched picks, say, over the next 12 to 18 months?
It's still early days for us to, start off and giving any guidance out there because it's a newer product for us. Generally for a new product, we plan a 100,000-day journey. So for our first 100 days, things are looking very great for the new product. And now we're planning for the 1,000 days roadmap for us, how will they start contributing to our revenue line as well as our bottom lines.
Okay. And when it comes to direct advertisers versus agency channels, if you could just give us some what proportion of the future growth is expected here from the direct advertisers versus agency?
Great question, Sumit. So, if you see from our business performance over years, we've been very focused towards our direct advertisers because, we feel, that's a great opportunity to work with direct advertisers in the market. But as we kind of scale our, operations in the global markets, our first approach is to work with resellers and agency partners there, and then build up the direct advertisers team in those markets. So, and hence you see, as compared to the last year, while the direct advertisers, have grown, but since we have launched our global operations, and there is a significant revenue coming up from, that in the global markets, the reach on the agency side have increased.
And lastly, sir, are you evaluating any specific acquisition opportunities in AI, ad tech, or international market?
I think too early to say that, but we have been growing organically, over last couple of quarters and last 3 years. We are looking forward, to have our acquisition strategy. We've already built our framework on it. We've been speaking to some of the companies, but it is still early to say that we will able to, acquire in this next 2 quarters or in this year.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward. Let's move on to our fundamental guest here, Raghavendra Kedia, founder of Prosperity Advisors. Sir, you heard the management. What would you recommend your clients, given the numbers that the company has come out with and given the growth prospects?
Good afternoon, Sumit. Looking at the management commentary, we believe it's a wait and watch. If you look at MOB revenue, the full year EPS stands at around 3 rupees. And the price of the stock is around 320. So we are looking at a very expensive valuation of around 100 times P multiple to a full year EPS of 3 rupees. And the management has taken control of this company through a reverse merger takeover. So for such a corporate action, we actually wait for at least another year for things to settle, see the promoter stake, and definitely look to EPS to go above 5 rupees. Until then, it's a wait and watch. At current levels, the valuations are very expensive. The growth story in advertising and tech is good, but we will have a wait and watch approach for MOB revenue at current levels of 320.
Okay. The next management on the show is TD Power. Now, if you look at the first quarter numbers, the company has reported its highest ever quarterly revenue and order inflows. There was strong demand that we have seen in the both domestic and the export market. And because of this, the management has also hiked their guidance to 2,600 rupees, the revenue guidance, from 2,400 plus that was given earlier for FY27. To talk more on this, we are joined by Nikhil Kumar, the MD of TD Power. So, firstly, to start off with, the top line guidance has been revised, but when it comes to the EBITDA margin, is that sustainable over the current number, or we could see some more expansion on that front?
No, I think EBITDA margins are going to be stable at around 19% for the rest of the year. There are conflicting pressures. There is also a very dramatic increases in commodity prices. Inflation is also high. So is being offset by price increases and productivity improvements and cost reductions from the company side. But more or less, we are giving a conservative guidance 18 to 19%. If things get better, we will inform the market.
And when it comes to revenue visibility, the order book, I believe, is at close to 2,200 crore. How much of this is executable in this financial year?
We are given a revenue guidance of around 2,600. We've done something like 650 approximately. So around 2,000 of that pending order will be executed in this year. We have the full order book for this year. We have the capacity. And that's the reason why we are fairly confident about giving this revised upward guidance to the market.
Okay. Now, if you look at the Q1 order inflow, that was up nearly 87% on a YY basis at close to 734 crore rupees. How sustainable is this growth rate on the order inflow front? Can we see similar stuff for the rest of the financial year and for FY28 as well?
Growth rate not, but definitely the value, yes. So we will see something like a 700 crore plus order inflow every quarter for the next few quarters. And then we have to take it up to 800 crores per quarter. So on a year-on-year basis, of course, it looks very high. But we will be able to, show compared to last year, this year's growth will be something like 40 to 50%. And then, as I said, we have to move to something like 800 crores per quarter from around the Q4 this year, which will then sustain the growth for the next financial year.
Okay. Now, majority part of the order book was from export. So, is this a structural change or just a temporary thing?
No, this is something that we have been working on for the past, I could say, a decade or so. And when we first started, our export was around 10 to 15% of sales, and then it moved up to 30, 40%, 60, it stayed around 65, 70 for many years. And in the past 2 years, we have seen this going up to something like 80, 85%. 90 may be a small aberration for this particular quarter. I think sustainable would be 80 to 85.
Right. And what percentage of your current order book is either directly or indirectly related to data center investments?
We don't give that number to the market. We don't give the end-use segmentation, but it's a good proportion of our overall business.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way forward for TD Power. Well, that was the management of TD Power, quite confident on the growth plans going forward, and hence they have increased their revenue guidance as well. Raghavendra, how are you looking at this counter? The stock was up, I believe, was up at one point of time around 15% odd. Post this run-up, is there further room for any investor here?
So we like the company, and if you just quantify what the management has said, we still think that there is a good headroom in terms of price appreciation. So the stock is up 17% today. We believe it could be a portfolio stock. Every dip, every price correction could be taken as a buying and entry opportunity. We expect a full year EPS of around 30 rupees on TD Power and a moderate to multiple of around 55 times, considering the niche business they are into. So on a 30 rupee EPS, 55p multiple, we reached to a target of 1,700, which is still 15% upside in a 12-month horizon. Management commentary is very comforting in terms of data center demand increasing, grid stabilization demand increasing, renewable integration demand increasing, export order increasing. So TD Power would be a investment stock, portfolio stock, buy on dips, and we believe at 1,500 levels also continue to hold.
Okay. Well, let's slip into a short break and we'll be back and cover more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where.
Welcome back. You're watching Small Cap Buzzers. Let's go across to part to understand what could be the potential reason behind the move in OMDC.
So OMDC has gained a big percentage in trade today, and that is because of the MMDR amendment that has been proposed by the centre, which limits the power of states on taxing minerals. So if you look at the exposure of Orissa mineral, then they have a 213 crore tax liability under the Orissa Development Act, and which they have calculated using a 15% tax rate. Now if that tax gets eradicated with this new amendment bill, then this equals to more than twice of their FY26 revenue. So this impact will be huge on OMDC, and it will not only reduce the balance sheet risk of the company, but the future mining taxes for OMDC will also come below, and that will directly flow into their bottom line. But this benefit still remains conditional if this bill passes in the Parliament, and once that is done, then we can see this clearly reflect in the company's books as well.
Well, let's go across to Varsha as well to understand what could be the potential negative points that have come in Caplin Finds Q1 numbers.
Well, it's all about the margins, Somit. Margin pressure was the key negative for this quarter. Margins were impacted by the raw material inflation. Freight and logistic costs also surged due to geopolitical disruption, and hence EBITDA margin guidance has been reduced to 10 to 12% versus 12 to 14% of guidance earlier. This cut is driven by elevated input and logistic cost. Q2 but is expected to be better than Q1, and Q3 will return to expected double digit of EBITDA margin. So overall, margins were the key disappointment because margins stand at around 1.2% versus 5% last year. So that was a disappointment, and hence you're seeing stock is down almost 12% in trade.
Well, thank you, Varsha, for that detailed note on Caplin Fine. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप संभल के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तुम भी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Hello and welcome back to NDTV Profit. You're watching Ask Profit the Afternoon edition. My name is Puneet Zaveri.
And over the next half an hour or so, we'll try and get to all those queries that you would have sent to us by now. Also the ones that you will send now as well. So the numbers are flashing on the top of your screen. Give us a call as well on the landline number to speak to our guest as well. But a quick check of how the markets are doing, because you've seen moves that's been on the downside, and it's actually gotten more exasperated as we've gotten through the day. So we were down about 70 to 80 points in the morning by around 10:30 odd, and now down almost 186. We're below the 24,300 mark. So I think all momentum that got built into that week of cash last week has essentially fizzled out yet again. We are not seeing any kind of triggers that might get us back to that 24,500, 24,600 level, but hopefully some triggers that come through. Let's look at the heat map also for the Nifty 50. Now you're seeing a larger bearings today on the Tata Group stocks, that led by what's been the breaking news through the day, that N. Chandra has resigned essentially as Tata Sons chairman, and hence that impact visible across stocks. So TCS definitely bearing the brunt of that today, down almost 4.8% right now. The hospital stocks are also continuing to be under pressure with the news flow that we've been covering since the morning as well. Parliamentary panel committee recommendations could weigh or have some bearing on the private hospitals. And you're seeing Tata Motors PV on the back of that news flow from N. Chandra also getting impacted. Those are the weaker names in the broader Nifty 50. Also pull up what you are seeing currently on the heat map, the sector heat map as we talk about, because you've seen pressure now building in across the board, but Nifty IT because of TCS is down 2.2%, Nifty PSU Bank is up, led by SBI. Finally, the advance decline ratio before we start taking a stock related queries, because the broader market over the last week or so has been a very neck and neck. But today though, and while that's how we started off today, the declines have taken pace and how. But let me welcome in our guest now, Sachin Janardhan Sarvade. He is a market expert on the technical side. Nandish Shah, AVP PCG Research and Advisory at Motilal Oswal, now joining in as well. Gentlemen, both of you, thanks so much for joining in on this afternoon. The first question is from MM Kapoor, who's from Lucknow. His question is on SBI. Nandish wants to know him buying at 1103 rupees per share was a good decision, if he should still continue to hold on. Good results, Nandish, from this counter. How are you looking at it now?
So amongst the PSU bank, SBI is a preferred pick, and the results which have come, especially compared to the March quarters, the June quarter's numbers were quite good, and even they have raised their guidance in terms of advance growth. So it is better to hold on to this counter for a longer term.
Got it. Better to hold on for the longer term. The other is a smaller name that we haven't discussed too much, Sachin, and this one's on Divgi Talk Transfer Systems, listed I think a couple of years ago. But welcome to the show, Sachin. Would you recommend Sai to if it's a good time to buy? Stocks almost up, I think almost 100% in just this last year itself. Any way did you track into this counter? Any recommendation here, Sachin?
Normally I don't track this, but what right now I am seeing is it has given a breakout on a longer time frame charts, on a monthly chart. So if it is closing this month above 1150 level, then I think this is the fresh breakout levels, and any dip on towards the 1050 or 1000 levels will be a good buying opportunity from a longer time perspective. So if someone is holding, can hold with a trailing stop loss of 850 rupees.
Got that view, Sachin. The next question, and Sachin, also on Cupid as well. We keep getting this query now and then. Ram Iyer wants to know if it's still a good time to buy into this counter. Would you recommend that?
From a risk and reward perspective, I will not recommend this currently, but yes, the trend, momentum and the structure is very strong on all the three time frames, monthly, daily and weekly. So any dip of around at least 240 levels, at least that will be a good buying opportunity. But right now, because the risk reward is not good, right now entry will be too elevated.
Got it. The next one's from Murthy, who's from Vizag. His question is on NSDL. Wants to know if him holding at 1100 is a good decision, Nandish. Also, if it's a good time to average now, would you recommend that?
NSDL and CDSL both are good to accumulate stocks for longer term. And currently, the NSDL target price, as per our calculation, is around 930.
930, got it. Also, Nandish, sticking with you for this next query as well. This one's from Deepak from Kerala. And a stock that's down and out in trade today, it's Godrej Consumer is the one I'm talking about. We had the big, management change yesterday, a surprise one at that, Nandish. What's your view on the stock now?
So the query is on GCPL, correct?
That's right.
Yeah. So amongst the consumer staple names, the Godrej Consumer has been one of the most underperformance in terms of value growth and even in terms of volume growth. So the viewer, the holder has to have a longer term horizon at least.
Got it. Sachin, would you also have a similar view? I mean, because we've not seen these kind of levels earlier on Godrej Consumer. Would you recommend venturing into it right now for any kind of fresh longs, or should it be avoid right now?
Actually, today is a fresh breakdown on a longer time frame chart. So actually, the person who is holding from a positional point of view should exit basically on rise. And today's low will be very important. If it is breaking out tomorrow, that means it will have a follow-up selling. So definitely that will be a sell there.
Got it. Let's go across to Tirupati now. Gautam is dialing in for a stock-related query. Gautam, very good afternoon. Welcome to the show. What's your query?
I want to buy M&M stocks for long term. Can you tell me any technical analysis for that one? Because I am loved this show because last 4 years I am watching this show. I have gained money also.
Well, Gautam, I'm glad you have. But let me just, firstly on this counter, you want to enter for the long term, you said, right?
Yeah, correct.
Right. Okay. So I'll take the fundamental opinion then from Nandish. Nandish, we have, the big launches coming through over the weekend. It's, that the 15th August event, very rightly for M&M as known for. Would you still enter? We've seen some run up from the lows, but is it still a good time to buy into M&M right now?
So it is a good time to buy and enter into M&M at these levels, and a target price for M&M is around 4,100. So we are looking at an earnings growth of almost about 24% for FY28.
FY28, got it. Let me just, address the flashes on the bottom of your screen. The big numbers that were expected today of HAL. The results are out. The revenue has come in at 5,515 crore. Largely just it's come in actually ahead of the estimates that at least we were working with of 5,200 crores. The net profit also a slight beat at 1,590 crores is what the number has come through. So you're seeing a spike come through on the stock now on the back of the results. We'll of course wait for the EBITDA margins number, probably get my colleague Parth as well to get his analysis. But on the face of just these two numbers, looks like a decent kind of a number that's come through, at least with the estimates that we were working with. All will be, of course, a lot of conversations on the deliveries aspect, because they have been consistently delayed because of engines that weren't available. Hopefully the engines from GE can come through in the second half of the year, and the company can meet its targets. But that has been a key focal point for the stock as well. It has recovered from the March lows of almost that 4,000 odd that it was trading at. But certainly, this will be a key quarter for the company to provide some updates as well. But at least for now, we've seen a spike. The stock was almost flattish just before the earnings came through. Now starting to see almost a 1% kind of move that you've seen on HAL. EBITDA margins also at 27.7 are better than the estimates that we were working with of 27%, and hence probably seeing that rally being built on a YY basis. Though if you look at the numbers, they are also a decent picture. The 1,590 crore profit that we spoke about versus about 1,380 odd crores that it was. So it is a decent kind of number that we've seen in terms of growth for the company, and hence at least on the face of it, these 3 to 4 key numbers that we track look good at this point of time. But let's get back to your stock related queries now. The next one's coming from Uma, who's from Bengaluru. Wants to know between Rainbow Hospital or KIMS or SCG. Sachin wants to know if either of these counters is a good one to enter for the near to medium term on the charts. What would be your opinion?
So when we see the trend for the stocks, so basically Kims and Rainbow, so both are having basically a good trend. Only the momentum is right now not favorable in Rainbow and in Kims as well. But what we can see is she can enter around 5% or 10% lower to be from a medium term perspective. From a short term perspective, any correction towards 2 to 5%, that will be a good entry point.
Got that view. The next one coming through, and this one from Satyan. He wants a view on Amara Raja, and if it's a good one to enter with a long-term perspective. We've seen some sell-off from the day's high, but if you look at the weekly chart, there have been good moves here. Nandish, how did you look at the results? They came through yesterday, and yesterday was the con call actually by the company. But any view on Amara Raja?
So on Amara Raja, we have a neutral rating with a price target of 878. So as you rightly said, the numbers have been in line to a bit above of expectations. But one of their biggest investment which they are doing on that battery side, we have our reservations there. Otherwise,
fair point, and that's something that was, much has been discussed as well. The company came out with this new CQP plant, but there's still a long way to go, as Nandish also highlighted. The next one coming through, this one's on Anthem Biosciences. Wants to know, viewer, if it's a good one for the long term. Any coverage here, Nandish, on Anthem?
So Anthem, we don't have a coverage, so I won't be able to share any views on it. A
technical view, if you can, Sachin, on Anthem.
So we have covered this stock from a technical perspective from 6 to 12 months period, and the target what we have given is around 919 and 1030 levels. We entered the stock around 800 levels. So any dip towards that level will be a very good opportunity. If someone wants to buy right now, also can buy 25 to 50% quantity.
Got it. Well, next one's an interesting question on the AMC space. Now, Padma from Bengaluru is holding on to a couple of them already, SBI as well as Nippon AMC. Nandish, the question is if she wants to add a third one between HDFC and ICICI AMC, which is a better pick, what would be your opinion?
So our preferred pick is Nippon Life AMC. So that is at least in comparison to HDFC AMC. What is a Nippon Life? It covers across all asset classes, including ETFs.
Correct. And just for argument's sake, if she wants to add between HDFC or ICICI, is there a pecking order that you like apart from Nippon being the top one?
Then I would go with ICICI Prudential.
ICICI AMC, got it. Well, and hopefully, Padma, that answers your question as well. Let's now start the rapid fire round in this edition of the show. Sachin as well as Nandish, you know the drill. Keep your answers as short as possible. First question is on Nalco. Our viewer wants to know, holding shares at 230 from the long-term perspective. Stocks up about 7.5% today. Nandish, should he continue to hold, ride the wave?
No, it is better to book profit in Nalco because they're looking at the alumina and aluminium prices. It seems that yesterday's aluminium price was a knee-jerk reaction for that 50% cut in production. But on a longer term trend, Nalco does not fit.
Got it. Well, the next question, and this one's again an interesting one, on HDFC Bank. Nandgopal from Bengaluru wants to know if it's a good time to enter this counter right now, Nandish. His question being, will it touch 650 odd, and if that's a price that he should buy at?
So I'm not sure whether it will touch 650 or not, but these are good levels, and he should do a buying in a staggered manner with at least an investment horizon of more than 2 years plus.
Got it. Fair enough. The next one's from the next question actually coming in, and this one's on Sagar Pathak on Great Eastern Shipping. He's bought shares at 1641, but mentioning that the stock's under pressure. Nandish, if he's asking if he should still continue to hold on to GE Shipping right now.
So GE Shipping is not there in our coverage, but from whatever we have read and whatever the results we have seen, GE Shipping is amongst the market leader in this logistics space, and they should continue to hold. And they have a legacy of more than 100 years plus in this business.
Got it. Fair enough as well. The next one's on all cargo actually. Ganathan wants to know if it's a good time to buy, Sachin.
He can buy.
He can buy, got it. Next one's on HDFC Life. Jay from Tirupur holding shares at 570. Nandish, this counter has been an underperformer in that sense. He's asking if he should still continue to hold on.
Yes, he should continue to hold on.
Got it. Udit Guru from Mumbai is actually holding on to, okay, he's not mentioned the price for this one. It might be difficult. So let me take another one on Manorama Industries. Viewer holding shares at 1576, Sachin. And this is Astha. She wants to know about what she should do with this counter now.
Manorama Industries, right?
Yes, that's right.
Yeah, hold.
On Infosys, Hemant is holding shares at 1687. Nandish wants to know if he should still continue to hold.
Yes, she should continue to hold.
Scient is the other one. A viewer holding shares at 1264. I don't know, Nandish, if you have any coverage on this one. Again, a tough counter, been an underperformer. Any view?
On Scient, we have a sell rating.
A sell rating, got it. Next one coming through on NTPC. Viewer holding shares at 384. This is Dr. Sankar. He's asking if he can average down right now and if it's a good time, Sachin.
Don't average.
And should he continue to hold his existing shares?
Can hold, but don't average.
Got it. VA Tech Wabag, Preeti from Raipur wants to know if she has some profit left, but stock has been under pressure, Sachin. Should she book out right now or continue to hold?
She can hold.
He can hold, got it. Next one's on Sansera Engineering. I think the results come in tomorrow. But Sai wants to know if it's a good time to buy. Nandish, any coverage here?
So on the auto ancillary space, we have been very positive, but on Sansera specifically, we don't have a coverage.
Okay. BSC is the other one. Viewers holding shares at 3863. So Sachin at almost a 60,000 rupee loss. Vijay wants to know if he should still continue to hold on.
Hold.
Next one coming through, and this one's from Sumana from Dubai, holding on to Netweb Tech at 4360. Sachin wants to know if she should still continue to hold.
Yes, hold.
Got it. Well, that was the last question of the rapid fire. Nandish, as well as Sachin, thanks so much for joining in and giving us your views across a whole bunch of stocks and spaces. But viewers, out of time on this edition of the show. Again, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑक्सीजन के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी की टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy. Sell. Hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now, sell immediately. Hold it, boss.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me in studio is Hiral Dadia, and we're coming to you live from the NDTV Profit Suzlon studio. It's been an eventful day in the news space, and the markets are taking stock of that. Let's take a look at where the markets are this afternoon, and we're at the low point of the day. Quite a bit of a capitulation that has taken place from this point, and we've ended up below that 24,300 mark. Let's pull up the heat map for the Nifty 50, because you'll see a few heavyweights that are dragging the benchmark lower at this point. Right at the bottom of the screen, you have Tata Consultancy Services, and this is a reaction, among other things, to the stepping down of N. Chandra. We'll talk about that in some more detail in just a bit. But the stock is off the low point of the day. At one point, it was down over 5%. It's now down as much as 4.6%. Max Health, Tata Motors PV, Apollo Hospitals, Infi are all losing ground. Tata Consumer as well, down as much as 1.9%. Larsen & Toubro about 0.9%. And so therefore, what you will see is that there's quite a bit of red in the screen. Of course, Hindalco, on account of the alumina update that you've seen just not too long back, the fact that there could well be a shortage globally, they stand to benefit along with Nalco. That's another stock from the broader markets is doing well. Grasim, State Bank of India, Nestle, and a few other gainers. Nothing too much to speak of. So when you pull up the contributors chart, what you will see is that there are a couple of heavyweights that are really proving to be a drag. Tata Consultancy Services, Infosys, HDFC Bank, and Reliance Industries. All told, quite a bit of weight on the downside for the benchmark Nifty 50. Pull up the broader markets as well, because at the start of trade today, you saw not the best market breadth, and that is worsened over the course of the session so far. The mid-cap index now trading with cuts of about 0.33%. The small-cap index now trading with cuts of a similar 0.33%. So therefore, the advanced decline ratio should tell you that we're now at the widest point of the day so far. Just for a brief while in the morning, you had advances that pipped the declines, and this has actually worsened through the session. Pull up the sectoral heat map for the market as things stand right now, and you'll see a fair bit of red on the screen. The one pocket of strength has been the PSU banks, and even there you have State Bank of India that has lost ground and come off the high point of the day. That is the one index that's gaining ground. In HAL, Hindustan Aeronautics, reacting to numbers up as much as 3%, is pulling the defense back up as well, 0.8% higher. Metal, you have a few base metal players that are up in the green. On the bottom end of the spectrum, you have Nifty IT that's losing a tad bit of ground, 2% or so, FMCG, consumer durables, and healthcare. But I want to head across to Hiral now to take a look at individual stocks, Hiral, because there are so many of them that are reacting to earnings and otherwise that are losing ground today.
Absolutely. Thank you, Alex, for that. In fact, the Tata group of companies is something that you should be focusing on today as well. If you just pull up all the individual names one after the other, and this is mainly on the back of N. Chandra stepping down, and this is with regards to his next term. TCS 4.5%, and we know for obvious reasons, I mean, TCS was at the helm there. Apart from that, you have the other group companies also which are trading pretty much under pressure. Tata Motors PB down nearly over 2.5%. But in terms of individual stocks, TD Power is the one which stands out on the back of earnings, 18% up move coming in there, and this was on NDTV profits radar this morning at the day's highest levels. In fact, they've gone ahead and upped their guidance. Marksons Pharma is another one, 13-14% up move coming in there. You have Nalco and Hindalco, both of these counters that are reacting as well. You have Finolex Cables, Pricol, all these counters which are up and about in trade. Senco 14% downtick on the back of earnings. Godrej Consumer Products 10% downtick, and this is on the back of Sitapati stepping down. PI Industries on the back of earnings as well. RHI Magnesita is down 6.5%. In fact, let's also pull up a Grasim Industries right now as we speak. They've just reported numbers, margins at 8.1% versus a 4.2%, nearly a double in terms of Grasim on the back of margins. The stock seeing that initial spike. They've reported a profit number of almost 247 odd crores versus a loss that was reported in the previous quarter of 118 odd crores. So that's the profit number. Clearly a beat. A good set of numbers in terms of profitability. That's the bottom line. A good set of numbers in terms of where the margins go. Let's quickly look at the revenue growth. A 28% uptick coming in. 11,795 is what you're tracking in terms of the top line as well. And the EBITDA 950. That's also a very strong number coming in there. Let's just pull up the intraday chart of Grasim and see what the stock is doing as we speak. We'll take a reaction with our guests also who join in. After that initial spike, the stock has cooled off right now, but a very good set of numbers that have come in so far. But moving on, the question is who will take the helm? Who will replace N. Chandra as well, who's the chairman of Tata Sons, who's completed nearly 40 years of professional life at the Tata Group. In fact, let me head across to Alex once again to take us through the entire journey and what's the latest that he's picking up. Over to you, Alex.
So this has been brewing for some time, but it's a massive, massive move for one of the most storied corporate groups in India, the Tata Group. Just a short while back, you had a letter that was sent out by N. Chandrasekaran, the chairman of Tata Sons, and he said a few things, most importantly that he would be stepping down. But let me give you the cliff notes of what he has taken us through. He says that he's completed 40 years of professional life at the Tata Group and he's immensely glad and grateful for that opportunity to contribute to that institution. He says that leading the group over the past decade had been a great honor and a profound responsibility. He also said that his current tenure as Tata Sons was set to end on the 20th of February next year. Now here's the important part. The Sir Dorabji Tata Trust and Sir Ratan Tata Trust had unanimously resolved and recommended his extension for the next period of 5 years starting from February of next year, which was recommended and recorded in the Nomination and Remuneration Committee and the board. After that, the resolution was tabled at the Tata Sons board meeting on the 24th of February, but the proposal was not carried through because one of the board meeting members did not support it. And in the absence of that unanimous support, he decided to defer that decision. And since then till now, it's been more than 6 months since then, there has been no resolution, as a result of which he has taken the decision. But what is he saying? He's saying that Tata Sons is a very large institution and there are many strategic projects that are under critical stages of execution, whether it's in the aviation business or semiconductors or otherwise. It is not only necessary to have a leader in place to lead the group beyond February of 2027, but there is a need for clarity on leadership, which is important for employees, investors, partners, and other stakeholders as well. As a result of which, and because of that, he says that he has communicated to the board of Tata Sons that he has decided to not offer himself for reappointment from when his term ends on the 20th of February 2027. So it's important to pay attention to why N. Chandra has taken this decision. He must have sensed that he would not get that approval for an extension. Now, it's important also to note the perspective of the Tata Group. For the group as a whole, that 65 mark with regard to the age is an important benchmark, or it's an important number to pay attention to. N. Chandra is currently 63 years old, his birth date on the 2nd of June. So next year he becomes 64, which means that in the year that he was to take charge, if he was to be granted that extension, he would already be 64 and he would be 65 in his second year of that extension, not something that is generally done in the Tata Group. Now, therefore, from the perspective of the group, they're looking for somebody either inside or without to lead the group into the next stage. There have been, in the interim, in the last couple of years in particular, statements that have been made outside of the group that some of the entities of the Tata Group had underperformed peers. And I think that is something that also weighed in on the decision that he has taken. Now, that is not to say that he hasn't had some major achievements in his time as the head of Tata Sons. He spent nearly 9 years there, or actually a little over the 9 years. And some of the major trends that have taken place. There's a shift of the Tata Group into new age businesses. They've entered the aviation business again with the acquisition of Air India. There's a semiconductor business that they've entered into, which is going to start bearing fruit not too long from now. They've entered electronics manufacturing. They've also scaled the EV ecosystem. They've built digital businesses, and they've accelerated AI and technology focus. No wonder then that the stocks as a whole are seeing a little bit of a correction today. The question though remains, who is going to take charge, and are they going to lift the trajectory of these companies, some of which have been underperforming?
Thank you so much, Alex, for that. In fact, let's get in our guests as well. We have Nilesh Jain from Centrum Broking and Pashupati Advani, founder of Global Foray, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Hiral on the side. Pashupati, let me come to you first. You've seen what's happened with the Tata Group. You have N. Chandra, who will be stepping down and not seek reappointment for his next term, which ends in February 2027. What do you think it would actually mean for Tata Group of companies? And do you think it could continue as business as normal? And what becomes crucial? Because you will see a lot of changes in terms of strategy also that could come in later.
Yeah, well, obviously, there is change at the top, so that implies that there will be some kind of change in the strategy and the way going forward. This is the first step. It really depends on who the replacement is and what we know about that person. And also, more importantly, is that someone from inside or outside. We have no clue right now, and as a result of which, a lot of the Tata companies have taken a beating today. So let's see what happens. I think people do want to have some kind of certainty, and it would have been nice to say, I'm not going to reapply, but here's my successor, but we don't have that. So I think that it depends on what are the plans going forward.
Plans going forward will be important. Nilesh, on the charts, if you have to look at the Tata Group of companies as well, we were just looking at the returns that the companies have given in N. Chandra's tenure. But with the recent correction that has come in terms of today's session, do you think anything that looks attractive, which could be a good momentum bet and a good value buy at current levels?
Very good afternoon, Hiral. Well, certainly, if you see a couple of Tata Group counters which are already outperforming, and one of them is Titan, which is trading at all-time high today. In fact, could be a good opportunity to start a fresh addition and can be accumulated if it falls further. So it looks like merely a kind of a correction in the bull market in majority of the Tata Group companies. So first of all, Titan is a buy. If at all it falls in the range of 5,000, 4,900, that can be a good entry point, keeping a stop loss below 4,800. We can expect further upside move towards 5,200 to 5,400 going forward. And apart from that, if you see Tata Motor passenger vehicle, Tata Motor commercial vehicle, both are already underperforming and consolidating in a tight range. And after today's correction, looks slightly oversold. So can be a trading bet out there as well. Apart from that, within metal space, if you see Tata Steel, this particular counter is also, after today's correction, is approaching towards its support area that is placed at 178. So keeping that as a stop loss, yes, contra bet can be taken in that particular counter as well.
Okay, so that's a contra bet coming in there. But stay with us, gentlemen. Symphony, let's pull up that one on the screens, because a mixed quarter is what they have reported. The revenues have been higher, operating profits alongside as well is what we've seen. There's been a slight drop in terms of the net profit. To discuss more on this, Hiren Gajjar, CFA Head IR and Treasury, joins in. Hiren, welcome to the show, and always a pleasure to speak to you. My question to you is, in terms of where the quarter goes, how would you actually look at FY27 as a whole if you have to take cues in terms of what's transpired in the first quarter of FY27 for you?
Yeah, thank you. It's a pleasure to be here. If you look at the quarter one FY27, it was a resilient quarter. Right. If I set aside the individual quarterly numbers, it is a combination of domestic growth. It is a combination of growth in the select overseas market, better operating profitability, and a more diversified revenue base. Coming back to FY27, if you know our business model, September quarter and the December quarter revenue and the profitability is a function of how much inventory we do have at the end of summer season. if you look at the season and inventory, both at the company level as well as the trade level, it has been completely normalized. So that is something which is giving us a positive signal with respect to the September and the December quarter. Coming to the March quarter, again, it will be a function of revenue from the general trade partners and the modern trade alternate channels. But again, it will get affected by the intensity and the duration of weather in the March quarter.
Okay. Hiren, so, it seems that the first quarter has been a comfortable start to an extent, if I have to look at the revenue side of it, the margin side of it as well. If you have to look at the geopolitical disruptions, if you have to look at shipping challenges as well, what is the kind of impact that you're seeing, one, on exports, and two, in terms of sustainability of margins, because that's where the pressure could come in. We've seen a whole host of companies where the disruption has not really showed in the first quarter because there was a good amount of raw material inventory build-up. But the question is, what happens in the coming quarters?
Yeah. So let me answer your first question first with respect to ongoing geopolitical disruption. So obviously, because of the ongoing geopolitical disruption, there was some impact on the export as far as quarter one is concerned. If the situation persists longer than what we anticipated, obviously it will have some more impact in the ensuing quarter as well with respect to export, particularly in the Middle East. With respect to impact of the margin, in the quarter one, we were able to withhold the cost pressure on account of the pre-stock inventory, product mix, and the cost discipline. And because of that, our not only gross margin, but also EBITDA margin expanded despite the severe cost pressure. Coming to September quarter, December quarter, and March quarter margin profile, assuming things gets normalized sooner than later, but because of the kind of elevation which we are seeing, particularly on the cost front, there will remain some sort of margin pressure in the short term. And being the consumer company, it's very much difficult for any of the consumer durable company to pass on the fully price high when you don't know whether the situation will persist longer or not. So with the anticipation of things getting normalized sooner than later, we expect margin will remain a little bit under pressure in the near term. But if you look at the medium to long term, because of the various initiatives which we've been taking in terms of product, in terms of cost discipline, in terms of value engineering, we do have full confidence with respect to the margin profile going forward on a sustainable basis.
Okay. So how are you looking at in terms of FY26? What's the growth you're expecting in terms of top line, bottom line, and in terms of margins? And what is it that will actually drive the growth according to you?
Yeah. So as per our investor relation policy, we don't provide any forward-looking guidance, but we can talk about the various levers which are in place in the domestic business and the overseas business. So if you look at the domestic business, as I said earlier, because of the season and inventory, which got completely normalized, my September quarter and December quarter revenue, which is ultimately a function of how much advances which we receive from the general trade, is taken care of from that particular perspective. Because of the ongoing geopolitical disruption impacting the cost structure, not only for us, but for all the industry put together, a margin may remain under pressure if things don't get normalized sooner than later. But another important point over here is the de-risking strategy which we have been adopted for last many quarters. So, for example, the BISP, Beyond Indian Summer product, which has nothing to do with the Indian summer, which also comprises of last 20 cooling, which also comprises tower fan, which also comprises kitchen cooling fan, export, and the sales for the subsidiaries has been doing fairly well, not only in terms of top line, but also in terms of profitability as well. In the console revenue, as well as in the standalone revenue, it had contributed 48% and 23% respectively. And in terms of runway for the growth, not only in the core category, which is the household air cooler, but also in the BISP as well, there is significant runway for the growth. Obviously, I will stay away from giving any specific numbers with respect to FY27, but this is what it looks like over medium to long term.
Got it. All right. Thank you, Hiren, so much for joining in. Always a pleasure to speak to you. So that's the management of Symphony as we speak. But before we get on to the next topic of discussion, Nilesh, let me come to you with your top picks as well. You've given your view in terms of Tata Group of companies and what continues to be one of the top bets there. But in this kind of a market scenario, which is seeing consolidation and an absolute range-bound move in the last 3 to 4 trading sessions, where would you put your bets?
Well, here are a couple of recommendation. First of all, Aarti Industries, and if you look at chemical space as a whole, so majority of the counter are looking better place. So Aarti Industries, in fact, today has given a good breakout on the chart. So we are expecting a follow-up more on the upside towards 540 to 550. So these are the two targets for the upside, and the stop loss should be placed at 510. So Aarti Industries will be my preferred bet from the chemical space, and apart from that. Within metal space, specifically aluminum space is looking attractive, and Nalco and Hindalco both are looking good on the chart. So specifically Hindalco is forming a good base formation, and the rounding bottom is shaping up. So we are expecting a follow-up on the upside towards 1120, and stop loss should be placed at 1060.
All right. It's time now to talk about the stock of the day, and there are quite a few contenders, but we've picked Godrej Consumer Products for fairly obvious reasons. We've been talking about it since this morning. It has witnessed a sharp sell-off. In fact, it is at the low point of the day, and that's after the resignation of CEO Sudhir Sitapati. This was an unexpected resignation and comes soon after the AGM. Let's head across to Sharad to talk about this, the implications of it, and what happens going forward. Sharad?
Well, Alex, there is a volume-based selling happening in this counter. We are near the day's low level, and it was earlier 10% gap down opening, and then now a little bit more selling has intensified. Brokerages have also raised a little bit of concerns as here CEO Sudhir Sitapati has resigned after 5 years. That's of course the main reason. But the street is taking it in a, we could say, maybe an overreaction as well. There is a still uncertainty surrounding the unexpected CEO transition, why it happened, and that sort of just near the AGM. The volume-based selling is something which we are seeing, and there is a technical reversal also. That means more sell-off can happen. Valuations on the higher side, that's a little bit of concern which was there in FMCGs, but post this correction, seems like it might be over changing. Also, the operating cash flow under him has almost, you could say, gone up by more than 75% by FY26. And looking under the tenure of Sudhir, the standalone organic volume also went up by 2% from FY22 to 6% going ahead. But what's next, that's also very much important, and we'll have a new phase handling this mantle, and of course coming from the same pedigree of GCPL. If we can get on screen, Asif Malbari, he will take over the charge as the MD and the CEO. A little bit details about him. He has already served as the global CFO since 2023, and a turnaround operations was also undertaken, especially in GCPL's Africa business. So he is a veteran and has the DNA actually of the company. But there is of course a concern that the management, especially the chairperson in the con call, has stated that they are rolling up their sleeves and getting things done with more candor and pace. Pretty much interesting, a very different viewpoint coming in from the management, and they see an opportunity for an execution. But is there too much overreaction happening? I just checked the valuations, it's at its 4-year low right now. 12-month P comes in at 37 times, but each brokerages has a mixed tone in their views. Morgan Stanley has stated that they don't see any immediate downsides to the consensus numbers yet as of now. JP Morgan says the internal succession has reduced the probability of execution disruption. And lastly, Citi has stated that the promoter expectations were higher in certain areas as well. Also looking at the analyst community, most of them have a buy rating, almost 79% of them, and the 12-month target price is still on the higher side, coming in at 1249 rupees per share. And going ahead for GCPL, of course, will be the way they tackle the industry issues and the churn which is happening. But yes, seems like a overreaction is coming in GCPL.
Thanks so much, Sharad, for that. Pashupati, I want to come to you on this one. GCPL down over 10%. The point is that it's an underperformer. Even if I look at the last 5 years or so, the stock has not done too much. It must be said, though, that when it was announced that Mr. Sitapati would take over, the stock gained quite considerably. And this might just be a little bit of a reversal of that. What do you make of the stock right now and the potential that it has going forward?
Well, to be fair, I don't really follow this stock, but I do know that there's a lot of pressure in all the FMCG stocks. I mean, we've had Hindustan Lever not doing very much. Again, we are seeing a reaction from the market that any change in leadership, which is sort of sudden and seeming to be knee-jerk, is getting a reaction from the market that seems to be more, more hard. So being down 8-10% on the resignation of a CEO is not such a surprising thing. And likewise, we're seeing the bloodbath in the Tata stocks today, thanks to N. Chandra saying he's not getting renewed next February. And that's, it's next February. It's not August 2026. It's February 2027. But I think, India's public does want consistent management. The FMCG space is also getting, I would say, re-rated, reorganized. And I think Reliance is also coming into the space in a big way, and they're actually making some headway. So I think that's also hurting matters for the rest of the people who are in the space.
Okay, so that's a couple of FMCG counters that you're watching out for as we speak. But moving on, we're a little delayed with the chatter from the dealing room. My colleague Somit Sarkar, as always, joins in with everything that he's picking up. Somit, good afternoon. What do you have for the viewers?
Good afternoon, Hiral. The first stock on the list is Bandhan Bank. There are buy flows on the large HNI desk is what dealing rooms are indicating. And they are expecting some sort of positive news flow that could come in, some corporate announcement, something positive on the corporate announcement side that could come in for Bandhan Bank. But do remember that the stock is in F&O ban. Second one on the list is Dr. Agarwal Health. A big block deal took place today. Temasek and TPG were among the sellers. But on the buying side, what I'm picking up here is that mutual funds like ICICI Pru and Invesco and some other FIs were among the top buyers of this deal. And this deal has happened largely around the 505 to 510 rupees band. And hence this downtick in the share prices that we are looking at in trade today. For Vodafone Idea, there are some buy flows on the institutional desk. Now, dealing rooms are indicating that one of the large FI was a seller here and the selling is largely over. Hence this 2% uptick when it comes to Vodafone Idea. For Glenmark Pharma, there are some buy flows on the large HNI and the PMS desk. Dealers are expecting MSCI inclusion, MSCI related flows in fact to come in for Glenmark Pharma and some out-licensing deal for one of its drug, that is ISB 2301. And lastly, when it comes to Persistent System, there are some sell flows coming in on the large HNI and the PMS desk. Now, the dealers are saying that one of the recently acquired companies of Persistent, that is Nagaro, will be reporting its numbers on Friday, and there could be a big decline they're expecting a weak set of numbers from this company, and hence this sell flows coming in for Persistent System in trade.
Okay, thank you, Somit, for all the chatter coming in there, but a couple of names I want to pick up. Bandhan Bank, let's pull up that one on the screens. You have a Dr. Agarwal's Health as well, where the block deal has taken place. You're looking at a Persistent System where there are sell flows that are coming in as well. Nilesh, on the charts, do you like a Bandhan Bank?
Well, Hiral, the counter is hovering near its 200 long-term moving average, and good part is that it has taken support of the same. So yes, at current level, the risk and reward is looking better place, and we can expect a move towards 180 to 186 on the upside. So keeping stop loss below 170, yes, one can go long at current level.
So that's with regards to Bandhan Bank as well. Moving on, we've been talking about the MSCI rejig as well. In fact, Somit continues to be with us. Somit, the MSCI rejig that is in focus, if you could help us understand, what are the expected announcements that could be coming in and what are the kind of flows that you're looking at?
A host of stocks remain in focus on the back of this. Now, this announcement of inclusion and exclusion will come in tomorrow early morning, and these changes will be effective from the 1st of September 2026, which means that adjustments, which means that inflows and outflows in these stocks will happen on August 31st. Now, Laurus Labs and Adani Energy are the two stocks which have a high probability of getting included in the MSCI standard index, and because of this, there could be an inflow of anywhere between 260 to 410 million US dollars. Then there is LIC, Lenskart and Grow. Now, these three counters have a low probability of getting included in the MSCI standard index, but if they get included, then the inflows could be anywhere between 180 to 380 million US dollars. Now, Eternal has a high probability of seeing its weight getting increased in the MSCI standard index, and that could lead to an inflow of nearly 570 million US dollars. In fact, Eternal is the counter which will see the highest amount of inflow because of increase in weightage. Now, on the back of exclusion, there is Astral, SBI Cards and Balkrishna Industries. All these three stocks have a high probability of getting excluded from the MSCI Standard Index, and when that happens, there could be an outflow of anywhere between 109 to 133 million US dollars. So keep an eye out for these stocks in trade. Tomorrow, the announcement is expected early morning.
Okay, thank you so much, Somit, for that. In fact, Pashupati, let me come to you on this one. On the back of inclusions and the kind of flows that could be coming in, it's interesting to see, I mean, an eternal, you have high inflows expected. Laurus Labs, Adani Energy, though with regards to LIC, Lenskart and Grow, it's slightly on the lower side. But do you see any momentum there and any picks that could be good bets for retail investors?
Well, I had actually said that I'm surprised that LIC has gone down the amount that it has. So I'm glad that by putting it into an index, it's going to probably get some kind of inflows. The others, of course, Eternal has been there and has been will get good inflows. Likewise, Laurus Labs and Adani Energy. So, let's just wait for it to happen. But then, this next 14, 15 days between tomorrow and the end of the month, we'll see a lot of the movement. And then finally, on the 1st itself, you'll have the major index players who are compulsory going to have to do it actually on the 1st. So let's see what happens there. But expect action in all these counters.
Got it. All right. On that note, gentlemen, thanks so much for taking the time today, and pleasure speaking with you. Have a great day. But we're still in a very quick break. We're off the low point of the day. We're trading at 24,360 on the benchmark Nifty 50. The Nifty Bank in the green, as much as 0.6%, and that's led by PSU banks. Stay tuned. We'll come back with more details.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those.
Welcome back to NDTV Profit, and you're watching India Market Close from the NDTV Profit Suzlon studio. Vikas Khemani, founder and CIO at Carnelian Asset Management and Advisors, joins in. Vikas, good afternoon and welcome to the show. This is Hiral on this side. You know, one of the biggest announcements that we've heard today is with regards to N. Chandra, who's come down and said that he will not seek reappointment from February 2027. And one is that there was no consensus in terms of where extending his tenure goes. How significant do you think is this development for a group that is executing some of the largest capex at this point in time and transformational projects simultaneously?
Hi, I think it is a very, very critical, a very important, significant decision. Of course, Chandra sir joined in 2017. He's done a fabulous job over the last 8-9 years in terms of bringing a lot of sharpness in execution and capital deployment. Many companies have kind of executed very well. Of course, there's always more to be done, and when you do so many things, there could always be not everything may not be perfectly done. So I'm sure board has discussed that, but this is very. And Tata Group is a very large group from an Indian economy perspective, as well as I think overall market perspective. So it's a significant development, and we'll have to see who comes, what's the next steps forward. But I've been a very big fan of Chandra sir over the years. I've always seen his clarity of thoughts. I've seen how he turned around TCS when he took over in 2009. From 2009 to 14, when IT industry was quite sort of languishing, TCS became 9x from 50,000 crore market cap to 450,000 crore market cap under his guidance after he took over. So I think he's very good at execution, and which is what he displayed at the group level. But yeah, I'm sure there were challenges, there were issues on both sides, and Tata Group has gone through this before many times in different contexts. I'm hopeful that there would be some better answer to that. But it's an important sort of development from a group perspective.
Vikas, hi, afternoon, Alex here. So two perspectives or two ways of looking at this. On the one hand, the Tata Group has this policy of the age of 65 for people at the helm, right? And with Mr. N. Chandra at 63, one can argue that in any case he may not have been able to serve the entire term. So that is one argument. But on the other side, considering what he has achieved and the fact that he's such a stellar professional, the argument could be made that an exception was warranted. So which camp do you belong to?
I think it's not about the camp. I think age is just it's not that Tata Group has not had chairman before beyond 65 years of age. So it's not that age is a criteria. While it's there, but we have had many great capable people who work beyond 65. These days, the way longevity of life is growing, I think 65 is a great age to still continue working, especially when you have so much great experience, ability to execute things. So I do believe that here long way to go, but who am I to call that out? I think it's a board of the group which has to decide, and I'm sure they have their own compulsions, reasons, thought processes to move on this direction. As a professional, I think I had a deepest regard. I have personally known Chandra sir from a very long time. I have deepest regard for his leadership, his execution, his humility, his sharp focus on right matrices. So, in that sense, I can only say that I'm disappointed. But like I said, who am I to judge on that? We will have to only wait and watch how the board of Tata Group decides.
Absolutely. And Vikas, with you as well, you have been a Make in India fan as always. The question I have for you from a market's perspective is, look at the stocks. There has been that small knee-jerk reaction, some of them probably a little over 3 to 5% as well. Do you think this is an emotional reaction, or do you think investors have the right to probably go ahead and reprice some of the governance risks that could come in, number one? And would you expect a valuation discount to persist until there is clarity when you talk about the succession plan?
The uncertainty has definitely got created, and as you would know that markets don't like uncertainty. Now, who will come? What will be the strategy? What are the policies? So I think it's unlikely to get sorted out in a hurry unless board has identified already a successor. So to that extent, I think there is an uncertainty, and markets don't like uncertainty. So you might see reactions like this. Partly can be justified, partly can be unjustified, but depending on the horizon of the people. But I'm quite sure that this will be sorted out, and over long term, what outcome comes will depend on who the leadership is and what are the strategies. I have always believed that a good leadership can make things happen, and a poor leadership can break things happen. Whether it is a company level or a country level or a society level, every level, I think leadership do matter, and whosoever the leadership will determine the outcome. While only good news is that Tata Group is a fairly institutionalized group. So to that extent, short-term disruptions would be hardly anything. It will be, if at all anything transition happens or change happens, it will be more at a strategic level, directional level, which will determine over the next 5 to 10 years. And as Chandra said in his resignation, that Tata Group is going through a massive capex cycle across the businesses investment cycle in line with the Indian economic requirement. So criticality, having a clarity on the leadership and path forward is very, very important. Any delay would only be, I think, probably harmful. So, and I'm sure board is quite acutely aware about it.
Yeah, fair point. Thanks so much for taking the time and speaking to us about it, because always appreciate the time that you spend with us.
Thank you very much.
Okay, let's head across now to Shivangi Sarda, who's analyst equity derivatives and technical at Motilal Oswal. Shivangi, hi, thanks so much for taking the time. Good afternoon to you. We've come off the low point of the day, and I think this is something of a trend that we've seen in the recent past. Any relatively sharper corrections are getting bought into, but the fact is that we've remained within a pretty tight range, all things considered. Would you agree?
Alex and Hiral, thank you for having me. We've seen that, of course, the indices have witnessed a strong comeback in just about the last hour of the day. Overall, we've seen that profit taking was taking over the index from the last 6 odd trading sessions, but the support-based buying that has been seen from the 24,250 odd marks, that has been quite remarkable. And this is clearly showing that, whatever profit taking or the range bound move that we were, witnessing from the last few sessions is now, coming to rest, and we may expect a good up move here onwards. The kind of rally that we had seen from around about 24th July to 3rd of August, nearly half of it was again lost in the last 7 sessions. But now again we are holding above the 24,350 odd marks, which is quite positive, and a hold above the same and a closing above the same would indicate that bulls are again ready to buy these levels, and support based buying will take the index to 24,600 levels. So this is the take on Nifty index. Buy on decline to continue if it holds above 24,350 marks. With a support base of 24,250. It's a close support, but this will be important and detrimental to decide the next leg of rally. Now, talking about Bank Nifty, we've seen that there was clear outperformance here in this index right from the start of the session, even though it witnessed some bit of range bound during midday. But overall strength can be seen, and it bounced back exactly, from 57,150 odd levels, which was an important exponential moving average on the daily frame as well. So levels are being respected, and Bank Nifty is holding on to the strength. 57,500 is the support that we're looking out for, with the next immediate targets of 58,250 levels. So watch out for Bank Nifty, especially the PSU names, and the index would be a buy on decline from here if it holds the key level.
So Shivangi, that's, in fact, that recovery that we're seeing in terms of markets is very interesting right now. Bank Nifty at the day's highest levels with gains of 0.6% coming in there. Let's pull up Nifty 50 as well. That's trying to make a mark, but I'm sure it'll not be able to get there at the highs of the day that we're seeing. Let's pull up the broader markets as well once again. Mid cap and the small cap indices and see what's happening on that front. You have the mid cap 150 as well, which is trying to inch there and seeing that recovery from the day's lowest levels. Likewise, pretty muted moves in terms of small cap 250, which was pretty much divergent earlier. Shivangi, in this kind of a day, your top picks then?
So on regard to the top picks, I've decided on an auto space stock, which is Hero MotoCorp. It has given a fresh, breakout on the weekly basis. It is holding on to the gains from the last 3 weeks, and this stock has recovered half of what it had lost in the last 6 months from December last year till June of this year. So we've seen that recovery has been pretty smart, short covering move, and sustained buying even at these levels with good follow-up action. So this one's quite strong. The entire auto pack is kind of holding on to the strength this series so far, and we are expecting a good move from these levels. 6,100 is the next targets for Hero MotoCorp that I'm looking for, with a support of 5760 levels. Now, apart from this, some of the defense names are looking quite positive. My eyes are on HAL, which has given a price volume breakout today. Slightly, volatile stock of lately, but overall setup is quite good on the weekly basis. And this one's actually the volumes that are adding up in the last hour is kind of quite positive, and we're expecting it to rally to 5,200 odd levels with a support of 4,900 levels.
About 10 seconds to go for the finding of the reference price, and we're just winding down. Remember that the last tick that you see on the screen at 315 is not the reference price. It is simply the last value that was traded at that point of time, and things are settling as things stand right now at 24,361.7, so well off the low point of the day. The Bank Nifty at 57,771. You have the Sensex at 77,889.97. So there is some clarity in terms of the top gainers and the losers on the Nifty 50, and we'll give you a sense of what moves after the markets close as well and after the CAS session. At this moment, the highest gainers are Hindalco, followed by State Bank of India, and then Jio Financial Services, and Interglobe Aviation has actually found significant buying from lower levels and a gain of as much as 1.6% from the low point of the day
to now trade with gains of about 0.5% or so. More losers than gainers for the benchmark Nifty 50, 38 of them in fact. Tata Consultancy Services and in fact representative of the entire Tata Group, the worst hit in fact from that pack after the stepping down of N. Chandra as the chairperson of Tata Sons has lost ground. Max Health has lost ground as well, followed by Apollo Hospitals. The capping of room rents is not being seen as something that is very positive for the hospital stocks. Tata Steel, Tata Motors also losing ground, 1.6, 1.7% approximately. Infosys and a few other entities in the IT space are also losing ground in trade today. In fact, that is the worst performer sectorally.
You know, those are interesting names that I pick up. Let's just pull up a Bharti Airtel on the screen as well right now as we speak. I just want to see what that counter is doing in terms of today's session. But on the gaining end, you have Hindalco, 2.5% up, and that is again on the back of the news that we saw with Norsk. In fact, Nalco is another one which is up in trade. In the cash market, there you go, 0.1% higher. Futures up almost 0.6%. You have Nalco as well, 8% up move on the cash market as well as your futures, which are up in trade. Apart from these names, you have SBI, Indigo, already as Alex mentioned about Indigo. SBI is another one. SBI cards you're picking up, but let's pull up SBI. A 1.5% up move coming in on that counter. Let's just quickly pull up, you know, the contributors to Nifty 50 to just understand what has happened, because you've seen that recovery that has come in, and then we look at the Bank Nifty components as well as we speak. If you can just get that one on the screens. There you go. I mean, TCS, Infosys, M&M, Tata Steel. So two Tata group of companies which are trying to pull Nifty lower. But what's happening is an SBI which has continued to stay strong. Hindalco, Geo Financial Services and Ultratech. Very interesting names, Alex, if you have to see in terms of the losing end, because TCS, Tata Steel, obvious reasons, but an Infosys also joining the party along with an M&M. In fact, let's go to Shivangi as well. A quick question. Sorry, Shivangi? Yeah, you're there with us. So Shivangi, in terms of, you know, the top pick, if you have to give with regards to tomorrow's session, with the way the rates are settling in, the reference rates that you're picking up, what would you like?
The top pick on my radar for tomorrow's session, I think, would be Nalco, because we've seen that the price volume surge that was seen in the first tick has been maintained till the last hour itself. It is holding on to the higher levels, and despite the market weakness in the first hour, we saw this one was quite resilient. From the last 2 weeks, it has shown a good amount of long built up here after the doji formation on the weekly basis, and looking quite positive. In fact, the entire metal pack is now gaining quite a lot of action. So 430 is the next immediate targets for Nalco, is what I'm looking at, with a small support base of 410.
That's with regards to where Nalco goes, but stay with us. Royal Orchid is another one we need to focus on the back of earnings, a mixed set of numbers, healthy revenue growth but weak profitability. We have Chandar K. Balji, Chairman and Managing Director at Royal Orchid, joining in. Welcome to the show, Mr. Balji. Always a pleasure to speak to you. My question to you is, if you have to take cues from the first quarter with the impact of the West Asia crisis, however, domestic travel has been pretty strong. Is this the kind of performance you're expecting to continue in the remainder of the year, or are you expecting something better?
No, performance will definitely be better, because as historically, H1 is lower than H2, or rather H2 is better than H1. So I think as we progress, things would be better, and the economic environment is much improved now. All the uncertainty about the war, and in fact didn't have much of an impact in the country. What has happened is the tourism in the country picked up because of the uncertainty in the Middle East. So our leisure hotels did much better, because people were not traveling out. And even the fares abroad started going up quite a bit. So it benefited us, and I think it will continue to benefit.
My other question to you is then in terms of your pipeline, exceeds 50 properties, 3,600 keys. What percentage of these are expected to become operational over the next 2 years, which will start accruing revenues?
No, I think all of them will come up within the next 2 years because they are at a various stage of completion. And even if a few of them do not come up, there's some more properties which we are negotiating with, some ready properties for conversion. So I think even if a few of those 50 properties don't come up within 2 years, there will be some others who will be added to the pipeline. Our development team is very strong. They're working towards signing more properties. And also, we are going to be signing another lot of properties in the next 2 years with the Hilton brand, Hampton by Hilton, which we have signed for. So I think there'll be a lot of hotels coming up in that space also. Yeah.
And my last question is your RevPAR growth expectation for FY27. Are you expecting occupancy gains or pricing to be the bigger driver?
No, I would say that, both, but of course, occupancy level will drive a little less and ARR, average room rate, will go up a little higher. So I think, but overall, the RevPAR will be definitely much higher than what it is today.
All right, Mr. Balji, pleasure speaking with you as always, and look forward to touching base once again later in the year.
Thank you.
Okay, all right. I want to go across very quickly to Avinash Gorakshakar. Avinash, good afternoon to you. And what do you make of Royal Orchid 1? And specifically on the Tata Group stocks, would you see opportunities to pick any one of these right now based on the drop that you've seen in the price?
Yeah, good afternoon, Alex. I think first on the Tata Group, I think clearly, it's a sentimental negative development that Mr. Chandra is going to resign, or maybe he might be replaced by some other incumbent. But I think, the businesses remain very solid. I think markets respect data points and numbers. So my guess is that in the short term, these stocks may remain a little negative, but Tata Capital, Tata Motors, Tata Consolidated, numbers definitely look very interesting. My sense is, these are companies which should be added in your portfolio when these kind of opportunities come in the market. I mean, these are not momentum stocks, but clearly have very solid businesses, very strong brand franchises. So I think clearly, if somebody wants to add them in their portfolio, it's a good opportunity because things will get to normal very soon. I don't think business is going to get hampered. So from a longer term perspective, Tata Group companies, which I mentioned, can be added. Which was the other stock, Alex, you mentioned?
About Royal Orchid, and we were speaking to the management, Avinash. If not this specific counter, you can perhaps talk about the hospitality space and tell us your top pick.
See, I think we continue to be positive on Indian hotels. I think the largest player, Royal Orchid, according to me, Alex, is not a company which actually puts up hotels. It's got a business model where they actually do manage a lot of other hotels. So, in terms of margins and in terms of the room rentals also, what they get is basically the room sharing. And I think margins have been affected because a lot of new properties have come up. They have put up their new properties in Mumbai. So some amount of cost pressure has come in, but I think hopefully the second half will be better. But considering the size, I would say that Indian hotels at these levels looks pretty attractive. I think one can definitely look at accumulating because I believe, hospitality sector has done pretty well despite the kind of headwinds we have seen in the geopolitical kind of space. So India continues to be a good market for travel. And I think we should see a good number from Indian hotels in the second half of this financial year. Okay.
Avinash, Bharti Airtel, that's what we're going to talk to you about this one as well. But this is going to be interesting, Alex. The 299 plan, which is one of the most popular plan for Bharti Airtel, has been discontinued. And now they have a base plan, which goes to almost 349, if I'm not mistaken.
Yeah.
What this will do is improve their ARPU to some extent as well. Let's see what that improvement is going to look like. And that's the reason why
for the base
you're seeing that spike, which is coming right now as we speak in terms of Bharti Airtel. Now, they've discontinued the unlimited base plan of 299. Let's get the other details. 349 is now what the unlimited base plan will look like.
And so, therefore, it's a 16% increase.
It's a 16% increase, number one. what is going to happen in terms of competition as well? Because this was the sticking point with regards to telecom operators, and tomorrow Parag Bhai is going to be very happy.
No, certainly, and shareholders of Bharti Airtel as well. Because if you look at it, in the first quarter, you had an ARPU industry leading, you must mention, of 264. And so automatically, if the most popular product or the most popular scheme has its ARPU gaining by as much as 16%, then you can be sure that that is going to be seen in the second quarter as well. Avinash, already done with a fair bit of the second quarter, so you're not going to necessarily see all of that impact play out, but it's a positive, not just for Bharti Airtel, for the rest of the space as well. What do you think?
No, I think it's going to actually improve the ARPU significantly, and I think maybe the impact may not get fully reflected in quarter 2, but quarter 3, I think, when things stabilize, I think we're going to see a very strong ARPU improvement, and that definitely will improve the absolute, profit for the company. And I think this is a clear signal that telecom companies are now getting more stronger. Price cutting has completely stopped. And I think the next in the line could be Jio and Vodafone. So definitely, I think, if Bharti is going to, increase its ticket size for its, telephone pack, I don't be surprised that maybe in the next few weeks, once this is announced, you'll probably see the other two players also announcing these changes.
Now to Somit Sarkar, who will be able to tell you about the implications of this very quickly. Somit, obviously if one player does it, the rest do it as well. But what is the implication for the overall ARPU for Airtel? Okay, we'll go across to him in just a bit as soon as we have him, but he'll be able to tell you how much of the usage of Bharti Airtel comes from that base pack, which one would assume is a significant contributor. By the way, keep an eye on this particular counter because the cash window is closed and you have limited trades that will take place for a couple of minutes before the final rates are settling in and you get those values. But I believe we've got Somit with us. Somit, the question is, how much of a bearing will this have on the overall ARPU number, which stood at 264 at the end of the last quarter?
Right, Alex. So firstly, if you look at the base plan, that was around 299 for prepaid users, and this is one of the most popular plans in the unlimited side because all other plans do not offer unlimited data. So this is the most popular plan when it comes to unlimited data side on a daily basis. So this 299 plan has been discontinued, and now the base plan starts at around 349 rupees for Airtel prepaid, which is typically a hike of nearly 16.7% on the base plan. But after speaking to multiple analysts, what I'm picking up here is that this hike will actually increase the overall ARPU by around 4 to 5%, which is still better given the fact that they have not been able to take a price hike for the last 3 years. So this is indirectly taking the prices up or taking the ARPU higher for Airtel, at least at this point of time, by around 4 to 5%. But it would be interesting to see whether other players also follow through or not, because so far Vodafone Idea and Reliance Jio have not taken any price hike. So it will be important to see whether they also increase their base plan ARPU or not, because if that does not happen, then there could be subscriber losses for Bharti Airtel at this point of time. But assuming that other players also follow through, then this could lead to an increase in the ARPU, overall ARPU of Bharti Airtel by around 4 to 5%.
Got it. All right. Thanks so much, Somit, for that. Certainly something to watch out for. And I'd be curious to find out if there's a dramatic change in the stock price after the closing trades as well. I believe they've come through. Okay. They have come through, in fact. The markets have actually closed. The closing values are in. 24,435.9 is the final value for the Nifty 50. It's about 66 points higher. The Nifty Bank about 90 points higher. The Sensex closing at 77,889.9. Okay, I don't see a new value for the Sensex. Let me see. Okay, no, it's 966. So it's about 80 points or thereabouts higher.
Yeah, in fact, just pull up a Vodafone Idea also on the screens along with the Bharti Airtel if there is any reference impact that's following through. No, I mean, it stayed in the positive 3.5% up move is what you're seeing.
Bharti Airtel?
Bharti Airtel did see that spike come in that last couple of minutes, but pretty much flat from where it was. It was trading in the negative and it's tried going back into the positive. We'll just look at the other names: Reliance Industries, HDFC Bank, LIC, M&M, Infosys, Bajaj Finance. Let's pull up all of them on the screen. So you can also put up a heat map in terms of Nifty 50 to just understand what's happened in terms of individual stocks, and that will give you the flavor with regards to counters.
In fact, I think we have for the benchmark Nifty 50 the biggest movers on the upside and the downside after the cash window. We should pull those up. Okay, so that's the heat map. But you know what? We should head across to Sharad, who will give you a sense of how the cash window has moved things, if at all, for the F&O stocks, and also what the major cues on the F&O space are. Sharad?
Alex, you're right. Not major changes happening, but of course, the last 10-15 minutes, generally what we are seeing is at 3:15 the action and at 3:30. But some actions already, the build-up started at 3 o'clock itself today. So that's a very interesting intraday chart. It can show you that. And these are the important changes for both Nifty and Nifty Bank. Also, looking at the top gainers, and this is of course on the cash changes, we have PVR, Inox, Aarti Industries. That's where the moves are happening more than 0.5%. And if you're looking at the top losers also, the stocks include of course Titagarh Rail and Industars as well. Let me just show you overall how the differences are panning out for both Nifty and Nifty Bank. And if you could get the at the money calls, which we had taken yesterday. Today also we are trying to go with that same strategy. It's generally a straddle strategy to be honest. If you could just point out both Nifty and Nifty Bank's important at the money calls, and this is where you will get the clarity. And also I'd like to point out that if you could show the open interest graphics as well, so that we'll get back to it. But as of now, Alex, these are the stocks which we'll be focusing on. And this is the one which I'm talking about. Still the congestion levels remains at the same. Yeah. And technicals is still giving a very narrow range moves.
Yeah, absolutely. You said it. Thanks so much, Sharad, for that. So a little bit of buying coming through towards the end of the session, where we've ended the benchmark off the low point of the day. So pull that up. The closing value for the Nifty 50 is above 24,400, and a bit of a pop towards the end of trade is what you've seen for the benchmark Nifty 50 in the cash window as well. The market breadth does not look terribly impressive. In fact, the broader markets have seen a little bit of a crack, not as much as the benchmark. Actually, the benchmark ending significantly off the low point of the day. If at all, the gap between the 315 value and the cash close has been quite considerable. But there you go. The advanced decline ratio pointing in favor of the declines. Pull up the broader markets and see where they're at. The mid-cap index ending with cuts, or actually in the green, 1/3% or so. So buying interest at the end of the session. The small cap index ending with cuts of about 1/4% or thereabouts. So that's the long and short of it. You've had a cohort of stocks that has seen quite a bit of selling pressure that came through, and that is the Tata group of stocks on account of the resignation, or rather the stepping down of N. Chandra. And you have had GCPL, which has borne the brunt of the resignation of Mr. Sudhir Sitapati. So it's been an eventful day in the corner offices of India Inc. But all told, a so-so session where the benchmarks have not done too much at the end of the day. So that narrow range has maintained. As we end the program, let's get you a voice that has weighed in on the cash and on the need for moving towards this new technology. In fact, it is SEBI Chairman Tuhin Kanta Pandey. Listen in.
Basically, issue ये है कि participation कैश में बढ़े. कैश एक ट्रांसपेरेंट मार्केट है, उसकी प्राइसिंग हमेशा दिखती है, उसके अंदर क्या क्या हो रहा है दिखती है, और फाइनली वो एक प्राइस करता है. तो सेबी सब विभिन्न लोगों से बात भी कर रही है, और हम लोग सब लोगों के इनपुट भी समझ रहे हैं और देख रहे हैं. सोशल मीडिया में भी आ रहे हैं. यदि कोई आवश्यकता होगी कि हम उसमें कुछ ट्वीक करके सुधार कर सकें तो भी हम देखेंगे. लेकिन अभी इस समय जो हमारा दिक्कत है कि इसमें थोड़ी समझ की और सहलता की कमी है, क्योंकि हो सकता है कि हिस्टोरिकली जो कुछ भी एल्गोज या और भी जो इंडस्ट्री ने बनाए हैं वो पुराने पद्धति पे बने हुए हैं, तो इसलिए लोगों को समझाने में थोड़ा दिक्कत आएगी. तो आई थिंक वी हैव टू बी वॉचफुल, but we should be persistent. We should see that everyone understands the market. It's not a big thing not to understand, and I hope it will settle down. आपने देखा है कि 3 अगस्त के जो आप differences देखें और लास्ट के देखें, उनमें काफी कमी आई है, सेंसेक्स में भी और NSE में भी.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch,
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $64,000 marks on technical consolidation. SEC to consider regulation crypto proposal. Thirdly, Russia approves Bitcoin, Ethereum and USDT for regulated retail trading. And lastly, National Bank of Canada discloses stakes in crypto ETFs. Well, those were the top crypto headlines at this hour. Time to get you some expert insights. As crypto matures, are we moving from a market that rewards simply being early to one that rewards being selective? Listen in to the word coming in from Siva Venkataraman, the CFO at CoinSwitch.
Thanks, Sharad. I think that's exactly the shift we are seeing. In the early years of crypto, the market itself was much smaller, liquidity was limited, adoption was just beginning. And as fresh capital entered the system, a large part of the market moved higher together. Simply participating early often worked out in investors' favor. Today, crypto is a much larger and more mature asset class. The market cap of all listed crypto assets as we speak is about $2.4 trillion. And there are over 1,000 coins and tokens that are listed and traded on popular crypto exchanges. Information is widely available, institutional participation has increased, and capital has become far more discerning. Even every market cycle is creating greater differentiation with fewer broad winners and much sharper focused on quality. Investors are no longer rewarding ideas alone, they are rewarding execution. They want to see whether an ecosystem continues attracting users, developers, liquidity, and whether it can keep creating value over multiple market cycles. So being early can still be an advantage, but it's no longer enough on its own. The edge today comes from identifying durable value before it's fully reflected in the price. Increasingly, markets are rewarding investors who can identify quality and stay selective rather than simply trying to be the first.
And Siva, what separates a disciplined investment process from simply reacting to market opportunities as they appear?
I think it starts with having a framework before you invest, rather than building one after you have already bought the asset. Before allocating capital, investors should be clear about why they are investing, what gives them conviction, and what evidence would make them change that view over time. Reacting to opportunities is very different. It usually means allowing price movements, headlines, or emotions to drive your decisions. A disciplined investor may still act quickly, but every decision is guided by a predefined framework. While investing in particular crypto asset, the disciplined investor look at factors such as underlying use of tokens, growth and momentum in the activities taking place in the chain, flow of institutional capital, etc. It is also important to recognize that you don't need to participate in every opportunity. Mature markets reward patience as much as participation. Sometimes choosing not to invest until you have sufficient conviction is just as valuable as making the investment itself. Ultimately, good investing isn't about finding the most opportunities. It is about making a small number of well-researched decisions that continue to align with your portfolio, financial goals, and risk appetite.
Thanks, Siva, for that. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप संभूल के समय जो सिचुएशंस थी क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately.
Hold it, boss.
Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom
You're watching Market Express with me, Shreyansi Singh, and this is the show that gets you round up in terms of everything that has happened thus far in the trading session, as well as news and updates from within the country and across the globe. First things first, let's take a look at the markets. Now, when you talk about benchmarks, looked at them really ending a choppy session in the red, with the Nifty also slipping below 24,450, as you can see on your screens as well very clearly. That loss really coming in for the Sensex about 180 odd points lower as well. Thereabout, but let's also move on and talk about a very, very important story as well. In today's trading session, a major leadership transition is unfolding at Tata Sons. You do have N. Chandrasekaran or Natarajan Chandrasekaran, who's stepped down as chairman ahead of the group's August 18th AGM and is not going to be seeking reappointment when his current term ends in February 2027. Now, when you talk about this announcement and the aftermath of it, really, it's triggered a very sharp market reaction. You're looking at Tata Group companies really losing around 46,000 crore rupees in market value. And when you talk about TCS, that's reflecting on your screens with that 4.5% cut also coming in, was of course among the biggest casualties as well, falling nearly 5%. Tata Motors and the, a bunch of these other counters as well also declined quite sharply. Now, when you talk about the spotlight, it's really shifting to Tata's succession plan and its next chairman. Let's move on and talk about HAL that's delivered on its 10 to 12% top line growth guidance, with revenue coming in somewhere close to 5,500 crore rupees. And that's ahead of estimates. EBITDA has also beat expectations at 1,527 crore rupees, with margins at 27.7% as well, helped by a 12% decline. When you talk about raw material costs, lower operating expenses, that's also something that you're looking at. Profit after tax stood at 1,590 crore rupees, also ahead of estimates, but the quality of the beat also remains a little bit of a concern, with lower gross margins and elevated other income continuing to cloud the earnings picture. And moving on, let's talk about something like an L&T as well that's reworking its data center and cloud services business. Now, not much of an impact, at least coming in towards the close of the session, but the company has signed a business transfer agreement with its arm, Vyoma.ai, to really transfer the business for 1,400 crore rupees. The consideration is going to be paid through the issue of fully paid up equity shares by Vyoma. And the data center business had a net worth of close to 1,100 crore rupees, while FY26 revenue stood at just 26 crore rupees. And this is a move that's really marking a strategic reset for L&T's digital infrastructure play. So that's why it's quite important to mention. Let's move on and talk about MAN Infra, that has delivered a strong first quarter also, with both revenue and profit growing around 8% on a year-on-year basis. Really failed to, impress the street. But when you talk about the consolidated revenue, it's risen to about 218 crore rupees. And you're looking at the EBITDA jumping some 18% as well. The big positive is margin expansion, with EBITDA margin also rising 300 basis points to 32.8%. That's what you're looking at there. And when you talk about net profit as well, climbing about 8% to somewhere close to 60 crore rupees, the performance really is reflecting healthy operating leverage across the company's infrastructure and real estate businesses. But of course, the street was not really impressed. Moving on then, let's talk about Landmark Cars, and that's really seeing profit taking despite a strong first quarter set of numbers as well. So shares fell nearly 8% at close, somewhere close to 4% as well, even after gaining around 26% over the past month. When you talk about the revenue, it's jumped about 23% EBITDA as well, risen about 18% to somewhere close to 72 crore rupees. More importantly, the net profit, that's more than doubled to 14.5 crore rupees. However, the stock's sharp reaction could also reflect some bit of profit booking after its recent run-up, along with a slight contraction that you're looking at. When it comes to gross margins, investors do appear to be locking in gains despite the strong earnings performance. Let's move on and talk about something like an SKF India that is heading for a leadership transition, with Sujit Pai also set to take over as managing director from September 1. Now, you're looking at the appointment really following Mukund Vasudevan's resignation effective August 31st. And the management is, this particular change, in fact, is coming alongside a positive announcement when it comes to shareholders, because you do have the company that's declared an interim dividend of close to 20 rupees per share. The key focus, of course, is going to be on the new management's priorities and how the new leadership is going to be steering the company's next phase of growth. Let's move on and talk about Somani Ceramics, that has delivered a strong set of numbers in the first quarter, both top line and profitability, showing a little bit of sharp improvement coming in. Revenues risen about 24%, EBITDA surged 81%. The big highlight, of course, is the margin expansion. Also failed to impress the street, by the way, as you can see on your screens, with EBITDA margins risen to 11.5% from 7.9%. Net profit more than tripled to 36 crore rupees from 10 crore rupees a year ago, marking a significant improvement in the quarter. Let's move on and talk about Grasim Industries, and that's the one that's delivered a sharp turnaround in the first quarter, with standalone net profit swinging to 247 crore rupees from a loss of 118 crore rupees a year ago. This is also something that really didn't manage to impress the street as well, but the revenue has actually risen about 28%. EBITDA more than doubled, and margins also improved significantly, expanding to 8.1% from the previous 4.2%. And the company, in fact, is also saying that the performance was largely driven by its core fibers and chemicals business alongside continued growth in newer ventures. Now let's talk about one stock that really did manage to sort of impress the street, at least for a bit, but it's delivered strong revenue growth. We're talking about Senco Gold here. The profitability, that's been the little bit of a concern as well, and that's really built up some pressure on the stock, as you can see on your screen. So 13.8% downtick coming in there. The revenues jumped about 62% on a year-on-year basis. Profit after tax declined somewhere close to 3% as well. Margins contracting by 300 basis points. And the management, mind you, is saying that the customs duty hike from 6% to 15% has really impacted demand and consumer sentiment. The company is also expecting the second quarter to be seasonally softer, while its Dubai business, that's the one that continues to face geopolitical uncertainty and war-related disruptions. Let's move on and talk to you about some national news now. Amid heavy opposition protests, you do have the Lok Sabha that has moved the Foreign Contribution Regulation Amendment Bill to a joint parliamentary committee. And the move, of course, followed a sharp exchange between the government and opposition leaders over the bill's impact on minority communities. Meanwhile, the Rajya Sabha took up the Cooperative Development Cooperation Amendment Bill, and you do have the Home Minister also accusing the opposition of disrupting Parliament while offering a discussion on the NEET protest. Lok Sabha also was adjourned for the day during the afternoon as well amid the ruckus. Moving on then, let's talk about Assam Chief Minister Himanta Biswa Sarma also saying that at least 1,000 crore rupees are going to be needed minimum to really be repairing some of the damaged property and rehabilitate people hit by the latest floods as well. The fresh wave of deluge has left several districts badly affected. We're looking at homes, infrastructure and livelihoods really disrupted at a very large scale. Now the state government faces a major rebuilding challenge as relief and rehabilitation efforts continue across the flood-hit areas. And moving on then, let's talk about a major rescue operation that is underway in Mumbai's Kurla after a landslide hit a chawl early this morning as well. 7 people, in fact, have unfortunately lost their lives, 4 are injured, and at least 6 people are feared trapped under the debris at this moment. You do have NDRF personnel alongside around 50 BMC staff that are leading the rescue effort. And you do have this particular incident that was reported somewhere close to 3:40 a.m. as well. Authorities, including the Mumbai mayor, did reach the spot. Moving on then, let's also talk about Gurdaspur's Bamyal region that is again facing a flood-like situation as water levels in one of the rivers there actually rose by quite a bit. The fresh surge has raised concerns for some of those low-lying areas, as you can very clearly see on your screens as well, some visuals pouring out of there, but the authorities are monitoring the situation very closely. Moving on then, and speaking of monitoring, let's talk about the health department's own canteen in Bengaluru that has come under the food safety scanner. An inspection at the Arogya Soda canteen on Magadi Road in Bengaluru has flagged unhygienic conditions along with expired idli rava and coconut powder. Officials are also finding that the food storage was insufficient as per some of the guidelines that have been set out for it. Pest control measures were found lacking. Raiders really put the spotlight on food safety compliance even within government facilities. And lastly, on to some international news now. Separate attacks on shipping by the US and Iran-aligned Houthis have really raised fresh concerns for global trade. The incidents are coming in as prospects for ending the war dimmed, with Tehran insisting that the Strait of Hormuz will really effectively stay closed until Washington accepts its conditions. The developments put 2 key oil supply choke points, the Gulf of Oman and of course the Red Sea, back in focus. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे टाइगर कैसे
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter.
Market closes in the red for the second straight day as cash weighs, with the Nifty slipping below 24,450 and the Sensex losing around 180 points. Most Tata Group stocks edge lower after Chairman N. Chandrasekaran steps down from the role of Bharti Airtel among top gainers. N. Chandrasekaran to step down as Tata Sons chairman and will not seek reappointment once his term ends in February 2027. Chandra took the charge in 2017 after leading TCS as MD and CEO. Steel procurement rules have been tightened. Mandate steel production in India replaces the 50% domestic value add rule. Steel must meet melt and pour.
The government is unlikely to reopen EV scheme window for global EV makers. Tesla and BYD face a setback. According to sources, FTAs with UK, Europe have set to dilute the scheme's appeal. SEBI Chairman Tuhin Kanta Pandey says that a detailed study will be published within the next 8 to 10 days on retail F&O losses. Not just retail, sophisticated investors are hurt too. Red Sea attacks on oil markets. Brent hovers near the $90 per a barrel. Shipping risk back in focus. Trump claims Hormuz control as US strikes vessel head towards Iran, raising fresh supply fears globally. Reports suggest that Oracle plans a fresh round of layoffs after cutting 21,000 jobs earlier this year. The tech giant looks to reduce payroll costs as the company ramps up spending to strengthen its position in the rapidly growing AI market. Home Minister Amit Shah hits out at opposition amid Parliament deadlock, says he is ready to debate. Rahul Gandhi hits out, says Shah is scared, and he dodged Parliament for 15 days. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Kargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's first begin with how the markets have ended. The new closing auction session is once again causing a sharp move in benchmark indices. The Nifty ended in the red, down over 0.15%, with IT stocks weighing on the benchmark as TCS fell nearly 4%. But broader markets outperformed, with the mid-cap 150 gaining over 0.2%. Sectorally, PSU banks led the gains while IT was the top laggard. Let's go over to Parth for a complete roundup.
Nifty has closed in red today, down over 0.15%. In the closing auction session in the last minute, we saw Nifty seeing a spike of around 72 points, while Bank Nifty also saw a spike of 115 points. Coming back to the markets, if we talk about the top losers of the index, then TCS and Max Healthcare were among them. TCS seeing a downtick of almost 4%, while Max Healthcare also closed over 3% down today. On the broader market side, they have outperformed the benchmark, with Nifty Midcap 150 closing in green, seeing an uptick of over 0.2%, mainly led by Apar Industries and National Aluminium, each seeing an uptick of over 8.5% today. On the Nifty Small Cap 250 side, it has closed in red, down over 0.2%. Top losers were RHI Magnesita and Jubilant Pharmova. RHI seeing an uptick of over 7%, seeing a downtick of over 7%, while Jubilant also saw a downtick of almost 8.5% today. On the sectoral side, they have all of the sectors have closed in red except Nifty Bank, Nifty Metal and Nifty PSU Bank. Apart from these three, all of the sectors have closed in red. Nifty PSU Bank was the top gaining sector, seeing an uptick of over 2%. Bank of Maharashtra and Punjab National Bank were the top gainers here, both of which saw an uptick of almost 4.5%. IT was the top losing sector today, down over 1.5%. TCS and Oracle Financial Services were the top losers. TCS down almost 4% after we saw that N. Chandra will not seek reappointment in the coming term, and also Oracle was down over 2% as well. Among the sectoral trends, Nifty Auto and Nifty FMCG were down for the third consecutive day, while Nifty Bank has snapped its 3-day losing streak. Also, Nifty IT has snapped its 3-day gaining streak, while Nifty Pharma, Nifty Oil and Gas and Nifty PSU Bank have closed in green for the second day in a row. Also, Nifty Financial Services has closed in red for the second consecutive day as well.
Viewers, our July CPI inflation numbers are out and the inflation has risen by 4.45%. To further understand these numbers, I'm going to bring in Gaura Sengupta, who is the Chief Economist at IDFC First Bank. Hello Gaura, a very warm welcome to you. I just want to start with, what really is the headline July CPI number telling us about the inflation trajectory right now?
It's broadly in line with expectations. We were also at around 4.4%, and it's even consensus was around the same figure. So it's just indicating that price pressures remain well contained. It remains concentrated in food and fuel, with food inflation above 5%. I think consolidated fuel would be somewhere around 4.5% as per our calculations. Core inflation, or core, which is the underlying trend in inflation that captures the demand side, that remains, would be near historical lows, could be close to around 2.1% as per our calculations. And so it's just showing that the price pressures in the economy remain supply side led. We are not seeing any generalization of price pressures. It also flags the risk that inflation for the full year FY27 is likely to undershoot RBI's estimate of around 5%, with the fact that the spread from non-core items to core items has remained minimal.
Right, Gaura, I just wanted to understand, since you mentioned the RBI, I just wanted to know that at what level would you say that the RBI would become uncomfortable about cutting the rates further?
See, rate cuts are off the table. That is changed. That there's no expectation that they will cut rates. The next policy change that the market is looking for is potential rate hikes. If you look at the OIS market is still holding on to their expectation of a shallow rate hiking cycle starting towards the end of FY27. While our base case is the RBI stays on pause in FY27. The reason why we feel RBI will stay on pause in FY27 is because the price pressure remains a supply side phenomena, and monetary policy is better suited to respond to if let's say there is a buildup of excess demand in the economy, then rate hikes make sense. When inflation is led by things like food and fuel, their fiscal policy is far more effective. For example, the government of India has absorbed, along with the OMCs, majority of the fuel price shock. Also, food supply side management is far more effective than the central bank raising interest rates to get the supply side under control. I think these numbers will provide RBI comfort to remain on pause for FY27.
Gaura, as we saw last month, food inflation played quite a big role in the numbers. So I just wanted to get your take on it. What is the biggest upside risk to India's inflation outlook from here? Is it food or energy, geopolitics, or maybe something else?
I would say if there is an upside risk, it would be food right now. Fuel, though, the West Asia crisis, every single day, there is hopes of a deal and then it falls through and you see crude oil prices. It's still quite elevated. But we do expect that there would be a resolution in sometime soon between US and Iran. And what we have learned is when we had that brief period of ceasefire in June, that oil markets will correct quite sharply if there is a believable peace agreement between these two countries. Earlier, there used to be this expectation that crude oil prices will take time to come down, even if there was a peace agreement. Now that the market has been, if you look at the reaction that the crude oil market showed in the month of June, where there was a sharp fall in crude oil prices, that has been proven wrong. So we still see limited risk from a fuel perspective. We see there is some risk from a food perspective because the monsoon is still yet to be complete. We are in the second half of the monsoon season. The rainfall deficit has reduced to around 12%, but the distribution is quite uneven. Around slightly higher than 50% of the country has received normal rainfall. There's quite a significant share which has received deficient rainfall. But I would just want to flag that the 5% plus inflation that you're seeing on the food front, it is coming on a very low base. So last year in the first half of FY26, food inflation was actually negative. So on a negative trend in FY27, you're seeing food inflation climb to 5.5%. That's still quite moderate given that, the kind of heat wave India saw, the weather fluctuation, the monsoon. So the risk remains from food from our perspective. We don't see a demand side challenge because we don't see signs of overheating in the economy, which is also reflected by the fact that your core inflation, basically inflation excluding food, fuel, precious metals, has stayed near historical lows for a while now. It's not just a recent phenomena. So that just indicates that the economy is not overheating. There's actually excess capacity. Whatever risk there is to the inflation, it would be more from food rather than fuel because we don't expect further increase in retail fuel prices going forward.
Right. Clearly, we'll keep our eye on the monsoon, and food inflation continues to be an indicator for the inflation. Thanks so much, Gaurav, for joining us. But viewers, moving on now, Tata Motors commercial vehicle business has reported a strong Q1 on the revenue and profit front. Net profit rose 8.3% to 1,528 crore rupees, while revenue jumped 23%. EBITDA also increased 9.5% to 2,176 crore rupees. However, EBITDA margins moderated to 11.3% from 12.7% a year ago. Other income also rose sharply to 396 crore rupees from 245 crore rupees. Overall, the quarter shows strong top-line growth and higher profit with some margin pressure. And staying on that earnings momentum, Lenskart also posted a robust Q1 performance with consolidated net profit surging to rupees 222 crores from rupees 60 crores a year ago. Revenue grew 43% year-on-year to rupees 2,714 crore, while EBITDA jumped over 75%. The EBITDA margin expanded to 21.7% from 17.7% last year, reflecting stronger operating leverage. The company also noted a one-time loss of rupees 10.4 crores during the quarter. But moving on, there is a big leadership change that is happening at Tata Sons ahead of the AGM. Tata Sons chairman N. Chandrasekaran will step down and has decided not to offer himself a reappointment when his current term ends on the February 20th, 2027. Chandrasekaran has written to the board saying that he will serve the remainder of his current term and has asked the board to decide on succession soon to ensure a proper transition. In his official statement to the board, Chandrasekaran outlined important details like reasons for resignation, new appointment process, reappointment plan, among other things. In the statement, he said that his decision to resign comes after 40 years of leading the Tata Group company. My colleague Nimit is outside the Bombay House right now and is sharing all the details. Over to you, Nimit.
Yes, we're here at Bombay House trying to bring you the latest on Mr. N. Chandrasekaran's decision not to apply for reappointment and to give up that post his term expiring on February 20th. Now, Mr. Chandrasekaran himself said that the Dorabji Tata Trust and the Ratan Tata Trust both recommended his appointment and the extension of his tenure that was placed before the Tata Sons Remuneration and Nomination Committee. Now, he says that it was placed before the Tata Sons board as well, but that approval has not happened till now. In fact, he goes on to say that because of one person not agreeing to it, it did not happen. He doesn't name this person. We also understand that he says that in the interest of the company's strategic decision making, decisions need to be taken fast and it's not being able to be done, and that's why he's decided to not take forward his position beyond the expiry of his term on February 20th. Now, what is important is the succession plan for the Tata Sons Group. They need to quickly come out with the succession plan. That's what Mr. Chandrasekaran said as well, because a lot of decisions are hinging, and the smooth transition of this leadership of the group is going to be key to how both the stocks react and how decision making is taken at the company.
Right, thanks for that, Mit. And earlier today, we also spoke to industry experts and market watchers to get their take on what this really means for the group's future. Listen to some of their comments.
I think the Tata Trusts and the board of Tata Sons would certainly be looking out very actively and may already have a short list of candidates that they may be considering, given that their decision on Chandra's extension was deferred since the last board meeting and has been 6 months since. So I'm sure there has been a lot of deliberation. If not, very frankly, we have a headroom till FY27 February. And I'm sure the pipeline will be easily built up in terms of whoever needs to come in. So I don't think succession will be too much of an issue. It'll have to be planned well. There'll be enough talent within the Tatas and outside who will be more than keen to take up an opportunity like this.
I'm 100% sure that, the way the Tata Group culture is, and Mr. Chandrasekhar has been a Tata veteran for 40 years. He will not do anything to disrupt anything, and if whatever is required, I'm sure he will facilitate any transition that is required. So I don't think that there is any, impending crisis in that sort of sense. And I think the key issues, which has probably led to this tension, I think those still need to be dealt with. And, whatever the transition sort of system which is articulated or is delineated for the board, and the group. I think the issues are, plain for everyone to see. I think there's a minority shareholder in the Tata Sons ecosystem who I think has financial challenges of their own, and I think they're looking for some kind of liquidity. Whereas I think the Tata Group's stance has always been that they don't want to let Tata Sons go public, and I think there's a bit of conflict which requires leadership and resolution.
Chandra has already made his intention clear that he did not wanted a reappointment. At least that part is there, that he's not wanting it. That's number one. Number two, the process of election of the chairman of Tata Sons is that every nominee, 1/3 of the directors get nominated on Tata Sons by the trust, and each nominee director has to agree. And what we understand that in his letter, that one of the nominee director did not agree to his reappointment. And we've also read in the press that there were two conditions for his reappointment, that the Tata Sons continue to be unlisted and there should be a liquidity event for Shapoorji Group. So I don't know what has played out, but I think what is clear is, one thing was very clear, that Chandra was not looking for reappointment and his term would have ended in February next year.
Right, so the Tata Sons leadership change is something we will all have our eyes on. But moving on, the government has tightened steel procurement norms for public purchases by replacing the earlier 50% domestic value addition requirement. My colleague Rishabh is here with more details. Rishabh, tell me, what does this really mean for domestic steel production? Does it help regulate it in a sense?
Absolutely. What we're seeing is a tightening of steel procurement rules for enterprises, for a lot of businesses here in India. About 43 steel product categories have been moved from from a 50% domestic value addition sort of standard to now a melt and pour standard. Now, a melt and pour standard is a much more stringent standard that the government introduced, and it is to, in fact, close those loopholes that a lot of companies use by getting in cheaper steel from neighboring economies and sort of with minimal processing, passing it off as locally or domestically produced steel. Now, with this tightening of rules, that's exactly what the government intends to do, is to have some sort of checks and balances in place to ensure that a lot of the steel that goes into a lot of manufacturing, a lot of construction is actually domestically procured and not coming in from cheaper alternatives such as China or Myanmar. So that's what the government has done with the tweaks to the new policy. We've seen about 43 new categories being added to this. Last year, the government added a few categories to this just to test it out, but it does seem to have gained traction and actually meaningfully have closed those loopholes as well. So that's what we're seeing when it comes to the steel policy.
Right, Rishabh. And just stay with us. We've also learned that the government is stepping up its shipbuilding and shipbreaking push, targeting a doubling of shipbuilding capacity. At the same time, the centre is intensifying efforts to curb urea diversion. Rishabh, what are the key measures that are being planned on both fronts? Just give us a sense of that.
Right. So you've had major stakeholders meeting happen on both fronts, on the fertilizer front as well as the shipping front. The shipping front first. There is focus on shipbuilding as well as shipbreaking. Now, about 32 yards that India already has, those have been sent to sort of upgrade their levels and standards to meet European certification. And this is to take away more of the shipbreaking business and the shipbuilding business away from Western markets, from Europe, let's say. What the government is also looking at is that about 115 yards in India already meet those standards, but we still need considerably a higher number of amount to actually meet those standards. What we're seeing is that there are special audits underway across those 32 yards. And we will see in a few months or so whether these yards have been able to meet that. And what the Prime Minister has also said is that there is a push to double India's shipbuilding as well as shipbreaking capacity. So a lot more work being done there. When it comes to urea diversion, that has been a massive issue of the industry as well as the government. This has been a concern that has been flagged before. But what we're seeing now is that right from the top level, right at the prime ministerial level, there are stakeholder meetings that are happening that are sort of taking check of the urea diversion that is happening. There's chemical, wood, as well as melamine industries that have joined these discussions. You also have technical grade urea users that have come in and contributed their inputs as well. So what we're seeking is that there will be more industry inputs coming on that front as well, and we'll see more and more action from the fertilizers department for sure.
Right, thanks so much for breaking that down for us, Rishabh. And viewers, staying with government incentives, the government is likely to step up its auto PLI payout to over 4,700 crore rupees this year as the scheme gathers pace. So far, only around 2,200 crore rupees have been dispersed against a total incentive pool of about 25,900 crore rupees. Let's take this across to Danish. Danish, I just want to know what is driving the sharp increase in auto PLI payouts and what does this mean for the sector?
Well, top government sources have told NDTV Profit that in this financial year, the government is very likely to disburse over 4,700 crores of incentive, and this is for the auto PLI scheme. And if we look at the overall pool of the scheme, the incentives that have been earmarked, it is somewhere around 25,000 crore rupees, out of which 2,200 crore rupees have already been paid out. So what is actually driving this higher payout is the fact that over the past 4-5 years, we have seen the auto industry growing every year, at least in double digits. And especially over the past few years, we have also seen that how the EVs have picked up. So because this auto PLI scheme is not restricted to any one particular company, but it is all across the entire value chain, which also includes auto component and other types of manufacturers. So because of this, we are seeing that since the auto demand in India is increasing day by day, hence the demand for components is also rising, and hence there is a higher kind of manufacturing that is taking place in the factory. So the demand is up, and hence we are seeing that the overall, the PLI payout, the incentives payout this time will be higher than 4,700 crore rupees. In fact, I will also tell you that initially when the government had come out with this auto PLI scheme 5 years back, it was for a 5-year period, but then it got extended by 1 year, and the total investment target that the government really had for this auto PLI scheme was around 42,000 crore rupees. But till now, the overall investment in this particular scheme has crossed 45,000 crores. So all in all, if we see, this is a good news for the industry, as the higher demand that is translating in the auto sector, it is now resulting in a higher payout, and this scheme is also one of the champion scheme as per the government sources.
Right, Danish, just stay with us. To stay with the auto story, there is a setback for global EV giants looking to expand in India. Sources tell NDTV Profit that the government is unlikely to reopen the application window under the SPME-PCI scheme, which was launched in March 2024 to attract global players such as Tesla and BYD. So the government is unlikely to open the EV scheme window, which would mean that it would be a setback for global giants. Danish, just give us a little more information on this.
Well, the government had come out with this particular scheme almost 2 years back, and the main intention was to bring big EV powerhouses like Tesla and BYD to India. But over the past few years, we are seeing that India is actively engaged in a lot of countries for the free trade agreements, and hence government sources believe that because of the FTAs, there is not much interest that is being shown in by such companies like Tesla and BYD to set up their manufacturing here in India. But if we look at this from a different point of view, we are already seeing that the BYD and Tesla cars are already being imported in India, and had any company applied for this particular scheme, then they would have got certain concession as far as importing these EVs are concerned, because the government had a clear point that if you want to manufacture in India, then for the first few years we will give you certain relaxation on the import taxes, and as you set up your shop in India, those taxes will get reduced, because the local manufacturing in India of that particular brand would have really stood up. But now we are seeing that over the past 2 years, the government has made various efforts in order to bring these particular companies to India to set up their manufacturing here. Not we are seeing that there hasn't been any main interest that has been generated. But all in all, if we see, as of now, the government is not going to increase not going to reopen the window. But if there's any interest that is being generated, then the government might think about it.
Right. Thanks for breaking that down for us, Danish. But viewers, moving on now, my colleague Nimit asked SEBI Chairman Tuhin Kanta Pandey what more the regulator is doing to boost FPI participation. He said that SEBI is streamlining rules on FPI registration, block deals clearing and netting to reduce regulatory friction, adding that tax concerns remain with the centre's purview. Listen into that conversation.
Sir, outside
you spoke
of
very
today's
briefly.
measure, what else are you looking at to increase FPI participation in the markets? Are there other measures also that you're looking at currently?
We are in general we are saying कि जहाँ सेबी पॉइंट ऑफ व्यू से है, जहाँ कहीं भी फ्रिक्शंस हैं, चाहे वो रजिस्ट्रेशन में हो, चाहे वो ब्लॉक डील फ्रेमवर्क में हो, वो भी हमने सुधार किया है, चाहे वो नेटिंग में हो, उसका भी हमने वो किया है। तो जहाँ पे भी संभावनाएं हैं और जहाँ पे भी फ्रिक्शन कम हो सकती है, ईज ऑफ डूइंग बिजनेस हो सकता है, वहाँ हम कोशिश कर रहे हैं और करते रहेंगे। और बाकी कुछ जो एफपीआई की समस्या रिलेटिंग टू टैक्सेशन है, वो आई थिंक सेंट्रल गवर्नमेंट के विचाराधीन है।
And SEBI Chairman Tuhin Kanta Pandey also responded to concerns over retail investors losing money in F&O trading. He said that SEBI will release a detailed study on these losses in the next 8 to 10 days. Listen into his comments.
उसके बारे में हमने कहा था कि हम एक और डिटेल्ड पेपर लाएंगे, वो अभी शॉर्टली हम पेपर लाएंगे. You will get a chance to analyze also. उसमें बहुत सारी है, अभी कुछ दिन में आई थिंक 8-10 दिन में हम लोग वो लाएंगे, जिसमें वो आपको ज़्यादा ग्रैन्युलर आइडिया होगा कि किस तरह के लोग कर रहे हैं. सिर्फ रिटेल नहीं, बड़े अच्छे लोग भी नुकसान कर रहे हैं. लेकिन नुकसान और फ़ायदा ये तो मार्केट रिस्क है, लोगों को लेने पड़ते हैं. हम लोगों का कहने का अर्थ ये है कि बहुत सारी स्थिति में जो इस तरह की ट्रेडिंग है, पर्टिकुलरली एक्सपायरी डे पे ऑप्शंस ट्रेडिंग है, वो इतनी सहज नहीं है जितनी लोग समझते हैं और उसमें बहुत नुकसान झेलते हैं.
That's all the time we've had on this edition of Profit 360, but stay tuned to NDTV Profit for more news and updates.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell.
Hold.
Buy.
Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up,
Welcome to this special program. You're watching NDTV Profit, where what we're attempting to do is break down the events in the letter of today, what it means for the Tata Group, what it means for stocks of the Tata companies, and what it means for corporate India. Neeraj, what a sequence of events.
Yes, indeed. And from a gentleman who, Tamanna, nobody can argue otherwise, turned the principal group, corporate group of the country, Tata Group, from a heritage structure into a future-ready powerhouse, if you will, right? Revenues double, profits treble. I mean, those are numbers, but just what he brought to the Tata stable, being the first non-family, non-Parsi person to be at the helm. I mean, there will be stories about it written for years come together.
Yeah. So, a 40-year career, clearly, and the contribution cannot be denied. But the fact also is, I would say, Neeraj, in the last couple of years, a lot of the data that you're talking about was looked at, right? Air India. What has happened with Air India? The losses, did it turn around the way that it was supposed to be? TCS, was it at the forefront of AI like it should have been or could have been? Not that I'm putting it all on one person's door, but those were some of the conversations that were beginning to happen. I think what's also important to understand right now is the sequence of events that has led to today's statement. In case you're just tuning in, here's what's happened first up. A statement was issued by N. Chandrasekaran, the sitting chairman of Tata Sons, earlier today, where he spoke about his decision that he would not offer himself up for reappointment in February 2027. And that actually becomes crucial. In that statement, if you look at it, and again, Neeraj, not to take away at all from the legacy that you talked about, he is referring to the events of February this year, when after, say, 3 layers of agreement on his extension, there was a hiccup at one meeting. Mukund Rajan is author of The Brand Custodian, My Years with the Tatas, It's a 2019 book that he wrote, but he is the brand custodian of the Tata Group, and I think very few people would know what the story of the group and the ethos of group is like. Mukund, I believe that you've stopped your car to speak with us. You're on your way to the mountains. Thank you for that. Really appreciate it.
Most welcome.
Yeah, let me just start by just getting your sense of the sequence of events and the way it has played out.
Well, I have to say I was a little surprised at the speed with which some of these events have taken place in the past few weeks. I think the date that was fixed for the AGM of Tata Sons seems to have been the precipitating factor. And I have to say I was sort of caught completely off guard. I just landed at an airport this morning and I saw the news about Chandrasekaran putting in his resignation. So it's come as quite a surprise. I'm not sure that the group also has been entirely prepared for it. And that's, I think, a little unfortunate. And therefore, there is a lot of, I think, expectation the Tata Sons board now and the major shareholder, the Tata Trust, will quickly respond to expectations in the markets and from stakeholders about what they're planning to do on this resignation.
Mukund, thanks from mine as well for joining in. What do you reckon is the way ahead now? Because there is a vacuum here, and maybe the vacuum was always there for a while, which prompted Chandra to give the statement that he has. But what's the next port of call according to you?
So first, I think the Tata Sons board has to, I would imagine, formally accept the resignation. There is theoretically the possibility that they may prevail on Chandra to withdraw his resignation, or they may sort of ask him to continue for some time. He himself has offered to stay in his post till the date that he would normally have stepped down in February of next year at the end of his contracted period. So that clarity has to emerge. What is the board doing on this matter? It's not just up to Chandra alone. The board also has to be responsive. And then, of course, the role of the major shareholders, in this case, the Tata Trust, who are 2/3 owners of Tata Sons, they have to also express publicly their point of view on what has happened. I would have hoped that this whole exit would have been done in a fashion that was perhaps with more grace on all sides and not left to sort of speculation of the kind we are now probably going to indulge in for a little while on what happens next. I think markets hate uncertainty, and therefore it's very important for the board to also announce how they plan to undertake the succession plan for Chandrasekaran. So I think we're all going to wait with bated breath for some of those developments and formal statements from the board of Tata Sons and the Tata Trusts.
Mukund, just trying to get a sense, because you really understand the inner workings of the group. And like you said, this would have perhaps come as a surprise to many in the board as well. Would a succession plan have already been in place, considering that Chandra would have turned 65 in 2028?
It ought to have been. Any sensible board, particularly vested with the responsibility to manage such a large enterprise, should have been thinking about this for the past at least, I think, a year or more. And I would imagine there are already some possibilities that are in the minds of some of the board members, including, I would imagine, the Tata Trust. There's been certainly some commentary around structures that were being debated between the Tata Sons chairman and the Tata Trust. So I'm sure there would have been names assigned to people who could play a role in taking the fortunes of the group forward. So I don't think they will be wanting for identifying a successor fairly soonish, and there may already be candidates that are high on the list of prospects. And certainly, I don't think Tatas will have a challenge in attracting the finest talent. So I don't think that's going to be an issue either. But they need to announce the way they're going to go about this. Are they going to create a committee? Is that committee going to have a timeline? Or are they already clear and have a potential candidate in waiting, perhaps somebody from within the group already, perhaps one of the managing directors? They need to, I think, explain that quite swiftly. And as I said, the markets hate uncertainty, and the basis on which Chandra has announced his departure, I think it'll be awkward for there to be a long period of time or a hiatus before the group has announced a successor. So I think it's in everyone's interest that there be firm clarity on how quickly this is going to happen.
Mukund, thank you so much for taking the time out and being with us. Really appreciate your time this afternoon.
Most.
All right, let's welcome in our guests, other guests on the show as well, simply because, remember, this is a combined market cap of the Tata Group, nearly 24 to 25 lakh crores. And I think a vacuum of this nature, if at all, unnerves the street, then it better be put to rest very, very soon. Let's get in our other experts on the show. We've already spoken to Mukund Rajan. Now, we welcome in Abhizer Devanji. He joins in on the show, as well as Mohit Saraf. Gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time. Abhizer, I'd like to start with you on that premise itself. Markets don't like uncertainty, especially at the helm of one of the premier business groups in the country, large market cap as well. During his tenure, profits have doubled, or rather revenues have doubled, profits have trebled. You reckon it'll be smooth sailing after a couple of days of uncertainty if indeed the board moves swiftly, either to assuage the street by saying that Chandra might stay on till the end of his tenure, or to name a successor so that there is clarity?
So for sure, I think we heard Mukul also. I think the Tata Trusts and the board of Tata Sons would certainly be looking out very actively and may already have a short list of candidates that they may be considering, given that their decision on Chandra's extension was deferred since the last board meeting and has been 6 months since. So I'm sure there has been a lot of deliberation. If not, very frankly, we have a headroom till FY27 February, and I'm sure the pipeline will be easily built up in terms of whoever needs to come in. So I don't think succession will be too much of an issue. It'll have to be planned well. There'll be enough talent within the Tatas and outside who would be more than keen to take up an opportunity like this. Now, frankly, kudos to Chandra for the platform he's built. He's built an excellent platform. There have been some failures, but there have been a lot more visionary thinking in terms of where the investments need to go through. And the market cap has held up, as you rightly said, the combined market cap of 25 or lakh crores has grown significantly. So I think the platform is set for getting a good person. Now, for the Tata Group, when the helm changes, so when Ratan Tata came into power from JRD, we remember those days, there was obviously a lot of uncertainty in the markets. The same uncertainty remains today, where there's a turmoil. Whenever there has been a change at the helm of the Tatas, there's been turmoil. I remember at that time, though Ratan Tata was the chairman of Tata Sons, there were individual CEOs who were fiefdoms into themselves. And now we have got to deal with the Tata Sons issue. So ideally, I think the group has had a lot of empowerment to its CEOs. Those CEOs in those empowerments have performed extremely well. And whenever those empowerments change, the level of uncertainty will be there. But I'm sure that the system will make sure that there is an answer to it.
Okay. So, what we're trying to do is we're trying to make sense of what's happened, and we have a fantastic lineup of speakers. Abhizer, of course, Mukund Rajan, Mohit Saraf, all of them weighing in. Mohit, if I can come to you, on the manner in which this has played out, this could have happened on August 18th. It could have happened closer to February 2027. A point is being made here with this letter, which has been made public, that I'm choosing to step down, or I'm choosing not to offer myself up for reappointment, so that the decision is now taken by me. Is that the message? What is the message we're getting here?
I think, Tamanna, the way you should look at it is Chandra has already made his intention clear that he did not wanted a reappointment. At least that part is there, that he's not wanting it. That's number one. Number two, the process of election of the chairman of Tata Sons is that every nominee, 1/3 of the directors get nominated on Tata Sons by the trust, and each nominee director has to agree. And what we understand that in his letter, that one of the nominee director did not agree to his reappointment. And we've also read in the press that there were two conditions for his reappointment, that the Tata Sons continue to be unlisted, and there should be a liquidity event for Shapoorji Group. So I don't know what has played out, but I think what is clear is one thing was very clear that Chandra was not looking for reappointment and his term would have ended in February next year. Clearly, I would say that there must be a notice period. Typically, for the senior level people, there would be a 6 to 9 months notice period. And right now, we are closer to that period. So he probably have resigned. That doesn't mean that he disappears tomorrow itself. It's not like probably he's giving notice as per the terms of his employment letter, which could be 6 to 9 months. So I would say we should not read too much into it. Yes, markets do not appreciate uncertainty, but most companies of Tata Group are governed by the boards of those companies, and they have pretty much a large public shareholding as such. It does bring a lot of level of Chandra's quality direction, which he was giving to the entire group of companies. So obviously, to that extent, there is a little bit of a challenge, but it could be just a temporary issue. Maybe that issue has come out in light of the EGM, which was scheduled a few days later from here. I don't know the internal issue, but again, right now we just got this appointment letter out, and we have to give some time to Tata Sons and Tata Trust to explain their position.
Right. So I take your point, Mohit, but is this really something which is not such a big deal as you put it? The sense I'm getting from what you said, and correct me if I'm wrong, is you're saying this is not such a big issue, nothing to see here, let's move along. Of course, in the storied history of the Tata Group, maybe not. But as of here, now, today, looking at Chandra's massive contributions to the group and in the manner which this has played out, surely it leads to some debate and discussion.
Oh, surely. I think it leads to debate and discussion. But I would say the same debate and discussion would have come when he said, which everybody believed that Chandra will continue for a long time, when he said that he does not want to continue beyond February. So I would say right now, once the person has made his stand clear that he does not want to continue beyond February, and then he feels resigning as per the terms of his employment letter, that could just be a standard thing. I think what could be a little concerning would be that the public disclosure of that letter. Clearly, I think none of us are belittling the contribution, Chandra's contribution to the entire group, I think. But clearly, there is a negative vote of one of the trustee director on Tata Son, and then he cannot be appointed. There could be some play there, which we obviously don't understand. And we can understand that there could be some play. And he had also in his letter said that he was unanimously selected by the two trusts. But having said that, there was also a negative vote. So there could be internal issues as well. But again, I would not read too much because he had already said that I'm not wanting to continue beyond February. He had already said that.
Yeah.
And 9 months for that. And maybe this could be a process to make sure that the successor is seriously looked at.
Okay, well, August 18 becomes an important AGM outcome as well, if you will. I mean, at least everybody will be looking at it ahead with quite a bit of interest, maybe more than usual. Bizar, just stay on. We'll come to you because Rahul Bhasin also joins in on this conversation. He's founder and managing partner at Bearing Private Equity. Rahul, great having you. Thanks for joining in. As somebody who's looked at corporate India, fortunes of companies and leaders making those, how do you see this particular episode impacting or not impacting the near term for the Tata Group? In the long term, we know they'll attract talent, things might return back to usual, all of that. But in the near term, while there is a bit of a vacuum, lack of clarity, is it too short a time frame to bother about, or you think otherwise?
Look, I'm 100% sure that, the way the Tata Group culture is, and Mr. Chandrasekhar has been a Tata veteran for 40 years. He will not do anything to disrupt anything, and if whatever is required, I'm sure he will facilitate any transition that is required. So I don't think that there is any, impending crisis in that sort of sense. And I think the key issues, which has probably led to this tension, I think those still need to be dealt with. And, whatever the transition sort of system which is articulated or is delineated for the board and the group, I think the issues are, plain for everyone to see. I think there's a minority shareholder in the Tata Sons ecosystem who I think has financial challenges of their own, and I think they're looking for some kind of liquidity. Whereas I think the Tata Group's stance has always been that they don't want to let Tata Sons go public, and I think there's a bit of conflict which requires leadership and resolution there. I also think that as a group, the Tata Group has been sort of trying to transition into the new ecosystem in the new world. And they've taken several bets. Now, when you take several large bets, some work, some don't. Clearly, the Tata Electronics bet seems to be playing out well. But if you look at the airline bet, where, they've, I think, expended almost 55,000 crores since 2022, I think that requires dealing with and sort of addressing as an issue. And I think the other thing is that Tata Neo, where again, I think the group has lost almost 20,000 crores in the last 4 or 5 years. And I think that if you look at the number of bets, the size of the balance sheet, and the fact that their cash cow of the group, which is TCS, has its own set of challenges, I think probably it's because of the total size of the bets relative to the size of the group. I think this kind of friction has cropped up. And I think that when you're starting a new business and you're bleeding money, I think it's imperative for whoever the leader is to carry the different board members and stakeholders along. And I think that probably because of the transition of, the stakeholders from the Ratan Tata sort of regime and to now the Noel Tata regime, I think there's probably things which have fallen between the cracks here.
I think that's as clearly and well put as one could have. Rahul, completely agree with you there. Just want to get a quick view from Abizar on some of the points that Rahul Bhasin has just made. And again, we've said this from the start, there's no point speculating about what could have gone wrong, etc. Part of it also is how it's happened and then what next. How imperative is it now to ensure that a plan is in place and this is communicated very quickly to all stakeholders?
Oh, extremely. As you said earlier in the show too, nobody likes uncertainty. And I'm sure even the institutional investors who are big investors in Tata today would not like that uncertainty. What is, I guess the plans are in place at the operating company levels.
Yeah.
As Rahul also mentioned, the key issues are how do they deal with this larger issue of this minority shareholder getting a liquidity issue? That's going to be extremely important to deal with, apart from the operating company issues that are there. Operating company issues, I think, are well governed by good CEOs. I'm sure each of them has a good plan. So that is not what is maybe required. But at the group level, the coordination, to list or not to list, to provide an exit to the minority shareholders, to make sure that the Tata Trust's turmoil ends, so that there is clarity as to how this company is going to be run and how the stewardship of Tata Sons will run. I think those are the big issues which I think Chandra was able to manage well given his legacy. Now, whoever comes in will have to manage it well. The other issue, of course, is Noel Tata, as I said earlier, whenever there's been a shift in the Tata's leadership at the family level, there's always caused turmoil. So those turmoils will have to make sure that they're all controlled. I'm sure there are very other people who may be more ambitious at the group, at the operating company levels, who may have aspirations at the group level. There could be good candidates outside. So I think the whole transition will have to be communicated very quickly so that the market knows who's in charge.
Rahul Bhasin, just coming to that point about the market knowing who's in charge, if you look at it from the perspective of the storied history of the Tata Group, at that point, N. Chandra becoming the Tata Sons chairman was also an outlier, right? The first non-Parsi, non-family member, so to speak. So has that also set sort of a precedent of what could come next?
Like I said, because of the very extreme sets of challenges which are there in the group, and I think that these are very normal when you take big bets and you start new businesses. I mean, there's a portfolio outcome, right? Some will work, some won't. But which ones to double down on and which ones not to, I would suspect would be very tough for any newcomer to do. It has to be an insider, is my own surmise. And I think that maybe whether it's Mr. Noel Tata himself or clearly somebody else who's a insider and familiar with a lot of the pluses and minuses and the risks and opportunities of each of these big bets and big challenges, I think it'll have to be someone like that or a group of people of that nature who steady the ship in this period of time. I think that, and like I said earlier, I think that, Chandra being a long-term veteran, he may well himself be a part of the transition team. I wouldn't be surprised if that was the case.
Yeah. Okay, I think we're out of time, but very quick roundup and maybe just very quick answers. Mohit sir, starting with you. Do you reckon some of the bets that have been taken in the recent past might see a change under the new helm because some of these haven't paid off? Very quickly, 30 seconds, please.
Anybody can agree yes or no. It's something I don't have a comment on.
Well, actually, that's a fair point too. Anybody can say a yes or no, and we don't know how it shapes up. So yeah, that's a nice quip to my answer. But I would still want to know because I think Abizar was making this point, and in fact Rahul was making this point to which Abizar responded that some of the recent bets haven't quite paid off. Maybe the focus areas change. Maybe not all stakeholders were taken on board alongside when some of these businesses are bleeding. So that was the genesis of my question. Abizar, you want to respond to that?
Also, there are some obvious quick fixes, as I said, the airline industry and making sure that TCS innovates, I think will have to be taken on the forefront. And other businesses, I think they're well invested, in my opinion. Semiconductors, electronics are well invested. That'll be good.
I'm going to make the question a little more complex for Rahul Bhasin. Neeraj asked, will they be re-looked at? I'm going to ask you, should they be re-looked at?
To my mind, I think there is a budgeting issue because if you have to invest in all of these businesses and deal with the minority shareholder sort of issue, I think that you'll require more capital. So either one or at least one of these has to be sacrificed or more capital has to be raised. And I think that's the call that whoever takes charge will have to make. I mean, either, and the Tata Group has enough credibility. If they want to raise more resources, they can. So that's really the choice. I mean, do you say that no, one of these bets was wrong and say, let's get out of this and call it? Or do you say that no, all of these are in transition, they're in the investment phase, they will all work out? Then I think the issue is that, where in the group do I raise capital and how much? And I think, so it's a very solvable problem, but someone needs to deal with it.
Okay, that is the billion-dollar question. Who, when and how? Thank you so much, gentlemen, for joining us on the show as we try and decode what has happened, what it means, and what happens next. Simply because, Neeraj, look at the impact of the Tata Group. And sometimes we look at things only from the lens of shareholders and people who have equity participation. But even in terms of contribution to the economy, it's massive. What happens there is important.
Most certainly, Tamanna. And just, that one point, I tried to figure out if there was any previous record public of him having stated that he doesn't want to continue. There isn't. So
yes, which Mohit Saraf kept talking about. Yeah, but no, there isn't. This has happened today.
Yeah, so it is a surprise, and which is what explains why TCS is down 5 and some of the others are down. Hopefully, August 18 gives us some answers, or maybe before that. Let's wait and watch.
Right, that's all the time we have, but all the news and action continues on the other side. Stay with NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds. Hi, we're talking about Your Money Matters. If you're of a certain age and you watch television at a certain time, you will know the significance of "Aap jeet chuke ho 1 crore rupaye" in that baritone voice. By the way, that 1 crore in the same show is no longer 1 crore, it's worth 7 crore. And that's the prize money that we're talking about. But the thing is that 1 crore still remains a large amount of money. And for a lot of people who are starting investing right now from scratch, it seems almost unachievable. They think that they'll spend their entire lives working towards that number. We'll talk about why it's so significant even as things stand right now, and why it might just be a stepping stone to the next level. Suresh Sadagopan, who is Managing Director and Principal Officer, Ladder 7 Wealth Planners, joining me today. Suresh, you've helped a lot of people achieve that landmark, and so therefore you're best placed to tell us why that is only a stepping stone. But let me start by asking, of course, in the 90s, 1 crore was something that a lot of people said was practically unimaginable. But then now people have moved past that. It's still a very large amount of money, right?
Yeah. No, it's still a very large amount of money, like you rightly observed. But even a car today can cost more than 1 crore. And if you are talking about a house in especially metro cities, it is definitely above 1 crore. I completely accept what you said, what you observed. 1 crore is still a large sum of money. But 1 crore alone will not really get you very far today. For retirement planning, you may require multiple crores of rupees. If you want a house in any part of the country today, it is probably going to be above 1 crore. In certain towns and cities, it may be less than 1 crore. But having said all that, it's a psychological figure. 1 crore is a psychological figure. And achieving that 1 crore, I would not want to trivialize that. It is not really an easy figure to achieve, even for people who have started saving today. And especially when you're starting off your career and you're getting maybe tens of thousands of rupees as the initial salary, putting away maybe 5,000, 10,000, 15,000, maybe something more than that. And to reach 1 crore, it will take several years.
So that is the point, right, Suresh? Because and everyone's seen those SIP calculators more than anything else. It it makes you feel a little bad about things, right? Where you're setting aside, even if you're setting aside 20-25% of your income every month, it says that it'll take you anywhere between 15 and 17 years to achieve that first 1 crore at a reasonable compounded annual growth rate, which is not a little out of whack, right? Some people say, okay, if I get 18% per year, then I'll get there faster, but then there's a cost to that. Is there a way to increase the pace of that? Because ultimately that's where the step up SIP or the increased saving that you would do over the course of your career comes into play.
Yeah. So I will put it in another way. So one is, of course, we start at a certain small number, which may be, let's say, 5,000, 10,000, 20,000 to start with. But income also grows over a period of time. And especially at the beginning of the career, the income tends to grow much faster than the inflation. So the potential for putting aside more money year on year is definitely there. But I'll just give you a figure. Like if somebody were to put aside 10,000 rupees for 10 years, they will reach something like 27, 28 lakh figure. I'm just giving rough numbers. And if the same person were to keep that on for, let us say, 20 years, they will reach something like 80 to 83 lakhs. So which is not bad. But the point is the 10,000 number is not going to remain 10,000 for most people. And most of the people will want to increase that to 15, 20, 25 and things like that. So they are going to probably achieve the 1 crore figure much earlier than that 15 or 17 years which we are talking about. The important thing we need to really emphasize on is the discipline and regularity. So that is what that is where really people falter on. Because they start off well and they accumulate a certain amount of money and suddenly out of the blue comes some goal and they withdraw a portion of that, which may be 20, 40, 50% of that. And then once you have reached 45, it again comes back to 20, that kind of a thing. So it yo-yos and they find it extremely difficult even after a couple of decades to see that 1 crore. So this happens a lot.
Yeah, that's an important point because ultimately the reason why it becomes so important is because it becomes that fresh base for the next level of capital formation, right? Because anything that you gain on that is on that significantly larger base, which is why, Suresh, a lot of people who cross that threshold then achieve the next crore much, much faster. Can you describe that? Because you've experienced it, you've talked to people who have gone through this as well.
Yeah. So absolutely, we talk in terms of a flywheel. So 1 crore is a is a flywheel which has a lot of momentum. And if we are able to get, let us say, 12-13% kind of return, in a matter of 5.5, 6 years or so, you will be doubling that. Assuming you are not touching that, even assuming you are not really putting any fresh money. But most of the people bring in fresh money in terms of SIP, bring in also fresh money in terms of bonuses or ex gratia incentive, that kind of a thing. So probably the next crore will happen maybe in 3.5, 4 years. So that momentum which you start getting when you have a significant amount like 1 crore is, I mean, you have to really be there to see that and experience that. It happens.
You did this very quick back of the envelope calculation, and Suresh, everybody who watches personal finance shows knows what you're talking about, but for the benefit of somebody who's tuning in for the first time, you want to talk about the rule of 72?
Yeah, so yeah, correct. So basically the rule of 72 says that whatever is the interest rate, 72 by the interest rate. So if you divide that, then that is the number of years in which the typical amount will double. So if the interest rate is, let us say 10%, it tends to double in about 7 years plus. So that is the thing. So if your mutual fund is giving or equity is giving, let us say 13-14%, it is going to happen much earlier than that. So that is the rule of 72.
Yeah, that's very easily put. And so therefore, when you benchmark your expectations, Suresh, you need to bear that in mind. If you've achieved a 1 crore figure at the age of 30 or 35, then you can be sure that before you're at the age of 40 or 42 or thereabouts, you can, at a very reasonable rate of return, achieve that next crore. And then the doubling from that is much faster every year. So every crore that you achieve is much faster every year because effectively you're doubling on a larger base.
So, Alex, the most important thing here for viewers to understand is that, see, you will have to be absolutely diligent and regular with your investments. And you really suddenly cannot withdraw money unless, of course, you have planned for it. You should not really withdraw money because there is suddenly you are interrupting that compounding. So, yeah, I mean, you will reach 5 crores, 7 crores, 10 crores over a period of time of diligent investments over a period of time. So it takes time. I mean, the compounding actually takes time. Lot of times, while people have potential, the potential is never realized because in between they start withdrawing the money. And when they reach 1.5 crore, then they come back to 1.2, then they come back to 1.1. Again,
so this is important, Suresh, particularly because people save till they're 35, 40, or even before that, and a large chunk of money goes into the down payment for a house, for example, right? And you're effectively then at that moment paying interest, and you are starting from scratch, which is not the best position to be in. That's one. And the second point is, and I'll bring that up subsequently, is that till such time as you have that 1 crore, it's imperative for you to have term insurance if you have financial dependence.
Yeah, so regarding the first point, you said regarding the house or other very important goals. So it's absolutely fine to plan for a goal and take that money away from whatever wealth you have created for that particular goal. I mean, of course, we all have expenses and goals which are very important during our lifetime. So taking away that money and especially going for a home is not a bad thing at all because you're actually creating an asset. And of course, it has an emotional value. It has a practical value. So putting money inside a home is not really a bad thing. And I would not say indulging oneself in terms of a vacation or in terms of a vehicle or any other thing is also bad. So it all have to be calibrated. So that is the most important thing. So as long as you are also planning for your future in terms of your retirement or wealth creation requirements, and you're also planning for the goal and you're also enjoying your life, it's absolutely fine. So you have to be mindful of all the things, and you cannot really do random stuff, which typically happens with most people. Now, coming to the term insurance portion, I think security net is something which we have seen in circuses. I mean, when somebody does the show at a certain height, the trapeze act, there is always a security net. So in life also, we don't know what exactly can happen tomorrow. I mean, this is true for all of us. So we need a security net, and a term insurance is that security net which we need to definitely provide for the family. And I cannot emphasize that enough. It's good that you brought it up, Alex.
Yeah, that's an important point. Coming back to achieving this goal, Suresh, the tendency is when somebody's starting out and they've made their first few investments, the gravitational pull towards slightly riskier assets because the promise of 18-20% returns is that much higher. It's also true that when you're earlier on in your career or your earnings, the chances are that you have the ability to take more risk, if not necessarily the mental acuity or the emotional state to be able to take that risk. So it's capability versus ability, right? You got to differentiate between the two. But what would you say as advice for those people who are trying to invest in products, and in the mutual fund space as well? A lot of people gravitate towards small cap funds for this very reason.
Yeah, so the fundamental thing which I talked about is patience and discipline and regularity. So that is exactly what we will need to focus on. Any person at any particular age, let us say we take the case of a young person who is, let us say, 30 years old. There are two people, and the two people can have a very, very different risk profile in terms of investment intent. So somebody may have a very conservative investment intent and somebody may have a very aggressive investment intent. Though both of them probably are going to work for maybe 25, 30 years. So both of them have good risk capacity, but the risk profile can be completely different. So if we put together a portfolio for a person who is conservative, an aggressive portfolio, they will at certain points in time, they may not be very comfortable and they may come out of that and probably at the wrong time. So we will have to be very cognizant of this particular fact, and we have to put a portfolio which actually works for that particular person. So now coming to riskier assets, which can potentially give higher returns like crypto or any other asset, like even small cap funds and things like that. you have to understand the volatility in that particular asset can be much higher. And if you have given yourself a much longer time frame, like 7 years, 10 years kind of thing, and you have the ability to hold that asset for that long, then it will work. But you still have to calibrate how much you want to put in a crypto, or you want to put in a real estate or a small cap fund or anything that is risky, which has the potential to deliver high return. So that is a calibrated call that you need to take.
Asset allocation more critical than stock and scheme selection ultimately is the case. But Suresh, absolute pleasure as always speaking with you. Thank you so much for taking the time.
Thanks, Alex, for having me here.
We have to slip into a very quick break. More on the other side. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All.
Welcome. This is Your Money Matters, and we're talking about employment now. For a lot of you that have entered the job market, or even those that are seeking to do so right now, the landscape has actually shifted very materially over the course of the last 2 years. I am, of course, talking about the implications of the advent of artificial intelligence. You're probably using it in your day-to-day lives, but so too are the companies that will seek to employ you down the line as well. Everybody is talking about productivity. A lot of companies are talking about the fact that they have either frozen hiring or even reduced hiring. What does that mean for you? Are there skills that you should pick up? Are there skills that you should not pay attention to? Joining me to talk about some of that is Neeti Sharma, the Chief Executive Officer of Teamlease Digital. Neeti, thanks so much for taking the time. And we've had a similar conversation in the past, but I think a lot of water has already flown under the bridge since then. So let me start by asking you how you see the landscape for the job market right now, and especially if you compare it with maybe 2 or 3 years back.
Alex, thanks for having me here again. I think it's always interesting to discuss about what's happening in the job market, and especially for young talent who's looking at getting their first jobs in. Of course, there has been a huge change over the last 18 to 24 months. AI has not just impacted certain roles, but it's also creating newer roles, newer jobs, requiring very different skill sets than what it had in the past. So to your point, when you started the introduction, yes, there are some jobs that are slowing down, that are diminishing. Some of them are going away completely. Jobs, especially in the BPO, KPO sector, jobs which are doing redundant data roles, I think all of those roles will get impacted in a big way. We've seen some impact already. Those IT services companies has slowed their hiring for conventional technology stacks, but they have massively increased their hiring on AI and AI adjacent skills. So big shift in terms of what skills are coming in. Traditionally, most of these companies have used degrees. So whether it's an engineering degree or a BSc computer science degree, as a filter to start taking interviews. But today, the degree does not matter on its own. What matters is what the skills people are bringing to the table. And for a fresher, obviously the question is, how do I gain skills, when I'm just learning or, studying in an institution? I think apart from the degree, what employers are looking for and what institutions are trying to build are skills which are relevant not just for today, but also for the next 18 to 24 months. AI skills is is obviously the core of everything that we're discussing. Today, there's a huge talent gap as far as AI is concerned. About 4.5 lakh AI professionals exist in our country, but the demand is additional 2 lakh AI professionals. And this could go up to about 12 to 13 lakhs by next year. So the requirement of skills is only going to go up, and it's not going to shift away from AI for sure in the next 2 years time frame. But it does not mean that everyone has to become an AI ML coder. Everyone becomes an AI engineer. I think just using AI to do our jobs better is equally important as against just creating AI or writing more codes to create more AI agents or use generative AI at our workplaces. Many new jobs, like I called out, especially in the data center side or an AI side as AI auditors, governance specialists, model validators, risk managers, cybersecurity, cloud professionals. So a lot of new jobs getting created and a lot of traditional jobs are going away. And that's a big shift as we start right now.
A couple of points there, Neeti, and because this technology itself is changing so rapidly even as we speak, right? The adoption is also causing shifts to take place. The point that you were making is not necessarily in the coding space. And this is an important point to make because ultimately a lot of companies globally are also developing what is called vibe coding, which is you don't necessarily need to know the prompt yourself. You can or rather you don't need to know the code yourself. You simply have to be able to prompt better. So insight in the space that you are building for and your ability to communicate clearly and effectively are perhaps more important than the ability to code. Would you agree?
Absolutely, you're right. While coding is not going away, Alex, there was this whole myth about all software engineers and all coding jobs will go away. I think the coding jobs are going to change. Supervising a code, monitoring a code, implementing the code in the right manner, reviewing a code are skills that are required. And for that, software development or coding, skills are needed. It may not be needed purely to write lines of code, but it is needed to ensure that the implementation works in the right fashion. So yes, there is a combination of what would software coders do. They would probably write few lines of code using AI, but more importantly, supervise and monitor and ensure that I'm reviewing a code which becomes more effective for my customer.
So, and all of this is what we're talking about from the perspective of the services industry. The other thing, Neeti, that has happened over the course of the last 1.5 years, and I'm hearing this anecdotally, there is also data to suggest that enrollment in certain universities that offer a master's in business administration have seen a drop-off. The value of that degree is not necessarily what it was maybe 5 or 7 years back. One, would you agree with that statement? And two, if you do, what else have you seen that has lost value in the way of degrees?
So while I don't think that the admissions will go down because the degree has lower value, an MBA, is a very important degree, and more than degree, a skills development framework where where professionals are actually groomed for managerial roles. And that ask is only going to go up because while we are all calling out technology, we are all calling out AI changing the world of work, there is a lot of human and humane skills that are more importantly required in the future. So I would not say that the degree value is going to go down. Where it is actually probably slowing down is the kind of programs that these institutions have been developing so far. Given that everything that we do now has to have an AI integration, it is important that these institutions carve out programs which integrate and help students understand how do they use AI for effectiveness, how do they use AI for creativity, how do they use AI for thinking and strategizing, but more importantly, how do we use brain as a human being to ensure that our creative work continues and our customer relationship work continues. So I think it will be a combination of what programs these institutions bring in. But yes, I think because the world of work is changing, because skill sets are changing, even institutions will have to pivot and change what they train the students in.
That's such an interesting and important point that you make, Neeti, because if you look at the behavioral and psychological and mental changes that have occurred because of various technologies coming to the fore, then they are manifold, and they are playing out as we speak right now. Because if you think about the generation that grew up with a smartphone and access to a search function, the ability to retain information and certain dates has diminished in a big way. Whereas a certain generation that did not have access to the ability to type a question out at will remember data points and information far longer. Similarly, as we stand right now with people who are using artificial intelligence to answer simple questions and even write the work for them, is this something that needs to be tempered in a big way? Because you have, for example, as for a writer, you can lose the ability to write incisively or in the manner that you were writing before if you don't practice that craft.
I think because the way it's changing, it's okay to have people use technology, use AI to do their work to a certain extent. But let's understand that technology can only do that much. We still need our brains. We still need to think about problem solving, about creating new products, about understanding how our customers behave, their patterns, their consumption patterns. Our ability to use technology is equally important. So it's not just about, okay, let me use AI or the ChatGPT search function to get a response. And obviously a lot of it is self-healing. But apart from that, what do I ask? How do I ask? Why do I need to ask this and why do I not need to ask another questions are very, very important. The other aspect, Alex, that is coming up in the front, as far as people are concerned, is their critical thinking ability, their communication ability, their ethics, governance, risk management, skill sets, judgment. I think those are skills that cannot be automated or digitized using AI or any other technology tool. Any technology can only help us improve what we are doing better, but our thinking capability, our conversations, our communication ability, customer relationship ability has to be done by people, and that cannot go away. So for me, I think it's okay to use AI or any other technology tool to work efficiently, but not using your mind and brain and your thinking power. I think that is going to be detrimental for people in the long run.
So let me ask you this, and since your organization helps for manpower requirements across the board, and not just necessarily for IT per se, right? I'm asking outside of IT. IT is a technical skill that you need. From the point of view of somebody who's listening to this and who may be preparing for an interview, what is it that you look for beyond your technical know-how or your knowledge of subject? Because you would want to judge all of the things that you've just described. So how would that pan out?
Yeah, so I think technical or domain is just one part of the evaluation that we do. The other part of the evaluation is the fitment of the person from a behavioral standpoint. Their ability to learn continuously, their ability to upskill, their ability to adapt and adopt to new changes, to new situations, their decision-making skill sets, their risk-taking skill sets. I think there are many of those. We obviously put it under the behavioral skills, bracket. But apart from domain and technology, it is important, and that's what we gauge as to how is the person thinking, how is the person behaving, what is their risk-taking capability, capacity, how much can they get pushed, what is their customer orientation. Many of those skills need to be gauged. And I'm telling this to you that it cannot be done using just, AI assessments. It has to be speaking to people, meeting them, understanding their requirements, understanding where they're going, what their career roadmap is and what we want to bring in, so that we can work alongside with them. So I think multiple skill sets, technology domain is just one part of what we evaluate on.
And variety of skills, one would assume, right? If you bring more aspects to the table or more dimensions to the table, the better it is. So you can have a variegated experience or knowledge, and that can always hold you in good stead. Neeti, thanks so much for taking the time and speaking to me. Pleasure speaking with you as always.
Pleasure, Alex. Thank you.
Right, that brings us to the end of this edition of Your Money Matters. Tell us what you think. If you are in the market for a job, what is your experience like? Let us know. And do stay tuned. This is NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी की टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation. NDTV.
This one's truly interesting because if you look at the title, Ensuring Wealth for Global Indians, you could think about it in the way of how we typically think of insurance, or you could think about it from a slightly widened scope. If you are a global Indian, actually for anyone right now, you don't know when the next bomb is going to drop on your wealth, right? And that could be figuratively, literally, one way or the other. You've made that great real estate investment in the Middle East, and then what happened? You woke up and then there was a post on Truth Social, and then what happened? Let me start in that context, and Sebal, I'm going to start with you. How important has that context become? You could have a great idea, it sounded brilliant 6 months ago, and then the new Anthropic product turned it to dust. I mean, you can count the ways in which things can go bad right now.
No, thanks. I think fantastic question to start with, Tamanna. And I think protection, wealth creation by itself has got three interesting dimensions to look at it. I think Indians and I think globally people are becoming far more transnational. So you could be working in one country, you could be national in another country, your children could be studying in another country. So the idea of wealth creation and protection, both of these vary between which particular risk you're trying to cover. To its risk itself, I think protection itself, I think for many years, for many decades actually, all of us have been looking at protection and kind of protection is independent of each other. For example, you're protecting your car from accident and you're rather protecting the outcome of the accident, or you're protecting your life. All of these are supposed to be different kind of things. But when your interests across issues which are of value to you spread across different geographies, different jurisdictions, some of these start overlapping over each other. So I think the nature of protection by itself is undergoing a change, and obviously nature of wealth creation at the end of it. And I think the third is we need to put protection at the center of wealth creation. To look at it independent of each other, I think takes the core, the pivot of value that you create away from it. I think these three things, to my mind, are significantly altering the way we are looking at protection and wealth creation. They're very close to each other. They are trans-jurisdictional. And the ability of providers to be able to provide some of these solutions in a seamless manner is absolutely essential for wealth creation to really become meaningful from here on. From a global Indian point of view, I'm sure we'll talk about global Indians as well. So it really is globalized in many manners. So it's trans-jurisdictional, it's trans-need in that sense, and it's really global in the way it really pans out.
No, to be honest, not just global Indians, anyone around the world. For global Indians, the currency factor then becomes another risk, right, that you come in. Sachin, how do you look at this whole space of more than ever now, perhaps, Indians are very clear that wealth creation is front and center, but you also want to be protected while you are doing that?
Well, I think, protection is it's as Shoaib said, it's needs a better bit of understanding. From my perspective, what's very important is that it has to be simply told, simply explained, and people have to just understand why protection is needed and why should it be on the center of wealth creation, right? And I think what probably Gift City does, and hearing so many conversations, is it kind of brings in that simplicity aspect, really to the forefront. Why should I go ahead and buy an insurance product at the very first place? Insurance is probably understood a little bit more in a complex way. Complexity is not just about from a product's perspective, but also from how the customer will want to make a payment, whether the customer goes through the journey is simple enough. So all those things really kind of come to the forefront when we look at protection. From my perspective, what Gift City and IFSCA does is to kind of make things much more simpler. Explainability becomes much more easier. Adoption becomes much more possible. Inclusiveness becomes, a far bigger agenda than what it currently is. And of course, with more customers participating and connecting with this cause of protection, it helps you create wealth over a period of time. And insurance as a product is the only product that has multiple life stage goals attached to it. So you have a marriage in the family, there's an insurance product for it. You have your child's education, there's a product for it. You're retiring and retirement and succession planning or legacy planning, there's a product for it.
I was saying that's my department.
Yeah. So see, the thing is that when people think of protection, the most important thing is whether people understand the reason why and what kind of protection is needed. What life stage goals are we trying to protect? How easy it is to kind of go for that kind of a protection? And what are those roadblocks that kind of come in the way to not let the person go for, let's say, an insurance product or probably lapse a policy?
Give me a for example in the context of Gift City. Yeah. Now, everyone here, a lot of people here watching, know this whole thing about insurance, it's important for you, etc., at different life stages. Why should I look at it differently from a Gift City perspective? How does it help me?
So, keeping simplicity as the core, there are two things, as a customer I'm always bothered about. If I'm a global Indian, for example, two things that really make things complex for me is understanding currency and, of course, taxes. The moment you throw these two things into the financial planning, things become more complex.
Yeah.
You try and explaining me the taxes, it becomes really complex. I need to have a chartered accountant or a tax consultant telling me what it means. Similarly, when you go for buying an insurance product, the reason why the customer is not able to complete the journey is because the payment is complex. So how do you kind of simplify some of these aspects for the customer? From the perspective of getting more customers onboarded is what Gift City does. It kind of removes the barriers of currency. It removes the barrier and the tax advantages that it has. And it provides the journey, which is the so-called digital journey, which is easy for the customers to operate to and go through, thereby allowing them to understand the product much better, have a clear connect with why the insurance is being bought at the very first place, and then of course upon the time of maturity get the benefits that the customer had thought of while buying the insurance product. So let's say if I start the journey today, I want to do a retirement planning, and this is a long-term horizon, right?
And you are in this example, okay, you're an Indian who's sitting, say, in New York.
So let's say, if I'm an Indian sitting in New York or Dubai, I'm buying in dirhams, for example, and I want to send my child to US for education. And now there are multiple options available, but being a global Indian, I would want to kind of go with the Gift City concept, which I relate to. And of course, comparing the currency and the tax thing that I just spoke about, I opt for this vehicle and compare various different products, choose this particular product, invest in the product, and in the next 4 to 5 years, when my child is ready to go for education, have no currency fluctuation risk and make it very seamless for my son to go through the education. I mean, it just makes it obsessively simple at the end of the day.
Why does this person in this example have to come to Gift City at all?
Well, the person can go with various different options, but the thing is that India plays that anchor in this entire bit, right? So we're talking about global Indians, and we're talking about how India becomes the global marketplace. So if I'm an Indian sitting in Dubai, want to send my son to go for an education in US, I compare multiple options and find, let's say, the product that's being offered via Gift City as a much more easier, simpler product to deal with. I would go with that product and allow for my financial planning to be done via the platform. And I'm using the word platform because that's what Gift City does. It provides you the kind of a platform or technology interface that you would want to interact with and get the returns safeguarded for the goals that you have.
Yeah. So that wasn't a grilling if it felt like it.
Yeah.
The idea was to come to the crux of the matter. That does this platform truly give you a competitive edge beyond the emotional pull of wanting to invest in a place which is in your own motherland? That is my question to you.
So, Damana, absolutely. I think what we've got to realize is that a global Indian can buy global product anywhere in the world. So, if I'm in US, I'm in Singapore, I can buy a product there. But I think the fundamental disconnect is in the fact that some of these products don't have exposure to markets which create opportunities for you. So, we go back to the wealth creation part of it. In wealth, for example, you're really looking at, when you look at India and investing in India, you are really looking at a market which is growing at 10% a year and has been doing that for at least 10 years. Apart from the last 2 years. So it is one of the most really fast growing market, and I'm talking about the broader market. Of course, within that there are nuances, etc. I do not know when an Indian in Singapore is choosing to make a investment linked insurance, are they really exposing themselves to this opportunity or not? Now, when you come to GIFT, it basically opens both of these elements out. What it does is it creates a protection solution for you on top of it. Underneath it, it allows you to choose between investing in a global opportunity or investing in an Indian opportunity, investing in a mix of both these opportunities. Within that, other opportunities. And interestingly, let me also share with you, if you look at term plans, so term plans are one of the very basic protection-oriented plans, right? Sachin can bear me out on this one. In the cost of insurance in India on term plans, it's significantly lesser than anywhere else in the world. So when you look at all of these together and you are looking at, and sorry, I must add another point to it. If you look at Indians, a substantial part of wealth of non-resident Indians is created in India. Even though they are in many ways already migrated and based out of wherever else, they are connected to India in many ways, and a lot of the money, and that is again borne out by the fact that $130 billion of money comes back to India from NRIs. That money is getting invested into. So you, in spite of you living outside of India and creating wealth outside of India, you continue to have an interest in what's happening in India and building wealth here. Now, till now, access to building that wealth was through only one or two products that you could possibly do. Real estate was, of course, one of those options that was available. What GIFT does is GIFT enables you to build a fairly sophisticated combination of products, combination of solutions, which enables you to participate in the wealth creation in India, but have the facility of a currency that is not necessarily INR, and there is, of course, limited currency risk that you carry. You also carry a protection on top of it, which is long-term value creation for you, which in turn can meet needs for you anywhere in the world. That is not concentrated upon India. So to give you a context, if you look at us, for example, as a wealth manager in India, we also do insurance for our clients. And about 35-40% of what we do a year comes from non-resident Indians. So non-resident Indians are choosing to create wealth in India.
Which geographies? I'm curious.
Okay. So Middle East, of course, is a large participant. Far East is a large participant. Of course, there are some restrictions on some other countries, but Middle East and Far East, of course, are where the large diaspora really exists. So they all want to come and invest in India. What GIFT allows you is GIFT allows you to provide that combination of product, which enables you to both create long-term protection and value while investing in a market which you understand well, which you know for a fact is growing at significantly faster pace than most of the parts of the world are.
You know, another perspective of this, and I would like to know from both of you, since we're talking still about the experience of the global Indian that lives outside India. I would say there is a global Indian that is sitting in Ahmedabad and Gandhinagar as well, and I'll come to that global Indian too. From the NRI perspective, one big, I would say, painful process in anyone's life cycle is when it comes to inheritance issues. And typically, that is something one faces. Are there solutions now in place via a platform like Gift City to bring that in place and, you know, to ease out those burdens as well?
Well, this of course has got a legal connotation attached to it, Tamanna. I think.
No, assuming it's all clear.
So there are
the sixth cousin far removed is not in the picture.
So there are two parts to it. Of course, depending upon the nature of asset and where the asset is held, there are taxations which apply to you when estate transfer takes place. However, I think colleagues from IFSA are not here, but if you look at, and we talk to them, what really is being worked out is how are you able to move these assets within the gift jurisdiction, IFSA's jurisdiction. So when you do succession planning and transfer of assets, taxation becomes simple like it applies to India. So tax laws, of course, in IFSA or in Gift City are exactly what they are in India. They're no different, unlike all the regulations. So that work is already on. We, for example, are very actively talking to participants inside IFSCA, inside Gift City, who provide some of these solutions, especially on the capital market side. So the answer to that question, Tapanna, is the answer may not be that we already have a solution available as of now, but work is definitely going. This definitely is an area that the regulator and the service providers see as an area that needs to be addressed.
Oh, fantastic, and that's a clear one. You know, I now want to talk about the other aspect of the global Indian, the aspirational Indian today, who, especially after the last 2 years, as you've spoken about equity markets, is beginning to look at the stock price of NVIDIA, beginning to look at the stock price of SK Hynix, and saying, what is going to happen to me? How do I come in? And from both of you, whoever wants to go first, that perspective of that TAM or total addressable market now expanding and finding its way via Gift City. Would you? Yeah.
Well, it does, it does. See, what happens is that when a concept or a platform like Gift City comes to the play, then there's a lot of options that become available. So let's say Sandeep spoke about diversification. Diversification is an important strategy, to kind of come up with a portfolio and guarantee some of, safeguard some of the returns that you're looking at. When you've got options like this available and you've got a customer who's, more global in his or her approach, then what it does is it allows the customer to compare multiple options and then pick and choose the options and then diversify, and then so basically the market's expanding for you. Your options are not limited anymore, that you need to look at this particular sector or this particular stock and within the country and within the border of the country. Now when the world's kind of fully exposed, it just kind of opens up full portfolio for you, and you can visualize and create a portfolio that you would want to create, have different kind of exposure to different kind of countries and different stocks, and like, for example, the semiconductors or NVIDIA or, other stock options. So what essentially is happening is now with that platform and with that kind of a market access and with ease of operations, you're able to onboard more scripts, more securities, and try to track your portfolio in a certain way that kind of helps you generate better returns over a period of time, depending on what kind of bets you're taking on what kind of sectors and what kind of stocks. But, to answer your question, it does open up that bit of possibility that otherwise is restricted if you were to just kind of have, your investments all done within India and not having access to the global markets via the platform. And of course, keep currency and the taxes to the back of your mind while dealing with some of these things. So the answer is yes.
Maybe I'll try to put a bit of nuance to what he's saying. To your question on global Indians in the first place, Daman, I think the definition of global Indians is changing very rapidly. Global Indians are not necessarily people who migrated out of India.
Exactly.
They are still in India, but they're still connected globally. So, for example, this large number of people who go out to work in GCC kind of setups globally, as Philippines, Malaysia, engineers who we export out, who are not really migrating out, but spending a large part of their working years in global spaces and then coming back to India. They are really global Indians. global Indians are also those individuals who are choosing to travel for fun, for example, for destination travel. Because all of them have got global needs which automatically get generated. The moment you get globally connected for anything that you would want to fulfill for yourself, automatically global needs get created for you. You need to have foreign currency, you need to have travel plans, you need to have tickets, and you need to have a debit card which you can use globally. So all the things that Deepti, for example, was speaking about becomes relevant irrespective of whether you're migrated or not. Two, I think education, and I'm sure all of us realize children going abroad to study is a far more occurrence at this point in time in regularity than it was, let's say, 10 years ago. All of us, I mean, some manner have wanted our children to go abroad and study, etc. They also are creating a certain kind of need. All of this actually is globality in some sense. When you get exposed to globality and information becomes so easily available, automatically you would want to participate in what is happening outside of India. I think I think a couple of years ago, Sandeep and I were hosting a fund manager in India, and one of the conversations he had with us was that he was saying that if Swiggy is a large food app in India, would you know what the similar app in Thailand is? Because that app also is doing very, very well. Is there not an opportunity for us to participate in that growth story as well? So I think the idea basically is globalization, and globality by itself is undergoing a bit of a change in definition. Two is, as globality takes over, information is becoming easier to achieve. You would definitely want to participate in that. Indians remain, I mean, all of us remain very, very biased towards India and want to invest in India and want to participate in the growth here. But people are also very quickly realizing, and like you said, the bomb can drop anywhere, any part of the world. You would want to keep your risk diversified over geography, over currencies, over asset classes. And that is why it is necessary to look at investments and insurance and underlying that insurance wealth as a globally diversified portfolio. Now, of course, what is critical here is how much do you want to diversify? How much do you really understand the risk of investing into one of the South Korean markets? So what is the risk of that is another part of it. But
that's fine. That's something an investor goes through with any choices they make. Do you want to go in for a small cap? Do you want to go in for an IPO? That's okay. My question is, what is the advantage that Gift City provides? Because right now, there are enough ways for people to do this sitting anywhere.
So I'll come to that, and that's an interesting part of it, which we're trying to solve for as well. I think, so resident Indians have been participating in the global markets primarily, let's say 10 years ago, through the mutual fund route. So mutual funds had a limit, and some mutual funds used to invest globally. All mutual funds have a mandate to expose some of their investments globally. And there is a limit to it, so automatically that limit has got fulfilled, and you really cannot invest too much. Two, the other option of doing this was to go through direct ETFs or through stockbrokers, basically. You basically have stock equity, you have lines, pipes, and you could invest directly, which is possible even now. I think what has been lacking is a portfolio approach to any of this investment. Portfolio approach only happens when you have fund managers and product advisors who could actually create a portfolio for you to be able to diversify and reach an objective. What GIFT does is GIFT allows you to do that. GIFT basically creates a structure which enables you to now get exposed to global portfolios, not a product, but a set of product, a set of asset classes, a set of countries, through a body which is based out of jurisdiction of GIFT IFSC. So the regulator is in India. You can access the regulator. The fund manager is in India. You can access the fund manager, and you can then go ahead and invest wherever you wish to. This also has got two interesting elements to it. One, of course, is the alternate investment fund route. So you obviously, you're a larger investor, you can take a higher risk and do it. What GIFT is increasingly trying to do is get retail investment also in. So retail funds, of course, are coming on board. You can start with a very small amount of money, including $500 actually to start your first global investment. So I think what GIFT is doing is GIFT is basically democratizing this entire process. What was otherwise a very esoteric journey of saying that I have exposure to a US private equity market, increasingly what is happening is that is available to anybody in this room, saying that I can come down to make an investment, digital onboarding, and get access to exactly the same market that anybody else does. So I think that is how GIFT is transforming the investment journey for clients.
Okay, so how do you start that off? And this is going to be interesting to all of our viewers at home as well. I think your camera is that one, Sabal. If you look at that camera and tell me, how do you start this off? Someone who's just heard you and said, "Arey, ye mujhe bhi karna hai." What are the steps to go?
So if you will do it with HSBC, and I hope everybody does it with HSBC.
See, that plug was his own, not mine.
What is really required is you can do it in two manners. You can either do it directly through India. So in India, you have a set of fund managers who have offices and who are based out of GIFT City. They have products which are listed in GIFT City, which in turn invest globally. You can approach them and they can onboard you directly into GIFT City. You can transfer money into their account and they then can invest you out and units can be allocated to you. The other is, and which is what we believe is the right way of doing it, is you actually open an account inside GIFT City. You put your committed funds inside GIFT City as US dollars, because then onwards what happens is your exchange risk becomes zero. Once you move your money as an RRS, as a resident Indian, into GIFT City, from there you start accessing global markets. And you heard Vijay talking earlier about INX Global Access, for example, or Ashish talking about what White Oak is doing. You have access to all of that from GIFT City itself. The advantage, every 6 months, if you try to do redemption, the money comes back in dollars. You can reinvest the money again from the same account. If you are doing it from India, you obviously create exchange friction. So it's as simple as that. You do a digital onboarding into the bank or into the asset management company. You do a digital transfer of funds. The transaction itself happens digitally. Most asset managers now allow it digitally. And the funds are custodized under the asset manager, who in turn is regulated by IFSCA. So you don't need to go to anywhere. If tomorrow there's a discord between yourself and the asset manager, you can go and hold the regulator responsible for it, who in turn can take action on it, which is an incredibly important part of our investor journey, because many a times these challenges take place. But imagine if you are doing it in the US and you're going to go to Fed or somebody to go and solve out a $5,000 investment. I'm not too sure how effective that would be.
So, what we've heard so far is a description of what is available and the benefits that people can reap, wherever they may be. What more, in terms of potential of how far GIFT City can go as a platform for financial growth at all ends and in all manners, what else would you like to see?
I'll have a long answer to this. Taman, I think a sophisticated, evolved financial system basically enables, it basically democratizes access to opportunity. I think that's the broad sort of statement I would want to make, and that is where GIFT City will take us. Which basically means for an investor to choose an opportunity to invest would be as seamless as investing in India as in anywhere else in the world. It would be as rightly priced and fairly priced as it would be anywhere else. And it will be guided by a jurisdiction, by a regulator in as much stringency as anywhere else. And when these three things takes place, which product you generate, which solution you generate is a matter of how much you can really innovate. Some of the things that, for example, we obviously are looking at is that if globally anything is available to somewhere in Singapore or in Dubai or any other part of the world, we should be able to bring it to our clients. Our clients deserve it, they need it. We have not been able to provide that opportunity. And GIFT enables us to provide that opportunity at perhaps significantly lesser thresholds than what are there available anywhere else. And I think that is what it does. It basically democratizes this opportunity to our clients. It makes it seamless and it provides jurisdictional cover, which is far more comforting than doing it outside of your own country or outside of your own regulator.
I must say it's truly refreshing to hear talk of claim settlement as well in the context of insurance. What most people experience is the onboarding, and then when it comes to claims, there's no end to be found. So it's very refreshing to hear that perspective and that thought as well.
Yeah, so we call ourselves as Promises Ka partner. We believe that we are not selling life insurance, we are selling promises. And it is the moment of truth for any life insurance company, or for that matter, any financial institution, to stand up to when the customer needs us, as against to just onboard the customer. So therefore, the full life cycle, and that's the reason why my emphasis on claims and servicing, because if you don't do it right on claims and servicing, customers will never trust you. Yeah. So equally important that we make that friction.
That's not always the experience that happens. It happens with at that time there is no partner to be found. So this is excellent. So just wanted to appreciate that. I think this has been a great conversation and really opens one's eyes at a time when I think the global Indian is defining themselves. Maybe this is still a work in progress, and GIFT City definitely gives that platform. Thank you so much to both of you for joining us.
Thank you very much.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Hello and welcome to The Big Question. I'm Vikram Oza here on NDTV Profit. Let's bring up this number. The number deserves attention today. That number is 98,073 crore rupees. It's the exact amount of unclaimed bank deposits in India as of January 2026. That number has been presented in Parliament. But now before you panic, unclaimed does not mean it is confiscated. This money still belongs to depositors, to nominees or legal heirs. But the fact that nearly 1 lakh crore rupees is sitting untouched raises some uncomfortable questions. Why are so many accounts being forgotten? Are families unaware of deposits that have been left behind by loved ones? Are nomination and succession processes, are they still too complicated for people to follow? And are banks doing enough to find the rightful owners before that money slips into the RBI's Depositor Education and Awareness Fund, the DEA fund like we know it? The government has launched the Aapki Punji Aapka Adhikar campaign. The RBI has the Udgam portal, which is short for Unclaimed Deposits, Gateway to Access Information. So that portal is a centralized online search platform. It has been launched by the Reserve Bank. It allows citizens to search for unclaimed money and the dormant bank accounts across multiple banks in one place. You can do that. That portal exists. It allows multiple nominees, and there they have even introduced incentives for banks to settle any of those claims. More than 22 lakh claims have been settled, and 5,777 crore rupees. That's the amount that has been returned, and this is across financial assets, that number. But when the pool of unclaimed bank deposits alone is close to 1 lakh crore rupees, it begs the question, is the system really working fast enough? Which is why we are raising it tonight on The Big Question. Is the entire regulatory setup that we have, and yes, I've just detailed what all we have to get the depositors to lay claim to the money that they should have with them. Why should it go to a DEA fund? Let's take that question across to our panel, and first let me introduce you to them. Joining us is Dr. Dibali Pant Joshi, former Executive Director at the Reserve Bank. She gets us the regulatory angle. Good to see you, ma'am. Mr. R.K. Thakkar is also with us, the former MD and CEO at UCO Bank. He joins us with the challenges in following the regulatory rule book. Imran Khan is Director at Equirise Securities for the Personal Finance Connect. We'll go to him. Harsh Dahiya is a Supreme Court advocate. He gets us a legal perspective of succession laws. And Nasir Salim is Managing Partner at Flexi Capital. He gets us the technology aspect of all of this. A very good evening to all of you. Thank you for taking the big question this evening. Dr. Joshi, nearly 1 lakh crore rupees lying unclaimed. That's a staggering number. You would agree. How does so much money simply get disconnected from their owners and lie unclaimed, ma'am?
Yes, Vikram. And it indicates that the problem is still too heavily dependent
on families coming forward to claim the money. So that's problem one. So you made very important distinctions. The first distinction you made was that the money is not lost. It goes into this depositor education DEA fund.
Yes.
And the rightful depositor or the legal heir can still claim it. The RBI has created this very Sanskritized name, Udgam, Unclaimed Deposits Gateway to access information. I'm never in favor of all these long acronyms, but anyway, it's working because it's a centralized portal through which people can search for unclaimed deposits held across participating banks.
Yes.
And as you mentioned, as of March 24, 30 banks covering about 90% of the value in the DEA fund are on the portal. So the basic framework is sound. But, and that is the fundamental but, the weakness, the current approach is still largely dependent on the heir to come forward and the owner to come forward. That is problematic because unclaimed deposits, as you mentioned, relate to people who are no more with us, elderly people who have lost track of old accounts, migrants who moved cities, or deposits opened decades ago, nominees, heirs who have no clue that they have a fortune waiting for them.
Right.
So the RBI says that all right, banks, you please, homily take more proactive role. So, but the principle has to be taken much further. I would suggest a Find the Owner national program. Like long ago, they used to have a non-public business working day. Let the banks have a dedicated day to tracing the depositors. And if they're supposed to be doing KYC and doing all so much else to know the customer, how is it that they still have 1 lakh crore sitting with them? It's a scandal. Then, they should have...
But I'll come to the solutions, ma'am. I just want to understand why we are in a situation where we have 1 lakh crore rupees still sitting in that fund. Mr. Thakkar, you've spent a lifetime in banking. What is usually behind these forgotten deposits? Ma'am has just pointed out a few of those. There are old accounts, there are forgotten fixed deposits, there may be family disputes, or there could be just plain neglect. What have you encountered in the many years of banking that you've done, sir?
Yeah, see, if you really see what ma'am has pointed out, they are the basic reasons why these amounts remain in the unclaimed deposits. But see, although we don't have a data because we don't have the information whether the depositor is still living or he's dead, and the legal heirs, perhaps they are not aware of his account. So I believe personally that a majority, or I would say a substantial portion of this amount lying in the unclaimed deposit belongs to the people who have died, and the legal heirs are not aware that such an account existed.
So you think it's lack of awareness, sir?
Yeah, so I won't say it's a lack of awareness, but it's thinking perhaps the depositor did not inform his legal heirs that he has an account in a so-and-so bank, or he's maintaining that account.
Yes.
And perhaps there was no evidence which he left which could enable the legal heirs to find out about these accounts.
So then would an outreach from the bank, like ma'am is suggesting, an outreach from the bank, do you think that is a viable thing that our entire regulatory system should be doing?
Yeah, I think now we come to the second important point as what you are saying.
Yes.
Once the account becomes a dormant account, that is after 2 years of non-operation, then it's a responsibility of the concerned bank or the concerned bank branch to find out why this account has become dormant and try to trace either the depositor or, in case the depositor has died, his legal heirs. So they should be utilizing all the means available, whether it is the last known address, whether it is his any other evidence of PAN number or of phone number, mobile number. They should try to or send a mail in case the email is available in the account.
Yes.
So that either the depositor or his legal heirs are aware of this account, and they can come forward to the branch and submit the necessary KYC documents to get their either the claim or the depositor can revive his account.
Correct.
So both these options are available.
Exactly. And technology facilitates this. Nasir Salim, do weigh in on this. We live in a world of apps and alerts and instant notifications. And why are people still losing track of their own money, even if they're not aware that that account exists? How do the banks and the regulatory system not reach out to people who would be legal heirs to that money?
Good evening,
with your
Vikram.
permission, I just want to share with Mr. Thakkar what happened to me when I went to the UCO Bank. I found a passbook of my father with a very small amount in it, less than 3,000, but for me it was like a blessing. I said, Arey, we must get this. So everything, my Aadhaar card, PAN card, everything was sent to the bank. The bank said, you must make an affidavit. The affidavit was duly made, and Thakkar Sahab, I am still waiting. मुझे बहुत दौड़ाया 4-5 बार मैंने ये नहीं कहा कि मैं एग्जीक्यूटिव डायरेक्टर
And this would be a recurring problem, Mr. Thakkar.
Yes.
How do you resolve something like this?
है problem.
Yeah, ma'am has
चीजें
pointed
आप
out the
मांगते
issue.
हैं for a very small amount. What is the deal? Ultimately, I gave up. I said,
that's what happens. A lot of people then eventually give up.
Deposited education amount. A sum of rupees
Yeah,
750.
but ma'am, I can tell you one thing. Like for smaller amounts, most of the banks, including UCO Bank, they have simplified the systems. I don't know.
No, but this is a simplified
happened.
system. After all my particulars were submitted to them, I'm actually ashamed to say that it also disclosed that I was an executive director of the RBI. The man at the counter had the nerve to tell me that this has gone to the Depository Education Fund, madam. You have brought your affidavit. Now it has to be signed by a notary. I mean, what is this?
Right.
Do you or do you not want people to claim that deposit? Or because there is a credit deposit imbalance with the banks want to sit pretty on it. I'm sorry.
That should not be allowed, and perhaps there should be systems. Technology, how much does it help, Mr. Salim?
Good evening, Vikram. Great to be back. So, 2-3 key points there, while we can keep heckling on it, I think technology is now playing its own part. You see, what happens when a deposit becomes unclaimed broadly is, after 10 years, a lot of things keep changing, right? There's banks transfer the money to RBI's Depository Education Fund, we just spoke about. And it's on account of multiple reasons, right? Forgotten accounts, mutual fund, fixed deposits that were never claimed, people changing addresses or phone numbers. So one thing that has been good now, since we're talking about solutions and we've addressed the problem in hand, Vikram, is this entire Aadhaar versus PAN linking, right? Now, this is a very, very important point that has come up now, which is, for at least all financial assets that we represent today, I can tell you this, Vikram, it comes in with a lot of technology-backed OTP. There is an authentication system, OTP now, which links your PAN card to Aadhaar. Now, if anything that you use, your Aadhaar and PAN is used, for example, now to file taxes. You have your Aadhaar also OTP, which comes in to file taxes. So the moment you're doing that, today all KYC requirements mandatorily have to have PAN updations. And the moment you do that, if your Aadhaar is updated, technology plays its key role there, its vital role there to get all your accounts updated simultaneously. Number one. Number two, the other very important aspect that technology is helping us, Vikram, which I'm sure all of you will be aware of, is something called the CAS, or the Consolidated Account Statements for Financial Statements. Right? Unfortunately, it doesn't capture bank balances, but to a large extent, the RTA in this case, which is CAMS and Karvi, very familiar names to some of you, if you have a demat account, then every month beginning, there is something called a CAS statement which gets generated, and it's automated, no prompt. It comes into your dedicated registered email ID, which tells you where exactly are all your financial assets currently invested in or are held at custody. Now, if you get this information, or obviously this is all being picked up, at a macro level from your PAN and Aadhaar card linkages, and therefore technology is kind of helping us address some of those challenges remotely and in places where people may not be very actively involved in technology. But if you just link your Aadhaar and PAN, it all gets aggregated and make sure that you have your information updated.
So that is the kind of technology that people who have unclaimed money lying over there can use as much as the banks can. The entire system can. Harsh Daya, Do you think the real trouble usually begins when the original account holder has passed away? Is that where the maximum kind of trouble stands?
Vikram, I'll start with my personal example. So I have a couple of bank accounts. You know, whenever you go to a bank, they generally promote you to open a new bank account with their bank itself. So in this process, I ended up opening some 4-5 accounts in which I'm using just one, and 3 of them are lying dormant from last 4 or 5 years. You know, when I opened those accounts, I got so many calls from the banks to put in some investment or something of that sort. But because the amount in these bank accounts was very small and I was not operating them. So from last 4-5 years, they have gone dormant and I have not even gotten a single communication from either of the banks for the same.
Yes.
Now, this is where the biggest gap lies. The bank, you know, these banks, they reach out to you for putting in new investment. But when your account goes dormant, there is absolutely no process in place wherein they reach out to you that, sir, your bank account has gone dormant. So forget like people who have died. When you're living and when your bank account has gone dormant, there is a big gap in that itself. And, you know, I believe the issue is now not as complex as it used to be. With digitization of banking in India and the coming of Udgam platform, the discovery and resolution have become much easier. But there is definitely a big lack of awareness still amongst account holders about the Udgam platform of the RBI.
Yes.
Because to be very frank, even I was not aware until like 2 months back that such a platform exists. And still there is a gap that we need Udgam platform for other financial instruments such as insurance, EPFO, mutual funds, securities and pension assets, because on one hand bank accounts can still be claimed and it is easy to discover the bank account these bank accounts which have gone dormant when the person has passed away.
Yeah.
But about other financial instruments, it becomes even more important that possibly a Udgam 2.0 or some other platform of this sort is needed.
What do you say to that, Mr. Thakkar? From the banking side, how complicated is the documentation when legal heirs come forward years later, because the blame is being placed at the banking level, that there isn't enough outreach from that end?
When the legal heirs approach the bank, once they find out that the account is lying in unclaimed deposit, so obviously there are a few formalities to be complied with, which basically comprise of filling the form and submitting the KYC documents. And for legal heirs, as Madam also pointed out, I don't know in her case, but in other cases, they would be required to submit, depending on the amount, either an affidavit or an indemnity bond also. Because make sure the bank won't know who are the legal heirs. So normally they would be insisting for an indemnity bond. To make sure that tomorrow if any other legal heir comes forward, which is not declared by the person who is claiming the amount, so that at least the bank is indemnified.
Yes.
So from that angle, these are basic formalities. I think beyond that, I don't think any other thing is required to be given to the bank for claiming the amount by the legal heirs.
You make it sound easy, but it certainly isn't. Imran Khan, would you agree? Is India still making people search for their money when perhaps the system should be searching for the owners? Imran Khan? Mr. Khan, can you hear us? We seem to have a problem with that. But Dr. Joshi, more than 22 lakh claims, they have been settled. Thousands of crores have been returned. Is that evidence that the system is actually working at some level?
No, Vikram, I want to say that someone mentioned, I think Salim Saab mentioned or Daya Saab mentioned, Udgam 2.2. Now there you must have one national portal and that will identify the depositor. So single national portal for discovery, claim initiation plus tracking, identify the deposit, the actual claim to be made to the respective bank, and the Reserve Bank should use the stick. Search, establish relationship, upload documents, submit claim, track status, receive money, everything on Udgam. But RBI stick, measure banks by the money returned.
Yes.
Not just the paper compliance. This
Absolutely.
is the most important reform.
Absolutely.
RBI should publish bank by bank and measure what should be reported. What are the total unclaimed deposits in crores? What are the number of accounts? The amount returned during the year, crore. Percentage of opening balances returned and average time to settle claims, days. Claims rejected, number, reasons, accounts successfully traced, number, and simply saying that, we tried very hard and we are making proactive claims, and it is not the same as actually finding the customer, and for small amounts.
Yes.
You see, I submitted everything, Thakkar Sahab,
and yet it didn't happen. And yet it didn't happen.
It didn't happen despite the extensive documentation. Everything.
So you spend all that time, you invest all that effort, and yet you don't see an outcome. Imran Khan, if a viewer is watching right now and wants to check whether they have unclaimed money, how easy is that process today to be able to follow up based on the system that we have? Mr. Khan, can you hear us? We seem to still have a problem with that connection with Mr. Khan. All right, we'll try and reconnect with him. But Mr. Dahiya, these common battles that families run into while they're trying to claim money that legally belongs to them, what would those be? If you can highlight those and perhaps suggest how they should go about it.
See, legally speaking, first and foremost, most important thing for these families to get is the surviving member certificate, which is fairly easy. You go to the SDM office, you establish, you give affidavit that you are the surviving members of the deceased person, and you easily get it. Then from civil courts, you can get a succession certificate, and you can use this to claim these unclaimed amount in these dormant accounts or the account of the deceased person. So the legal remedy is fairly simple. Now you need to simplify the process through the banks to claim these dormant accounts or these accounts of deceased people, because legally there is not much of a problem to get a surviving member certificate or legal heir certificate or succession certificate. But the banks need to mandate that nominees in each bank account they remain updated, and timely reminder should be sent to the account holders, possibly every 6 months or every year or every 2 years, for updation of nominees. And this is something I've seen happening in the recent years, that I've been getting emails if I have not updated a nominee on my bank account or possibly DMAT account. So they are asking us to put in the nominee details. So I guess this will simplify the process quite a bit in the banking system.
Because there is a move that allows up to 4 nominees now. How significant is that? Could that single reform prevent thousands of future disputes at least?
Absolutely, absolutely. So more clarity we have, the more transparency we have, the better, and the more effective the system would become. But another place where transparency is needed, where I feel is if you want to get in touch with the bank employees of a certain branch. Today it is very difficult. Let's say I opened my bank account in some branch some 10 years back, and now I'm not in touch with that particular branch. So to get in touch with that particular branch, because the numbers given online, which are usually the landline numbers, they're not working. And there is no transparency about the numbers of the branch managers or branch employees. So I guess banks need to come up with a system wherein these details are openly available online, and anyone can get in touch with the bank, possibly the branch manager, or the branch employees to sort out their issues or reactivate their dormant accounts.
But Mr. Salim, would you go so far as to say that every financial asset that does not have a nomination, is that a future problem that is waiting to happen? How do we resolve that?
You see, there are two things here, Vikram, you rightly said. You see, if you have a financial asset, it doesn't have a nominee. So firstly, I must tell you, there is a lot of exercise that is being also done by SEBI through its outreach initiatives for nominations, right? I think the challenge more lies here if, the systems now need to talk to each other, which is RBI versus SEBI.
Yeah.
For any product which is SEBI regulated, Vikram, I can tell you this, multiple outreach programs have been started. And, we've all tried to reach out to investors, clients, to get clarity if certain nominations have not been done. So that process is going to be contiguous, it's going to be continuous. But I think the bigger problem here is, number one is, why does an investment or a particular asset that you invested in become unclaimed? Because of no nomination. I think the bigger challenge right now is just transparency. the flow of information. If we can have a filter in place to say that, with all due respect to all senior citizens at the age of 60, if the RBI can come in and say that we give you certain differential deposit rates higher at the age of 60 and beyond, why can't we not have more, KYC initiative updates for somebody who's senior citizen, somebody who's above 60 years of age? Maybe we can have a KYC update once a year, which will also tell you that, if when you do a KYC update, you also check nomination facilities across those assets that are invested, whether it's through the bank or, through the channel partners through which the investments may have been made. Because at any given point of time, the bank is the custody of all information. So, some proactive work on that front can also happen. The other very simple thing, the simple second thing is just simpler nomination processes. It's not about 4 or 5 or increasing the number of nominations. What's more important, Vikram, is that we need to capture nominations, which is now changed incidentally. I can tell you this. Today, if you need to look at any major investments in any, for example, in mutual funds or AIFs or PMS,
yes,
nominations have become mandatory.
Correct.
Right? Earlier, they were not.
Yes, now its nomination is mandatory, so perhaps we are tiding over that problem. But on that point of Udgam 2.0 that has been raised and transparency that you talked about, Mr. Salim, I want to ask Imran Khan, in case he can hear me this time. Mr. Khan, a single national dashboard for bank deposits, for insurance policies, for mutual funds, shares, dividends, can it be the real game changer, or do we need to mold this differently?
Absolutely, Vikram. That can be the great game changer in this. With the CKYC coming in, I think now with the help of UDGM portal, it's quite easy for people to identify lost accounts. And
yes,
with the CKYC updates on regular basis, this would be a game changer. And also, what I think is, now it's quite a regulatory requirement also, where SMS and emails are sent on your transactions, on your, account opening, etc., etc. If similar kind of messages also goes to the nominee, so especially in cases of death claims, at least the nominee is aware, at which all places are the invested amount, to be claimed for him.
Yes. So, but now I just want to ask you that final question. Are we finally moving from a system that stores unclaimed money to one that actively returns it? Are we moving towards that? Maybe Dr. Pan Joshi can answer.
Yeah, thank you. It's a system deficiency and a system design issue, as Salim has pointed out, and we have to address it. And Vikram, as a regulator, I can tell you that if 25 to 30% of the deposits are not returned within a year, the RBI should enforce stricter supervisory review of such banks, stricter inspections as to what are they doing and why are they not able to do it. And that's the stick. And as a carrot, you publicly acclaim those banks,
yes,
which have managed to pull in the funds. I don't mean the efforts they have made, but the funds which have actually come in, which we discussed earlier.
Correct.
So I think this is the approach which is required, and the government definitely needs refinement.
Yes.
I agree completely.
Absolutely. So the most striking thing about this story is not that India has nearly 1 lakh crore rupees in unclaimed deposits, which we do. It's that someone behind every forgotten account, every dormant FD, every unclaimed balance, there is a person, there is a family perhaps, that probably does not even know that that money exists. Of course, the good news is that the money is not gone. The systems are getting better, technology is helping, the rules are improving, but the real measure of success will not be how much money sits in a fund that is sitting far away from them. It will be how much money finds its way back home where it belongs. My thanks to Dr. Dipali Pan Joshi, Mr. Thakkar, Imran Khan, Harsh Daya, Nasir Salim. Thank you for joining us and sharing your perspectives. So it's very important to understand that a forgotten deposit is not really a lost deposit. It is sitting somewhere else. The question to ask is, have you checked lately? I'm Vikram Oza with a big question. Thank you for joining us.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को
Presented by Canara Bank. Together we can.
Welcome to this special program. You're watching NDTV Profit, where what we're attempting to do is break down the events in the letter of today, what it means for the Tata Group, what it means for stocks of the Tata companies, and what it means for corporate India. Neeraj, what a sequence of events.
Yes, indeed. And from a gentleman who, Tamanna, nobody can argue otherwise, turned the principal group, corporate group of the country, Tata Group, from a heritage structure into a future-ready powerhouse, if you will, right? Revenues double, profits treble. I mean, those are numbers. But just what he brought to the Tata stable, being the first non-family, non-Parsi person to be at the helm, I mean, there will be stories about it written for years come together.
Yeah. So, a 40-year career, clearly, and the contribution cannot be denied. But the fact also is, I would say, Neeraj, in the last couple of years, a lot of the data that you're talking about was looked at, right? Air India. What has happened with Air India? The losses, did it turn around the way that it was supposed to be? TCS, was it at the forefront of AI like it should have been or could have been? Not that I'm putting it all on one person's door, but those were some of the conversations that were beginning to happen. I think what's also important to understand right now is the sequence of events that has led to today's statement. In case you're just tuning in, here's what's happened first up. A statement was issued by N. Chandrasekharan, the sitting chairman of Tata Sons, earlier today, where he spoke about his decision that he would not offer himself up for reappointment in February 2027. And that actually becomes crucial. In that statement, if you look at it, and again, Neeraj, not to take away at all from the legacy that you talked about, he is referring to the events of February this year, when after, say, 3 layers of agreement on his extension, there was a hiccup at one meeting. Mukund Rajan is author of The Brand Custodian, My Years with the Tatas. It's a 2019 book that he wrote, but he is the brand custodian of the Tata Group, and I think very few people would know what the story of the group and the ethos of group is like. Mukund, I believe that you've stopped your car to speak with us. You're on your way to the mountains. Thank you for that. Really appreciate it.
Most welcome.
Yeah, let me just start by just getting your sense of the sequence of events and the way it has played out.
Well, I have to say I was a little surprised at the speed with which some of these events have taken place in the past few weeks. I think the date that was fixed for the AGM of Tata Sons seems to have been the precipitating factor. And I have to say I was sort of caught completely off guard. I just landed at an airport this morning and I saw the news about Chandrasekharan putting in his resignation. So it's come as quite a surprise. I'm not sure that the group also has been entirely prepared for it. And that's, I think, a little unfortunate. And therefore, there is a lot of, I think, expectations the Tata Sons board now and the major shareholder, the Tata Trust, will quickly respond to expectations in the markets and from stakeholders about what they're planning to do on this resignation.
Mukund, thanks from mine as well for joining in. What do you reckon is the way ahead now? Because there is a vacuum here, and maybe the vacuum was always there for a while, which prompted Chandra to give the statement that he has. But what's the next port of call according to you?
So first, I think the Tata Sons board has to, I would imagine, formally accept the resignation. There is theoretically the possibility that they may prevail on Chandra to withdraw his resignation, or they may sort of ask him to continue for some time. He himself has offered to stay in his post till the date that he would normally have stepped down in February of next year at the end of his contracted period. So that clarity has to emerge. What is the board doing on this matter? It's not just up to Chandra alone. The board also has to be responsive. And then, of course, the role of the major shareholders, in this case, the Tata Trust, who are 2/3 owners of Tata Sons, they have to also express publicly their point of view on what has happened. I would have hoped that this whole exit would have been done in a fashion that was perhaps with more grace on all sides and not left to sort of speculation of the kind we are now probably going to indulge in for a little while on what happens next. I think markets hate uncertainty, and therefore it's very important for the board to also announce how they plan to undertake the succession plan for Chandrasekharan. So I think we're all going to wait with bated breath for some of those developments and formal statements from the board of Tata Sons and the Tata Trust.
Mukund, just trying to get a sense, because you really understand the inner workings of the group. And like you said, this would have perhaps come as a surprise to many in the board as well. Would a succession plan have already been in place, considering that Chandra would have turned 65 in 2028?
It ought to have been. Any sensible board, particularly vested with the responsibility to manage such a large enterprise, should have been thinking about this for the past at least, I think, a year or more. And I would imagine there are already some possibilities that are on the minds of some of the board members, including, I would imagine, the Tata Trust. There's been certainly some commentary around structures that were being debated between the Tata Sons chairman and the Tata Trust. So I'm sure there would have been names assigned to people who could play a role in taking the fortunes of the group forward. So I don't think they will be wanting for identifying a successor fairly soonish, and there may already be candidates that are high on the list of prospects. And certainly, I don't think Tatas will have a challenge in attracting the finest talent. So I don't think that's going to be an issue either. But they need to announce the way they're going to go about this. Are they going to create a committee? Is that committee going to have a timeline? Or are they already clear and have a potential candidate in waiting, perhaps somebody from within the group already, perhaps one of the managing directors? They need to, I think, explain that quite swiftly. And as I said, the markets hate uncertainty, and the basis on which Chandra has announced his departure, I think it'll be awkward for there to be a long period of time or a hiatus before the group has announced a successor. So I think it's in everyone's interest that there be firm clarity on how quickly this is going to happen.
Mukund, thank you so much for taking the time out and being with us. Really appreciate your time this afternoon. All right, let's welcome in our guests, other guests on the show as well, simply because, remember, this is a combined market cap of the Tata Group, nearly 24 to 25 lakh crores. And I think a vacuum of this nature, if at all, unnerves the street, then it better be put to rest very, very soon. Let's get in our other experts on the show. We've already spoken to Mukund Rajan. Now, we welcome in Abhizer Devanji. He joins in on the show, as well as Mohit Saraf. Gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time. Abhizer, I'd like to start with you on that premise itself. Markets don't like uncertainty, especially at the helm of one of the premier business groups in the country, large market cap as well. During his tenure, profits have doubled, or rather revenues have doubled, profits have trebled. You reckon it'll be smooth sailing after a couple of days of uncertainty if indeed the board moves swiftly, either to assuage the street by saying that Chandra might stay on till the end of his tenure, or to name a successor so that there is clarity?
So for sure, I think we heard Mukul also. I think the Tata Trusts and the board of Tata Sons would certainly be looking out very actively and may already have a short list of candidates that they may be considering, given that their decision on Chandra's extension was deferred since the last board meeting and has been 6 months since. So I'm sure there has been a lot of deliberation. If not, very frankly, we have a headroom till FY27 February. And I'm sure the pipeline will be easily built up in terms of whoever needs to come in. So I don't think succession will be too much of an issue. It'll have to be planned well. There'll be enough talent within the Tatas and outside who would be more than keen to take up an opportunity like this. Now, frankly, kudos to Chandra for the platform he's built. He's built an excellent platform. There have been some failures, but there have been a lot more visionary thinking in terms of where the investments need to go through. And the market cap has held up, as you rightly said, the combined market cap of 25 or lakh crores has grown significantly. So I think the platform is set for getting a good person. Now, for the Tata Group, when the helm